Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, welcome to our YouTube channel. Vanakkam, everyone. Since a lot of time, people were saying audit marathon, audit revision, audit marathon, audit revision, audit revision, audit marathon, but in only English. Guys, whatever you say, we try our best to fulfill all the requests. Though this has come a little late, but trust me, this is one of the biggest gift ever given by me to you. Yes, guys, finally we are bringing to you India's biggest marathon, India's best marathon of CA inter auditing. 16.5 hours of pure gold content in only English. Yes, guys, all the chapters are recorded for CA inter audit. Get ready to experience amazing, beautiful, mind-blowing, extravagant, wonderful marathon of CA inter auditing. We have tried our best to give you full clarity. At the same time, you are able to learn also. But of course, these are revision lectures. But we have worked very hard. But our hard work will bring result only on one day, when you make the best use of this lecture and get exemption in CA inter auditing. I really request you, make best use of this lecture. Watch this 2 times, 3 times, 4 times. Trust me when I say this is pure masterpiece. Such quality of content can never be seen before in YouTube. This is pure gold content. 16.5 hours of video. Such great content, such quality content. No time pass, no gas, okay? And I urge you, you make best use of it. Watch this 2 times, 3 times, and you will get supreme confidence. Plus, also share with all your friends, okay? Please share with them. When you share, they will see if anyone is facing difficulty. Tell them to see this video. More than me, they are going to thank you when you share this masterpiece. We have given our best. They say no. You do your best. Let God do the rest. So we have done our best. It's your time now to study nicely. Make best use of this marathon, this wonderful masterpiece. Okay. From where we have done revision, we have 2 audit books. One is the main book, which is in question answer form. See, we don't have 2-3 books. Okay, in one book only everything covered, because no one has time to read separate book. Then question bank, we have done all in one only. All the questions are in what? Red color. All the headings are in blue, and all the keywords are also in blue, so you know where to focus upon. Are you clear? Students don't have time to read multiple books. They will read the main book, then the question bank. Gone are the days. We have one book only in entire question answer form. So entire syllabus is in question answer form, so you will know which question can come. Along with that, we have not done revision from this book. Okay, we have magic book. We have done complete revision from magic book itself. It is truly magical, as the name suggests. Okay, so this book covers entire audit, all the chapters in just how many pages? 84 pages. So this is there. Okay, this is the magic book which covers entire syllabus, all charts in 84 pages. So last day, it's very handy. If you don't have time to read a particular chapter in detail, this book can really prove to be a big miracle and sure success. So that is it. Okay, if you are preparing from any other book, okay, but if you don't have any book, these are the best books available. Okay, so that is it I want to say, guys. Okay, make best use of it, share it with everyone. Okay, and if you really find this useful, okay, if you like our hard work, do give a like. Okay, put in a nice comment. It will motivate us to work even better. We want only one thing from this. We want your amazing, mind-blowing, excellent result. All of you who complete this video should get exemption. That is my only wish to the God. Okay, thank you so much. If you really like our hard work, do tell that this is just marathon. Revision lectures are such regular would be late. They would be loved, and I assure you all of them are going to love the regular lectures. If you pass, share with your friends. There is one person who does lot of hard work. If you really want conceptual clarity, how audit is done in Big Four, okay, if you want to learn also entire audit, only one teacher in India can give you. And that is we, of course, okay, but I really hope your result comes great. Make best use of this marathon. All chapters nicely recorded, wonderful quality gold content available at your doorstep. Biggest gift available on YouTube. Enjoy this masterpiece. Let the fun begin. All the Rajini fans, all the Ajit fans, all the Kicha fans, Sudeep fans, you are fan of everyone. You Vijay Kalapati, Vijay Sedupati, this everyone is going to love. Come on everyone, let the fun begin. 3, 2, 1. Enjoy this masterpiece.
5, 4, 3, 2, 1.
Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, after lot of requests, after unlimited messages, finally we are bringing to you the most awaited series, Audit Maha Marathon series, in which all chapters of CA Inter Audit will be revised in detail. This is the biggest ever news for all the South Indian students, because entire audit revision we are going to do in only English. Yes, guys, in only English. All chapters of CA Inter Audit will be revised in detail in such a way you have never seen before. Yes, guys, this is a golden opportunity. All I want you to is make best use of this so we can avail exemption in audit. At the same time, share with all your friends so we can make it a huge mega success. We will bring each chapter one by one, okay? At the same time, I would like to tell you, these lectures are in no way substitute to the regular or fast track lectures. But yes, these lectures are going to be very helpful, and we will try our best to revise in the most nicest way. At the same time, you will not only understand, but we'll try you are able to learn also. Okay, so let's start, okay, right away without wasting any time with chapter number 1, everyone. Yes, we are revising chapter number 1. But before we start, from where are you doing this revision, sir? Yes, guys, we are doing this revision from our magic book. There is a main book also and magic book. In magic book, okay, entire audit is finished in just 90 pages. Only 90? Yes. So we'll do revision from that. Is it what full coverage? Definitely entire audit is covered in detail in only 90 pages. So let's start chapter number 1. We have to discuss only 4 pages today. Chapter 1, everyone. What is the name of chapter, guys? All the Hindi students, okay, where is Hindi revision? Already uploaded. More than 3 lakh students have already seen it. Now it's the time to give best quality to South India. Come on, everyone. Chapter number 1, what is the name? Okay, nature, objective and scope of audit. Nature, objective and scope. Sir, one last question. If I want to purchase this book, where do I purchase from? Okay, you can purchase from www.mrugeshmadlani.com. Entire audit book is available only at printing cost. Okay, soft copy will never bring result. That is why we don't have any soft copy, because it's a hard copy exam. You need to write in exam. So you need to see the charts, okay, right there, only then result will come. Okay, let's start chapter 1, nature, objective and scope of audit. Let's start. First, what is the name of chapter? Nature means how audit is. What is the meaning? What is the behavior? What are characteristics? What are advantages? What are disadvantages? Okay, objective. See, these are revision lectures. Objective means why am I doing audit? Scope, how much to check, how much to check. So nature, objective, scope. First, in this is definition of audit. What do you mean by audit? Audit is independent examination. Number 1 word, independent. Auditor can never be dependent. See, if my hotel is there, I cannot audit the books of accounts of my hotel. I will be dependent. Auditor should be independent. If I only audit my hotel, we have a hotel, 3-star hotel, I will only audit, I will be little biased. Okay, so auditor should be independent examination. What do you examine? Do you examine payroll efficiency report, attendance report, abnormal loss? No, financial information. Of whom? Any entity, of any entity, whether profit oriented or not. okay, profit oriented or not, be it profit oriented, it being human or Reliance, okay, irrespective of size or legal form, be it a very big company like Reliance or be it a small barber shop, small laundry shop, irrespective of size, legal form, be it sole proprietor, partnership, HUF, LLP, irrespective of size or legal form. Why do I do audit? When such an examination is done with view of expressing an opinion thereon. What is my main objective? Express an opinion. Are you clear? So I do audit to express a opinion. One last time, let's hear it for full definition. Audit is independent examination of financial information of any entity, irrespective of, whether profit oriented or not, irrespective of size or legal form, when such an examination is done with a view of expressing an opinion thereon. Thereon means what? On financial statements. One last time, audit is what? Independent examination of what? Financial information of whom? Any entity, whether profit oriented or not, irrespective of size or legal form, when such an examination is done with a view of expressing an opinion thereon. Expressing opinion thereon means what? On financial statements. Read nicely. Break of 1 second. We will try to learn also. Then audit is independent examination of what? Financial information of any entity, whether profit oriented or not, irrespective of size or legal form, when such an examination is conducted with a view of expressing an opinion thereon. Clear? Yes, sir. Next is objectives of audit. Why do I do audit? Why am I doing audit? Why? Number one, to obtain reasonable assurance that the financial statement are free from material misstatement. Number one, why do I give reasonable assurance and not absolute? What is reasonable? It is high degree but not absolute. I can never give 100% assurance. Why? Because there are limitations in audit. There are limitations. What are the limitations? We will study exactly in 15-20 minutes. See this. Okay. So I can only give reasonable assurance. So audit means to obtain reasonable assurance that the financial statement, those of you who don't know what is financial statement, 5 things: balance sheet, P&L, notes to accounts, cash flow, statement of changes in equity. Okay, so 5 things come. To obtain reasonable assurance that the financial statement are free from what? Material misstatement. See, I should be free from mistake. Material misstatement is what? Misstatement is a mistake. Mistake can be due to through 2 things: error, fraud. So our financial statement should be free from what? Material misstatement. Misstatement can be there, but they should not be material ones. Material means important misstatement. Anything which will influence the user of financial statement, okay, which can change your decision. So as of now, it will come in detail, materiality and all, in chapter number 2. Okay, but continue. What is the objective of audit? To get reasonable assurance that the financial statement are free from material misstatement. Okay, understood? Material misstatement means any big mistake. Misstatement. Misstatement can come due to 2 reasons. Intentional is known as what? Error. Intentional is fraud, unintentional is error. So our financial statement should be free from what? Material misstatement. We want reasonable assurance. Why not absolute? Not at all possible. Why do I give only reasonable? Because there are limitations in audit, about which we will study. I got assurance now. Now I need to report on the financial statement and communicate as per SA. What is SA? Standard on auditing. I have to give the report on the reasonable assurance obtained. I have to give a report as per SA 700, which will come in another chapter. Okay, so there are 2 objectives of audit. Number 1, to obtain reasonable assurance that the financial statement are free from material misstatement. Material misstatement can be due to 2 reasons: intentional fraud, unintentional error. I got assurance, report on the financial statement and communicate as per SA. Small break, 10 seconds. Then, to obtain reasonable assurance that financial statement are free from material misstatement, and to report on financial statement and communicate as per SA. Now, I come to next. Auditors should keep in mind following points to ensure financial statements are not misleading. Our financial statements should not be misleading. For that, I will check how many points, guys? I will check 6 points. How many points? 6. Stage 1, understand. Stage 2, learn. See, Auditors should keep in mind following points to ensure financial statements are not misleading. Okay, so 6 points you need to check to ensure FS is not misleading. Number 1, accounts are drawn up with reference to entries from books of accounts. Our accounts are as per the entries in books of accounts. Entries are supported by sufficient and appropriate audit evidence. Sir, what do you mean by the word sufficient? What do you mean by appropriate? Sufficient is quantity, appropriate is quality. In detail, chapter number 3 it will come, but let's understand what do you mean by the word sufficient, quantity, appropriate, quality. For example, I want to check sales. I want to check sales. So sales should match with what? Tell me very quickly. In our sales, our invoice should match with purchase order. You prepared an invoice. Opposite person has given purchase order. Invoice should match with purchase order. After purchase order, there should be lorry receipt that the sales is dispatched. With invoice, lorry receipt should be there. Sales is dispatched. If all these documents are there, I can say there is sufficient evidence that sales has happened. Okay, because order has come, we have prepared invoice, that invoice dispatch receipt is there, lorry receipt, sufficient evidence. Now, appropriate means quality, amount should also match. Amount in purchase order is not matching with invoice, means quality of evidence is not correct. Okay, so those documents should match, that is appropriate. In detail, another chapter. Entries are supported by sufficient and appropriate evidence. None of the entries have been omitted in process of compilation. Many times we try to omit expense so we can show more profit. None of the entries are omitted. And nothing which is not in books of accounts has found its place in financial statement. Okay, something which is not in the books has found its place in financial. Many times we include fake sales. Fourth, information conveyed by statement is clear and unambiguous. All the information should be clear and without any doubt. Unambiguous means not confusing. Okay, next, amount in the financial statement is properly classified, described, disclosed. Very quickly, what is classified? Current and non-current assets should be separate. Okay, scrap sale and main sale should be separate, classified. Described, for every entry proper narration should be there, proper description. Disclosure should be followed. You know what is disclosure? After every accounting standard there are disclosure. AS1, accounting standard 18, related party, proper disclosure should be there. Let's take example. As per AS1, there are 3 fundamental assumptions: going concern, consistency, accrual. If they are followed, nothing to do. If not followed, disclose in notes to account. So like that. Amount in financial statement is properly classified, described, disclosed. Last, statement of account show true and fair view of operational results and asset and liability. What is operational results? P&L. What is asset and liability? Balance sheet. Sir, why true and fair? Why not true and correct? Why not true and correct view? Limitation in audit. Limitation in audit, which we'll study. Very quickly, tell me, 6 points are there to ensure financial statement are not misleading. 3 and 3, 3 financial statement, 3 and 3, 3 in financial statement. 3 points from entry, 3 points from financial statement. What are 3 points of entry? Start. Accounts are drawn up as per entry from books of accounts. Entries are supported by sufficient and appropriate audit evidence. None of the entries have been omitted in the process of compilation. Nothing which is not in books of accounts has found its place in financial statement. 3 point done. One last time. Accounts are as per entries from books of accounts. Entries are supported by sufficient and appropriate audit evidence. None of the entries are omitted in process of compilation. Nothing which is not in books of accounts has found its place in financial statement. Means nothing should be false, nothing should be extra. Information conveyed by statement is clear and unambiguous. Amount in financial statement is properly classified, described, disclosed. Statement of accounts show true and fair view of operational results and assets and liabilities. Quickly learn this. Break, 10 seconds. Done. Speak. Accounts are drawn up as per entries from books of accounts. Entries are supported by sufficient and appropriate audit evidence. None of the entries have been omitted in the process of compilation. Nothing which is not in books of accounts has found its place in the financial statement. Information conveyed by financial statement is clear and unambiguous. Amount in financial statement is properly classified, described, disclosed. Statement of account show true and fair view of operational results and assets and liabilities. Clear? Okay. Next, scope of audit. How much to check? Shall I check everything in audit? Everything, everything. No, 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 no. Okay, scope of audit. Start. Auditor should cover all aspects of enterprise relevant to financial statement. We are concerned with all aspects, but only relevant to financial statement. We will not check about attendance. We will not check about abnormal loss. We will not check about worker efficiency. All aspect of financial statement. Okay. Number one, all aspect of enterprise relevant to financial statement. To form an opinion, auditor should be reasonably satisfied. Information in accounting record and source data. What do you mean by accounting record? Sir, I understand accounting record. Source data means based on which records are prepared. See, we will prepare record based on invoice. So invoice is source data based on which entry is done. Information in accounting record and source data is reliable and sufficient for preparation of financial statement. Auditor will assess information is reliable and sufficient by, third point, auditor assesses reliability and sufficiency by making a study of accounting system and internal control. Second, carrying out test, inquiry and other procedure. See, you will see whether records are sufficient and appropriate by studying accounting system and internal control. Listen nicely, in all the big companies, first systems are checked. If system is strong, okay, test, inquiry is done less. Substantive procedure is less. But for this, you have to study in detail. These are revision lecture. Still, I will explain briefly. See, if your systems are strong, accurate, reliable, controls are perfect. Substantive means checking of invoices, checking other things will be much less because controls are strong. But if controls are weak, accounting system is weak, then substantive testing, transactions will be checked more. Let's take parallel example. If your parents are very nice, controls are proper, children are bound to be good. But if parents are only not good, okay, they are working somewhere, they have lot of work, children will also not be very good usually, okay. Otherwise, just to understand, auditor assesses reliability and sufficiency of accounting record and source data by study of accounting system and internal control. If they are perfect, other test and inquiry will be less, okay. If they are not perfect, test and inquiry will be more. Fourth point, auditor should see information is properly disclosed in the financial statement. How can you see that it is properly disclosed? Auditor determines, next point, information is properly disclosed by comparing financial statement with accounting record and source data. Comparing financial statement with accounting record and source data. Second, considering judgment made by the management. You compare financial statement with raw data. Second, judgment made by the management, okay. Or let's take judgment, useful life of asset, rate of depreciation, provision for warranty, judgment. Next, auditor is not expected to perform duty which fall outside the scope of his competence. You only do those work in scope it is given how much work to do which is in your competence. Example, coal mine is there. You have to do valuation of coal. You cannot go inside the mine. Oh baby, crazy. I don't know all this. Okay. Second example, we have to calculate provident fund liability. Okay, we have to calculate gratuity liability. All this is the work of actuary and not auditor. So we are not expected to do things which fall outside the scope of competence. Last point, constraint on the scope of audit should be set out. If there are any constraint, they are set out and a qualified or disclaimer report is issued as appropriate. This if you don't understand, little I will give you conceptual clarity. In fast track, in revision, I cannot give full, but little I will give. See here. There are 4 types of audit report basically. Very quickly, in detail we will study or in revision lecture in types of audit report chapter, but very slow. Clean, if everything is perfect, there are no mistake, okay, financial statement, there are no material misstatement, everything is as per financial reporting framework, that is schedule 3, ASR followed, Ind ASR followed, schedule 3, clean report. Unqualified means what? There is no qualification, no subject to, perfect. If there are little misstatements, they are material but not pervasive. What do you mean by material? Big misstatements are there which can influence your decision, but they are not pervasive. Pervasive means effect is spread everywhere. Effect is spread in multiple accounts. There are misstatements in one or two only. For example, sales, there is problem of 20 lakh, okay, or 20 crore. Okay, there is a problem in what depreciation is not charged. Little misstatement are there. They are material, but they are not, effect is not spread to multiple account. Then it is qualified report. Why qualified? Subject to this qualification, all is perfect. Next, disclaimer. Next is adverse. If everything is wrong, everything, there are misstatements which are material, which are pervasive. There is mistake in current asset, current liability, sale, debtor, okay, fixed asset. Means there are mistakes which are material and pervasive. Pervasive means effect is everywhere. Adverse. When disclaimer will come? When you go for audit, but you are not, they are not giving you records. Okay, you went, they are saying records are with income tax, records are with GST, records are with some other authority. Then disclaimer report will come. Okay, disclaimer means I was engaged to do audit, but I could not do. I was only engaged. Then when will disclaimer come? See, you were engaged but you couldn't do, but you feel there are misstatements which are both material and pervasive. It can be material and pervasive. It can be, then disclaimer will come. If it is, adverse will come. If there is mistake in one area or you don't get evidence in one area, sir, if you don't get evidence, disclaimer. In one area, if you don't get, means all other things are correct, no, except that one, then also qualified will come. If we get evidence or don't get, you feel there are misstatements which are material but not pervasive, then only qualified will come. But if you don't get evidence and you feel there are misstatements which can be material and pervasive, what is pervasive? Effect is everywhere, then disclaimer will come. Okay, one last time. Let me take 3 examples. Everything is perfect, clean. There is mistake only in fixed asset, depreciation is not charged, qualified. You are getting all records, only debtor confirmation you are not getting. Only debtor confirmation, which is material but not pervasive. Still qualified, because only in one area I am not getting, no. Okay, so misstatement can be material but is not pervasive. I am not getting in any area any records. Then I feel misstatement can be material and pervasive. Disclaimer. If I am not getting anything, everything is wrong. I am getting everything, but everything is wrong. Material and pervasive. Adverse. Clear? Okay. Now, if anyone will put constraint, tell me. Constraint on the scope of audit. You cannot check this. You cannot check this. Should be set out. And qualified or disclaimer will be issued. When we feel that misstatement can be only material, qualified. It can be material and pervasive. Disclaimer. Understood? Yes, sir. Very quickly we will learn. Scope. Auditor should cover all aspects of the enterprise relevant to financial statement. All aspects relevant to. To form an opinion, we should be reasonably satisfied. Information in accounting record and source data. Accounting record and source data is reliable and sufficient. Third, auditor assesses reliability and sufficiency by comparing financial, auditor assesses reliability and sufficiency by making a study of accounting system and internal control. If they are strong, 0.2 will be less. If they are weak, 0.2 will be more. Carrying out test, inquiry, other procedure. Test, inquiry, other procedure. Clear till here? One more time. To form an opinion, auditor should be reasonably satisfied. Information in accounting record and source data is reliable and sufficient. Third point. Auditor assesses reliability and sufficiency by making a study of accounting system and internal control, carrying out test, inquiry, other procedure. Okay. Third. Auditor sees information is properly disclosed in financial statement. Auditor assesses information is properly disclosed by comparing the financial statement with accounting record and source data. Second, judgment made by the management. Judgment made by the management. Judgment made by the management. Last two are easy point. Auditor is not expected to do work which fall outside scope of his competence. Outside. And constraint on the scope of audit should be set out and qualified or disclaimer should be issued as appropriate. Try. One last time I will speak. Auditor should cover all aspects of enterprise relevant to financial statement. To form an opinion, auditor should be satisfied. Information in accounting record and source data is reliable and sufficient. Third, Auditor assesses reliability and sufficiency by comparing the accounting, making a study of accounting system and internal control, carrying out test, inquiry, other procedure. Auditor assesses reliability and sufficiency by making a study of accounting system and internal control, carrying out test, inquiry, other procedure. Auditor assesses information is properly disclosed in financial statement. Auditor assesses information is properly disclosed by comparing financial statements with accounting record and source data. Judgment made by management. Last 2 points are easy. Auditor is not expected to do duties which fall outside the scope of his competence. Constraint on the scope of audit should be set out and a qualified or disclaimer report should be issued as appropriate. Nicely learned. In between, if that black screen comes, don't worry, okay? Over? Yes, sir. Last time. Scope of audit. See this. These 2 points learn. Break. 3 seconds. Okay, done. Now learn this. Okay. Start. Auditor should cover all aspects of the enterprise relevant to financial statement. To form an opinion, auditor should be reasonably satisfied. Information in accounting record and source data is reliable and sufficient. Third, auditor assesses reliability and sufficiency by making a study of accounting system and internal control. Second, carrying out test, inquiry and other procedure. Auditor sees information is properly disclosed in the financial statement. Auditor assesses information is properly disclosed by comparing financial statement with accounting record and source data. Second, judgment made by the management. Next, auditor is not expected to do duty which fall outside scope of his competence. Constraint on the scope of audit should be set out and a qualified or disclaimer report should be issued as appropriate. Types of audit, simple. Audit compulsory required by law, voluntary audit. Compulsory, voluntary. Voluntary means you can do if you want, not required by law. Very simple. Proprietor, little bigger partnership, little bigger HUF. Proprietor, partnership, HUF, not compulsory. Companies, this you have to only understand. It will not come as a question, okay? No need to learn. MCQ may come. Companies, compulsory it is. Banking company, compulsory. Electricity company, compulsory. Okay. Cooperative society, compulsory. Public and charitable trust, why compulsory? Money is of someone else. You are using it in right way or not. Okay. Corporation set up under special act of parliament or state legislature. Okay. Specified entities under Income Tax Act. Corporation under set up under special act of parliament means what? ICI. Okay. And specified entities under Income Tax Act. If your limit is above particular level, it's compulsory. Simple. Voluntary, proprietary partnership, HUF. This is simple. Companies, banking company, electricity, cooperative society, corporation set up under special act of parliament, public and charitable trust, and last, specified entities under Income Tax Act. Next. This is the last big question. After this, all is easy. Let's learn it. Aspect to be covered in audit. Did you see this point? Auditor should cover all aspect of the financial statement. Do you know this? Auditor should cover all aspect of the financial statement. All aspect of the financial statement. In all what aspect? Here it will come. In all what? See here. Aspects to be covered. Number one, in all big companies, first we see the system. If system is strong, okay, testing will be less. Okay, substantive, detailed testing will be less. If system is only weak, detailed testing will be more. Number one, examination of accounting system and internal control, whether it is appropriate for business and helps in recording all transaction. Examination of accounting system and internal control, whether it is appropriate and helps in recording all transaction. Inside accounting system, reviewing systems and procedure to see whether they are adequate and comprehensive, help in detecting error and fraud. Accounting system and internal control. Inside that, systems and procedure are adequate and comprehensive, help in detecting error and fraud. Simple, first 2 points are done. Examination of accounting system and internal control, whether it is appropriate, helps in recording all transaction. Inside accounting system, reviewing systems and procedure are adequate and comprehensive, help in detecting error and fraud. Next, checking arithmetical accuracy of books of accounts. Verification of authenticity and validity of transaction, fourth point, by comparing transaction with underlying supporting document. Difference. When you go to a restaurant, okay, to eat food, you will check the total of bill is proper, that is arithmetical accuracy. But you will also check whether only those items are there in the bill which you have eaten. For example, you have taken two vegetables, okay, veg paneer some vegetable or veg jaipuri vegetable, then only those two should be there. Okay, you have taken two dosas, only two dosas should be there. We also check the accuracy, okay, accuracy as well as only what we have ordered is there, that is authenticity and validity. If you have taken four chapatis, only four should be there, authenticity and validity. Clear? Arithmetical accuracy of books of accounts, verification of authenticity and validity of transaction by checking transaction with supporting documents. Clear? 4 points done. Next, very simple now. If you don't remember 11 points, don't worry, 5, 6 are enough. Comparison of balance sheet and P&L with underlying records. Balance sheet and P&L with underlying records. What is in balance sheet? Asset and liability. So first asset, okay. Verification of title, existence, valuation of asset. Verification of title, existence, valuation of asset. In balance sheet 2, asset and liability. Asset. Title is in your name. For example, there is a Mercedes car. It is in the name of your wife. Wrong. It cannot be charged to company. If Mercedes car is there in company's books of accounts and you are charging depreciation, invoice should be in the name of company. Title should be clear. You have brought a packing machine in your name. Wrong. It should be in name of company. Title. Existence, whether that asset is actually there. How to check? Physical verification. We have brought a 80 crore machine. You will ask, where is it? Existence, physical verification. Valuation is proper as per the invoice. Minus depreciation is done. 3 things in asset we will check. Verification of title, existence, valuation of asset, verification of liabilities. Verification of liabilities. Ascertaining. Proper distinction is made between capital and revenue item. You know, capital revenue, advertisement expense is there. 25 crore. It is not capital, it has to be charged to P&L. Okay, so distinction should be made. And items of income or expenditure are in correct period. Why correct period? Many times we take April sales invoice in March. Why? Just to increase our sales. So our profit will increase, valuation will increase, share price will increase. It is not allowed. Okay. If sales is done in April, it should come in April only. Okay. So proper distinction is made and they are adjusted in correct period. Expenditure, what do we do? Many times March expenditure will postpone to April. Why? Though you have incurred in March, so you show less expenses and high profit. In listed companies, they don't care about income tax. All they care is profit should be high. Okay, so many times we delay sales. Okay, we take it in sales of April, we take it in March. Sales, for example, invoice is in March, but it is dispatched in which month? April. Then risk and reward are transferred in April. It should be in April. That is known as cutoff. See, proper distinction is made between capital and revenue item, and items of income or expenditure are in correct period. Now, asset liability done, P&L, okay. Results shown by P&L, this is also P&L. Results shown by P&L are true and fair. Audit is of a body corporate, company, all statutory requirements are complied with of Companies Act. CARO, cost audit, they are complied with. Reporting to appropriate person of body, whether statement of account show true and fair view of operational results means P&L, or asset and liability, balance sheet. Clear? Okay. Let's try to learn any 6 points. We'll try to learn all. Examination of accounting system and internal control, whether it is appropriate, helps in recording all transactions. Second, reviewing systems and procedure to see they are adequate and comprehensive, help in detecting error and fraud. 2 point done. Tell me, number 1, accounting system and internal control. Inside that, systems and procedure. Now 2 points. Verification of arithmetical accuracy of books of accounts. Checking arithmetical accuracy. Verification of authenticity and validity of transaction. Comparing transaction with underlying records. Compare, very simple. These 4 points you do. Below all points in 1 second I will make you learn. Learn this 4 only. Break. 10 seconds. Okay, examination of accounting system and internal control, whether it is appropriate, helps in recording all transactions. Second, inside that, reviewing systems and procedure, they are adequate and comprehensive, help in detecting error and fraud. Okay, checking arithmetical accuracy of books of account, verification of authenticity and validity of transaction, comparing transaction with supporting document. Now all are easy. Comparison of balance sheet and P&L with underlying records, inside balance sheet, asset and liability, verification of title, existence, valuation of asset, verification of liabilities. Next, P&L. Proper distinction is made between capital and revenue account, and items of income or expenditure are adjusted in correct period. Next, whether results shown by P&L are true and fair. Till here, remember, very, very simple. Balance sheet, 2 points of balance sheet, asset, liability, 2 points of P&L. 5 points are done here only. So simple. So simple. Done. Last two. Where audit is of a body corporate, seeing the statutory requirements are complied with. Reporting to appropriate person or body, statement of accounts show true and fair view of operational results and assets and liability. Extremely simple. Last time. Aspects to be covered. Examination of accounting system and internal control, whether it is appropriate, helps in recording all transactions. Inside accounting system, internal control, reviewing systems and procedure. They are adequate and comprehensive, help in detecting error and fraud. Checking arithmetical accuracy of books of accounts, verification of authenticity and validity of transaction, comparing transaction with underlying records, comparison of balance sheet and P&L with underlying records, inside balance sheet, verification of title, existence, valuation of asset, verification of liabilities. Now P&L, checking the results shown by P&L are true and fair. Okay, proper distinction is made between capital and revenue account, and items of income or expenditure are in correct period. Last 2 points. Last 2 points, where the audit is of a body corporate, seeing statutory requirement are complied with. Reporting to appropriate person or body, statement of account show true and fair view of operational results and assets and liabilities. Perfect? Yes, sir. Very important 2 questions, advantage and limitation of audit. First point is advantage. Start. Advantage. It safeguards. What are advantages of doing audit? What are advantages of audit? It safeguards the interest of person who are not associated with management of company, be it shareholder or partner. Shareholder can see whether everything is proper if audit is done, if audit report is given. Partners, sir, they are involved. How they are not associated? Are a sleeping partner they are talking about. Okay, so it will safeguard the interest of those who are not associated with management. Second, acts as a moral check on employee doing fraud. If employee is doing fraud, audit is done, he will think twice before doing fraud because he knows he can get caught. Third, audited statements are of great help. 3 times settlement word will come. Settlement, settlement, settlement. Settling liability for taxes, negotiating loan, determining purchase consideration for business. So audited statement help in settling what? Tax liability. If you want to pay tax, okay, tax audit is done. It will calculate this is your liability. Now, whatever tax you pay, it's proper. Negotiating loan. If you want loan, okay, the bank will ask for projected financial statement. They will ask for audited report. So trust will increase. So you can get loan easily. Determining purchase consideration for business. What is PC? All asset minus all liability. Okay. If it is audited statement, the reliability on purchase consideration will be more. They help in settling the dispute for higher wages or bonus as well as insurance claim. Let me explain this point also very nicely. Okay. See, for example, you want higher wages or bonus. Company is not giving. And if company wants to solve, what they will say? See, in audited statement, loss is there. We can give you bonus, okay. But if you give you right now bonus, you know what will happen? Company will be in more loss. You will not get a single penny also. Better for 2 years you try to understand, cooperate. Okay, see this audited, we are in loss. After that, when you are in profit, we will pay. So they will also understand. Claims, if you want to settle claims, audited statement will help a lot. They are very helpful in settling the accounts at the time of admission or death. Whenever new partner comes, he has to pay goodwill. He will pay easily if audited statements are there. He will not trust his more. Death. when a partner dies, legal heir can't access books of accounts. So auditor will access and calculate the share of deceased partner and pay to all. Audit ascertains whether necessary books of accounts and allied records have been kept and any weakness in that regard. So whether books of accounts are kept, we will know. If not kept, auditor will check. Audit helps in detecting wastages and losses, those that occur due to weak internal control. Auditor reviews existence and operation of control, whether control exists and is operating properly. Exists and is operating properly. See what is important, having a control or operating, both. You watching this lecture is important or nicely watching? Nicely watching. Government may require audited statement for giving financial assistance or issuing license for a trade. Whenever government issues any license, gives you some subsidy, they want audited statement. So their trust is more. Simple. Any 6 points. I will make you learn all. It safeguards the financial interest of person who are not associated with management of company. Safeguards interest of those who are not associated with management. Acts as a moral check on employee doing fraud or defalcation. Remember 2 points. Done. Safeguards the financial interest of person who are not associated with management. Acts as a moral check on employee doing fraud. Settlement, settlement, settlement. Number 1, it helps in settling liability for taxes, negotiating loan, determining purchase consideration for business. Helps in settling dispute for higher wages or bonus as well as insurance claim. Helps in settling the accounts at the time of admission or death of partner. 3 settlement learn. Settlement, settlement, settlement. Break. Done. Chalo, helps in settling liability for taxes, negotiating loan, determining purchase consideration for business. Helps in settling the dispute for higher wages or bonus as well as insurance claim. Helps in settling the accounts at the time of admission or death of partner. Next. Auditor ascertains whether necessary books of accounts and records are kept. Auditor reviews. Auditor helps in detecting wastages, losses. Audit ascertains whether existence and operation of control. And last, government may require audited statement for giving financial assistance or issuing license. Any 6 points remember. First 5 though you know. It safeguards the financial interest of people who are not associated with management. Second point, it acts as a moral check on employee doing fraud or defalcation. This also you know. Settlement, settlement, settlement. Audited accounts are of great help in settling liability for taxes, negotiating loan, determining purchase consideration of business. It helps in settling dispute for higher wages or bonus as well as insurance claim. Helps in settling accounts at time of admission or death. Now, whether necessary books of accounts are kept. Auditor helps in detecting wastages and losses. Auditor helps in existence and operation of control. Auditor reviews existence and operation of control and reports weakness in control if any weakness is there. Government may require audited statement for giving financial assistance or issuing license. If you don't know first 5 and last 2, first 5 and last 2, simple, 7 points done. More than enough. In exam 4 or 6 mark question will come max to max. Read nicely. 40-second break. Chalo, last time. It safeguards the financial interest of people who are not associated with management. It acts as a moral check on employee doing fraud or defalcation. Settlement, settlement, settlement. Helps in settling liability for taxes, negotiating loan, determining purchase consideration for business. Helps in settling dispute for higher wages or bonus as well as insurance claim. Helps in settling accounts at the time of admission or death. Now, Last 2 points, so you know, auditor reviews existence and operation of control and reports weakness in them. Government may require audited statement for giving financial assistance or issuing license. In between 2 points, if you remember, well and good. Audit ascertain necessary books of accounts and records are kept. Auditor helps in detecting wastages and losses due to weak internal control. If you don't know also, okay. Now, very important. Inherent limitation of audit. 3 question, 1 answer. 4 question. Why do we give reasonable assurance? Second, why audit risk can never be zero? Why we give true and fair view and not true and correct view? What are limitations of audit? All 4 common answer. One last time. Why audit risk can never be zero? Why we give true and fair and not true and correct view? Why don't we give absolute assurance and only reasonable assurance? Because there are certain limitations in audit. 4. Nature of financial reporting. Our financial reporting is based on assumptions. When you prepare financial statement on assumption, how can you tell us to give complete assurance? Your statements are only in assumption. You have made in assumption and then we give a assumption. You are saying too much fun. What is this, baby? Are you clear? Let's name 3 assumptions. Number 1. Useful life of asset, rate of depreciation, impairment loss, provision of warranty, provision for bad and doubtful debt. When your statement are in assumption, how can I give complete assurance? How can I tell there is no risk? Second, nature of audit procedure. Our audit is in such a way that we are not an expert in wrongdoing. Are you clear? We are here to audit. If there is something fishy, something doubtful, I will go in detail. Otherwise, I believe everything is correct. I don't come with an intention that there is a fraud. Audit is not a official, audit is not investigation of alleged wrongdoing. Audit is an audit. Okay, I preliminary believe all is correct, especially when fraud is done. They will never tell me they have done the fraud. Okay, so our audit is in such a way that we are not here to find fraud. We are here to do audit. We basically believe all is correct. Okay, so of course, if there are frauds also, I will never find it. If I know, if I get certain suspicion, if I get a doubt, I will go in detail. Okay, but my main work is not to catch fraud. My main work is to do audit. That is what audit is all about. That is why it is said, auditor is a watchdog and not a bloodhound. Means I am like a dog. If there is something fishy, I will go in detail. But at the same time, I am not here to do income tax raid. I am here to do audit. So our audit is such. Third, timeliness of financial statement and balance between benefit and cost. Means, tell me, I need to submit the audit report, yes or no, within 6 months. So deadline pressure is there. I need to do audit within a fixed time. So I will need more information or less. Sir, more information you will need. If I need, tell me more information, okay, cost will be more or less. See, I need to do audit fast. So I need more information. More information is equal to more cost. At the same time, I have to do profitable engagement also. My audit should be profitable. Are you clear? I am not here for charity. Okay. At the same time, audit should be profitable. So maintaining balance between benefit and cost is difficult. I want lot of information which will result in lot of cost due to deadline pressure. At the same time, my audit should be profitable. Maintaining balance is difficult. Very quickly. I want more information in less time. Why? There is deadline pressure, which will result in more cost. If there is more cost, engagement won't be profitable. My audit would be in loss. So maintaining balance between benefit and cost is a difficulty. That is why I will never check in detail. At the same time, I will check reasonable assurance I will give. Okay. Last, other matter. Other matter is fraud involving senior management. When senior level is involved, you can never catch the fraud. Sir, why? Why? They will plan it in such a way. Even if you want, you cannot catch. Okay. Second, related party relationship. It is a huge risk. We can never know how many related parties are there. Okay. Because it's difficult. At the same time, I cannot check all related parties. Okay. Non-compliance is other matter. And last, there are future events which may seize entity to go as a going concern. Who would have thought Big Bazaar would be closed? Who would have thought Byju's would be in trouble? Okay, so I cannot predict future. That is why I always give reasonable assurance. Who would have thought this month lockdown will affect a lot of people? Okay. What is the memory technique? Technique is FAT2. Auditor is FAT2. F-A-T-O, FAT2. One last time. Tell me, why do I give only reasonable assurance? Why I give true and fair review? Why audit risk can never be zero? Because auditor is FATO, F-A-T-O-F. Nature of financial reporting. A, nature of auditing procedure. T, timeliness of financial reporting, balance between benefit and cost. Timeliness of financial reporting, balance between benefit and cost. Other matter. Other matter are four: senior management, related party, non-compliance, future event. Senior management, he does something with related party, non-compliance, future event going concern. Future event going concern. Clear? One last time. What are limitations in audit? Auditor is FATO, F-A-T-O. Nature of financial reporting. Nature of auditing procedure. Timeliness of financial reporting. Balance between benefit and cost. And last, other matter. Okay, this also will do. But first, let's finish this. This is more easy one. Start. Essay 210. Agreeing the terms of engagement. One more time. Essay 210. Agreeing the terms of engagement. Essay 210. You have to speak. Agreeing the terms of engagement. Okay. Essay 210. Agreeing the terms of engagement. Very simple. See, whenever you enter into relationship with a client, there is engagement letter signed. Who will sign? Auditor or client? Both will sign, because both are entering into an engagement. Client is saying that we have engaged you as an auditor audit. Okay. So audit engagement letter is prepared. Tell me what is prepared? Audit engagement letter. Tell me who will prepare this? Sir, client. Wrong. Remember, auditor will prepare and give it to client, and both will sign. So later there are no issues. If there is a written engagement letter, everything is perfect. So first point, engagement letter means what? Engagement letter said auditor and management both agree on common terms and condition. It is sent by auditor to the client. What are terms of engagement letter? 5. First question. Objective and scope of audit of financial statement, already discussed. Second, responsibility of auditor, responsibility of management. What is the responsibility of auditor? To do the audit, give reasonable assurance and give audit report. What is the responsibility of management? They are responsible for preparing the financial statement. Auditor will not prepare. Auditor will check, not prepare. They are responsible for preparing financial statement as per FRF, Financial Reporting Framework. Second, for internal control, management is responsible. Third, they will give auditor all information, additional information, okay, and unrestricted access to all the staff for getting audit evidence. So they have to cooperate. Fourth, identification of applicable financial reporting framework for preparation of financial statement. We don't have to prepare financial statement. We have to prepare as per FRF, Financial Reporting Framework. In India, Schedule 3. Okay. And last, form and content of audit report. What is the format and content? As per SA 700, format and content. And circumstance in which form and content may change. When it can change? Electricity company, banking company. Understood? Okay. One last time. Audit engagement letter is the letter on which both auditor and client conclude they both agree to it. It is sent by auditor to client, prepared by auditor, sent to client. 5 things are there in engagement letter. Number 1, objective and scope of audit of financial statement, responsibility of auditor, responsibility of management, identification of financial reporting framework for preparation of financial statement, and last, form and content of audit report and circumstances in which form and content may change. Learn nicely. Small break, 20 seconds. Done. Tell me, what are terms of audit engagement letter? Number 1, objective and scope of audit. Okay. Second, responsibility of auditor, responsibility of management, identification of financial reporting framework for preparation of financial statement, and last, form and content of audit report, format and content. It should be as per SA 700 and circumstance in which it may change. Second, before accepting or sending engagement letter, okay, there should be precondition for audit. If preconditions are fulfilled, only then auditor will accept the audit. Preconditions for audit as per SA 210, agreeing the terms of engagement. Precondition for audit is used by management of applicable financial reporting framework for preparation of financial statement and agreement by management and TCWG premise on which audit is done. What are preconditions for audit? This many. Preconditions. If preconditions are there, only then auditor will accept the audit. Number one, whether financial reporting framework is acceptable. Okay. Okay. Number one, determine whether financial reporting framework is acceptable. Okay. So first precondition is financial reporting framework is acceptable. Second, agreement by management, it acknowledges its responsibility. Management acknowledges its responsibility for three things: preparation of financial statement, okay, as per FRF. Second, internal control. And third, to provide auditor with all information, additional information, and unrestricted access to person. Okay, so two things. Okay, what are two preconditions for audit? Preconditions for audit: whether financial reporting framework is acceptable, management understands its responsibility. Three responsibility: preparation of financial statement as per FRF. Second, internal control, to give auditor all information, additional information, okay, and unrestricted access to person within the entity. Last, recurring audit. Recurring means every year audit is repeated. For example, I am auditor of Reliance. Every year I have to send the engagement letter to Reliance, or no need? Every year send? No. Why to send? Okay, every year don't send, except in this situation when we need to send. Recurring audit means if we are the same auditor every single year, do we need to send engagement letter? No. But in this cases we have to send. Auditor may decide not to send engagement letter for each period, but these conditions we have to send. In following condition: any indication entity has misunderstood the objective and scope of audit. Entity has misunderstood the objective and scope. Let's take an example. For example, they are not giving you data only. You're like, please give me data, I want to give reasonable assurance. Last year you checked, why to give again? Then you give an engagement letter that you have misunderstood the objective and scope. Every year I am giving report, every year I need data. Second, any revised or special terms of engagement means, for example, fees have increased, number of locations have increased, audit work, earlier you were not doing tax audit, now you are doing that also. Revised or special term. Change in senior management, change in ownership, change in nature or size of business. Okay, senior management, ownership, nature and size means company has acquired 3 more companies. Now you have to do audit of those also. So of course fees will change in nature or size. Change in legal requirements, Companies Act requirement have changed, CARO has changed. Change in financial reporting framework, earlier it was Schedule 6, then came revised Schedule 6, now Schedule 3. Change in reporting requirement, earlier report was as per AS, now it is as per Ind AS. Okay, so don't send engagement letter each year. In this situation you have to send. Any indication entity has misunderstood objective and scope of audit. Second, revised or special terms of audit engagement. Learn only these 2 points. Rest all are easy. Any indication entity has misunderstood the objective and scope of audit. Any revised or special terms of audit engagement. Now very simple. Change in senior management, change in ownership, change in nature or size of company's business. 3 points. Change in senior management, change in ownership, change in nature or size of company's business. Remember till here. Done. Change in senior management, change in ownership, change in nature or size of company's business. Last 3. Changes in legal requirement, changes in financial reporting framework, changes in reporting requirement. Changes in legal requirement, changes in FRF, financial reporting framework, changes in reporting requirement. Simple. Easy. One last time. Engagement letter don't prepare every year, but in this situation prepare. Okay. Any indication entity has misunderstood the objective and scope. Any revised or special terms of audit engagement, change in senior management, change in ownership, change in nature or size of company's business. Changes in legal requirement, changes in reporting requirement, changes in financial reporting framework. Easy? Easy? Yes, sir. One last time. Every year, don't send engagement letter except in this situation. Entity has misunderstood the objective and scope. Any revised or special terms, change in senior management, change in ownership, change in nature or size of company's business, changes in legal requirement, changes in FRF, changes in financial reporting requirement. Last point. Limitation on the scope prior to acceptance of audit. Before signing engagement letter, only management is saying don't check debtor. They are putting a limitation. You can check everything, but don't check this debtor. Okay, Hansen is the name of debtor. Don't check Hansen. You're like, why don't to check? No, they will anyways not reply. Don't check. Any limitation is put before accepting the audit, before signing on engagement letter. Okay, that you know that if you accept this limitation, you have to give disclaimer report. See, if they put any limitation on you before signing audit engagement, okay, before signing engagement letter, you know that if this limitation is put, if this debtor is not checked, effect can be material and pervasive. Disclaimer report will come. Don't accept such an engagement. We will not accept such a engagement. Are you clear? Okay, that is the first point. Example, parallel. If a girl tells, I will not stay with your parents, I want to stay alone, will not stay with your parents, don't accept such a marriage. Are you clear? Before marriage only she is saying so many things. After marriage, she will throw you out also. Understood? Yes, sir. Now, second, change in engagement. Okay, after signing engagement letter, there is change in engagement. Now they are saying to lower engagement. See, earlier you were doing stat audit, okay, statutory audit. Now they are saying you do internal audit, you do accounting, you do physical verification of asset, but because you cannot do stat audit. Acceptance of change in engagement to lower level of engagement. Okay, they are changing the engagement to lower level. From normal audit, they are giving you internal audit. From normal audit, they are giving you accounting work. From normal audit, they are telling physical verification of asset. Divide into two parts. Is there any reasonable justification for doing so, or there is no justification? Number one, if there is justification, you are genuinely not good. Okay, you really don't know how to work, you got confused because you are new chartered accountant. If there is reasonable justification, work under new engagement. Don't give any reference to old engagement. Do the work as per new engagement and go away. If there is reasonable justification, he will prepare new engagement letter, issue report as per new terms, and do not give any reference to original engagement. If there is no justification, they are just telling you to do accounting work, okay, because you are finding lot of queries, you are irritating management, you have found out lot of mistakes, then tell TCWG. Who is TCWG? Above management. Those charged with governance, okay, those who give direction to company. Ratan Tata, board of directors, TCWG. Below them who manage Tata, okay, TCS, Taj Hotel, they are management. Who work as per TCWG direction, management. Who get the things done, management. Who give direction, policy, vision, mission, TCWG. Okay, so if there is no justification of shifting the engagement, tell TCWG I want to continue. Tell management I want to continue the engagement. You are putting restriction, I want to continue. There is no justification that you are giving me internal audit work. If management don't agree, withdraw from the engagement and report to regulator, report to management, report to TCWG if required by law, report to everyone. Then they will take care. In future, if report will come, okay, SEBI will take care what to do. If there is no justification, auditor should tell the management to continue. If not permitted by management, he will withdraw from the engagement, okay, where possible under law, regulation, etc. Good. One last time. Change in engagement to lower engagement. Divide into two parts. Reasonable justification, no justification. Reasonable justification is there. Okay. Then work under new engagement. Don't give any reference. There is no justification. They are just shifting the work because you are finding out queries. Okay. Tell management I want to continue. If they don't agree, withdraw from the engagement. And also report to regulator, law, TCWG as required. Okay. Last point, guys. With this we are done. Now, oh my God, only little time we will be done. If you have enjoyed lecture till here, please put a like, okay? and put a nice comment. It will motivate us to work even harder and prepare next chapters with lot of energy, lot of hard work. You are seeing the amount of hard work put in, okay, how much hard work we are doing it, okay. So please, if your little encouragement will help us a lot, and also share the video with your friends so we can pass the same positivity, same hard luck, and make this audit subject very, very easy. Okay, continue. Elements of system of quality control. SA 220 forms a system of quality control. SA 220 forms a system of quality control. Okay, tell me, we want good quality audit or bad quality? Good quality audit. When good quality audit will be there? When you follow system of quality control. Sir, what is system of quality control? There are policies and procedure in 6 areas. If you follow these policies and procedure, firm will follow good system of quality control. When you follow good system of quality control, there will be good audits. Tell me, we want, very simple. Tell me, we want good quality audit or bad? Good. When it will be good? When firm follows system of quality control. What is system of quality control? There are policies and procedure in 6 areas. If you follow them, there will be good system of quality control. And when quality control system is good, audit will also be good. Moving on. SA 220 forms system of quality control, include policies and procedure in 6 areas. How many areas? 6. Number 1, leadership responsibility for quality within the firm. For every quality, who is responsible? Leader. Sir, who is a leader? Signing partner. Signing partner is a leader. Leader and his team should follow ethical requirement. Ethical requirement. Acceptance and continuance of client relationship and specific engagement. Okay. What is the third point? Whenever you accept the client or continue from last year, accept the client or continue from last year, you have to fulfill certain requirement. Don't accept any client. Think and then only accept. Third point. Now, engagement work, will do the work on engagement performance. Okay. Human resource, we will select good people. Okay. Fifth, they will perform on engagement. And last, entire process monitoring is done to see we are working properly. One more time. Firm's system of quality control will include policies and procedure in 1 area or 6 area? 6 area. If these policies and procedure are followed, we will do good quality audit or bad? Good. See, we want good audit or bad? Good audit. When will good happen? When we follow system of quality control. System of quality control. Third, what is good system of quality control? When we follow policies and procedure in 6 area. How many area? 6. Number 1, leadership responsibility for quality within the firm. Leader and his team should follow ethical requirement. Okay. Now, don't accept any client. Acceptance and continuance of client relationship and specific engagement. Okay. Now, human resource, what they will do? Engagement performance. Work on engagement performance. And last, monitoring. Simple. Any one point can come if they want to ask. First, leadership responsibility. Engagement partner is responsible for each engagement on which he is assigned. For example, Reliance, I am the signing partner, I am responsible. Tata, you are the signing partner, you are responsible. Actions of the partner and team. Okay, for quality on each audit engagement shall signify 2 things. Second, fact that quality is essential in performing. Partner and team should feel quality is essential. Quality is essential. Second, importance to audit quality of. They have to follow 4 points. Importance to audit quality of. Performing work as per professional standard and legal and regulatory requirements. Professional standard means do work as per SA and legal and regulatory requirement. Second, comply with firm's quality control policies and procedure. Every firm policies are there. Documentation policy, how to calculate materiality, how to do work. Okay. Third, issue the report that is appropriate in circumstance. Don't worry, they might remove you from audit. Don't worry, we will issue what report? What is appropriate? Correct report. Issue the report appropriate in circumstances. Last, ability to raise concern without fear of reprisal. You can remove me, I will still raise concern without fear of being removed. You don't have any fear. Next year, what if they don't give audit? Don't worry. They will give. Okay, if they don't give, you are chartered accountant, you will find better work. Okay, so partner and his team is responsible for each engagement to which they are assigned. They have to take 2 responsibility. Second point first, quality is essential in performing audit engagement. Quality is essential. Second, importance to audit quality of. First, Perform the work as per professional standard and legal and regulatory requirement. Perform the work as per professional standard. Comply with the firm's quality control policies and procedure. Comply with firm's quality control policies and procedure. Third, issue audit report that is appropriate in circumstance. Ability to raise concern without fear of being removed. Without fear of being removed. Learn 4 points. Small break, 10 seconds. Done. Tell me first one, leadership responsibility. Leader and his team is responsible for each audit engagement. First, quality is essential. Importance to audit quality of performing work as per professional standard and legal and regulatory requirement. Complying with firm's quality control, policies and procedure. Issue the report that is appropriate in circumstance. Don't worry. Qualified report, adverse, disclaimer, don't worry. Last, ability to raise concern without fear of reprisal. Next, ethical requirement. Code of ethics has given fundamental principle of professional ethics to be followed for conducting audit of financial statement. Code of ethics has given fundamental principle of professional ethics for conducting the audit. Certain fundamental principles are given which you have to follow while conducting audit. Fundamental principle of professional ethics given by Code of ethics for doing audit. Technique is ICOP. Integrity, confidentiality, objectivity, professional behavior and due care. One more time, integrity, confidentiality, objectivity, professional behavior. Integrity, never tell lie. Be honest in doing the work, okay? Do straightforward, honest and sincere work. You should be honest, never tell lie. Confidentiality, don't leak the data of client. You know Reliance is in loss, okay? Reliance is in loss. Before the statement is released, don't leak to anyone. You have to be confidential in your behavior. Third, objectivity, be unbiased, okay? Though you know the client since many years, you have to be unbiased. Independence should be there. Integrity, confidentiality, objectivity. Subjectivity is biased, objective, unbiased. Professional behavior should be there, okay? When you are there for work, for example, they are calling you, come for lunch, you are directly going, oh, I want to eat food. Singapore audit is there, you have gone to Singapore, you are enjoying in pub and not doing audit, okay? Having wine, baby, understood, okay? So professional behavior. Tell me, Code of ethics has given fundamental principle of professional ethics for doing audit of financial statement. ICOP, ICOP, ICOP. Integrity, confidentiality, objectivity, professional behavior. Now, independence is there. Independence has two words: independence of mind, independence of appearance. Independence of mind, independence of appearance. What is independence of mind? State of mind which allows us to form an opinion without being affected by others. So I can act with integrity, exercise objectivity, maintain an attitude of professional skepticism. See, such mind that I can make my own opinion. I should not be affected by others. He has given me 1 crore rupees audit. Okay. Now I have to listen to him. No, then don't take such audit. You have to be independent. Independence of mind. Don't get affected by others. Only then you can act with integrity. Exercise objectivity. Maintain attitude of professional skepticism. What is professional skepticism? Questioning mind. You should always have a questioning mind. Being alert to circumstances. There can be misstatement due to error and fraud. Everywhere. Though we are assuming management is not fraud, but we have to keep questioning mind. That there can be mistake due to error or fraud. For example, they are ordering raw material from only one vendor. Why only this vendor? Since how many years contract is there? What is the terms and condition? They should not be related party. Okay, this vendor, please obtain his confirmation. Okay, what relation you have with him? Understood. One fixed asset is purchased of 80 crore. Why you purchase this asset? For what use? Where is the asset? From whom you purchased? At what rate you purchased? Did you ask for quotation? Is it not a related party? 1,000 questions. We are not saying the company is fraud, but we should have a questioning mind. Independence of mind is state of mind. I can make opinion on my own without being affected by other. So I can act with integrity, exercise objectivity, maintain attitude of professional skepticism. What is independence of appearance? From mind you are independent. From appearance you are not. Every day you are saying good morning to client. Client will say good morning baby, you are auditor. Crazy kiya re? Are you crazy? Okay, facts and circumstances are so significant, reasonable. Third party can conclude auditor's integrity, objectivity, or professional skepticism has been compromised. What do you mean by this? It should not seem that you are not independent. Okay, you are independent from mind, but appearance also should be independent. You are not chartered accountant. You are not working for client. You are an independent person. You are chartered accountant with a lot of respect. It should seem also you are independent. You don't have to wish client. Okay, client is saying come for lunch. You are, oh, I am very hungry. Let's go. Independence of appearance it should be. Are you clear? You should appear to be independent. No one could say that, oh my God, he has taken, he is corrupted. Okay, independence of appearance. Understood? Sometimes what happens, okay, two people are sitting in class, okay, now when they are sitting together only, okay, they are holding hands of each other, it is clearly seen that they both are having love affair. You are here for love affair or you are here for studying? Are you clear? Appearance it should be. It should appear, though you can have an affair, but have it outside. Independence of mind, it should not appear you are having. Are you clear? Independence of mind, independence of appearance. Now what are threats to independence? Threats, what are the threats? Memory technique is SAF. Okay, SAF. For Karina, who is a threat? SAF, because SAF is possessive. He doesn't like Karina doing such vulgar scene or bad scene with other actor. So what are threats to independence? SAF. Self-interest threat. See, when you have an interest in something, it is self-interest threat. When you have taken loan from client or you have given loan to client, you have accepted lot of gift from the client, your interest is there. Okay, client, let's take 3 examples. Self-interest, you have taken loan from client. Now you will never give an unbiased report. Your interest is there in client. Even if any query is there of you are saying, sir, this 30 crore query is coming. Sir, do you remember we have given self-interest threat? Your interest is there. Client is going to give you job next year. Client is saying, if this company is alive, I will give you job of 30 lakh. Right now you are earning 5 lakh. Now your interest is there. Whenever your interest is there, you can never do proper audit. So what is the threat to independence? Self-interest threat. Self-review threat. Remember, in this world, biggest mistake is what you know. We never find our own fault. If my fault is there, I will never accept. Your fault is there, you will never accept. That is the universal law of life. We believe we are correct. So last time we had done some mistake, but how we will correct our own mistake? This is a threat. I was auditor last time, this was here also, I was there. How will I tell? I did a mistake last time. Are you clear? So self-review threat. Or last time I was a director in a company. Now I am auditor. How can I say as a director I have done fraud? Are you clear? So self-interest threat, self-review threat, advocacy threat. You are promoting client to such an extent, it is clearly seen your objectivity, integrity is compromised. You are advocate of client. Example, do you know there is a case going on in a company? Now for case we have to book liability if company is going to lose a case. If less than 50% chance is there for losing, that is contingent liability. Now you go to meet a lawyer. You have to be unbiased there. Lawyer is telling we can lose the case. You are saying no, we will win the case. It is clearly seen you are corrupted. How much you are promoting your opinion. Baby, understand, you are unbiased person. You should not be client's advocate. When you advocate a client, when you promote a client to such an extent that it is clearly seen your integrity is gone, it is a threat. Intimidation threat. Okay, dhamki. What they are saying, if by mistake you give adverse report, no, next year we will not give you audit or will reduce your audit fees. Your majority fees come from here only, will reduce the fee or will not work. Okay, will appoint another auditor. So you have to give clean report. Understood? Okay, this is intimidation threat. Okay, intimidation means giving threatening. Okay, such a threatening that what? Next year will not give you audit or will reduce your fees. Familiarity threat. Since years you are doing the audit. Your relative is the client. Client is your relative. Okay, for example, your girlfriend is there. His dad's firm is there. What will your girlfriend tell? True report will come. If true report doesn't come, okay, and my dad, you remember, no, you had no work. At that time, I had told my dad, give audit to you. My dad has given audit to you. Now you are doing this with my dad. What is this? Do you want audit or you want breakup? You are like, oh, okay, I love you. Okay, clean report then. Understood? Familiarity threat. You are accepting gift from the client. Since long term, you have relation with the client. Okay. Now, due to which little influence will be there. Tell me, what are threats to independence? SAF. For Karina, who is a threat? SAF. Self-interest threat, self-review threat, self-interest threat, self-review threat, advocacy threat, intimidation threat, familiarity threat. One last time. What are threats to independence? Self-interest, self-review, self-interest, self-review, advocacy, intimidation, familiarity. Learn nicely. Then tell me what are threats to independence. For Karina, who is a threat? Self-interest, self-review, self-interest, self-review, advocacy, intimidation, familiarity. Whenever threat exists, you have to put safeguards. Put safeguards for the threat. Okay. Whenever there are threats, okay, if auditor is, see, we should, whenever threats to independence exist, we should not accept such an audit. Okay. Or put in place safeguards to eliminate them. Tell him, you are giving me audit, but I will remain independent. Don't think I will be corrupted. Don't think I will listen to you. Though we know each other since long, but audit would be independent. If you are unable to implement safeguards, okay, safeguard means control, don't accept such assignment. Number one, when threat exists, don't accept assignment. If you have to accept, put in place safeguards. If you can't put in place safeguards, do not accept such a work. Next point. Acceptance and continuance of client relationship and specific engagement. Whenever you accept any client, SQC1, standard on quality control 1 tells 4 things you have to keep in mind before accepting any work. Information such as the following helps the partner in deciding whether to accept the assignment or not. 4. Integrity of owner, management, TCWG. Owner, you understand, who gives direction to the company, frames the vision, mission, rules, TCWG, and who work as per TCWG, helps getting work done from other management. You have to see whether they are ethical or not. If owners have been in jail, okay, owners have closed 4 companies, this is their 5th company, owners are mafia, owners have done a lot of fraud in the past, don't take such audit. You will get another assignment. Integrity of owner, management, TCWG. Second, engagement team is competent to do the work and has necessary capability including time and resource. Can I take audit of Reliance? No, I don't have such resources. They require big 4, they require 200 chartered accountant. Where will I bring from? Engagement team is competent, has necessary capability including time and resource. Whether the firm and team can comply with ethical requirement. ICOP. Firm and team can comply with ethical requirement. Significant matter that have arisen during previous audit and their implication or continuing the engagement. Significant matter. Last year, your auditors have been removed. Think 100 times before accepting such an audit. When auditor gets removed or auditor leaves, understand big fraud is going to happen because no one will leave fees and go. Significant matter that has arisen during previous audit, their implication on continuing the engagement. 4 things keep in mind before accepting audit. Integrity of owner, management, TCWG. Second, engagement team is competent, has necessary capability including time and resource. Whether the firm and team can comply with relevant ethical requirement. Significant matters arising during previous audit and their implication on continuing the engagement. Read nicely. Break 15 seconds. Done. Okay. 4 points helps in deciding whether to accept the work or not. Acceptance and continuance of client relationship and specific engagement. Integrity of owner, management, TCWG. Whether engagement team is competent, has necessary capability including time and resource. Whether the firm and team can comply with relevant ethical requirement. Significant matter that have arisen during previous audit and their implication on continuing the engagement. Over guys, last 2 points. Human resource. Tell me, we should have capable, competent and committed human resource. Underline 3 words. Underline what? I will underline. Capable, competence and committed people. Now policies and procedures should be there. So we get capable, competent and committed workforce. What policies should be there? Recruitment. Proper recruitment policy. Big 4 has 4 rounds of interview. We will do recruitment as per capability and competence. Recruitment will be done as per capability and competence. Inside no explanation is given in the book. Recruitment as per capability and competence. You recruited, now do career development of that person. Career development, promotion. Recruitment should be as per capability, competence. Career development. Promotion do. Compensation means always pay more than industry. If you pay more, you will always get more work. Remember, okay, pay more, compensation. Performance, evaluate his performance, whether he's working nicely or not. Estimation of personal needs. What is his personal need? Fulfill them. Okay, in long term, he will be very helpful. Very simple. Tell me. Human resource. There should be policies and procedures so we get capable, competent, and committed workforce. Capable, competence, and committed workforce. Policies and procedures should be in this many areas. So we get capable, competent, and committed workforce. Recruitment. How we will do? Capable, competent person. Recruitment of capable, competent. Recruitment is done. Career development, promotion. Career development, promotion. Give him more than industry. Compensation. Compensation. Estimation of personal needs, performance evaluation. Performance evaluation, estimation of personal needs. Read nicely. Small break. One more time I will speak. Recruitment should be as per capability, competence. Capability, competence. Career development. Career development. After career development, promotion. Okay, recruitment. Recruitment should be as per capability, competence. Capability, competence. Career development. Promotion. Compensation. Performance evaluation, estimation of personal needs. Clear? Read. 10-second break. Done. Recruitment should be as per capability, competence. Capability, competence. Career development. Promotion. Pay more. Compensation. Performance evaluation. Estimation of personal needs. Over. What they will do? Human resource. Engagement. Perform. There should be policies and procedure to ensure engagements are performed as per professional standard and legal and regulatory requirement. Through policies and procedure, firm wants to bring consistency in the engagement. Consistency means every engagement should be done in same way like Big Four. Consistency is done through maybe through software tools, written manuals, anything. Consistency is through written or electronic manual, software tools, industry guidance. I remember in our ENY, I am an intern of Ernst & Young, Big Four. In Big Four audit firms, top 4 firms in the whole world, we had Gamex software. Okay, so firm wants to bring consistency in assignment. Consistency can be through written or electronic manual, software tools, other subject guidance. Matters include what will be there in these matters. Okay, how engagement team is briefed, how to comply with standard, how to do supervision, training, coaching, etc. Simple. Firm wants to bring consistency. Consistency is done through written or electronic manual, software tool. Matter include how engagement team are briefed. Okay, how supervision is done, review is done. Okay, and process for complying with standards. Simple. Last, entire quality control procedure is monitored. Why do I monitor? Entire quality control system. What entire? All points. Number 1 is what? Leadership responsibility. Leader and his team ethical requirement. Acceptance and continuance of client relationship and specific engagement. Human resource. Engagement performance. Entire system is monitored to see whether we are following professional standards and legal and regulatory requirement. There should be proper monitoring system to see adherence to professional standard and legal and regulatory requirement. Whether quality control system is properly designed and implemented. What is important? Design or implement? Both. First, designing is done and properly implemented. Whether firm's quality control policies and procedure are appropriately applied. Firm's policies. See, firm policies are also there. How to do the work, how documentation is done, how materiality is calculated, and reports are issued as per the circumstance. Why monitoring is done? Tell me. Monitoring is done for 3 reasons. Adherence to professional standard and legal and regulatory requirement. Whether quality control system is properly designed and implemented. Firm's quality control policies and procedure have been appropriately applied and reports are issued as per circumstances. Read nicely. See, quality control system is general. Firm's policies are different. Okay. General system means SA 220. Every firm has different policies also. That documentation should be done, work should be done in this way. That also should be followed, as well as quality control system. Quality control system is point 2, SA 220, and this is firm's policies. Done? Okay. Firm should establish policies and procedure to ensure proper policies and procedures are followed, monitoring is done. Why monitoring is necessary? Adherence to professional standard and legal and regulatory requirement. Quality control system is appropriately designed and implemented. Firm quality control, policies and procedures are applied and reports are issued as per circumstances. With this, we are done. Firm system of quality control should have policies and procedure in 6 areas. Leadership responsibility, leader and his team, ethical requirement, acceptance and continuance of client relationship and specific engagement. Human resource will do what? Perform on engagement, monitoring. Human resource, engagement, performance, monitoring. Anyone can come. Entire chapter is over. I hope you enjoyed as much as I did putting it up forward for you. Okay, thank you so much. If you like our videos, do subscribe. Do consider subscribing India's best channel where we focus only on positive things. This channel is the most helpful channel. We will teach with a lot of energy, lot of passion, okay? All chapters of audit, detailed revision. Share with your friends too. Bye-bye. All the best. Thank you. Take care. Thank you. Very good morning, guys. Hope you guys are doing well. Warm welcome to the best lectures of EISSM and audit nationwide. Yes, friends, we are continuing with audit revision series where audit Mahamarathon, all chapters will be covered in detail with detailed revision. Yes, guys, chapter number 1 is already over. It's the time to start chapter number 2. Yes, in this lecture, we are going to revise in detail chapter number 2, audit strategy, audit planning, audit programming. Sir, from where are you doing the revision? We are doing revision from our magic book. Yes, guys, we have magic book in which in around 90 pages, full audit is covered, A to Z. Okay, so from that, we are doing the revision. Sir, where is magic book available? If you wish, you can directly do revision from your no cost. But if you wish, you can also purchase magic book from www.mrugeshmadlani.com. Full audit book you can purchase. Okay. Let's start right away. Soft copy is not available because soft copy never brings result. We need hard copy because you want hard results. Are you clear? Let's start. Okay. So there are 3 basic topics in this chapter. Okay, number 1, oh baby, audit strategy. Number 2, audit planning. Number 3, audit program. Let me explain you the difference between these 3 terms so we can understand chapter in the nicest possible way. Okay, number 1, what do you mean by audit strategy? Audit strategy means overall, what is the strategy of audit, which will give scope, timing and direction to audit. What is the scope of audit? When we will do audit? Direction. See, usually it is made by partner. Okay, in every firm, let me explain you little, very little. There are basically this many people. There is an article, okay, who works in a CA firm, executive who is a chartered accountant, then there is a manager, then there is senior manager, and then there is partner. Who makes strategy? Partner will make a strategy. Okay, what is our audit going to look like? What is the scope of audit? Timing of audit, direction of audit, how many members will be required for audit? Okay, do we rely on control? Do we not rely on control? So basic strategy. After that, whatever is mentioned in the strategy, who will do the work, when they will do, how they will do, that is a plan. Plan is extension of strategy. Who will do the work, when they will do, how they will do, and last is program. That is very easy, that I will explain later. Let me take parallel example. Indian cricket team strategy is we are going to play aggressive cricket. We are going to play with 4 bowlers and 1 all-rounder. That is a strategy. Aggressive cricket, 4 bowlers, 1 all-rounder. Understood. Now, plan means what? Detailed. Who is going to play, when, how they are going to play, who, when, how, that is plan. Okay, for example, all-rounder will need Hardik Pandya, so that is a plan. Program, as I said, it's very easy. I will explain you later. I hope it is clear, understood briefly. Okay, what is strategy? We'll score a goal. What is audit plan? How we are going to score the goal, what kind of attack we will there, who we are going to attack, in which minute we are going to score. That is audit plan. Nothing but extension of strategy. Strategy is usually made at what level? Partner level. Okay, plan is made by senior manager, and audit program I will teach later. I hope briefly you understood. Now, audit plan. Okay, let's start right away.
Audit plan. Audit planning is the first topic. Audit plan should cover what? Knowledge of the client's accounting system, policies, internal control. So in plan, three things are there: client's accounting system, policies, and control. Second, establishing the degree of reliance to be placed on what? Internal control. Third, determining. See, first, understand the client. Without understanding client, how can you make a plan? Any student will come to me, give me study plan. I will say, what is your activity? How is your family? Okay, what was your marks in foundation? Based on that, I can only give plan. So I need to study the student. Same way, we need to knowledge of client's accounting system, policies, internal control. Based on that, we will decide establishing degree of reliance to be placed on internal control. Listen very nicely. If controls are strong, substantive will be less. I will check less. Okay. So control. My substantive is dependent on controls. Okay. So I will know if controls are strong, substantive less. If controls are weak, substantive more. Second point, establishing the degree of reliance to be placed on internal control. Based on that, determining nature, timing, and extent of audit procedure. What is nature? Which procedure? Timing, when? Extent, how much procedure? That will depend on what? Internal control. Controls are strong, procedure less. Controls are weak, procedure more. And last, coordinating the work to be performed. There are similar areas whose audit should be done by one person only. Example, sales and debtors are related. Don't appoint two people, one person together. Are you clear? Example number 2, let me take, you will understand better. Okay. Example number, fixed asset and depreciation. One person should only do. Chalo, very quickly, 4 point. Audit plan should cover 4 things. Knowledge of the client's accounting system, policies, and internal control. Degree of reliance to be placed on internal control. Based on that, determining nature, timing, and extent of audit procedure. Coordinating the work to be performed. Very simple. One last time, any audit plan should cover 4 things. Knowledge of the client's accounting system, policies, and internal control. Degree of reliance. Based on that, degree of reliance to be placed on internal control. If controls are strong, further procedure less. Determining nature, timing, and extent of procedure to be performed. Coordinating the work to be performed. Very simple. Small break, 5 seconds. Done. Knowledge of the client's accounting system, policies, and internal control. Establishing degree of reliance to be placed on internal control. Determining nature, timing, and extent of audit procedure. Coordinating the work to be performed. Clear? Okay. Now, audit planning, very important. SA 300 is audit planning. Planning is not a discrete phase of audit. Discrete means it is not a separate phase. Planning is not a discrete phase, rather continuous and iterative process. See, planning is not a separate phase of audit. Okay, it is not separate or standalone. Continuous process. Okay, iterative means continuous. That began shortly after completion of previous year audit and continues till current year audit. Tell me, planning is done when? Okay, planning is done at the start, and every time we have to keep on planning. Okay, continuous process. Example, someone told after 10th life will be easy. 11th came. After 11th life is easy. 12th came. After 12th easy. Foundation came. After foundation, inter came. After inter, articleship. After that, final. After that, how will I get job? After that, I want to do practice. After that, I want to get married. So planning is continuous. Planning is not a discrete, means separate phase. Continuous process it is. It begins after completion of previous year audit. As soon as previous year audit is over, we plan and continues till current year audit. Are you clear? Okay. What is the benefit of planning, sir? 6 points. Proper organization and management of audit engagement. With the help of plan, I can manage the engagement in a better manner. Okay, let me take example. If I can plan, I will plan area wise. Sales this many hours. Okay, a purchase this many hours. Inventory this many hours in audit required. Okay, so if I really finish within those timelines, okay, my audit will be profitable. Let me take example. If you don't know, in Big 4, billing is done based on number of hours. Number of hours work, based on that billing is done. Okay. So I will tell I am going to work 1000 hours in an assignment, and then I will bill. Okay. I will tell within 1000 hours, this is the fee. Now, if I plan, work will be really finished in 1000 hours. Only then I will have some profit. Okay. So with the help of planning, I can do the engagement in a better way. Second, attention to important area. In planning, I will come to know that sales is important. For this company, inventory is important. So I will focus on those areas more. If I don't plan, I will focus on everything. Example, this chapter less important. This more, we plan same way. Timely resolution of potential problem. Any potential problem, example, we know this debtor is not going to give confirmation. Last time Mr. Rahul traders did not give confirmation. So now from beginning only we'll tell management, Rahul should give confirmation. Rahul confirmation. 3-4 times we'll tell. So we can solve this problem. Okay. If planning is done. Selection of team member. See, I will select those team member experienced ones for risky area. Inventory is risky. Sales is risky. I will appoint a chartered accountant. Operating expense is easy area. Checking TDS is easy area. For this, we will appoint article. Okay. So I can select the engagement team, experienced members for good, etc. Now, after selection, direction and supervision of engagement team, we need to review their work also. Okay. So in planning, we will keep number of review hours also. That manager will review the work. Easy coordination. Coordination means you require expert. Okay, you require other auditors sometime. Let's take Reliance. Reliance has 100 subsidiaries. So we need to coordinate with all. We cannot audit all 100. Okay, if we are taking the help of others. For example, you are going to a mining firm. You need mining expert. Okay, valuation expert. So helps in coordinating in better way. Actuaries we need. Okay. So tell me, what are benefits of audit planning? 6 points. Very, very simple. Proper organization and management of audit engagement. Attention to important areas. Timely resolution of potential problem. 3 point done. Learn nicely. Proper organization and management of audit engagement. Attention to important area. Timely resolution of potential problem. Last 3 points are very easy. Proper selection of engagement team. Okay, direction and supervision of engagement team. Easy coordination. First, proper selection of engagement team. Now review their work. Direction and supervision of engagement team. Easy coordination. So simple. One last time. What are benefits of audit planning? Proper organization and management of audit engagement. Okay. Attention to important areas. Timely resolution of potential problem. 3 point. Proper selection of engagement team. Direction and supervision of engagement team. Easy coordination. Break. 5 seconds. Done. Proper organization and management of audit engagement. Attention to important area. Timely resolution of potential problem. Okay. Proper selection of engagement team. Direction and supervision of engagement team. Easy coordination. Now, in plan, there are basically 3 things. Content of audit plan. What is there in audit plan? Nature, timing and extent of risk assessment procedure. Nature, timing and extent of further audit procedure and other procedure as per SA. What is SA? Standard on auditing. See, first RAP is there, about which we'll study in chapter number 3. Risk assessment procedure. Basically, we find out risk of material misstatement. Okay. Based on risk of material misstatement, further procedure are designed. For example, if it's too much risk, further procedure will be more. If risk is very less, controls are good, less risk, further procedure will be less. Okay. So in audit plan, there are 3 things. First point we are going to learn later, chapter 3. Second point also chapter 3, and other procedure will come later. See, this is just a plan. What is inside the plan we are going to study later. So basically audit plan has 3 things. Nature, timing and extent of RAP. Nature, timing and extent of FAP. Other procedure as per SA. Okay. Can there be changes in audit plan and strategy? Yes. If strategy and plan are changed, there will be change in further audit procedure also based on consideration of the new risk. Yes or no? Did not understand this last part. Let me explain. There can be changes in strategy and plan. Yes. Due to which, okay, audit procedure will also change. Yes or no? Yes. If strategy and plan are changed, further audit procedure will be changed. Very simple. Over. This we are going to do later. Knowledge of the client's business. Why do we do knowledge of client's business? So we get inherent risk, about which we'll study later. Audit program very easy later. First, let's finish this. Audit strategy. Audit strategy means overall at partner level we decide how many articles we will need, when are we going to do audit, is it a quarterly audit or yearly audit, how many resources we require, will this engagement be profitable. Strategy, overall scope, timing, direction. Okay. So first, establishment of strategy as 5 points. Determine the characteristics of audit. What do you mean by characteristics? Okay. how many locations are going to be there, how many staff we will require, when do we want to do audit, okay, what is the nature of business, how many locations are there, all that is characteristic. Second, team effort. Consider factor that in auditor's judgment are significant in directing the team effort, okay. Which all factors are important? We need to concentrate on these three areas more, okay. So that is also part of strategy. Partner will tell, concentrate on these three areas, because if you cover this, majority of entities covered. Reporting objective. Tell me, when do we need to report? Quarterly or yearly? A yearly report is required. Who told? Sometimes every 3 months also we have to give report in case of listed company. So ascertain the objective to plan the timing of audit and nature of communication. Nature, timing and extent of resources. How much resources required? Okay. Nature means which resource, timing when. If quarterly is there, we will require every 3 months staff. If yearly, then in the year end only. Preliminary work. Consider results of preliminary engagement. Preliminary means what? Before taking the audit, you meet the client. Okay. While talking, you realize there are certain areas which are important in this entity. Okay. So you have to consider result of that, as well as other company. For example, you are doing audit of Cipla. Okay, Cipla is a pharmaceutical company. You are also doing the audit of Glenmark Pharma. In Glenmark Pharma, you found out there is a lot of dead stock in medicine, which get expired, dead stock. So same you will have in Cipla also. So you can, similar engagement you can use. Works of preliminary engagement, last time you did audit, and knowledge gained on other assignment. Very simple. Establishment of overall audit strategy as 5 points. Audit key TRP. Audit key TRP. Audit key TRP. Tell me, what is audit? Determine the characteristics of audit. T is what? Team effort. R, reporting objective. R, nature, timing and extent of resources. Preliminary work. One more time. Determine the characteristics of audit. T, team effort. Reporting objective. Nature, timing and extent of resources. Okay, 2 R are there. P, preliminary work. One last time. Determine the characteristic of audit. Team effort. Reporting objective. Nature, timing and extent of resources. Preliminary work. Small break, 5 seconds. Done. Determine the characteristics of audit. T, team effort. R, reporting objective, nature, timing and extent of resources. Preliminary work. This is very simple. Tell me, audit strategy help the auditor in 4 things, or what are benefits of audit strategy? Resources, 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 resources. Number 1, employment of qualitative resource. Tell me which resource to select, we can decide in strategy. For example, same point, for inventory area, which is a risky area, I will appoint a CA, experienced team member. Okay, for maybe checking operating expense, article also I can appoint. Which resource to appoint? Qualitative. So this was in audit plan also, strategy also this point is there, repetitive point. Second, allotment of quantity of resource. How many people are required? How many people are required? Example, for doing physical stock count of inventory, 4 people are required. For sales, 1 person. Total, how much staff required? We decide in strategy. Allotment of quantity of resource. Third, timing of deployment of resource. Timing means when to deploy. Okay, when? Usually at the year end only audit is done. Okay, after year end. But sometimes quarterly is there. So if quarterly is there, we will require special people. I remember we used to do audit of SE Forge, subsidiary of Suzlon. So in that every quarter I had to go to Coimbatore. So timing, okay, every quarter audit we had, every 3 months. Management of resource. Management means how meeting is conducted, briefing meeting. For example, partner will tell you this work to do. Not partner, senior manager meeting. Debriefing meeting is also there. Meeting, debriefing meeting, how they are guided. What is debriefing? Whatever you have worked, you will again tell them, this work I have done, this I have not done. Okay, so 4. What are the benefits of audit strategy? 4. Employment of qualitative resource, allotment of quantity of resource, timing of deployment of resource, how to manage the resource, management of resource. Very simple, you can do. Employment of qualitative means who, which resource. Allotment, how many, timing, when, management, how will manage. One more time we'll speak. 4. Employment of qualitative resource, allotment of quantity of resource, timing of deployment of resource, management of resources. Audit strategy helps in 4 points. Employment of qualitative resource, allotment of quantity of resource, timing of deployment of resource, management of resources. Small break, 15 seconds, learn. 10 seconds, sorry. Done. 4 benefits of audit strategy: employment of qualitative resource, allotment of quantity of resource, timing of deployment of resource, management of resources. Moving on. Audit planning is a continuous process. Tell me yes or no. Yes, planning includes continuous. In planning, what is there? These points will come again in future, but let me explain. Analytical procedure to be applied as risk assessment procedure. What is analytical? Checking ratios. Let me take an example. 1 month rent is what? 1 lakh. So 12 months will be 12 lakh. Now, sir, analytical procedure is performed in the beginning. Yes, in the beginning I will check certain things. If they are fishy, no, so I can check them in detail. Usually partner checks all this. In the beginning only will check. For example, sales are 1 crore. 18% GST of that is how much? 18 lakh. Now, if that GST is coming what? Maybe too high. Okay, GST is too high and sales is not there. We will know there is some mistake in sale. Or vice versa also can be there. So that is analytical procedure. Second example, better one. Freight. Freight is coming too less. Freight has a relation with sales. If sales is there, we will transport it. So freight. Freight is too less. Okay, or freight is too high, but sales is not there. Means there is a fraud. We have not shown sales. Okay. So like this, analytical procedure is there. In detail, other risk procedure, general understanding of legal framework of the entity, determination of materiality, which we'll learn later in this chapter, involvement of expert. So in audit planning, these procedure are there: analytical procedure, other procedure, general understanding of legal and regulatory framework, materiality, expert, etc. Simple now though. Tell me, overall audit strategy and audit plan is whose responsibility? Sir, it is the responsibility of auditor. Strategy and plan is the responsibility of auditor. Are you clear? Can we discuss with management my plan? Yes, you can discuss. For example, we are going to start inventory of what? Inventory audit tomorrow. So Manoj should not be on leave. Okay, you can share. So they will keep Manoj not busy and you can do work in a proper way. But don't share that much that it will compromise the effectiveness of audit. Example, don't tell my boss has told in inventory lot of mistakes are there. So tomorrow I am going to irritate Manoj. Then they will run away. Are you clear? Overall audit strategy and plan is auditor's responsibility. Baby, agreed? Agreed. Okay. You may share certain portion of plan with management so you can do audit in better way. But it should not compromise the effectiveness of audit. Understood? Yes. Direction, supervision and review of engagement team member. Tell me, your work is checked by another, that is known as supervision. How much work is checked? How much work is checked depends on 4 factors. What is the name of 4 factors? Cars. Cars is the name. Number 1. Direction, supervision and review of team member depends on 4. Cars. Capability and competence of team member performing the work. Example, if that member is capable and competent, his review will be less. How much review will be done? Depends on capability and competence of member. If the member is very much competent, less review. Not very competent, new article, more review. Second, area of the work. Always remember, for crucial areas like inventory, review is done more. Where material amount is there, risk is more. Okay, so area. Second, assess risk of material misstatement. If risk of mistakes is more, then of course review will be more and vice versa. Size and complexity of entity, listed versus unlisted. If it's a listed company, lot of compliance are there, lot of people are dependent, so of course review will be more and vice versa. Clear? Tell me, direction, supervision and review of engagement team member depends on 4. Direction, supervision and review of engagement team member depends on 4. Cars. Capability and competence of team member performing the work. A, area of audit. R, risk of material misstatement. Size and complexity of entity. Very simple. One more time. Direction, supervision and review of work of engagement team member depends on cars. Capability and competence of team member performing work. area of audit, risk of material misstatement, size and complexity of audit. Small break, 10 seconds. Learn. Chal. Okay. Direction, supervision and review of engagement team member depends on CAR, capability and competence of team member performing the work, area of audit, risk of material misstatement, size and complexity of entity. Okay, last question. Document. Will I document means write, document. What will I document? Strategy I will document, plan I will document, or any changes? All three. Number one, I will document overall audit strategy. Strategy means what? Which gives scope, timing and direction to audit. Audit plan means nature, timing and extent of RAP, nature, timing and extent of FAP, further audit procedure and other procedure as per SA. What is RAP, what is FAP will come in next chapter. Changes to strategy and plan. Moving on. Okay, last two are pending. Very small chapter this one, audit program. What is their audit program? Listen very nicely. Okay, in 1 second audit program will be over. See here. Tell me, what do I want to give audit report? How I will give report based on audit evidence. Audit report based on audit evidence. Evidence should be sufficient and appropriate. How do I get evidence? Audit procedure. By applying procedure, I will get evidence. Those series of procedure is nothing but audit program. Audit program. One more time. I want audit report. Based on what I will give audit report? Audit evidence. Where do I get audit evidence from? Audit procedure. Those procedure are known as audit program. Let me show you. Let me show you. See, this is audit program. What to check? What we will check in inventory, trade receivable, cash and bank. Let me name only 2 points. In cash and bank, I am going to check all cash balance including deposit. Trace the balance with certificates. Trace the balance with bank confirmation. What to check? What to check? That is nothing but series of procedure. With the help of this, I will get audit evidence. Based on that, I will form audit opinion. What do I get by checking this? List of all cash balance, what I will guess? I will get completeness. I will get existence. Are you clear? See, if I get all confirmation, I know it is complete list. Existence, that cash really exists also. Okay, this will also come in chapter number 3, assertions. But briefly, okay, come here. What is audit program? Audit program is nothing series of verification procedure to be applied to financial statement for purpose of obtaining sufficient and appropriate audit evidence. So we can express an opinion on financial statement. Very simple. What is audit program? As we saw, series of verification procedure to be applied to financial statement for the purpose of getting audit evidence. So we can express an opinion. Tell me. Now this audit program is there. This one. Tell me. For all companies, same program is there. I cannot read all, of course, this is real life, okay. These classes are in no way substitute to regular or fast track. Are you clear? These are just revision. Now, can one audit program be suitable for all? Tell me yes or no. Not at all, impossible. Okay, so one program, business vary in nature, size, composition. Nature is different, size is different, composition and internal controls are also different. So one audit program is a myth. Let's take example. Therma production which make movie and Parle-G businesses are so different. So their audit program will also be different. In Parle-G, inventory is a major part. Therma production, what inventory they will have? Ranveer Singh, number of hours they will have? No. Are you clear? Okay. Business is very nature, size, composition. So one audit program is a myth. Moving on. Constructing audit program, developing audit program. 2 questions are there. What is the difference, sir? Constructing and developing. Whenever for the first time you develop audit program, that is constructing. Now, when you have developed one time, you want to make changes every year, that is developing. Or one more time, constructing. Whenever you make program for the first time, that is constructing. After making first time, you make changes, that is developing. Understood? Yes, sir. Constructing. When you construct, stay within the scope and limitation of assignment. Consider all possibility. See, number 1 is stay within the scope and limitation. Only do that work which is required. We will only check items of financial statement. You are checking payroll. Don't check efficiency of worker. Are you clear? Don't check attendance report. You are not concerned. Stay within the scope and limitation of assignment. Consider all possibility of error. Whatever error is there, you should consider. Your program should be complete. Third, determine the evidence available and identify best evidence for deriving necessary satisfaction. This much evidence we have. I want this much. So apply only those steps which are necessary for applying that much evidence or getting that much evidence. Next, apply only those steps and procedure which are useful for verification in that situation. Example, you are checking cash and bank of this year. Don't obtain confirmation of last year, baby. Last year what is there already obtained. Are you clear? Only those steps that are useful for verification in that situation. Coordinate the procedure to be applied. What do you mean by coordinate? If 2 points are related, do them. Like debtors and sales are related. Fixed asset and depreciation are related. Sales and freight are related. Okay. Very simple. Constructing audit program, 5 points. Stay within the scope and limitation of assignment. Consider all possibility of error. Remember 2 points. Break 1 second. Done? Okay. More 2. Okay. Determine the evidence available. Identify best evidence for deriving necessary satisfaction. Apply only those steps and procedure which are useful for verification in that situation. Coordinate the procedure to be applied. Coordinate the procedure to be applied. 5.1 last time. Stay within the scope and limitation of assignment. Okay. Consider all possibility of error. Determine the evidence available. Identify best evidence for deriving necessary satisfaction. Apply only those steps and procedure which are useful for verification in that situation. Coordinate the procedure to be applied. Small break, 10 seconds. Done. Stay within the scope and limitation of assignment. Consider all possibility of error. Determine the evidence available. Identify best evidence for deriving necessary satisfaction. Apply only those steps and procedure which are useful for verification in that situation. Coordinate the procedure to be applied. Next. Next is what? Developing audit program. Okay, once you have constructed it, next time you want to make change, for written program should be there. Okay, as we saw, it includes procedures that are needed to implement audit plan. Audit objective and instruction to assistant. For each step there should be objective. Why am I taking list of cash in bank? Okay, why am I taking confirmation? I am checking list, so completeness is there. Why am I taking confirmation of all that cash balance exists or not? So there should be audit objective. For each area, audit objective should be there. And set of instructions. I am taking confirmation to exist, to check existence, whether that bank balance exists or not. Third is reliance on internal control for determining nature, timing and extent of audit procedure. If controls are strong, audit procedure less, control are weak, audit procedure more. Timing of performance of audit procedure. Usually auditor is flexible, he can do procedure at any time. But in some cases is not flexible. Like stock take, he has to compulsory do on 31st March. Bank confirmation, he has to compulsory take on 31st March. Because that is when we are certifying the balance sheet. Okay. Audit planning. Tell me, when is planning done? After completion of previous year audit, continues till current year audit. Simple. Yes, sir. Okay. So developing audit program. How many steps? Here. Memory technique is easy. Written ratta. Ratta means to ratify, means to learn everything. Written ratta. Written ratta. Written ratta. Written program. Reliance on internal control. Audit objective and instruction to assistant. Written program. Reliance on internal control. Audit objective and instruction to assistant. Timing of performance of audit procedure. Audit planning. Timing of performance of audit procedure. Audit planning. Oh baby, one more time. Yeah. This is the right choice, baby. Written audit program. What is R? Reliance on internal control. What is A? Audit objective and instruction to assistant. Timing of performance of audit procedure and audit planning. One last time, written program, reliance on internal control, audit objective and instruction to assistant, timing of performance of audit procedure, audit planning, small break, 10 seconds. Done. Tell me one last time, written audit program, reliance on internal control, audit objective and instruction to assistant, timing of performance of audit procedure, audit planning. Clear? Yes. Next. Tell me, audit program is standard or keeps on changing? You have to make a standard program with minimum work. Minimum this much work is there. I have to check. Now, based on size, nature and composition of business, we will add things. As experience is gained, programs may be altered to take care of situation that was left out. We will add few things. Okay. For example, I said this much. Now, when I feel risk is more, I will add few points. I will check in detail. Okay. Last two questions, I think so. Yes. Advantage of audit program. One last time. Advantage of audit program. Very simple. What is the advantage of making a program? It gives assistant clear set of instruction of work to be done. This work you have to do. Second, in case of major audit, it gives total perspective of work to be done. See, in big audit, I will forget certain things. It gives me total perspective, this to be checked. Third, we saw no, this many points to check. It is fixed. In absence of written program, there is danger of ignoring certain books and record. If you don't keep written program, no, you will apply your brain. When you apply your brain, there is a chance you will miss certain things. Oh yeah, okay. Next, selection of assistant based on jobs becomes easy when work is segregated or divided. Okay, selecting article becomes easy when work is segregated, divided. You can know for not so good areas, you can appoint article. For good areas, CA will be there. But when is all this possible? When you divide the work. Okay. Second, assistant by putting their signature accept responsibility of the work and work can be traced back. Let me explain this also. Whenever you prepare a program or do work, you have to write that prepared by, reviewed by. So I will write prepared by Mrugesh Madlani, reviewed by Manish Gupta. So when I write prepared by, okay, I am taking responsibility, I did this work. In case of any fraud or any negligence, they will tell, oh sir, you had done this work, you have done wrong. Okay. Principal can monitor progress of the work. My CA can see how much work is done, how much is not done. So if someone will ask him how much is pending, he will say within 2 days over. Okay, you can monitor the progress. Serves as a guide for audit to be done in future years. Example, when you want to do audit for future years, okay, same program can be used. It will serve as a guide. Same situation is there, little you can add. Serves as a evidence in case of charge of negligence is brought against the auditor. If someone will say auditor has not done any work, okay, audit program will serve as a evidence. You can show, see 8 points I have performed. This audit program I did not make today, serves as a evidence. Start. First 3 points. It gives assistant clear set of instruction. In case of major audit, it gives total perspective of work to be done. First 2 points remember. Then it gives assistant clear set of instruction. In case of major audit, it gives total perspective of work to be done. Third, in absence of audit program, there is danger of ignoring certain books and records. 3 point done. In case of written program, in absence of written program. Okay. Done. It gives assistant clear set of instruction. In case of major audit, it gives total perspective of work to be done. In absence of written program, there is danger of ignoring certain books and records. If you remember this well and good, down points are very easy. When this many points are there, 6 are enough to remember. Simple. Assistant 2 times. Selection of assistant based on job becomes easy when work is segregated or divided. You can select the assistant. Selection of assistant based on job becomes easy when work is segregated or divided. Assistant by putting their, now you have selected assistant by putting their signature, accept responsibility of the work and work can be traced back. Work can be traced back. Next, principal can monitor the progress of the work with the help of audit program. Principal can monitor progress. Learn these 3. I will select assistant. They will sign means they are accepting responsibility. Principal means that CA will verify the work. 3 points. Last 2 points, guys. Serves as a guide, serves as the evidence, serves as a guide, serves as the evidence, serves as the guide, serves as a guide for audit to be done in future year. Okay, so it serves as a guide, yes, future. Serves as a evidence in case charge of negligence is brought against auditor. Simple. Advantage of audit program: it gives assistant clear set of instruction. In case of major audit, it gives total perspective of work to be done. In absence of written program, there is danger of ignoring certain books and records. Very simple. These two you have to remember. Selection of assistant based on job becomes easy when work is segregated or divided. Assistant, by putting their signature, accept responsibility of the work. Work can be traced back. Principal can monitor the progress of work with the help of audit program. Serves as a guide, serves as a evidence, serves as a guide, serves as a evidence, serves as a guide for audit to be done in future year, serves as a evidence in case charge of negligence is brought against auditor. Learn. Easy. Start. It gives assistant clear set of instruction. In case of major audit, it gives total perspective of work to be done. In absence of written program, there is danger of ignoring certain books and records. Then selection of assistant based on job becomes easy when work is segregated or divided. Assistant, by putting their signature, accept responsibility of the work and work can be traced back. Principal can monitor progress of work with the help of audit program. Serves as a guide, serves as a evidence, serves as a guide, serves as the evidence. गंदी बात, disadvantage of audit program, मारी. Audit program, मारी, whatever. Okay, technique. Work can become mechanical at times, that is the disadvantage. Some steps are performed without understanding objective. You are following fixed program. You don't understand why you are doing this step. You are doing this for completeness. Occurrence, assertions you don't understand. What is assertion? Chapter 3. You are doing the work without understanding the real objective. Second, inefficient assistant can take shelter behind the program. Sometimes what is there? They will tell this work is not done. What you will tell? Oh, I thought it audit program. I never realized that everything we have to check. In audit program, it was not written. Oh baby, your brain is there, you are auditor. Second, program is rigid and inflexible. Business is changed, but still old program is carried on. Tell me your business is changed from steel to rubber. In rubber, different things we need to change. Okay, business is changed from offline to online. Things are different. So program is rigid and inflexible, following set rule. Business is changed, program is not changed. Last, hard and fast program may kill the initiative of enterprising assistant. See, program is hard and fast, no? Okay, efficient assistant will not like. He will feel, oh my God, what is this? Every time you have to follow same. His motivation will be killed because some people like to work on their own. They want to apply their own brain. Okay, simple. Mari, audit program, Mari, Mary, whatever. Well, work is mechanical. Some parts are performed without understanding their objective. A, assistant. Inefficient assistant can take shelter behind the program. What is R? Program is rigid and inflexible, following set rules. Okay, but old program is carried on. Hard and fast initiative will kill the hard and fast program will kill the initiative of efficient assistant. One more time. Work can become mechanical. Some parts are performed without understanding their objective. A, inefficient assistant can take shelter behind the program. Program can become rigid and inflexible, following set rules. Some points are performed without understanding the objective. Okay, no, business is changed, but program is not changed. And last, hard and fast program may kill the initiative of efficient assistant. One last time, work can become mechanical. Some parts are performed without understanding their objective. Inefficient assistant can take shelter behind the program. Program can become rigid and inflexible, following set rules. Business is changed, program is not changed. I, hard and fast program may kill the initiative of efficient assistant. Small break, 10 seconds. Done. Work can become mechanical. Some parts are performed without understanding their objective. Inefficient assistant can take shelter behind the program. Program can become rigid and inflexible following set rule. Business is changed, program is not changed. Hard and fast program may kill the initiative of efficient assistant. Last part, guys. Oh my God. Over. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Materiality in planning and performing the audit. Materiality in planning and performing the audit. Materiality. How is materiality calculated in real life? Let me explain you 5 minutes, then everything will be over. Listen. Okay. First of all, materiality is calculated based on risk of material misstatement. So I am writing here ROMM, risk of material misstatement. How is this calculated? This is based on inherent risk and control risk. What do you mean by inherent risk? Before implementing controls, what is the risk? See, I will look at inherent risk is calculated by two areas. I will see the company and I will see that area. Example, any company, how are their owners? What is the integrity of owner? How many rules are there on the company? What is industry structure? How many competitors are there? Okay, owners have been in jail. Owners have done several fraud. Means there is lot of risk. Inherent means before implementing control, what is the risk? But that will come in future. Okay, so inherent risk means look at the company before controls. How the company is there. How area also you have to look. For example, sales is an area. For example, which area we are talking of? Sales is an area. Okay, so in sales, for listed company, always there is a risk that they will do fraud in sale. Why? Because listed company wants to show higher sale. Why, sir? Why? So their share price will increase. Okay, so what is inherent risk? Before implementing control, what is the risk? Let's assume high, medium, low. We are assuming company is good, there are no problem, low risk. Control risk means what? Control risk. Now there is lot of risk, but you will select control for those risks. I will select control so risk doesn't happen. Now I will check whether those controls are strong enough to prevent or detect and correct material misstatement. Can control prevent the fraud? If controls are good, control risk will be low. If controls are not good, are you clear? Control risk will be high. Now IR and CR calculated, inherent and control risk. I will multiply both. If both are low, then I get ROMM, risk of material misstatement. One more time, what I will get? Tell me, risk of material misstatement. One more time, risk of material misstatement. Both are low, ROMM will also be low. If one is high, one is low, then depends. Okay, both are high, ROMM will be high. What is ROMM? There is a risk that there can be material misstatement. ROMM, risk of material misstatement. Okay, now I will take two companies. Company A, company B. Now, here ROMM. How did I get IR into CR? Not in syllabus, just for knowledge. Low. Here what do I write? ROMM is high. Any doubt? No doubt whatsoever, continue. So here there is more chance of mistakes, yes or no? Yeah. These are mistakes. Here low mistakes are there, less. Now these are mistakes. Now what I will do? Materiality. Materiality, let's take a figure. It is usually 0.5 to 1% of sales. Okay, usually people take sales and net profit only as materiality. What is materiality? Anything which can influence the decision of user of financial statement, which can influence your decision. Okay, so is 1 lakh material? Depends. Okay, is 10 crore material? For me, yes. For Reliance, no. Understood? So now what is materiality? It is 0.5 to 1% of sales. Final answer I want. Tell me, where should it be 0.5? Where should it be 1? Where should it be 0.5? Where should it be 1? Here, risk is low. Risk is low means I have to check less. So I will take 1% as materiality. Let's assume our sales are 10,000 crore. 1% of 10,000 crore is 100 crore. So I will check all things above 100 crore. Below that I will not check. All things above 100 crore is material for me. Below that it is not material. Understood? Yes, sir. 1% I will take. Okay. So here come, here if I take this only, it is wrong. Why? Only this many mistakes will come. These all are missed out. These all are missed out. So here it will be somewhere here 0.5%. Understood? Risk is more, so materiality amount would be less. Amount would come more less when percentage is less. Here I will keep 0.5, means 50 crore. So I will catch all these mistakes. Did you understand? Did you understand? This many mistake, okay, no problem, they are immaterial. So whenever risk of material misstatement is low, materiality amount is high because there are no mistakes. Still I am checking. Whenever risk is more that there can be mistake, materiality amount is low, so I can detect all misstatement. Understood? Yes, sir. So ROMM and materiality are inversely related. Whenever ROMM is low, materiality is high. Whenever ROMM is high, materiality is low. So audit risk and materiality are inversely related. Now one last concept. Then we are done in 5 minutes. Performance materiality. What do you mean by performance materiality? See, this is materiality. One lakh. Now I want to ask you one more thing. Please ask no. Please ask no. Please ask no. There are amount below materiality level also. Yeah. Okay. There are mistakes below materiality. One mistake of 50,000, two mistake of 25,000, and one mistake of 10,000. Now when you multiply this, one mistake of 50, 25 into 250 plus 10,000, total 1,10,000 mistake is there. Did not understand. One more time. 50,000, 25,000, two mistake, 50,000 plus 10,000, one. So 1,10,000. Though it is less than materiality, but total of this is more than materiality. Did not understand. One more time. Though the amount is less than materiality, but individual misstatement, if you calculate together, amount is more than materiality. Yeah, it is 1,10,000 more than materiality. So one more concept came. The name is performance materiality. This is materiality. There is one more, performance materiality. Performance materiality means what? It is set below materiality level. It is set below materiality level. So cost of uncorrected and undetected misstatement don't exceed materiality level. See, many times materiality I have said, but below materiality amount, many amount are there. If you do total of all that, it will exceed materiality. So I came and introduced new concept, performance materiality. It is 50 to 75% of materiality. Sir, is it 50 or 75? Please tell me. Risky amount, risky account. If the account is risky, materiality will be 50%. So I can calculate more. Non-risky, 75% of materiality. Let's take example. 1 lakh is materiality. Performance, why name performance? Because I perform work on this. Materiality is for company as a whole. But I perform my work on performance materiality. Sales performance materiality can be 75%. But purchase is more risky, 50%. So here 50,000 is performance materiality. So now only two mistakes I will not catch. This mistake I can catch, only two. 25,000 into 2, 10,000 into 1. Understood? So total mistake is 60,000. Only 60,000 I cannot catch, otherwise everything I can catch. This 60,000 is anyways not exceeding 1 lakh. Are you clear? Understood? Anyways not exceeding 1 lakh. Did not understand? Then one last time I will explain. Now see, I set this at 50%. So now I can catch this error. These two are there, but they are anyways not exceeding materiality. Better than this, no? Okay. So performance materiality is set below materiality level. So cost of uncorrected and undetected misstatement don't exceed materiality. If I do it 50 to 75%, then 75,000 will be there. But risky account, make it 50%. So I can check more. Now over. SA 320 tells us relationship between materiality and audit risk. Tell me, whenever risk is more, materiality is low. Whenever risk is less, materiality will be more. Why? Because anyways there are no mistakes. Okay. Now I am not reading this. Materiality. What is performance materiality? Amount set below materiality level. So cost of uncorrected and undetected misstatement don't exceed materiality. See, name of this essay was materiality in planning and performing the audit. When I plan the audit, I calculate materiality. For example, I will calculate in the month of Feb. This is materiality. Sir, at the year end you don't do audit? No, we start audit in Feb only in Big Four. Then 1 month we take estimated figure. So sales based on that materiality. Now I took March estimated. In March COVID came, there was no sale. So I need to revise materiality. So materiality is calculated 2 times while planning and performing the audit. Now 2 questions are there which you have to learn and we are done. Use of benchmark in determining materiality. Tell me, what should you consider for materiality? Sales, net profit, equity, or what should you consider? Sales should you consider, net profit, equity, investment, depends on 5 points. Which is the best benchmark for materiality? Depends on 5 points. Depends on 5 points. Number 1, nature of the entity. Where is it in its life cycle, industry and economic environment in which it operates? Nature of entity, is it manufacturing, trading? Where entity is it in its life cycle? If you are in introduction stage, your sales will be very less. So don't take sales, take something else. What to take, you have to decide. See, in Big Four, there are 4 or 5 things of materiality here. You can either take what? Net profit, revenue, asset, equity. What to take? Tell me. What to take? Tell me. Okay. Don't take sales if you are early stage. Why? Because sales will never be there. Okay. So nature of the entity, where entity is in its life cycle, industry and economic environment. It should be element of the financial statement. It can be turnover, gross profit, total asset, total equity. Okay. Anything can be there. Okay. Element it should be. Entities, ownership structure and way it is financed. Okay. Way it is financed means if there is lot of debt, don't take net profit. You will always show profit more. So people give you more debt. So whenever debt is more, no, don't take net profit. Okay. Item where users focus on the financial statement. Tell me, where will users focus? Where will user are more concerned with net profit. So take net profit if users focus is on that. And volatility of the benchmark means it should not move again and again. It should not be a wavered figure. For example, this year 2000 crore sale, next year 1 crore sale, then 3000 crore sale, then again 5 crore. Then sales is not a good criteria. Volatility movement should not be too much in the figure. Okay. So we need to consider. Which to consider? Usually people take net profit or profit before tax. Okay. Net profit or profit before tax, but you can take anything. Tell me, use of benchmark in determining materiality. Whenever you want to calculate materiality, which is the best thing? 5 things to keep in mind. Technique is new. Use of benchmark. Which is the best benchmark? New. Nature of entity. Where entity is it in its life cycle, industry and economic environment. E, element of the financial statement. One more E, entities, ownership structure and way it is financed. Item where user focus on the financial statement. Item where user focus on the financial statement. And last is volatility of the benchmark. Very simple. One more time. Nature of entity, where entity is in its life cycle, industry and economic environment. Entities, ownership structure and way it is financed. Element of the financial statement. Item where users focus on the financial statement. Volatility of the benchmark. Learn. Small break. Only 2 questions you have to learn in materiality. Done. Use of benchmark in determining materiality, which is the best figure to take for materiality. New. Nature of entity, where entity is in its life cycle, industry and economic environment. Element of the financial statement. Item where user focus on the financial statement. Okay, one I forgot. Entities, ownership structure and way it is financed. Volatility of the benchmark. Tell me, amount less than materiality will check or not check? Sir, don't check, but in 3 conditions check. Amount even less than materiality can influence the decision of user of financial statement. 3 situations. Where it is required by law, regulation or FRF. Law, regulation or FRF. Law tells you fraud. Internal controls are weak. Whether it is fraud or weak internal control, you have to check. Okay. Be it 1 rupee, because today 1 rupee is there. Tomorrow it can be 1000 crore. Okay. Law, FRF. Caro is there. Cost audit is there. These all is compliances are there. Government compliance, you have not paid on time. You have to report, be it material amount or not. So required by law, regulation or FRF. Law, regulation or FRF. Where attention is focused on particular aspect of entity's business. For example, one business of entity is very famous, be it in loss or profit, you need to check, because attention of the entity is focused on that particular business. Attention is focused on particular aspect of entity's business. So that particular aspect you need to check. Are you clear? Be it profit or loss. Where attention is focused on particular aspect of entity, dividend maybe you have to check. Key disclosures for specific industry. For specific industry, there are disclosures like banking company. They have to follow certain disclosure. You have to check whether they are material or not. Insurance company has to follow certain. Research and development for pharma, be it 1 rupee or 1 crore, you have to check, because these are compulsory required by that industry. Okay. So amount even less than materiality, LED we need to check. LED signing, no. So these are shining things we need to check, whether material or not material. Whether it is required by law, regulation of or FRF. Where attention of entity is focused on particular aspect of the business, where attention is focused on particular aspect of entity's business, disclosures are required for specific industry. Learn nicely. Where it is required by law, regulation of FRF, where attention is focused on particular aspect of entity's business, key disclosures in relation to specific industry. Done or not done? Done or not done? Amount even less than materiality. Okay, you have to show in 3 situations when LED is signing, whether it is required by law, regulation or FRF. Where attention is focused on particular aspect of entity's business, disclosures required for specific industry. Tell me, which materiality change? Yes. Will performance materiality change? Sir, if materiality will change, performance materiality is 50 to 75% of materiality. That will also change. You don't know? No, I don't know. Okay. So you have to, materiality will change. Why? Due to nature or change in entity's operation. For example, you have sold one company. Okay. Materiality will change. You have acquired a company. Materiality will change. Okay. If auditor concludes that lower materiality for financial statement as a whole, auditor shall determine whether it is necessary to revise performance materiality also. Yes, if performance materiality is also revised, nature, timing and extent of procedures will also be revised. Last thing, materiality is calculated account wise also. Yes, it is entity level, but performance materiality can be calculated account wise also. Okay, usually we don't go in that much detail, but still. Purchase is a risky area. So then performance materiality will be what? 50%. Sales not risky, 75%. Oh baby, with this we are done. Oh my God, what a wonderful, amazing, mind-blowing, excellent. You are looking at the amount of hard work we are putting in. Okay, if you like our hard work, just give one like button and put in a nice comment. It will motivate us to work even harder, even better. Okay, and please share with this video with all your friends so they can also get the benefit of this much positivity and this much high content, highest quality of lectures free of cost. Okay, thank you so much. If you are new to this channel, do consider subscribing, one of the best channels of India. You will surely not be disappointed. Thank you so much. Take care of yourselves. Bye bye. Love you. Take care.
Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, we are continuing the Maha Marathon Audit Revision series where all chapters of audit will be revised in detail in only English. We are done with 2 chapters, moving on towards chapter number 3 today of Maha Marathon Audit Revision in only English. Yes, guys, today we are going to revise a little bigger chapter. The name of chapter is Audit Documentation and Audit Evidence. Wonderful, nice, amazing chapter. The only thing is it's a little big, but be rest assured we are going to rock. Audit documentation and audit evidence. 2 things are there in this chapter. Audit documentation standard is SA 230 and audit evidence standard is SA 500. So we are of course going to deal with both of them. Let's start right away. And all other standards also based on audit evidence. Till now, if you are wondering where this revision is being done from, this revision is from all India's best book, that is Magic Book, in which entire audit subject is covered in roughly 85 to 90 pages. If you want, you can revise from here also. or physical copy is always better. You can order the physical copy at printing cost from www.mrugeshmadlani.com. Soft copy is not there because it never brings result. Hard copy brings hard result, and we work only for results. Let's start. SA 500. What do you mean by audit evidence? Remember, there is a concept map which should be very clear. If you understand that map, understanding entire chapter is easy. Let's start with revision. Start. Tell me, we want to make what? Audit report. How do you make a report? Based on audit evidence. How do you get evidence? By performing audit procedure. By performing audit procedure. So there are three things here. Audit procedure. Start. Okay. So I will perform audit procedure, RAP, FAP. Okay. I will get audit evidence. Based on that, I will make audit report. That is what audit evidence is all about. Start. Audit evidence is what? Okay. See, auditing is a logical process. Auditor is called upon to assess on the actuality of the situation and give true and fair view. What is good evidence, what is not, is subjective matter of auditor. Any opinion given on reckless and negligent examination may help in loss of standing and prestige will be there. See, if you give opinion without checking anything, okay, there can be case of professional ethics against you, against breach of professional misconduct. So you need to check the things. What is audit evidence? All the information obtained by auditor in arriving at a conclusion on which his report is based. One more time. What do you mean by, tell me, audit evidence? All information obtained by auditor in arriving at conclusion on which his report is based, that his opinion is based. Audit evidence basically includes two things. Information contained in accounting records, all information that support the accounting record and support the auditor's rationale for true and fair presentation of financial statement. What is audit evidence? All the records, information behind record, like journal entry. You will not directly pass journal entry. There should be a sales invoice. You will not directly have a sales invoice. There should be a purchase order. Are you clear? So opposite person will give purchase order, then there will be sales invoice. All these are supporting document based on which you pass entry. So what is audit evidence? Nothing. All the information obtained by auditor in arriving at a conclusion on which his opinion is based. Moving on. Now, audit evidence should be what? Again, concept map. We want audit report. How do we get audit evidence? How do we get audit procedure? Okay. Audit evidence should be, let's say it for two words, sufficient, appropriate. Sufficient, appropriate. Evidence should be sufficient and appropriate. Sufficient means quantity. Appropriate means quality. What do you mean by the word sufficient? One more time. Quantity of evidence should be there. Example, you want to check sales, okay, of 10,000 crore. Let's assume how many vouchers are there? 1 lakh crore vouchers are there. 10,000 crore sale, 1 lakh crore voucher are there. How much will you check? Sir, I will arrange all voucher in ascending to descending. Okay, highest value to lowest. I will check those 20% voucher which have highest value because it will cover 80% of sales. That is sufficient. Obtain sufficient evidence means you will not check all vouchers, but check those vouchers, 20% top voucher which will cover maximum amount. Are you clear? So on 80% amount of sales you get comfort. But that is not given by book. Practical explanation. Sufficiency is affected by three factors. Quantity of evidence is affected by three factors. If they ask you how is sufficiency affected, three factors: materiality, risk of material misstatement, size and characteristics of population. Sufficiency is affected materiality. If it is a material account, we will obtain more evidence. How much evidence to obtain depends on three factors. Material account, more evidence. Less material account, less. Risk of material misstatement is more, means ROMM is more. ROMM you get how? Okay, that is another part of story inherent into control risk, but forget that. Risk of material, if there is a more risk in that account, more evidence. Less risk, less evidence. Size and characteristics of population means total samples, okay, total size. Example, there are 20,000 invoice, that is the size of population. If size is more, evidence would be more. Characteristic, if it is a homogeneous population, all invoice are of same type, then less evidence. Different type. You are doing sales to Australia, Hong Kong, Malaysia, China, Russia. more evidence. You have FOB sale, CIF sale, more evidence. You have only one type of sale like we have, EISSM and audit pen drive, less evidence because homogeneous population. Rely on several business, okay. So for all different business, we need to collect evidence, okay. So sufficiency is affected by three words: materiality, okay, S, size and characteristic of population, R, risk of material misstatement. Tell me, sufficiency of evidence is affected by three things: materiality, size and characteristics of population, risk of material misstatement. Appropriateness, two words: relevance, reliability. Relevance, reliability. Audit evidence should be sufficient, appropriate. Sufficient, done. Appropriate, two words: relevance, reliability. Relevance, reliability. What is reliable evidence first? Always remember, external evidence is more reliable than internal. If debtor gives you confirmation, that is more reliable than what is there in your books, okay. But when internal control are strong, internal is more reliable. Tell me, when is internal reliable? When internal controls are strong. Tell me, original is reliable or photocopy? Sir, original is more reliable. Tell me, directly obtained by auditor is more reliable than indirectly? Directly obtained is more reliable. Last, tell me, documentary is more reliable or oral? Documentary in written is more reliable. So reliability is done, 5-6 points. Which one is more reliable? External. Directly obtained by auditor is more reliable than indirect. Original is more reliable than photocopy, okay. Third, written is more reliable, oral? Written is more reliable. Clear? Okay. Now, relevance. Relevance means what? What is relevant evidence? Relevance has three words: purpose of audit procedure, assertion, direction of testing. Okay, relevant evidence it should be. Example, you are checking sales. What is your purpose? You want to check a valuation, measurement of sales. Means sales are recorded at correct amount. I want to check what? Correct amount. So purpose is amount. For that, which assertion is there? What do you mean by assertion? Will come later in the chapter if you don't know. If you know, then well and good. Assertion means measurement. I want to check that sales are valued at correct amount, okay. So purpose is what? Sales are correctly valued. Which assertion I am checking? Measurement. And it is also affected by direction of testing, whether I am testing test of controls or test of details. Both are different things. If I am checking controls, okay, in that amount is not relevant, control is followed or not, that is relevant. In, of course, TOD, test of detail, amount is relevant. Relevance says three words: purpose, assertion, direction of testing. Purpose, assertion, direction of testing. If you did not understand this part, later you will understand, of course. These are revision lectures, in no way substitute to the regular or fast track lectures. Type of audit evidence is easy. Depending upon nature: visual, oral, documentary. Whatever you see, visual. Whatever is spoken, oral. Written, documentary. Depending upon source: internal, external, internal, external. Example, what is internal evidence? Purchase invoice is external, you are getting from outside. Sales invoice, internal, okay. Deposit slip, external if you go in a bank. So two types of evidence are there: internal and external. Simple. What are we done with audit evidence definition? It should be sufficient and appropriate. Sufficiency is affected by three factors: MSR, materiality, risk and materiality, size and characteristics of population, risk of material misstatement. Appropriate, relevance, reliability. Inside relevance, three words: purpose, assertion, direction of testing. Purpose, assertion, direction of testing. Reliability, 4-5 points were there. Now coming to seconds. Very, even more than that important. Audit procedures to obtain audit evidence. Remember, there are two procedures to obtain evidence here. Very important. Audit procedure to obtain audit evidence. Two procedures are there: RAP, FAP, RAP, FAP, RAP, FAP, RAP, FAP. Risk assessment procedure, further audit procedure. Risk assessment procedure, further audit procedure. Very important. What is risk assessment procedure? Identifying and assessing risk of material misstatement. You want to find risk of risk of material misstatement. More about it in next chapter, chapter 4. But little I will understand. Through understanding of entity, its environment and internal control. See, risk of material misstatement
misstatement is obtained by two things: inherent risk, control risk. One more time. ROMM is nothing but two things: inherent risk, control risk. What is inherent risk? When you understand the entity and area, how the entity is, nature of entity, accounting policies of entity, competitor, industry environment, regulatory environment, okay, what are entities objective, you will assess whether entity is greedy, ambitious, how is the management, have they stayed in jail, okay, are they ethical, okay, proper values are there. Based on that you will assess understanding of entity and tell inherent risk is high, medium, low, high, medium, low. Okay, so let's assume good. Company is also good in area wise, it will change. Sales area also it is what? Good. Then inherent risk will be low. Understanding of entity and its environment is inherent risk. Risk and control, understand entire risk and control, that is control risk. Now I will understand by doing, okay, in practical life one document is prepared, walkthrough. Tell me what is prepared? Walkthrough. Based on walkthrough I will understand whether company is good or bad. Walkthrough is performed area wise. For sales different, purchase different, payroll different. Now this if you don't understand, listen nicely. Chapter is very easy. Okay, listen. In walkthrough we do three things: understand the process, risk associated with process, related control to mitigate the risk. So let's take purchase. I will understand the process, risk in purchase process, and related control to mitigate the risk. Okay. So based on that, if I understand and I feel controls are good, control risk will be low. If controls are bad, they cannot mitigate the risk, control risk will be high. Understood? So multiply IR and CR, entity and its environment, IR. Understanding risk and control, CR, control risk. I will find out risk of material misstatement. If you did not understand, don't worry, this left part we will understand in chapter number 4. Based on this, further audit procedure are done, which are divided into two parts: TOC, substantive. TOC, substantive. TOC is test of control. Substantive is two parts: test of detail, analytical. Test of detail, analytical. Analytical, chapter 8. Now listen. If controls are good, I will go ahead and test the control. No use testing the control if it is not good. Let me take an example, you will understand best. No use putting water in a bucket which has hole, because if you put water, there is a high chance, not high, 100% chance that water will go out of the bucket. Same way, if we understand here controls are weak in RAP. In RAP I know controls are weak. Why will I test those controls? Maybe they are already weak. I will do TOC only if controls are good in RAP. I will test the control. Sir, if you know it is good, why are you testing? Array, it is good today, but it should be good throughout the period, throughout the period, throughout the period. So I will test the control, that is TOC. Tell me what I will do TOC. In English, tell me test of control. I will test whether controls are working throughout the period or not. So I will take sample, 25 sample we take in real life of all 12 months. TOC, that is called TOC, test of controls. Why to do? If controls are good, I will test them whether they are working throughout the period. If they are good. In substantive, test of detail means checking voucher. Less voucher I will check because I know controls are good. I will rely on analytical only. Analytical means checking ratios. 1 month rent 1 lakh, 12 months this much, 12 lakh. Good no. 1 square feet 40 rupees. 1000 square feet shop, 40,000. Understood? Analytical checking ratio. If controls are good, I will gain assurance by analytical only. No need to do TOD, or little TOD I might do. But if controls are weak, I have to do more substantive. And in substantive, what I will do? Tell me. Test of details. Check more voucher. Inside voucher, what do we check? Assertion. What is assertion? Next topic. Okay. One last time. RAP, FAP. What is RAP? Identify and assess risk of material misstatement through understanding of entity, its environment and internal control. What is FAP? TOC, substantive. TOC, substantive. Substantive 2. TOD, analytical. TOD, analytical. TOD, analytical. Understood? Okay. Now, audit procedure, RAP and FAP. Inside FAP, TOC, substantive. Inside substantive, TOD and analytical. RAP. RAP is done to identify and assess risk of material misstatement. Okay. Nature and timing now here. TOC. In TOC, there are three things: nature, timing, extent. Nature, timing, extent. Nature of test of control, which procedure, timing, when should we do TOC, and how much TOC should we do, that is dependent. Nature, timing, extent in TOC. Nature. In nature, we will apply several procedures, combination with inquiry to test the control. We will check basically what, how controls were applied, by whom they were applied, consistency with which they were applied. How they were applied means what is the procedure, are they applied in sale, purchase, etc. By whom, who is the person, because if person is good, there is a high chance control will be followed. How they were applied, by whom they were applied, consistency with which they were applied. Are they applied throughout the year? How to check that? Samples we should take of all 12 months. Today control are good, they should be good throughout the period. So three things in nature of TOC: how controls were applied, by whom they were applied, consistency with which they were applied. How they were applied, by whom they were applied, consistency with which they were applied. Now, extent of TOC, how much checking should we do? Extent, how much? Frequency of performance of control. What do you mean by this? What do you mean by this? Frequency means, is control operating all 12 months? Then I will check more. Okay. How much to check? Frequency of performance. Length of time auditor is relying. For example, there is physical verification. That is done at the end of the year only. So I need to check only at the end of the year. Length of time. Expected rate of deviation of control. How many times control will not be followed? If more expected rate is there, checking would be more. Last, relevance and reliability of audit evidence to be obtained regarding operating effectiveness of control. Okay, relevance and reliability is more, then checking would be less. If relevance and reliability is less, checking would be more. One more time, how much to check depends on frequency of performance. If control is operating all 12 months, I will check more. Length of time auditor is relying. If I am relying particular time, I will check only at that time. Expected rate of deviation is more, then more checking should be done to see actually control is good or not. Relevance and reliability of audit evidence to be obtained. Okay, if we want that evidence to be relevant and reliable, we'll do more checking. Understood? Okay. Timing. When do I check control? Particular point of time or throughout the period? Okay. Inventory verification, bank confirmation are only obtained at the end of the year. So I will check at that time. But biometric control throughout the period, because biometric is used all 365 days. So nature, timing, extent. Very nice question. Whether audit evidence obtained in previous year regarding operating effectiveness of control, will it be reliable this year also? I did not understand this question. Last year controls were good. Can I say this year also good? Last year you passed in foundation. Will you pass in inter also? Depends on 6 points. Effectiveness of control and its application by entity. Is the control effective? Okay. If control is effective, of course, effectiveness of other elements of control, which we'll learn in chapter 4. If other, see whether you will pass or not is also influenced by your family member. If your family members, class, everything is common, of course you will pass. Other elements of control. Effectiveness of general IT control. See, controls are dependent on general control also. If general control are strong, main control would be strong. So 3 points. Whether last year control were good, were they be good this year also? Depends on 6 points. Effectiveness of control and its application by entity. Effectiveness of other elements of control. Effectiveness of general IT control. Next, risk arising from characteristics of control, whether it is manual or automated. If it is an automated control, high chance that it will be reliable this year also. If it is manual, if staff changes, we need to check the control again. IT control will work, but manual I need to check. Risk of material misstatement and extent of reliance on control. If ROMM is more, I will of course test the control this year. I will not rely because risk is more. Risk arising due to lack of change in control due to changing circumstances. Circumstances have changed, but still I have not changed the control, then no use. Example, new virus has come. I have to update antivirus. If I don't update, what is the use? Okay, understood. Audit evidence obtained in previous audit regarding operating effectiveness of control. Will control be effective this time also? 3 points. Effectiveness of control and its application by entity. Effectiveness of other elements of control. Effectiveness of general IT control. Break. 3 points. Then effectiveness of control and its application by entity, effectiveness of other elements of control, effectiveness of general IT control. Next,
Risk arising from characteristics of control, whether it is manual or automated. Risk of material misstatement and extent of reliance on control. Risk arising due to lack of change in control due to changing circumstances. Absolutely clear. Okay. Risk arising from characteristics of control, manual or automated. Okay. Risk of material misstatement and extent of reliance. Risk arising due to lack of change in control due to changing circumstance. Read these three also. 10-second break. Time up. English. Effectiveness of control and its application by entity, effectiveness of other elements of control, effectiveness of general IT control. Okay. Risk arising from characteristic of control, whether it is manual or automated. Risk of material misstatement and extent of reliance on control. Risk arising due to lack of change in control due to changing circumstance. One more time or no need? One last time. Effectiveness of control and its application by entity, effectiveness of other element of control, effectiveness of general IT control. Risk arising due to in risk there were what? 3 points. Risk arising from characteristic of control, manual or automated. Risk of material misstatement and extent of reliance on control. Risk arising due to lack of change in control due to changing circumstance. Now, substantive procedure. Listen very nicely. Tell me, auditor's risk is judgmental. Okay, you find risk of material misstatement, that is judgmental. Depending upon circumstances, I will decide. Shall I do analytical or test of detail? Tell me, what should I do? If controls are strong, I will do only analytical. I will check ratios and go, because I know controls are good. There are no misstatement. But if controls are weak, I will do TOD, test of details. I can do combination also. Example, sales controls are good. Okay. So I will do analytical in sale, but for checking cut-off transaction. Cut-off means what? Sales of April are not taken in March. Why does management do this? To increase the sale. I will do what? TOD. So for cut-off means April invoice, I will do TOD. Other things I will rely on analytical only, because controls are good. So when controls are good, that is, in RAP, I will only understand control. In FAP, I will test the control. After that, I feel controls are good. Control risk will be low. I will say rely on control. Whenever rely on control is there, TOD is done, less test of details. We will rely more on analytical. But if controls are not good, I will do TOD. Are you clear? Okay. Substantive procedure need to be increased when result from TOD is not good. Test of control is not good. Okay. Next. I will move on to next word, assertion. Now your next word is, in TOC, what do you check, sir? Please tell me, in TOC, what do you check, sir? Sorry, in TOD. In TOD, here. In test of detail, what do we check? We check assertion. Assertions are of two types, balance sheet, P&L. In samples, what we will check? Sir, now you have to test in detail, you will get sample. What you will check? Assertion. Listen. Assertion are representation by management, explicit or otherwise, that are included in the financial statement and checked by auditor to detect different types of potential misstatement that may occur. What do you mean by this much English? Assertions means management is asserting, saying, stating, these things we have followed. Auditor, please check, have we followed these things or not? Assertions are representation by management. By whom? Management. Explicit or otherwise. Explicit means clearly explained or implied. Explicit or otherwise, that are included in the financial statement and checked by auditor to detect different types of potential misstatement that may occur. Understood? Assertions are, if you cannot learn, forget it. Assertion are representation by management. Explicit or otherwise, clearly management is stating I have followed this, and checked by auditor to detect misstatement. Now you try to tell me whether it is a balance sheet assertion or P&L. Okay. Lot of assertions are there. Start. Presentation. Everything is properly classified, presented, disclosed, both. In balance sheet also we check everything is as per AS. P&L also we check whether it is as per schedule 3. Let me take example. Sales. Actual and scrap sale are separately shown. Okay. Disclosures are all related party disclosure are followed. So first assertion, presentation and disclosure is balance sheet and P&L. Completeness, again both. No unrecorded transaction should be there, means P&L. No unrecorded asset or liability. Everything should be complete. This is also applicable to balance sheet and P&L. Measurement only applicable to P&L. Transactions are recorded at correct amount. Measurement. How do you check this? With invoice. An invoice should match with purchase order or quotation. Occurrence. Transaction has actually occurred. Again applies to P&L only. Sales has occurred. How do you check that? Lorry receipt is there. Gatekeeper entry is that goods have gone out. Lorry receipt means what, sir? Lorry receipt means what? Lorry receipt means goods dispatch receipt is there by transport, that it went in truck. Okay. Opposite party has also received. Occurrence, then we can say it is actually occurred. Valuation is applicable to what? Asset. Asset or liability is valued at appropriate value. How to check? Cost minus depreciation, correct value. Existence, they exist. How to check existence? Physical verification. If I am saying machine is of 80 crore, where is it? Okay, this is the machine. Okay. Rights and obligation. Asset is a right, liability is an obligation. Are you clear? How to check asset is a right? For example, investments are there. If I am getting income, interest from those investments, it is my asset. Means how to check? Bill should be in my name. We have purchased a machine of 90 crore. When can I say it is my right? If the invoice is in my name. Asset is a right. Liability is a obligation. Okay. Tell me. Assertions. What are assertions? PC, move right. Priyanka Chopra, move right. Priyanka Chopra, move right. Priyanka Chopra, move right. P for presentation, C for completeness. P for presentation, C for completeness. Move full form. Measurement, occurrence, valuation, existence. Measurement, occurrence, valuation, existence. Measurement, occurrence, valuation, existence. Right is rights and obligation. Learn nicely. Your time starts now. 10 seconds. Okay, what do you mean by assertion? Management is saying we have followed. Have they actually followed or not? PC, move right. PC, move right. PC, move right. P for presentation, C for completeness, measurement, occurrence, valuation, existence, rights and obligation. Now, combination of method and technique to do audit procedure and get audit evidence. One last time. Combination of method or technique to do audit procedure and get audit evidence. Now, there are two audit procedure, RAP and FAP. In RAP and FAP, what are methods used to get the evidence? RAP and FAP are audit procedure to get evidence. Okay. Now, what methods are used in RAP and FAP to get evidence? When you do RAP, when you do FAP, what methods you use to get evidence? RAP and FAP are audit procedure, risk assessment procedure, further audit procedure. In that, this many methods are used to get evidence. Method or technique to do audit procedure and get evidence. Very simple. Analytical procedure we can use. You know analytical procedure, checking ratios, etc. In detail, chapter number 8. Okay, I will check ratios. Example, sales and freight ratio. Now, if I am seeing freight amount is what? Too low, but sales are too high. Then why are sales done when there is no freight? Means there is a fraud. I will understand here fraud is there. Analytical procedure. Checking ratios. 1 month rent 1 lakh. 12 months should be 12. If it is 13 lakh, I will check what is the problem. Analytical procedure. Understood. Provident fund and sales. Sorry, provident fund and salary. Salary and provident fund 12% it should be. If it is not matching, I will check. In detail, next chapter. External confirmation. What do you mean by external confirmation? These are written evidence to the auditor from third party. Did we learn in reliability of evidence that external is more reliable than internal? So external confirmation is direct written evidence to the auditor from third party in paper form, electronic form, any other form. External confirmation is not only related to debtor, not only related to creditor, but also bank confirmation. Understood? Remember, external is always more reliable than internal. Recalculation. Again, I will perform the audit procedure. It is auditor's independent execution of procedure that were performed as part of entity's control. Means auditor entity is saying these things are there. I will again recalculate. Let me take an example. Depreciation is this much. I will also do working. Array, land and building, this is the rate. Furniture, this is the rate. Okay, plant and machinery, this is the rate. Actually, is it coming same? That is recalculation. What is recalculation? Mathematical accuracy of documents or record. Okay. No. Okay, I spoke recalculation means what? I will again calculate accuracy. You go in a restaurant, no, there is one friend who will calculate the total. though it is given by software recalculation. What is reperformance? Auditor's independent execution of procedure which were performed as part of entity's control. Means entity has already performed that control. I want to recheck. Example BRS. They have prepared bank reconciliation statement. I will also prepare to see it is matching. That depreciation example I took, no, that is here. Depreciation they are saying 12 lakh. I will check all rates. Land and building this rate, plant and machinery this rate, furniture this rate. Is it really coming the same? Reperformance. Auditor's independent execution of procedure that were performed as part of entity control. Inquiry. I will ask the people. Are you clear? Asking the people within the entity or outside the entity. It can be written inquiry, oral inquiry. Inspection. Checking the documents. They are saying that discount is only given by store manager. I will check. Really store manager is only giving discount or not? Sign of store manager should be there. Checking the documents. Okay. Checking the document. Rate correctly it is recorded. In invoice rate is correct. Or it is matching with quotation and purchase order. Inspection. Observation. Looking at a process performed by others. Someone is doing the process, I will look at it. In observation, I will get limited evidence because I only get evidence at a time process is being performed. Let me take example. Physical verification of inventory. Okay. So I will only get evidence at that particular time, 31st March, that inventory is proper. For example, your parents are seeing you study. They only get evidence at that time when you are studying. After that, they don't know whether you study or not. So it looks at the procedure performed by others, but it is limited to point of time at which observation takes place. In RAP and FAP, if you want to get evidence, how many methods are there? What are the methods or technique to perform procedure and get evidence? A, Rio. Memory technique is A, Rio. A, Rio. A, Rio. A, Rio. You know Rio is a character. Sir, where this character is, I don't know. Arey, Money Heist. Money Heist is there, no web series there. A, Rio. A, Rio. Rio. Well, his girlfriend is also there, Tokyo. Okay. A for analytical procedure. E for external confirmation. A. Analytical procedure, external confirmation. Analytical procedure, external confirmation. Double R. Reperformance, recalculation. Reperformance, recalculation. Double I. Inquiry, inspection. Inquiry, inspection. O for observation. O for observation. 2 times. What are methods or technique to perform procedure and get evidence? A, Rio. A, Rio. Analytical procedure, external confirmation. Double R. Reperformance, recalculation. Reperformance, recalculation. Inquiry, inspection. Inquiry, inspection. O for observation. O for observation. One last time. What are methods or technique to perform procedure and get evidence? A, Rio. A, Rio. Analytical procedure. External confirmation. Reperformance, recalculation. Reperformance, recalculation. Inquiry, inspection, observation. Over. Easy. With this, we are done with SA 500 audit evidence. Now, let's do one easy essay. Written representation from management. Written representation from management. Very simple, fast forward essay in 5 minutes over. See, many times we have certain doubts. Okay, this is a doubt, that is a doubt. So we take written representation from management. That management, please say this is correct. It doesn't mean I will not perform audit procedure. I will perform, but I will get more evidence. Let me tell you first of all, SA 580 is written representation. Okay, what is written representation? Written representation are written statement obtained by the auditor from management to confirm certain matters or support other evidence. Confirm certain matter or support other evidence. Remember, I usually take, let me take 5 examples of written representation. Accounting standards are followed. We know it is followed, but when management says, our assurance will increase. Second, going concern is valid. I know it is valid, but when management says, my assurance will increase. Third, okay, financial statements are prepared as per FRF, financial reporting framework. I know they are followed. When management says assurance will increase. Fourth is what? Okay, there is no frauds going on. Of course. Fifth, okay, all related party information is properly disclosed. Very good. All accounting estimates are to the best of knowledge. Very good. See, all these things we know. We have performed audit procedure. Then why do we take written representation? With this, our assurance will increase. These are written statement given by auditor to management to confirm certain matter or support other evidence. Why is it good? 5 reasons. It is directly obtained by auditor. It is in original form. Okay, it is not a photocopy. It is directly obtained by auditor. It is obtained by, given by management to the auditor. That is why. Okay, remember, written representation is in no way primary evidence. It is always secondary evidence. Okay, it doesn't mean that we will not perform audit procedure. We will still perform, but this gives me extra level of assurance that when management is saying, it is correct. Understood? Tell me, who will give written representation? From those who are responsible for preparation and presentation of financial statement. Take it from CFO. Are you clear? Junior level person will not give. CFO will give. Okay. Easy. Written statement provided by management to auditor to confirm certain matter or support other evidence. Audit evidence definition, you know. Written representation are obtained from those who are responsible for preparation and presentation of financial statement. Written evidence by themselves do not give sufficient and appropriate evidence. Okay. Written representation doesn't affect nature, timing, and extent of audit evidence. Auditor still has to obtain certain other things. Okay. It doesn't mean that if you have obtained written representation, your responsibility is over. It is not a substitute to audit procedure. It is never a primary evidence. Very important, only one question can come here. Objective of auditor regarding written representation. Memory technique rose to respond appropriately. When they give written representation, you know there is nothing wrong, or you get an assurance. If they don't give, then also you have to see why the hell they are not giving. So we'll respond in both situations, if they give, if they don't give. Second, to obtain written representation. If you get written representation, you know management has fulfilled their responsibility for preparation and presentation of financial statement as per FRF to support other evidence. For example, inventory or investment. Long-term investment valuation different, short-term different. Who can tell it is long-term or short-term? Management. Depends on their intention. So, management is saying it is long-term. So, they are valued on different basis. When they write it in written representation, your evidence will be more. Because written is always more reliable than oral. Original is more reliable than photocopy. Relevant to financial statement or assertion. You have doubt in valuation of inventory. Tell management, we have reasonably valued. If they tell, assurance will increase. So tell me, what are 3 objectives of written representation? To respond appropriately. To obtain written representation, SE, to support other evidence. Support other evidence. One more time, to respond appropriately. To obtain written representation. To support other evidence. To support other evidence. One last time. What are 3 objectives of auditor in written representation? 1, 2, 3. To respond appropriately. To obtain written representation. Support other evidence. Now, if management is not champion in particular area, they don't have idea, can they ask written representation from others? Yes, internal counsel. Internal legal department, they can ask for claims. You want written representation that there are no hidden cases. Whatever you have said are all the cases available in the company, or this many cases are there. If from internal counsel also you can take this written representation. Actuary are the people who will find out the provident fund gratuity amount. These are complex calculation. Management doesn't know. So you can obtain from actuary. Staff engineer about environmental liability. Management doesn't know. So they will take a written representation from staff engineer. There are no liabilities on the company. Everything environmental law is followed. So management can take from others also. Okay. When they don't have championship in that area, IAS. They can take from other IAS, internal counsel, actually staff engineer. Internal counsel, actuary, staff engineer. Management can use qualifying language in written representation to the best of knowledge and belief. Can they use all this? Yes. Why they cannot use? You are giving reasonable assurance. Then they can also write to the best of knowledge and belief. No problem. They can write this. It is allowed. Okay. If management doesn't give written representation, then tell me, what if it doesn't give? I will not give you written representation. Okay. Then discuss the matter with management. Reevaluate the integrity of management and what impact it will have on audit evidence. Why the hell are you not giving me written representation? What impact it will have? And third, take appropriate action. If you feel that there can be material misstatement, okay, there can be material misstatement, qualified report.
Or if you can feel there can be material representatives and misstatement, and effect of that will be on all account, all assertion, then even adverse report can come. Okay, so that depends. About those reports we are going to study later. One last time, if they don't give, then number one, discuss the matter with management. See what impact it will have on audit evidence, and still if they don't listen, we can give a modified report. Modified means I will not give unqualified, either qualified, disclaimer, adverse. Okay, understood? Okay. With this is over. Very simple essay, essay 580. Written representation from management. Next in the list is essay 501, audit evidence specific consideration for selected item. Remember, whenever there is a doubt in a certain area, whenever you feel dicey in a certain area, whenever you feel that there is a little doubt, whenever you feel that little evidence is not available, separate essay will come. So we always felt in these three areas there is little diciness, okay? There is little doubt how to get evidence. So essay said, don't worry, we will make new essay. Continuation of essay 501, audit evidence, specific consideration for selected item. Here we have to get sufficient and appropriate evidence about three things: existence and condition of inventory, completeness of litigation and claim, presentation and disclosure of segment information. Okay, let me briefly tell you all three. What is existence and condition of inventory? Inventory should exist. Tell me, how do I check whether it exists or not? By physical verification. Condition of inventory is proper. Why condition is important? For valuation of inventory. Tell me, inventory is of three types: raw material, work in progress, finished good. Raw material, finished good valuation easy. In work in progress, condition is important. Based on that, valuation will be there. But that valuation of inventory is not in our syllabus. Completeness of litigation and claim. Whatever cases are given, they are complete. Third, segment information, which is not in your syllabus, AS 17. I will briefly explain what is AS 17 segment. For example, today ITC has 5 different business. Segment means showing which all business are there and how much revenue is coming from all. So we know as shareholders which segment is important and which is not. As auditor, we need to check all AS 17 provision is followed or not. Okay, AS 17 segment, how segments are divided, what are the bases, etc. Not in syllabus. Number one, so two things: existence and condition of inventory, and completeness of litigation and claim. Whatever are cases going on, the complete list is complete. First, existence of inventory. So whenever you go, how to check existence? As I told, physical verification. Okay, whenever auditor goes for physical verification, 4 things to keep in mind. When inventory is material to the financial statement, we need to obtain sufficient and appropriate evidence regarding existence and condition of inventory. We will do attendance at physical inventory counting. Whenever we do attendance, 4 things to be kept in mind. Tell me how many things? 4. Number 1, evaluate the management instructions and procedure for recording and controlling inventory. Understood or no? What are the procedure and instruction for recording and controlling inventory? Means as soon as you go, management will tell, today production is stopped. Okay, today production we are not doing, so there is no confusion. Okay, this is the date. Okay, we are taking the inventory. Management will tell you, we have sorted the inventory. See, inventory is huge, you cannot verify everything. So top 80% value item you will verify. Top 80% value item will be in 30% items only. Quantity 30%, if you check, okay, 80% value will be covered. So management will tell you need to check this. Okay, this much value will be there. You will get nice comfort. So you have to listen. Number 1 is evaluate the instructions and procedure for recording and controlling inventory. Management will give you certain instructions, you have to listen. Okay. Second, observe the performance of count procedure. Management will count. Okay, you don't have to count, you have to see whether they are properly counting. Third, inspect the inventory. Check inventory with records. Okay, whatever they are counting, is it matching with record? Sometimes you can do reverse also, match the records with inventory. Tell me where this inventory is. Okay, inspect. Third, perform test count. You also perform a few counts. Okay, so attendance at physical inventory counting, how many? 0.4. Evaluate the manager's procedure and instruction for recording and controlling the inventory. Second, observe the performance of count procedure. Third, perform test count, inspect the inventory. Very simple. Evaluate the management instructions and procedure for recording and controlling the inventory. Second, observe the performance of count procedure. Perform test count, inspect the inventory. Perform test count, inspect. Last, evaluate management instructions and procedure for recording and controlling inventory. Okay. Second, observe the performance of count procedure, inspect the inventory, perform test count. In the last, C, the records are matching with inventory counting. Physical inventory records are matching with actual record. Next question. Matters relevant in planning the attendance at physical inventory counting. Before planning the attendance, okay, before going there, while going, 4 points. Before going, you have to see what location at which inventory is kept, including materiality of location. There are 40 locations and only 25 articles. Then what we will do? Select material locations. Okay, important locations where 90% value is covered. You cannot go everywhere. Okay. Second, whether procedure and instructions are to be issued for inventory counting, whether you need to tell people any specific instructions for inventory, that this inventory you cannot check at night. Okay, this inventory reach at 7 a.m. in the morning. Okay, any instructions. Third, nature of inventory, stage of completion of work in progress. Nature means raw material, work in progress, finished good. How much is it complete? Nature of internal control related to inventory. If controls are good, less checking. Controls are weak, more checking. Risk of material misstatement relevant to inventory. Timing of physical inventory count. Whether entity maintains perpetual inventory system. What is perpetual? Updated on the basis, on the spot. As soon as stock is removed, updated. Some people update at the end of the day. So whether you maintain perpetual system or end of the day, or whether expert is needed, gaseous inventory is there. Okay, coal mines are there, expert is needed. Tell me, what matters you need to keep in mind in planning attendance at physical inventory count? What to do in inventory count is here. Planning is here. Okay, location at which inventory is kept, okay, including materiality. Second, whether instructions and procedure are issued for physical inventory count. 2 point done. Location at which inventory is kept, whether instructions and procedure are issued for physical inventory count. Nature of inventory, stage of completion of work in progress. Nature of inventory, stage of completion of work in progress. Risk of material misstatement relevant to inventory. Nature of internal control. If controls are strong, less risk of material misstatement. Controls are weak, more risk of material misstatement. These 4 points are very easy. Nature of inventory, stage of completion of work in progress, risk of internal, okay, nature of internal control relevant to inventory. Based on nature of internal control, risk of material misstatement relevant to inventory. Okay, more strong control, less risk of material misstatement. Weak control, more risk of material misstatement. Timing of performance of physical inventory, whether entity maintains perpetual inventory system, assistance of expert is needed or not. Very simple. 1, 2, 3. Matters relevant in planning attendance at physical inventory count, lot of points. Location at which inventory is kept, including materiality of location. Okay. Whether instructions and procedure are issued for physical inventory counting. 4 points, very simple. Nature of inventory, stage of completion of work in progress, internal control related to inventory, risk of material misstatement relevant to inventory, timing of performance of physical inventory counting. Okay, last 2 points. Whether entity maintains perpetual inventory system, whether expert is needed. Whether entity maintains perpetual inventory system, whether expert is needed. Simple, easy, break. 10-second learn. Easy it is. Don't make it hard, it is not. Done. Tell me, location at which inventory is kept, including materiality of location, whether adequate procedure and instructions are to be issued for physical inventory counting. Okay, nature of inventory, stage of completion of work in progress, internal control related to inventory, based on that risk of material misstatement relevant to inventory. Okay, timing of performance of physical inventory counting, whether entity maintains perpetual inventory system, whether assistance of expert is needed. Easy. Physical counting done at a date other than the date of financial statement. Example, you couldn't go on 31st March, you go on 3rd April. What will you do now? See all the transaction between 31st March and 3rd April. Do reverse calculation. Then you will gain assurance about 31st March. Let's take example. 4th April you did counting. Okay. Usually purchase plus sale minus, do reverse. Minus purchase plus sale. If it matches with 31st March, comfort will be high. Audit procedure perform to obtain evidence that whether changes in inventory between count date and date of financial statement, count date and date of financial statement is properly recorded. If auditor is unable to do counting, okay, you are not able to do only, what will you do? Perform alternate procedure. What is the alternate procedure? Opening stock is there. You couldn't go. See, if you go on other date, gain evidence that difference between count date and date of financial statement is recorded. If you cannot go only, alternate, opening stock plus purchase minus closing stock. Matching then good. Matching then good. Attendance impossible. Auditor shall perform alternate procedure. If alternate procedure you cannot perform, means you are not getting evidence. If you are not getting evidence in only one area, an effect of that is of course material but not pervasive. Pervasive means not spread across multiple account, multiple assertion. Then qualified opinion will come. Except inventory, everything is okay. But if you feel the evidence is you are not getting to count inventory and effect of which can be material and pervasive, effect can be spread across multiple accounts, then disclaimer report, because we are not getting evidence. If we get the evidence and we find mistake in inventory and management doesn't correct it, then qualified report, because we got evidence but except inventory all is okay. But if effect is pervasive, spread across multiple areas, adverse report. One last time, if you get evidence, only one area mistake, qualified. If you don't get evidence, one area mistake, if you feel it is material but not pervasive, pervasive means effect is spread everywhere, still qualified. If you don't get evidence in multiple area and you feel effect is material and pervasive, disclaimer. If you don't get evidence but you feel mistakes are in multiple area and management has not corrected, effect is material and pervasive, adverse. When inventory is kept with third party, auditor shall request confirmation from third party regarding quantity and condition of inventory. Also perform inspection and other procedure. Tell your friend to go there, okay, and tell that count the inventory, or if you can go, you go. Simple. Okay. Litigation and claim. Auditor shall perform completeness about litigation and claim in three ways. All the cases are complete. Number one, inquire with management and in-house legal counsel. Tell him, oh, this is the list of cases given, 10. Are this only there? Second, review the minutes of meeting of TCWG, those charged with governments, management and TCWG management and external legal counsel. Read the minutes of the meeting, okay? Read the minutes of the meeting of TCWG management and external legal counsel, and inquire whether any case is going on in the company from the minutes. And third, legal expense account. Legal expense account. In legal expense account, many times we find a new case. Last time fees were 6 lakh, now it is 7 lakh. You will ask, what is this 1 lakh for? Oh, this case was going on. Why is it not shown? Okay. Tell me completeness of litigation and game 3. Inquire with management and in-house legal counsel. Read the minutes of management, TCWG and in-house legal counsel. And third, legal expense account. If auditor assesses there is risk of material misstatement regarding litigation and claim, if you have any doubt regarding litigation and claim, okay, if you feel that this case we can lose, but they are saying that we will not lose, because if we lose, we need to do provision. If we will not, you lose, okay, only contingent liability is there. More than 50% chance of losing, provision. Less than 50% contingent liability. If you feel there is a risk of material misstatement, management is saying we will not lose, but we may lose, then you have to communicate with external legal counsel, okay? Tell them, give me in a letter that we are not going to lose the case as per you, because he is the champion. Many times, law or regulation will not allow external legal counsel to communicate with the auditor. Then we'll perform alternate procedure. Alternate procedure. Third, many times we need to meet the legal counsel. In 3 situations, when it is a significant risk, when matter is complex, there is disagreement between management and legal counsel. See, many times we need to meet when it is a significant risk. Example, Nestle Maggi. When Maggi fines were imposed on Maggi, they were saying that lead is found in Maggi. It was a significant, Maggi's going concern could be affected. So sometimes we need to meet legal counsel, and only letter will not work when matter is complex. It is a significant risk. There is disagreement between management and external legal counsel. Such meeting will require management person should be in attendance. Are you clear? Management person should be there in the meeting. Over. Easy standard. All standards are very easy. Be rest assured. Let's move on to the next one. SA 505. External confirmation. Easy? No, very easy. External confirmation. First of all, why is it good? External confirmation, let me explain. Debtor confirmation. Okay, my balance is 5. How do I remember this? SA505. Okay, my balance is 5. Oh, debtor. How much is my balance in your book? As creditor. In my book, Mr. Rahul is 5. Now I am asking Rahul, how much I am in your book? For you, I am creditor. Oh, your balance also 5. Okay, I am selling Rahul balance is 5. Oh. Rahul is saying my balance is also 5. 505. 5. Oh, matching with 5. 505. External confirmation. Oh, my balance is 5. Oh, your balance in my book is also 5. 505. External confirmation. External confirmation is a direct written response to auditor from third party in paper form, electronic form, or any other form. Many times, external confirmation is good. Why? 5 reasons. Number 1, external is more reliable than internal. It is in written form. It is original. It is directly obtained by the auditor. So it is more reliable. Okay, external confirmation. Only in bank balance it is not there. Debtor creditor is not there. Bank balance confirmation is also there. We confirm with bank that balance, this party is showing that 20 lakh is the balance. Tell me, is it 20 lakh only? Then bank will give in letter pad. Okay, auditor will send letter pad. Many times we go to bank also and ask, show me the balance of this party, my client. Okay, then they will tell. 4 types are there. We need to learn 4 definitions. Positive confirmation request means that the confirming party will respond whether it agrees or disagrees with the amount. In positive, you have to reply whether you agree or disagree. If you agree with the balance, then also reply. Don't agree, also reply. Negative, only reply if you disagree. One more time, only reply if you disagree. If you agree, nothing to reply. If you disagree, debtor has to respond only if it disagrees with the balance. I am saying my balance in your book. Your balance in my book is 52 lakh. If you disagree, reply. Non-response means you don't respond, or you respond but we don't receive your confirmation. That is also non-response. Failure of the confirming party to respond or fully respond, or confirmation request return undelivered. Last, exception. Exception means there is difference between entity's record and amount confirmed by third party. You are saying 52 lakh, they are saying 56 lakh. Exception. 4. Any case respond, positive. Only respond not matching, negative. Non-response, means opposite party doesn't respond. Exception means there is a difference. Okay, tell me now, majority times we send what? Positive, because we want reply. If 100% we will send no, hardly 50% will reply. In that, if we ask negative, no one will reply. Positive only you ask, so your assurance is more, because positive you will get the reply whether it matches or doesn't match. Easy. External confirmation procedure has 4 points. Tell me how many points? 4. Determine the information to be confirmed or requested. Okay, what do you want to confirm? See, external auditor shall maintain control over external confirmation procedure, including 4 things. Determine the information to be confirmed or requested, whether you want to confirm balance or transactions. Many times we don't confirm balance, we want to confirm transaction. Determine information to be confirmed or requested. Second, select the appropriate confirming party. From whom you want to confirm? From top 80% debtors in value, I want confirmation. Select the party. Third, design the request, including their properly addressed and contain written information to be sent to auditor. Design the request, proper address should be there. Also, written details should be there. After confirming, where to send? Many times we send the request. They want to reply, but they don't know our address of auditor. So design the request, properly addressed, containing written information. Send the request, including follow-up request. Usually 4 times you follow up with them. Okay. Tell me, external confirmation procedure. Auditor shall maintain control over external confirmation procedure by 4 points. Determine the information to be confirmed or requested. Select the appropriate confirming party. Third, design the request, including their properly addressed, contain written information to be sent to auditor. And fourth, sending the request, including follow-up request. Read nicely, 10-second break. Done. Determine the information to be confirmed or requested. Select the appropriate confirming party. Design the request, including their properly addressed and contain written information to be sent to auditor. Send the request, including follow-up request. Determine the information, first point in detail now. 4 points are there. First point, determine the information to be confirmed or requested. Usually we confirm account balance only, or we can also confirm their elements, means transactions, okay? Or you can confirm agreement, terms of agreement, side agreement, that, oh, other vendor rate is 80, to you we are selling at 70, is it correct? Is it no fraud? Okay, that also we can confirm. Design the request, okay? Now, third point, second point, nothing is there, select the party, okay? Third, design the request including they are properly addressed and content written. In designing the request, this many things to be kept in mind. Third point, more detail. Designing the request. Factors to be kept in mind in designing the request which will directly affect confirmation rate. Technique is mass presentation, but that later. First, factors to be kept in mind while designing request. Management authorization or encouragement to third party to respond. Management will call, only then they will respond, because they are not your client, it is the client of management. Second, method of communication. Paper you want or electronic? Third, assertion being addressed. Tell me, if they confirm, which assertion will it get addressed? Sir, assertion, valuation will get addressed. Debtors are correctly valued. Okay. Then, ability of the party to respond. Means, if you know is definitely going to reply, then don't only confirm balance, also confirm transaction. If you feel he will not confirm balance also, then only ask for balance. If you ask for transaction, neither balance also, he will not reply. Second, specified risk of material misstatement. If risk of material misstatement is more, then definitely we will send positive, because we definitely want a reply. Prior experience on audit. When you feel that this is the important debtor and he will not reply, then draft in such a way that he has to reply. Last is layout and presentation of the request, how it should be laid out. Very simple. Factors to be kept in mind while designing the request technique: mass presentation, mass presentation, mass presentation. Management authorization or encouragement of third party to reply. Management authorization or encouragement to third party. Method of communication, 2M done. Read. Third, assertion being addressed, ability of the party to respond. Assertion being addressed, ability of the intended party to respond. 2A then. One more time. Management authorization or encouragement to third party. Method of communication, ability of the intended party to respond. Assertion being addressed. S. Specified risk of material misstatement. Specified risk of material misstatement. Mass is done. Mass presentation. Mass. Okay, one more S is there. Prior experience on similar engagement. Prior experience on similar engagement. Presentation. Presentation and layout of audit. Presentation and layout of confirmation request. Very simple. Mass presentation. Management encouragement or authorization to third party to respond. Method of communication. Ability of the party to respond, assertion being addressed. Ability of the party to respond, assertion being addressed. Double S. Specified risk of material misstatement, prior experience on similar engagement. Specified risk of material misstatement, prior experience on similar engagement. Presentation means presentation and layout of confirmation request. Break 20 seconds. Done. Factors to be kept in mind which will directly affect the confirmation request: mass presentation, mass presentation, mass presentation. Management authorization or encouragement to third party to respond. Method of communication. Assertion being addressed. Ability of the party to confirm. Specified risk of material misstatement, prior experience on similar engagement. Specified risk of material misstatement, prior experience on similar engagement. Presentation and layout of request. Presentation and layout of request. Management's refuse. Don't send the request. Don't send. Don't send to this. Mr. Rahim, don't send. Inquire the reason why management is doing so. Evaluate the implication this will have on audit evidence and nature, timing and extent of other procedure. Perform other procedure. Let me take example. Management is saying don't send to this party. Evaluate the reasonableness. Okay. Many times the reason will be valid also. They are saying, sir, last time you told we already booked a provision for this debtor. Now, if we tell him that we have already booked a provision, okay, then if he going to pay also, he will not pay. He was going to be insolvent, but now he's good party, he might pay. If we send confirmation and if he sees a lower balance, definitely he will not pay.
that we are thinking that we have done a provision. He will not pay the full amount. So don't send to this party. We are going to receive the amount. Okay. Otherwise, it will spoil the thing. Reasonable. Evaluate the implication it will have on audit and perform nature, timing, and extent of other procedure, or perform alternate procedure. What is alternate? If you cannot send to particular party, opening balance is correct, plus whatever transactions are during the year, minus payment received. See if it is matching good. Understood? Okay. When to send negative confirmation? In 3 situations you can send negative. Usually 99% send positive only. In 3 situations you can send negative. 4. PSL, Pakistan Super League. No, 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 no. High chance that the parties will respond. We know party is going to respond. Okay. Then we can send negative. Negative if we send not matching, then not respond. We know if doesn't match, he will respond. Parties will respond. Item of population is small and homogeneous. Similar items, very less number of items are there, then you can send. Items are small, homogeneous. Low exception rate is there. We know it is going to match only, then send negative. Low exception rate. And last, low risk of material misstatement and strong control. There is less risk if he responds or doesn't respond, then we can send negative. Okay, tell me when can we send negative? Pakistan Super League, PSL. High chance that party will respond. Item of population is small and homogeneous. Okay, very low exception rate is there. Very low double L exception rate. Low risk of material misstatement and strong control. So 1P, 1S, double L. 1P, high chance that the party will respond. Items of population are small and homogeneous. Low risk of material misstatement and strong control. Very low exception rate is expected. Small break, 5 seconds. Done. High chance that the parties will respond. Items of population are small and homogeneous. Very low exception rate is expected. Okay. Low risk of material misstatement and strong controls. Are we done almost? Oh, big one pending. Come to essay 230, audit documentation. What do you mean by audit documentation? Keeping record of everything. In our big four where I used to work, there was a nice saying, work not documented is not done. What is documentation? Entire thing record. I have done this, I have done this, I have done this. I have small things. Rather than doing work, more documentation is maintained. Documentation is nothing. It is record of audit procedures performed, audit evidence obtained, and the conclusion reached. That entire map. It is record of audit procedure performed. Based on that procedure, evidence obtained and conclusion reached. Also called as working paper. Come here. Why do I maintain documentation? It will help to plan and perform the audit. If everything is made plan, we can work as per the plan and do better work, yes or no? Yes. Helps the team member to direct and supervise work and discharge their review. If everything is documented, person doing review, you know one article will work, CA will review. He can review properly if you have written everything. If not written, you have to be present while he is doing the review to explain I have done this. In Big Four compulsory. Okay, everything you have to write. Only then reviewer will review. Who is reviewer? Chartered accountant, manager. Enable team to be accountable for the work. When you have written, you have done the work, you are accountable. Something wrong happens, they can catch you. Retaining the matters of significance will help in future audit. See, particular area like power and fuel. You have done nice working of power and fuel. In future, if anyone wants to check power and fuel or he wants to do it in same fashion, he can do if everything is written. Helps us in future audit. Enabling conduct of quality control, inspection and review. You know, in Big Four, there are teams. A team, B team, C team. Sometimes work of one team is reviewed by another. Okay, so it will help if everything is documented. Or ENY audit is done by ENY US. Just to see whether they are following global standards. So, if everything is documented, quality control inspection is easy. Enabling conduct of external inspection as per legal and regulatory requirement. Sometimes SEBI may tell, audit this. Sometimes SEBI may tell, audit this. Okay, SEBI. Okay, so you can do better if everything is documented. You can easily prove that you had done the audit properly. Okay. Tell me, what is the purpose of documentation? Helps the team member to plan and perform the audit. Helps the team member to plan and perform the audit. Second, assist members of team to direct and supervise the work. Direct and supervise the work and discharge the review responsibility. First, plan and perform. Second, assist the members of engagement team to direct and supervise the work and discharge the review. Enables the team to be accountable for their work. Enables team to be accountable. Retaining significant matters helps us in future audit. Helps us in future audit. Next, quality control, inspection and review, and external inspection as per legal and regulatory requirement. Very easy. What is the purpose of documentation? Helps the team member to plan and perform the audit. Enable member of engagement team to discharge their review work, okay, so they can review properly. Enable team to be accountable for its work. Retaining matters of audit helps us in future audit. Quality control inspection, external inspection. Quality control inspection, external inspection. Quality control inspection, external inspection. Small break, 10 seconds. Done. Assist the members of engagement team to plan and perform the audit. Second, assist the members of engagement team to direct and supervise the work and discharge their review responsibility. Third point, enable team to be accountable for the work. Retaining significant matter helps us in tell me future audit, okay, future audit. A quality control inspection, external inspection. Quality control inspection, external inspection. Form, content and extent of documentation. Form means what should be the format. Content, what all should be there documented. Extent, how much documentation to do. Okay, depends on this many factor. Size and complexity of audit. Mrugesh Madlani, Virtuals and Reliance. Tell me where more documentation. Reliance, complex business, lot of business. Risk of material misstatement. Wherever there is more risk, inventory has more risk as compared to operating expense. So more documentation. Nature of audit procedures to be performed. Okay, so more procedure, more documentation. Significance of audit evidence obtained. Significant importance of evidence. Important evidence, more documentation. Nature and extent of exceptions identified. If there are more exceptions, okay, exceptions means not following particular thing, more documentation. Need to document a conclusion or basis of conclusion not determinable from documentation of work performed. Means I need to prove particular thing. Based on documentation, I cannot prove. Or it is difficult to prove that I am following rely on control strategy. So I need to do more documentation. Audit methodology and tools used. Which is the method used? Okay. Rely on control or not rely on control? Rely on control or not rely? Simple. Form, content and extent depends on how many factors? This many. Size and complexity of audit. Risk of material misstatement. See, it's very simple. Only first point remember. Size and complexity of audit. Identified risk of material misstatement. Based on risk of material misstatement, nature of audit procedure. More risk, more procedure. Okay. Based on procedure, significance of audit evidence obtained. Based on evidence, nature and extent of exceptions identified. So simple. These 4 points. Size and complexity of audit. Identified risk of material misstatement. More risk, nature and extent of audit procedure performed. Based on procedure, significance of audit evidence obtained. Okay, based on evidence, tell me what will be there. What will be there? Nature and extent of exceptions identified. Nature and extent of exceptions identified. Okay. Last 2 points only you need to remember. Need to document a conclusion not determinable from evidence obtained. From evidence I cannot prove this conclusion. I need more documentation. Audit methodology and tools used. Simple. Learn. 10 seconds. Done. Size and complexity of audit. Identified risk of material misstatement. Based on that, nature of audit procedures to be performed. Based on audit procedure, significance of audit evidence obtained. In evidence, nature and extent of exceptions identified. Okay. Last. Need to document a conclusion or basis of conclusion not determinable from documentation of work. Audit methodology and tools used. What is the essay name? 230. After 2, what will come? 3. Oh, document it. After 2, what will come? 3. Oh, document it. More silly logic, I am trying to learn the standard. Okay. More silly, more easy to learn. After 2, what will come? 3. Oh, document it. Next, audit file.
See, after you do the audit, you need to prepare audit file. SQC1, Standard on Quality Control 1 tells audit file should be prepared within 60 days of auditor report. Auditor report and not balance sheet. Balance sheet on 31st March. 1st July, audit report is signed. After, within that 60 days, audit file should be prepared. Because in audit file, we don't need to do any work. You are not doing any work in audit file. It is just compilation of everything. Whatever work you have done, brief compilation. It is admin process. Retention period. For how many years you will retain the file? 7 years from auditor's report. No. From preparation of the file. Preparation of file. Last time. Balance sheet date. 1st April, balance sheet 31st March. 1st July, audit report signed. Within 60 days of that, audit file should be prepared, and for 7 years from that date, it should be retained. From preparation of audit file to 7 years. Okay. Very, very important. Audit documentation. Whose property it is? Audit documentation is the property of auditor. If client tells rent working, you have prepared, very nice. Depreciation, excellent working, please share with us. You can share if you want. It is your property. You can share, but that should not undermine the validity of work done. It should not mean that he has done work. Okay. You cannot share if your independence is compromised. If it tells in a meaning tone, please share this, we have paid money. Don't ever share. If we ask for help, you can share. It is your property. As per SQC1, audit documentation is the property of auditor. He may at his discretion share some portion of documentation provided it doesn't undermine the validity of work done or affect the independence in case of assurance engagement. Last, we'll prepare one summary that is known as audit documentation summary. So if we don't want to refer everything, you can refer summary. What is the benefit? It helps in effective and efficient review. Helps to see if any essay is not followed. Okay, all essays are followed or not. Okay. Only important matters will be there in summary. So you can refer them. How important matters were identified. How they were addressed. Simple. 2:30. After 2, what will come? 3. Oh, document. Last 4 essays are there. All 4 are very, 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 very small. Start. Initial audit engagement. 510 engagement. Essay 510 audit engagement. How to remember? Essay 510 initial audit engagement. Essay 510 initial audit engagement. 10 meant coming. Essay 510 initial audit engagement. 10 engagement. 510 engagement. What is initial audit? Initial audit means audit done for the first time. If financial statement were not audited or they were audited by predecessor auditor. See, when is it an initial audit engagement? If prior year financial statements were not audited or they were audited but not by me, someone else. Okay. So now in that case, I need to check not only closing but also opening balance. Why? Because opening plus during the year is equal to closing. How can I report on closing unless I don't know opening is correct? During the year I will check, but opening I have no assurance. Why? Because I did not do the audit or audit was not done. Understood? It is an engagement in will. Prior period financial statement were not audited or they were audited by another auditor. Objective of auditor regarding opening balance. Okay, what is your objective? 2 points. English. You need to check 2 things. Opening balance contain misstatement that will materially affect current year's financial statement. That opening balance is, do they have misstatement? You need to check. Appropriate accounting policies are reflected in opening balance that have been consistently applied in the current period, or changes are properly classified, described, disclosed. All accounting policies in opening balance are proper, like rate of depreciation. Okay, method of depreciation is proper. If you change accounting policy, all effect is properly classified, described, disclosed as per AS. What is AS? As per accounting standard. So we need to check 2 things. Opening balance and accounting policies in opening balance are correct, and any changes are properly reflected. Accounting policies, so nothing is there, only this is important. Audit procedure regarding opening balance. What do I check regarding opening balance? Very, very simple. Read. Auditor shall read the most recent financial statement, if any, and predecessor auditor report regarding opening balance.
You have to check the most recent financial statements of last year or last year auditor report and check closing balance are brought forward as opening balance. So number one, auditor shall read the most recent financial statement and predecessor auditor report if any for checking the opening balance. Second, okay, determine whether prior period closing balance have been correctly brought forward as opening balance. Last year closing balance is correctly brought forward as opening balance. Any adjustment is shown as prior period item. Okay, prior period item. Second, determine whether opening balances reflect correct application of accounting policy. Okay, see here. To check opening balance, 3 points are there. First point, determine whether closing balance has been correctly brought forward as opening balance. Okay, determine whether prior period closing balance is correctly brought forward as opening balance. Any adjustment is shown as prior period item. Determine whether opening balance reflect correct accounting policy. Perform one or more of the following. Where prior year financial statements are audited, take copy of those audited financial statements. Evaluate whether audit procedure performed in current year give evidence about opening balance. What do you mean? If this year we are receiving the amount from debtor, means opening balance is correct, because no one is going to pay like that. Procedure performed in current year give evidence about opening balance. You are receiving subsequent realization from debtor, means balance is correct. You are paying to creditor, means balance is correct. Or you can perform specific procedure regarding opening balance. Tell me what specific procedure can be there. You are appointed on 1st July. Do stock count on that day and then go reverse. 1st July go reverse. Okay, purchase minus sale plus 31st March balance same, then assurance will increase. Okay, so opening balance, do 3 things. Determine whether prior period closing balance have been correctly brought forward as opening balance. If not brought forward, any effect is shown as prior period item. Determine whether opening balance show correct application of accounting policies are correct. Third, perform one or more of following. Take copy of most recent financial statement, if any, and predecessor auditor report. Determine whether evidence performed in current year give evidence about opening balance. Third, perform specific procedure regarding opening balance. If auditor obtains evidence that opening balance have material misstatement, that will affect, then find out the amount of material misstatement. Do additional procedure to find out how much misstatement are there. If auditor concludes misstatement shall exist, okay, auditor shall communicate with TCWG, this misstatement are there. Okay, this mistakes are there in opening balance. If they correct it, well and good. If they don't correct, then qualified report, because 1-2 areas misstatement is there. If they are in all areas misstatement, inventory, sale, debtor, okay, fixed asset, then adverse report will come. If they don't correct, only then adverse. Okay, continue. But here, accounting policies in opening balance are correctly brought forward in the current year and effect is properly classified, described, disclosed. Nothing here. Conclusion. If auditor is unable to obtain sufficient and appropriate evidence about opening balance, you cannot obtain evidence, then what will you do? Qualified report if 1-2 areas dicey. If you feel effect is material but not pervasive, qualified. If you feel that in all areas there can be diciness, there can be confusion, there can be jalebi phafda in all areas, mistake can be there, then disclaimer will come, because effect is across multiple account and multiple assertion, multiple account and multiple. If auditor concludes unable to obtain evidence, then qualified or disclaimer. If you know the evidence and you tell them to correct and they don't correct, then also qualified will come if 1-2 areas effect is material but not pervasive. But everywhere, pervasive effect is everywhere, multiple account, multiple assertion, adverse report. Only this one question can come. What procedure you need to do regarding opening balance? Determine whether prior period balances have been correctly brought forward as opening balance. Any adjustment is shown as prior period item. Second, opening balance correctly reflect application of accounting policy. Third, perform one or more of following. Take copy of most recent financial statements. Are you clear? Okay. Second, see whether audit procedure performed in current year give evidence about opening balance. Third, if they don't give, perform specific procedure that give evidence regarding opening balance. Over. Last 3 essays, subsequent events. What do you mean by subsequent events? All the events that occur after the balance sheet date but before the date on which financial statements are approved by board of director. Very, very simple. But before this, we need to understand one AS. If you understand this, things will be very easy. Okay, within 5 minutes over. 31st March is with date, balance sheet. 10th July, financial statements are approved by board of directors. Audit report is signed on 20th June. One more time, balance sheet. 10th June, financial statements are approved by BOD, English Board of Director. Usually in a public company, signing and approval is same date. After approval by Board of Directors, audit report is signed. After signing, what will happen? Publish. We publish the financial statement. We publish the financial statement to shareholder, mutual fund, etc. And then AGM is there on 20th September. 20th September. Very quickly, balance sheet. After that, financial statement are approved by board of director. After approval by board of director, signing of audit report is done. Then they are published. Okay, published to shareholder, investor, mutual fund agency. Then AGM is there. Now, this standard is what? AS4. First, you should know AS4. Contingencies and events occurring after balance sheet date are those events which occur after the balance sheet date but before the date on which financial statement are approved by board of director. All events which occur after balance sheet and 20th June before signing. This standard deals with that. Not SA. I am talking of accounting standard after. Because if you don't know AS, nothing you will understand. So after 31st March and 20th June. Ideally, these are transactions of 23-24. So they should come in 23-24. But sometimes they will come in 22-23. When? We are going to study. All the events which occur after the balance sheet date but before the date on which financial statements are approved by board of directors or sign is done. Two type of event, adjusting, non-adjusting. Adjusting. Though they occur after the balance sheet, they are to be adjusted in last year, 22-23. Why? Reason I will tell. Though these events occur after balance sheet but are to be adjusted on balance sheet. Number one, proposed dividend required by law. Proposed dividend, if you know, okay, AS tells you, AS, that it is of which year? 22-23, though proposed in 23-24. As it is of 22-23, substance over legal form, it should be shown in 22-23. Schedule 3 tells what? It is proposed in which year? Next year. So show next year. But whenever Schedule 3 and AS fight, AS will win. So proposed dividend. Affects going concern. Anything which will affect going concern, adjust last year. Why? Because this year company might also not be there. It's going concern, baby. Okay. Fire happened, natural calamity. Second, provides further evidence of condition existing on balance sheet date. There is some condition on balance sheet date, further evidence is obtained. In balance sheet, there was a doubt, so you put a provision on debtor. After balance sheet, he became insolvent. Then adjust in last year. Why? Because it was giving you further evidence. Some evidence was there on balance sheet. Second, case going on in the company. After balance sheet, we lose the case. But before the signing of audit report, loss should be shown in last year, though we lost this year because it gives you further evidence of condition existing on balance sheet date. Balance sheet date, some condition, then further evidence. All the transactions which are not material, all the transactions which are not adjusting are non-adjusting. Inside non-adjusting too, material, immaterial, material, immaterial, material. If anything is material but not adjusting, disclose in board of directors report. Immaterial, ignore. Example, fire happened in a factory in 23-24. When it will be shown? 23-24 only it will be shown. But we need to tell shareholder in notes to accounts it's a material event. Fire happened, but it has not affected going concern. There was no further evidence of fire. Sale of product or sale of a SBU. We are selling one strategic business unit, selling one product, closing one factory. It is material. So we are just writing to you because we feel we should inform you. But it is no way affecting the going concern. Understood? Okay. So three things required by law. Going concern, which provide further evidence of condition on balance sheet date. All events which are not adjusting are non-adjusting, material, immaterial. Now AS will start. SA will start. How to remember? Subsequent event. After 5, what will come? 6. So assume 5 is balance sheet. After that, subsequent events. After balance sheet, 6 is subsequent events. Okay. This standard we are going to deal with events which occur after the balance sheet date but before the date of auditor's report. After the balance sheet date, before the date of auditor's report. And things which come known to the auditor after the date of audit report. So after 31st March and before signing is done and after signing. Objective, to obtain sufficient and appropriate evidence. All events which occur after balance sheet date and before date of auditor report. that require adjustment or disclosure. If adjustment means adjust in last year, or just disclose if it's material, is properly done. Second, respond appropriately to things which occur after the auditor's report. Had he known before, he would have changed his report. Two parts discussion is there. Only first part important. What procedure you will perform for events occur after the balance sheet date and before the date of auditor's report. Okay. What procedure auditor will perform? Number one, obtain understanding from management whether they have any procedure for identifying subsequent event. Ask to management, how do you identify subsequent event? They will tell, we have appointed 2 CAs. These 2 people take care of all the subsequent events. Second, inquire with management and where applicable TCWG, whether they have identified any subsequent event and how they have dealt with the same. Have they done adjustment or disclosure? Okay, ask them. Number one, whether management has any procedure. If they tell yes, ask them, have you identified any subsequent event till date and how you have adjusted that? Third, read the minutes of management, TCWG owner, management, TCWG owner, and inquire which minutes after the date of auditor's report. Okay, sorry, after the date of balance sheet, and see any matter for which minutes are not available. Okay, see the minutes of management, TCWG owner, and for any matter minutes are not available. Last, read the entity's latest interim financial statement. Example, first quarter report, 1st April to 30th June report, and see any things, okay, which might require adjustment. Example, debtor is insolvent on that date, huge loss is there. You have to tell entity, put it in last year. Last year we had booked a provision. This year debtor became insolvent before signing the balance sheet. Means, okay, you have to adjust this because it gives you further evidence. Huge case liability is there. Sir, last year case was going on, now we got further evidence. Adjust this. Read the entity's latest interim financial statement. If there is any adjusting event, see it is properly adjusted. Tell me. 4, procedure regarding subsequent event, very, very important. Obtain understanding from entity how they identify subsequent event. Second, ask management and where applicable TCWG whether they have identified any subsequent event till now and how they are adjusted. Third, read the minutes of meeting of management, TCWG owner, and inquire about matter for which minutes are not available. Read the entity's latest interim financial statements, okay, and see any event which require adjustment or disclosure. Easy. Read nicely. Simple understanding from management. If they have understanding, whether they have identified event, minutes, and interim financial statement. Small break, 10 seconds. Done. Tell me, obtain understanding from management whether they have identified subsequent event. Obtain understanding from management whether they have any procedure to identify subsequent event. Second, whether they have identified any subsequent event and how they are adjusted. Read the minutes of meeting of management, TCWG owner, and inquire matter for which minutes are not available. Read the entity's latest interim financial statement and see any matter which require adjustment or disclosure. What to do of things which come to known to the auditor after the date of auditor's report, but before financial statement are issued to member, or after they are issued to member. After the date of auditor's report and financials before it is issued, or after they are issued also. Means all events which occur after date of auditor's report, but before financial statements are issued, or after they are issued, same answer is there. Auditor has no obligation to do anything regarding procedure performed or anything that happens after signing the report. However, if auditor feels, had he known these things before, he would have amended the report. Then 3 things he will do. Discuss the matter with management and TCWG. See whether financial statement needs amendment and inquire how management will address this in financial statement. Example, one huge inventory is there. You made corona vaccine. Now you feel, okay, government approval came, this vaccine is good for no use. So inventory is valued at cost or NRV, whichever is lower. You thought 100 crore medicine you made, okay, worth 100 crore value. Now value is 0, okay. But this all came, approval of government came after auditor report. Discuss the matter with management and TCWG. Okay, what to do?
Second, does financial statement need amendment? Do we need to amend the financial statements? Of course. Okay. How they will address this in financial statement? If they agree, well and good. Okay. If they don't agree, then now report is gone. What you will do? You can give public notice. Okay. That don't rely on this financial statement. So three things. Anything which come known after signing report. Discuss matter with management and DCWG. Inquire how they will address this in financial statement. Inquire how. First see whether it needs amendment and how they will address this in financial statement. If they don't, you can give notice. Don't rely on financial statement. Last two. Simple. Related party transaction. How to remember? Phi and phi. Oh, related. Phi and phi. Oh, related. Phi and phi are related. First, related party definition as given in applicable financial reporting framework. Means if companies Act give, take that definition. If AS 18 is related party, they give, take that definition. If no definition is given, then listen to this. Who is related party? A person who has control or significant influence over the reporting entity. You are reporting entity XYZ. If PQR has control, means more than 50% stake in your company, or PQR has significant influence, 20 to 50% stake in your company, then PQR is your related party. Any person or entity has control, means more than 50%, or significant influence means 20 to 50%, they are your related party. Any person or company, if they have control and significant influence over me, they are my related party. Second, I have control or significant influence in few companies. I own 2 companies, okay, more than 50% stake, then they are my related party, second point. Or I own 20 to 50% share, then also they are my related party. 2, any person or entity has control or significant influence over me, I am reporting entity, or I have control or significant influence over another entity, both are my related party. Third, another entity that is under common control with the reporting entity. Common control means what? 3 point. Common controlling ownership. My owner is Reliance. Reliance also owns another company. Okay. Then I and that another company are also related because our owners are Reliance. Common controlling ownership. Owners are close family member. My owner is Mukesh Ambani and Neeta Ambani owns Mumbai Indians. I and Mumbai Indians are related. Why? Because owners are close family member. Understood? Common key management means Jayesh Bhai. Jayesh Bhai is a CFO of my company as well and L&T. Then Jayesh Bhai, common key person is their CFO. Okay. Then I and L&T are also related because key management is common. 3 points. Person has control or significant influence over reporting entity. Reporting entity has control or significant influence over the person. Okay. Report has control significant influence over another company or person. Third, companies that are under common control. 3 point. Common controlling ownership. Second point, owners are close family member. Common key management. Common key management. First 2 points are easy. Read this. Break 5 seconds. Done. Okay. One last time. Reporting entity has control or significant influence over another entity. Another entity has control or significant influence over reporting entity. Entities that are under common control. Common controlling ownership. Owners are close family member. Common key management. However, entities that are common control of state or national government are not related unless they exchange in significant transaction. Government, so many companies are there, SAIL, BAIL, BPCL, HPCL. All owners are government. They are not related. Otherwise, so many relatives we will have, so many disclosure requirement, you will go mad. Okay. Unless if you feel they are related, they are doing significant transaction, then yes. Now, what is the responsibility of auditor? Tell me, whenever related party transactions are done, risk is high because Satyam, DHFL, okay, Nirav Modi, all these frauds came out of related party only. In India, related party fraud is even more because we Indians believe that we will do fraud in 4 directions. Above, mom, dad. Below, children. This side, wife. And this side, brother, sister. So 4 directions we do the fraud. There are specific accounting and disclosure requirement for related party which should be followed. As auditor, you need to check. 3 requirements are there. Number 1, board resolution should be passed for related party. Three requirements are there. Specific accounting and disclosure. Three requirements are there. Number one, board resolution is necessary. Separate recording should be there of related party transaction. Third, AS 18 requirements. So we only need to take care. Specific requirements are followed for related party like board resolution, separate recording, AS 18. Auditor has to perform audit procedure to identify, assess and respond to risk of material misstatement from failure to record. If you don't record this or don't pay attention, risk is even more. ROMM, risk of material misstatement, is always more in related party. We need to see that all requirements are properly shown. See, auditor may not detect all related party transaction. Why? Management is only unaware about all related party. Related party, always fraud is there. And when they do fraud, they will not tell you with a soft platter. They will not tell you we have done the fraud. Check related party properly. Remember, when management does the fraud, they do it in such a way we cannot find also. So what we have to do? Maintain an attitude of professional skepticism. Have a questioning mind. Always being alert that there can be related party transactions and there can be fraud in that. That is all we can do. And if we don't recognize, risk of material misstatement will be even more. Nothing great, easy essay, chill. Oh guys, very happy I am. Big chapter, last essay, too much fun, going concern. Wow, 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 wow. Excellent, 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 amazing. See here. Going concern, I am going to teach from here. Wow. 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 SF 560. After that, 560 is after balance sheet subsequent event. 570 auditor and going concern. Auditor and going concern. Few questions we need to ask. I will tell you flow of this essay. Number one, going concern is always valid for foreseeable future. Whenever you want to check going concern, see, one day all companies are going to get closed. Tell me yes or no. Yes, sir, 101% everyone will get closed one day. But we have to check going concern for foreseeable future. What is foreseeable future? 12 months from the balance sheet date. Every balance sheet date, 31st March 2023. You have to check, can company continue for 12 months? If yes, going concern is valid. If no, it is not valid. Okay, as per ASI 1, Accounting Standard Interpretation 1, going concern is valid for foreseeable future, which is 12 months from balance sheet date. Okay. When going concern is valid, kuch na karo, nothing to do. When not valid, assets and liabilities are valued at NRV, liquidation basis net realizable value. Why? Because company is going to get closed in 1 year as per our feeling. When valid, nothing to do. When not valid, asset and liability are valued on liquidation basis NRV. Second, whenever we have doubt on going concern, we will check indicators. If you feel jiures going concern doubt is there, check indicators. What do we check? Indicators. Not saying anything about going concern. If we don't say anything about going concern, doesn't mean that going concern is always valid. As per us, it is valid, but you cannot predict the future. Who would have thought Kingfisher would be closed? Who would have thought Sahara would be closed? Who would have thought Future Retail Big Bazaar Group would be closed? Who would have thought Chanda Kochar will go in jail? You can never predict the future. So auditor's inherent limitation is always more when he comments on going concern. If you are not saying anything, means we think it is good, but anything can happen. Whenever there are indicators, okay, whenever you have doubt, check indicators. Whenever indicators are there, there is material uncertainty about going concern. There is a little doubt. When indicators are present, there is a little doubt. Whenever material uncertainty exists or whenever indicators are there, we will check mitigating factors. We will check what? Mitigating factors. The management will say, no, nothing will happen to company. Okay. Now after that, 2 points are there, I will explain. Come back where we were. Little complicated essay. That is why. Okay. Tell me, what is going concern? Business will continue for foreseeable future. Foreseeable future is 12 months from balance sheet date. In 99% of the companies, going concern is always valid. So this will apply in only 1% company. Okay. Whenever you feel 12 months also, business cannot continue. When do you feel? When there are indicators. 3 indicators are there. Financial, operating, other. Financial, operating, other. What is financial indicator?
net liability, net current liability. Negative cash flows are there in the business. Fixed term borrowing approaching maturity, you have no realistic chance of payment, or you take short term loan to meet long term requirement. Okay, indication of withdrawal of support by creditor. Creditor are not giving you support, no one is giving goods on credit. Adverse ratio, financial indicators. Easy. Net liability, negative operating cash flow, fixed term borrowing approaching maturity without any chance of repayment, indication of withdrawal of financial support by creditor, adverse ratio. What is operating indicator? Very simple. Three things are there: raw material, work in progress, finished good. Raw material, work in progress, finished good. 3 points done. Loss of major supplier of raw material. Work in progress, who will produce? Labor. Labor difficulties are there. Loss of major customer. Okay. Then what else can be there? Operating indicator. Let's read. Management intention to liquidate. Loss of key management. Loss of key customer, franchisee license. Labor difficulty. Okay. Emergence of highly successful competitor. Very simple. 5-6 points you can easily remember. Raw material, work in progress. Loss of major supplier. Labor difficulty, loss of major customer, highly successful competitor. Okay, management intention to liquidate the entity, loss of key management. Other is non-compliance with capital or regulatory requirements are not followed. Capital or regulatory requirement. Pending legal cases are there against the company. If successful, we cannot pay the amount. Okay, then operating other indicators are there. Pending cases, if successful, will not be able to pay. Changes in law, our business is getting closed. Okay, tobacco business getting closed. Liquor ban is there. Plastic ban is there. Uninsured or underinsured catastrophe if they occur. Major disaster if it occurs, we don't have insurance, will die. Okay, so these are indicators. Few indicators are there. Financial, easy. Operating. What is other? Non-compliance with capital or statutory requirement. Every bank have to keep CRR, SLR. You cannot keep. Pending legal cases. If you lose, you are going to lose. Changes in law. Uninsured catastrophe. Whenever these indicators are there, no, there is material uncertainty about going concern. Arise, awake, get up. There is material uncertainty about going concern. Whenever material uncertainty exists, we will check mitigating factors. One more time, 2 times I will speak. Whenever material uncertainty exists, we will check mitigating factor. Whenever material uncertainty exists, we will check mitigating factor. Sir, what is material uncertainty? There is doubt on going concern. Indicators are there. What is mitigating factor? Where management has not yet made an assessment, take management, tell management to make an assessment on going concern. If management has not yet made, tell management. Do you feel your going concern is valid? Have you made any assessment? Because we feel company is going to close. Second, evaluate the management plan for future action in relation to going concern. Management will say, yes, we feel these 3 products are going to revive us. Evaluate the plan of management in relation to going concern. 3, where entity has prepared a cash flow forecast, see assumptions of the cash flow, whether they are valid. Okay, reliability of data, cash flow forecast, you have to see assumption. Consider additional facts or circumstances that are available since management has made assessment. Now, you are doing audit in August or September. Since August, September, check whether management has made a plan. Are they able to fulfill the plan till August, September? If you feel everything is okay, take written representation from management regarding the plan and the feasibility of the plan. Request. 5 points. What are 5 mitigating factors? When management has not yet made an assessment, tell management to make the assessment. Evaluate the management plan is valid for future and feasible or not. Inside the plan, what is there? Evaluate the forecast and cash flow forecast and reliability of data used in forecast. C, after the balance sheet date, consider additional facts or circumstances are available after management is made an assessment. Check after that, is it fulfilled? If fulfilled, request written representation from management. Take written representation. Small break, 10 seconds. Only 4th point is little tough. That, tell me, where management is not yet made an assessment, tell management to make an assessment. Second, okay, Evaluate the management plan in relation to going concern. Inside plan, what is there? Evaluate the reliability of data and cash flow forecast used in the plan. See additional facts and circumstances after management has made the plan, and request written representation from management. Now, after that, after checking all this, two assumptions will be there. Okay, after checking mitigating factor, two things are there. Okay, what are two things, sir? Going concern is valid or invalid. Two things are there. Going concern is valid or invalid. Let me show you. Very quickly. Tell me. After checking the mitigating factors, we will have two things. Going concern is valid or invalid. Invalid, valid. Valid, but there is material uncertainty, means there are indicators, but we feel management will recover, or invalid. Let's see both situations. Use of going concern is, okay, in the chart only we can see. Okay, number one, use of going concern is, what is this? God knows. Okay, gone. Use of going concern is inappropriate, means going concern is not valid. Okay, then financial statement should be prepared as per liquidation basis NRV. If management has prepared the financial statement as per going concern, but going concern is not valid, auditor will express adverse opinion because everything is wrong. Everything should be shown on liquidation basis. If going concern is not valid, you feel, okay, and management feels it is valid, they are not listening to you. Please correct. Make financial statement on liquidation. No, we will not make. Give adverse report which is affecting all the accounts. Second, if management has prepared financial statement on liquidation basis, express unmodified opinion, explain a clear opinion, okay, unqualified clear opinion, but in emphasis of matter paragraph say that we feel going concern is not valid. That is why financial statements are prepared as per are prepared on liquidation basis. Emphasis of matter paragraph chapter 11 it will come. Okay, we are emphasizing and telling you this is the issue. Okay, if going concern is not valid, if going concern is not valid, and two situation, if management has prepared financial statement as per the going concern, adverse report because affecting all accounts. Okay, if management has prepared financial statement on liquidation basis, unqualified report, clean report, but right in emphasis of matter paragraph we are emphasizing. Second, going concern is valid but material uncertainty exists. There are indicators but we feel mitigating factors are strong. Adequate disclosure about materiality is made. If management allows you to make disclosure that material uncertainty exists, management is saying no problem, right, that there is uncertainty but going concern is valid, then unqualified opinion. Are you clear? But auditor's report shall include separate heading, material uncertainty is there relating to going concern because there are indicators. Report unqualified. Management says no, don't write all this, our shareholder will feel bad, our investor will feel bad, don't write. If adequate disclosure management is not making in the financial statement, auditor will give qualified or adverse report. Depends on you. If you feel 2-3 assertions, qualified, everything adverse. In basis of opinion, right, that auditor's report is your own, no one can force you. You can write material uncertainty exists, but same is not shown in the financial statement. This all you will understand later. Understood? Okay, tell me if it is valid. And management listens to you, no problem. Emphasis of matter paragraph, right? If not valid, okay, if it is not valid, okay, then what you will do? And management doesn't prepare financial statement on liquidation, adverse report. If it is valid but material uncertainty exists, management allows you to write, then unqualified report. In basis of opinion, right, there is material uncertainty. If they don't allow, you have to decide qualified or adverse. Clear? But in auditor's report, right, there is material uncertainty. With this, all essays are over. What a revision. Mega, grand, amazing, mind-blowing. If you are watching till here, you are going without a like button. Oh my God, what mistake you are making, okay? Please like, it will motivate us to work with even more energy, even more renewed vengeance, okay? And give you much more than your expectation. Do share with all your friends, okay? They will be more thankful to you rather than thanking me. Okay, and do consider subscribing India's #1 channel. Such conceptual clarity, free of cost lectures, okay, which are high quality lectures you will never get in life. Okay, thank you so much. Do take care of yourselves. Bye bye. Love you. Thank you. Quick revision before that. Tell me how many essay discussed. 230. After 2-3 will come audit documentation. 500 audit evidence. 501 audit evidence specific consideration for selected item. 505. I said 5. Oh. In your book also 5. 505 external confirmation. 510 initial audit engagement. 5 related party. After 5-6 will come after balance sheet subsequent event. 570 going concern. 580 return representation from management. Good night, bye bye, love you, take care. Oh my god, thank you. Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, today we are continuing with the Audit Mega Marathon Revision series in only English. Yes, we are coming up with chapter number 6, Audit in an Automated Environment. Many people find this very difficult chapter, and short question comes from this chapter, but we'll make it a cakewalk for you. Be rest assured, in next 1 hour we are going to crack this chapter in the nicest possible way. Yes sir, but before starting, guys, I want to tell you one thing. Okay sir, from where are you doing this revision? There is a magic book. Okay, so from magic book, in which entire subject is covered in 85 pages, we are doing the revision. If you wish, you can order hard copy books from brugeshmadlani.com. Let's start right away. Okay. So what are we going to study in this chapter? Can you tell me, sir? Can you tell me, sir? Why not? Why not? Why not? See, audit in an automated environment. Today, first let's understand the crux behind the chapter. Today, entire thing is automated, yes or no? Look at stock exchange, look at e-commerce, look at cloud computing, look at insurance company, look at banking company. Entire environment is automated. Gone are the days I used to check voucher, okay? So client is automated, audit should also be automated. I need to get understanding of IT environment of the client because his entire thing is automated. Earlier, let me take an example. Audit trail was visible. You know what is audit trail? From starting to end, source document, journal, ledger, trial balance, adjustment, adjusted trial balance, closing entry, financial statement. Today, there is no audit trail. Directly you pass entry and balance sheet comes, yes or no? Yes, sir. Today, directly passing entry and balance sheet. So, in between, if something wrong happens, what will happen? Okay. That is why, as client's environment is automated, auditor should also understand that automated environment to gain a assurance whether transactions are proper or not. If you feel the automated environment controls are strong, then transactions will also be strong. Friends, try to understand, as entire transaction is online, audit should also be online, and that is why we need to understand the automated environment. Gone are the days when we'll do manual audit. I need to understand the automated environment of the client. What are the risks in the environment? What are the controls in the environment? I will test those controls, because if I gain assurance on controls of the environment, then automatically transaction will also be good. I hope you understood briefly what chapter looks like. Okay. Earlier transactions were manual, so I can check voucher. Today, as everything is online, audit should also be online, and that is why we have come up this wonderful, beautiful, amazing chapter. So here we'll obtain understanding of automated environment of client. Okay, so I can do audit in an effective and efficient way. What all we are going to study in this chapter? Till now we have not started. Brief understanding. What is automated environment and its features? Second, what all activities happen in automated environment? Okay. Third, in which situation IT will be relevant for audit? Okay. In which all situations I will use IT for audit? Whenever I will use IT for audit, I need to get understanding of IT environment. Okay. If IT is used, tell me in all situation IT will not be used. Okay. IT will be used in banking, insurance, stock exchange. So in that cases, I need to get understanding of IT environment. With understanding, I will know what all risks are there in the IT environment. To protect from risk, I will get understanding of types of control. Okay. what is the impact of risk, then types of control. I will test on those control and report on this control. Over. This is what chapter looks like. One more time. First point, meaning of automated environment and its functions. Okay. Second, what all activities happen in an automated environment. These all activities. Situations in which IT will be used for audit. Tell me, when should I use IT? Whether shall I make use of IT in audit or no? Situation, in this situation, client is using IT environment. So I will also get understanding of IT. Then I will understand the automated environment. As soon as I understand the environment, okay, there are risks in the environment. To protect from risk, there will be impact of the risk. Understanding the risk, impact of the risk. Then types of control to protect from the risk. I will test on those control and report on those control. Absolutely clear. One last time. Meaning of automated environment and its feature. What all activities happen in an automated environment. Okay. Third, situations in which IT will be relevant for audit. In those situations, I will obtain understanding of IT environment. Okay. Then risk in an automated environment. After understanding, I will know this risk are there. Impact of those risks, impact of this risk. Then to protect from the risk, there will be types of control. I will test those control and then report to management or TCWG, etc. Can we start? Yes, sir. Now, let's start right away. Very, very easy, very, very simple. One more time, I'm saying it's a very easy chapter. Very cakewalk, very easy we will make for you. Don't worry. First question. What is automated environment? Simple. Automated environment refers to business environment where code, processes, operation, accounting, decision. One more time. Processes, operation, accounting, decision is carried out by computer system, also known as information system or IT system. Forward, where processes, operation, accounting, decision is carried by computer. What is processes? Okay, purchase is a process, sales is a process, recruitment is a process, delivery is a process. Are you clear? I hope you are able to understand. All business department, production, finance, marketing, HR is a process. Okay, purchasing goods is a process. Can it be automated? Yes. Automated environment is an environment where processes, let's assume purchase process, sales process, recruitment process. Three example processes. Operations, what do you mean by operation? Delivery is a operation. Okay, making the bill is a operation. Okay, when you go to a mall, we scan on the barcode and price appears. For example, you purchase Colgate, tuck, and price, that is a operation. Okay, processes, operation. Accounting, tally system is used, ERP is used. And decision, let me take two example of decision. Whenever you apply for credit card, they will check certain things and decide to give you credit card or not. System checks, that is decision. Simple more example. Amazon, you will enter your address, it will tell you within how many days delivery, 2 days, 3 days. Decision. Okay, so okay, one more example. Uber, Ola, you, as soon as you book a car, it will tell you whether the car is going to come or not come. If yes, in how much time. Decision. Automated environment refers to environment where code, processes, operation, accounting, decision, processes, operation, accounting, decision is carried out by information system, also known as IT system. Shall we go ahead? Yes, sir. Learn. Break of 2 seconds. Done. What is automated environment? It refers to a business environment where code, processes, operation, accounting, decision is carried out by information system, also known as computer system or IT system. Now, what are features in automated environment? Take example of any automated environment. Bank. You can take stock exchange. Okay, anything. Large volume of transaction. Tell me, in bank, 1-2 transactions are there or large? Large. Why so large? Because faster business operations are done. Enable faster business operation. Thousands of deposit and withdrawal. Ability to process large volume of transactions. Why? Because there are faster business operation. There is accuracy in data processing and computation. As soon as I pay you, for example, I am transferring you 50,000. My account debit, your credit. Automatic it is done. Accuracy in data processing and computation. Integration between business operations. All operations are linked. Let me take an example. As soon as sales is done, inventory is automatically deducted. As soon as purchase is done in automated environment, stock is automatically increased. Are you clear? Because there is integration. Departments are linked to each other. Better security and control are there. In an automated environment, wonderful security, wonderful control. In a bank, there is what? ATM pin is there. There is a security guard. There is a card. Okay, so security and control. Due to this, less prone to human error. As controls are more, error will be less in automated environment. You withdraw the money, directly balance will be debited. In a manual environment, you might forget to debit at times. Okay, provides latest information. Automated environment gives you latest information. Why? It is connected to internet. Let me take example IRCTC. On the spot you will know 20 waiting is there, 25 waiting is there. Why? Because that waiting is connected to the server, so you get latest information. Very simple. Tell me, what are the features in an automated environment? Too simple. Ability to process large volume of transaction. Why so large? Enables faster business operation because things are done faster. Okay. Third, accuracy in data processing and computation. Why so much accuracy? Because integration is there. Integration between business operation. Learn this 4 point. Next 4 are too easy. Small break, 5 seconds. Done. Ability to process large volume of transaction. Okay. Then why such large? Enables faster business operation. Accuracy in data processing and computation. Why so much accuracy? Integration between business operation is there. One more time. Ability to process large volume of transaction. Why so large? Because faster business operation. Then third point is what? Accuracy in data processing and computation. Why so much accuracy? Integration between business operation. Now all points are easy. Better security and control. Why? Due to that there is less prone to human error. Better security and control, less prone to human error. Provides latest information. How? Due to connecting and networking capability. Connectivity and networking capability. Very simple. Better security and control, due to which less prone to human error. Okay. Provides latest information. How? Okay. Due to connectivity and networking capability. Very, very simple. One last time. What are features in automated environment? Ability to process large volume of transaction. Why such large is done? Because there are faster business operation. Accuracy in data processing and computation. Why? Due to accuracy is there due to integration between business operation. Better security and control. Due to why better security and control? Less prone to human error. Okay, provides latest information, connectivity and networking capability. Small break, 10 seconds. Done. What are features in automated environment? Only first point you have to remember. Ability to process large volume of transaction. How such large volume is processed? Enables faster business operation. Accuracy in data processing and computation. Why so much accuracy? Integration between business operation. Better security and control, due to which less prone to human error. Provides latest information. Connectivity and networking capability. Oh, what? Moving on. Relevance of IT in audit. Whenever you use automated environment, these activities are done automatically. Whenever you use an automated environment, these activities are done automatically. Which all activities are done? Computation and calculation is effectively carried out. Example, interest calculation. You don't have to calculate. Auto calculation of interest is done. You don't have to calculate depreciation. Auto calculation is done. Entries are posted automatically. Business policies and procedure including control are automatically applied. Example, you set in the system about 20% discount only manager can give. It is automatically set. As soon as you enter 20%, it will not allow you. Business policies and procedure are automatically applied. Reports used in the business produced are used and people rely on those reports. Lot of reports it will give you. Debtor outstanding report. Okay, so based on that you can call the debtors. So reports are given by system by which we can rely and take decision. And user access and security is designed by giving right to the user. Means in automated environment everyone has same right or different. Production can only see production data. Finance can see finance data. Marketing can see marketing. Tell me what all things are done in an automated environment. Computation and calculation automatically carried out. Entries are posted automatically. Business policies and procedure including internal control are applied. Reports used are produced from system and other rely on the report. And user access and security is controlled by giving access right to user. Simple. It will not come. Don't learn. Come here now. Situations in which now I got understanding of IT environment. In this situation, I need to use IT for audit. See, as client is using IT, I also need to use. Why? Because some things only IT can solve. volume of transaction is high, manual checking is impossible. In this situation, I need to use IT for audit. Do I need to use in all situations? No. In these situations, IT will be relevant for audit. Nice question can come. Increase use of system and application. When lot of systems and application are used by client, I also need to use. Example, ERP. Okay. Second, volume of transaction is a humongous volume. Insurance company, banking company, stock exchange, huge volume. Complexity of transaction is increased. Multiple systems are there. Multiple network are there. Stock exchange. How many systems? NSC, BSC. I need to so many clients, so many brokers. High tech nature of business. There is lot of technology involved. Telecom. Look at the technology involved. Company policy, maybe big four policy, or the client whom you are auditing. Stock exchange policy, whoever audits a stock exchange has to use IT. Bank policy, whoever is doing bank audit compulsory needs to obtain understanding of IT environment. Or you are a big four, your company policy is there that we need to use IT. Regulatory requirements, IT Act tells you to use IT. Companies Act tells you to use IT. Internal financial control. These days, CA doesn't have to prepare financial statement. We are not only responsible for our opinion, we are also responsible for internal financial control. So to understand the control, I need to understand IT environment. Required by Indian and international standards tell me. For example, international standard for organization, SA 315 tells me. And IT will increase the effectiveness and efficiency of audit. So I'm using it. Simple. Let's learn this. 1, 2, 3. In this situation, IT will be relevant for audit. It is easy, no, very easy. Increase use of system and application. Volume of transaction is high. Complexity of transaction has increased. High tech nature of business. Only first 4 points. Increase use of system and application. Why am I using so many system and application? Volume of transaction is high. Not only volume, complexity of transaction is increased. High tech nature of business, high technology nature of business. Learn till here. Break 2 seconds. Over. Increase use of system and application. Okay, why am I using so many systems and application? Volume of transaction is high. Not only volume, high tech nature of business. Complexity of transaction is increased. Now very simple. Company policy, regulatory requirement. Company policy, regulatory requirement. Company policy, regulatory requirement. Required by Indian and international standard. Required by Indian and international standard. I only like to use. It will increase the effectiveness and efficiency of audit. So simple, a very simple, a simple, very good. One last time. Why am I using? Increase use of system and application. Volume of transaction is high. Okay. Complexity of transaction is increased. Increase use of high-tech nature of business. Next, last 4 points are easy. Company policy, regulatory requirement, required by Indian and international standard. And last, it will increase the effectiveness and efficiency of audit. Small break, 5 seconds. Done. Increase use of system and application. Volume of transaction is high. Okay. A complexity of transaction is increased. High tech nature of business. Last 4 points are easy. No, very easy. Number one. Company policy, regulatory requirement, required by Indian and international standards. IT will increase the effectiveness and efficiency of audit. Next. Now, whenever IT is relevant, I need to obtain understanding of IT environment. Situation in which IT will be used. In this situation, IT will be used. Now I will understand the environment. Why should I understand? So I know what are the risks in the environment. What impact will be there of those risks? Then I will test the controls. Then company will implement control for risk. I will test for the control and report. So simple, very simple. Understanding of IT environment. You will understand how IT department is organized, IT dependencies, how IT activities are there, how IT department is organized, IT activities, IT dependency, risk and control. In IT, understanding IT environment, I will see information system being used. For different department, are there different system? Production different system, finance different, marketing different, HR different, or they are using one system. ERP they are using. Okay, information system being used. What is their purpose? Systems are used for only financial thing or non-financial also. Third, location of the system. Is it local or global? What is local? Branch wise different system is there or one global system they are using. Everyone has to use same software. okay, which is controlled by head office. Architecture. Architecture means, is it client server, web, cloud? What is client server? One server is there, all are clients. There is a proper system, one server, and all people are using. What is web app? Are they using website? Are they using cloud? Okay, I need to understand the architecture because risk will change with the architecture. Can you explain which all risk will change? That is not in our syllabus. We just need to understand their architecture. Okay, that IT team will understand. Okay, version. Features will change with the version. Version 1, version 2, version 3. You know version 4 if they are using, lot of risk is there. So you can change them. Please change your version. Interface within the system. Does our system have link with other system? Example, Uber payment you can do through Paytm. Is it linked system? Then I need to understand other system also. For example, for payment gateway, you are using PayUmoney. Payment gateway, you are using PayUmoney. In our website, payment you want to make, PayUmoney is there. So I need to understand PayUmoney also because my system is linked with PayUmoney. Interface is there. Interface means, is our system linked with other system or not? In-house versus package. Have we developed the in-house software or purchased ready-made? We need to check. Outsource activity. 99% people, 90% outsource their IT. Whether have we outsourced to Wipro, Infosys, TCS, then we need to take certificate from them, not in our syllabus. Key person, obtain understanding. See, persons will only enforce control. If persons are good, control will be good. Key person, CIO, CISO, administrator, all this understanding. Chief Information Officer, Chief Information Security Officer, administrator. All this is documented in one pamphlet nicely. Very simple. Understanding IT environment. Okay, understanding the IT environment. Situations in which IT is relevant. In these situations, I need to understand the environment. Information system being used, their purpose, architecture, location. First 4 points very easy. First 5 points. Information system being used, their purpose, location of the IT system, architecture, version, interfaces within the system. Learn till version. Information system being used, their purpose, location of the IT system, architecture, version, double I, in-house versus package, interface within the system, in-house versus package, interface within the system, outsource activity, key person, outsource activity, key person. Not able to understand? Okay. Try to learn 5 points. Information system being used, their purpose. Third point, architecture, location of the IT system, architecture, version. Learn till here. 5 points. Then information system being used, their purpose, architecture, version, location of IT system. I forget third point, God knows why. Information system being used, their purpose, location of the system, is it decentralized or centralized? Okay, architecture, version. Okay, next double I, in-house versus package, interface within the system, in-house versus package, interface within the system, outsource activity, key person, outsource activity, key person. Very simple. One last, information system being used, their purpose, location of the IT system, architecture, version, double I, interface within the system, in-house versus package, interface within the system, in-house versus package. Okay, last two. Okay, key persons, key person and outsource activity. Simple. One last time. System being used, their purpose, location of the IT system, architecture, version, in-house versus package, interface within the system, outsource activity, key person. Simple. Now, after obtaining understanding of IT environment, I will know what all risks are there. I am fully dependent on IT, understood. Now I need to check the risk. Okay. What all risk can be there? Unauthorized access to data. Someone can see the data in unauthorized way. He is not authorized, but still he can hack and see the data. Unauthorized access to systems and program. Not only data, they can access the software also, systems and program. Make unauthorized changes. Data you are only seeing, but system you are accessing means you can make additional entry, change the data. Unauthorized access to data, unauthorized access to system and program, excessive access or privilege access super user. Sometimes there is a admin. Admin will give right to all users, but admin himself can misuse. Have you ever gone to a hotel? Many times, sir. In a hotel, there are keys given, but there is one master key. Understood? Master key. That master key will work in all room. Manager has that master key. Sometimes waiter will not do mischief. Manager itself will steal the things. Okay. So that excessive access or privileged access. Super user. Super user means the person who is given master key. He can misuse. How many points? 3. Unauthorized access to system or data. Unauthorized access to program. Excessive access. Privileged access. Super user. Last, 4. Incorrect processing of data or processing incorrect data. What is the difference? Incorrect processing means 2 plus 3 should come how much? 5. By mistake 6 came. Incorrect processing of data. Processing incorrect data means what? Instead of writing 2 plus 3, you wrote 2 plus 2. Answer will not be 5, baby, it will be 4. First point, understand. Incorrect processing of data. 2 plus 3, you wrote correct. Answer you should get 5, you got 4. Down, you had to write 2 plus 3, but you wrote 2 plus 2. Answer will be 4 only. Processing was correct, data was wrong. In above, processing was wrong. Incorrect processing of data or processing incorrect data or both. Direct data changes. From backend, you are making changes in the backend only. Loss of data can be there. Failure to make necessary changes to system and program. If new virus comes, I need to update the program. If I don't update, it is a risk. Failure to make necessary changes to system and program. And lack of adequate segregation of duty. Understand this point. Work of one person should be reviewed by another. His work should be reviewed by someone. If you don't review, something wrong can happen. That is solved. Segregation of duty. There should be different person for creating, authorizing and disbursing the loan. If one person only does everything, fraud can happen. Are you clear? So work of one should be reviewed by another. Solved. If you don't do that, that is also a risk. Very simple. If you are not able to learn, divide into 3 parts. Input, process, output. One more time. Input, process, output. Input. Unauthorized access to data. Unauthorized access to systems and program. Input. Unauthorized access to data. Unauthorized access to system or program. Clear till here? Okay. Third, excessive access or privileged access. Super user. 3 points of access done. Input done. See, any system, there are 3 steps. Input, process, output. Input done. Unauthorized access to data. Unauthorized access to system or program. Excessive access or privileged access, in bracket super user. Access done. Process. Incorrect processing of data or processing incorrect data. Incorrect processing of data or processing incorrect data. This is also done. Okay. Now, input, process, output, direct data changes, bracket, or loss of data. Direct data changes you are doing from backend. In the backend, in Make My Trip, you change the flight time. In Make My Trip, you changed 8 o'clock flight, you made night 9 or 8 o'clock. Okay, morning 8 o'clock flight, you made the change to night 8 o'clock. Now, person will book at night 8 o'clock. He will go, but there will be no flight because it was a morning flight. Direct data you did from backend, you did change. Direct data changes backend. Are you clear? Loss of data. Loss of data. So, input, process, output. In output, direct data changes, backend changes, or loss of data. Data only go. So, output also done. Input, process, output done. Last 2 points are simple. Failure to make necessary changes to system or program. Lack of adequate segregation of duty. Very simple. Extremely simple. Simple, simple. Extremely simple. One more. Unauthorized access to data. Unauthorized changes to system or program. Excessive access or privileged access, in bracket super user. Incorrect processing of data or processing incorrect data. Direct data changes, backend. Loss of data. Failure to make necessary changes to system and program. And last point, lack of adequate segregation of duty. Learn nicely. Time starts now. 10 seconds. Done. What are risks in IT environment? Input, process, output. Unauthorized access to data. Unauthorized changes to system or program. Excessive access or privileged access, in bracket, don't forget to write super user. Incorrect processing of data or processing incorrect data. Direct data changes, backend. or loss of data, failure to make necessary changes to system and program. Sir, last point, don't forget, lack of adequate segregation of duty. Now, tell me, if the controls are weak, what impact it will have? If risks are there, okay, if risks are there, I will not rely on controls. I need to test more data. Tell me, if more risks are there, I can't rely on control. Okay, I need to check. We can't rely on automated control. Okay, we cannot rely on IT dependent control also. We need to check. What is automated IT dependent? Wait for 2 minutes. We need to check all substantively. I need to check all the data because there are a lot of risk. I can't rely on control. I can't rely on IT dependent control. I need to check all the data. What is impact on substantive audit? If controls are weak, I cannot rely on the data from system. I cannot rely on the data. I need to check all the data substantively. TOD will be more test of details. Are you clear? More evidence is needed. Impact on reporting. I will communicate to TCWG or management. Understand nicely. In detail after 15 minutes when we end the chapter. If normal deficiency is there in control, normal weakness is there, I will report to management. Significant deficiency. What is significant? Probability and impact is high. Did not understand? Wait for 5 minutes. Probability and impact is high. This whole you will not understand. Within 5 minutes you will understand. Significant deficiency, huge probability and impact, I will report to TCWG, those charged with governance. If you did not understand, very good, concentrate now. Now risks are there, so control will come. For protecting the risk, control will come. Okay, types of control, there are 4 types of control. Actually there are 3: general control, application control, IT dependent manual control. General control, application control, IT dependent manual control. What is general control? Apply to all systems, all data, all program. There are general control which apply to all systems, all app, all program. Like 4 examples are given. They will apply to all. If general control are strong, application and IT dependent control will also be strong. Control will change from app to app application. Make My Trip different, Dream 11 different, Murugesh Madlani virtual different, YouTube different, Paytm different. Application control. But those control which are same for all, general control. Your parents, the way they have brought you up is general control. Okay. What are your control, your brother control, your sister control? Those are application control. Application control and IT dependent application control depend on general control. All control depend. If parents are strong, children are bound to be strong. If parents are good, children are bound to be good. If parents have good ethics, children are bound to have good. So children's depend on what? Parents. Same way, application control and IT dependent control depend on general control. General control are pervasive, apply to all systems, all data, all processes. General control same for all, everyone same to same. General control. Yes. These are policies and procedure for effective. Okay, 4 general control are there. Access security. Tell me, all can access the app or only authorized? Only authorized. Only authorized can access the app. So access security is there in one app or all app? All app. That is right. It's general control. Access security. Application system acquisition, development, maintenance. In EIS, this comes whenever you want to develop a system or purchase. Earlier people used to develop, these days they purchase. Proper C should be there. C for control. C for control. Okay, systems are properly configured, implemented, maintained. Next, program change. Tell me, changes in system will be done by all or only authorized? Only authorized, not all. Otherwise people misuse. Okay, modified system. Data center. All apps today have data center. So data center work is proper. That also we need to check. Okay, production systems are processed to meet financial reporting objectives. Systems are produced to meet financial reporting objectives. Very simple. To ensure that systems are processed to meet financial reporting objectives. Data center is proper so we can meet the financial reporting objective. 4 types of general control are there. In 1 second over, you access any system. Then we'll develop the system, application system, acquisition, development, maintenance. Then changes in system only authorized, program change. All this is connected to data center. You want to make more simple? First, let us develop an app. Application system, acquisition, development, maintenance. Application system, acquisition, development, maintenance. After developing, I will access the app, access security. After that, changes only authorized person, program change. Last, all this is connected to data center and disaster recovery, data center and network. Why these are general control? These are in all app, all company. There is a data center in which all things are connected. If data center is strong, everything is strong. Very simple. First point, application system, acquisition, development, maintenance. To access that, access security will come. Third point, program change. Fourth, data center and network operation. One last time, application system, acquisition, development, maintenance. One company will develop app or all. So this is first. Then access, all will access or authorize, access security. Changes in the app, only authorize. Program change. Last, data center and disaster recovery center. Data center and network operation. One last time, application system, acquisition, development, maintenance. Inside the app, only authorized person, access security. Changes also authorized, program change, data center and network operation. General control are strong, both below will also be strong. General means like parents. If parents are strong, everything is proper. But if parents are only weak, everything will be weak. General control are basic sanskar. Are you clear? The rules, ethics, controls. Application control. This change from app to app. Okay. Application control are in the app. Example, edit check. Make my trip. You cannot edit a city. City name is fixed. Okay. You cannot edit a dates. Date is 1 to 31 only. Edit check. Editing is allowed only for permissible field. Limit check. In ATM, minimum limit is what? 100 rupees, maximum 30,000. So 100 to 30,000 limit. Mobile number maximum 10 digit. These are set in the app. If you enter 11 digit number, error, it will show baby error. Validation of input data. Whenever you enter data in app, it checks it is correct or not. If not correct, it will reject. Mandatory field are there. Example, in Amazon, you don't enter address. How will book come? They don't know that you are living in Chennai. They don't know you are living in Bangalore. They don't know you are living in Thiruvananthapuram. Okay. Reasonable check. Data should be, for example, any betting website. You should be about 18 years of age. Only then they will accept your registration. Reasonable check. I hope you are clear. So there are controls in the app. Mobile number always new. Mobile number, many people write name. My name is Khan. Who is asking baby? I write mobile number. In name they write number. Crazy, name should be alphabetic. Mobile number numeric. Okay, these are in the app. User limit check, validation, reasonable check, mandatory data fields. I hope you are clear. What is IT dependent control? Those control which are dependent on IT. IT dependent manual control. These are manual control but dependent on IT. Example, you call debtor, please give me money, please give me money, please give me money. But how do you call? Based on report. So report is IT control, calling is manual. Report is IT control, calling is manual. These controls are dependent on what? Tell me. IT. If the report is only weak, calling will also be weak. Let's take example. You are calling Mahesh Kumar, pay me 1 lakh. Mahesh Kumar will say, I already paid before 2 days. Oh, but our report is weekly. So before 1 week, I got the report. And get new report. No, it will come next week only. Calling is not effective because IT is ineffective. IT control ineffective. Manual will also be ineffective. These are some form of manual control that make use of IT. Are you clear? For example, calling dependent on debtor report. How much effective calling will be? How much report is effective? Design and effectiveness of this control depends on data, and data depends on general control. Automated control and IT dependent control require general control to be effective. You and your child, how you will pass or not depends on your parents. If they are strong, everything is strong. 3 control. General, application, IT dependent. Arey come on. General, application, IT dependent. Arey come on. General, application, IT dependent. Arey come on. General, apply to all systems, all data, all process. General. Change from app to app, application. IT dependent, depends on IT. Are you clear? Now I need to test control, baby. Baby, I need to test. Can you name any 2 control? Number 1, discount will be given by store manager. All purchase above 1 lakh will be signed by CF. 2 control. Now I need to test. How many methods are there? Inquiry. Inquiry is very efficient method but least effective. Example, there is a person, I will go to big bazaar. Who is giving discount? Store manager is giving or someone else? What he will say? Only store manager. Mr. Mahesh only gives discount. Inquiry. Asking someone, very efficient method, less time consuming, but least effective. Who will tell no? If you ask, will you ever tell no, Mahesh doesn't give? Come on. It is a good method. It consumes less time. Most efficient means less time, but least effective. Then which is very effective method, excellent method, but taking more time? The performance. You perform the control yourself. Example, company saying depreciation 52 lakh 50,000. You take land and building, plant and machinery, furniture and fixture, and you enter the rate. This rate is this, this rate is this rate, and calculate on a PC, and it comes same 52 lakh 50,000. Here also now assurance will increase, but it will take 2-3 days to do such exercise. It is least efficient method, but very effective because I am calculating, so assurance will be very high. Tell me, which one is a best method? Best method, re-performance, but take lot of time, very less effect. Okay, which one is most effective? Re-performance, but least efficient because takes lot of time. Inquiry, very efficient but less effective. Are you clear? What is effective? Nice, efficient, time consuming. Inquiry will take less time but not effective method. Re-performance very effective but least efficient because if I calculate, it takes a lot of time, baby. Observation, just seeing, is giving discount, you are observing. Inspection, checking documents. Wherever discount is given, you will check documents. Is that sign of purchase manager? So what to do? In exam MCQ can come. Which is the most efficient method? Inquiry. Which is the most effective method? Re-performance. So what we should do? Inquiry in combination with inspection is most effective and efficient method. Okay, inquiry in combination. They are saying you should do inquiry in conjunction with inspection. Okay, inquiry together with inspection is best. However, which method to use to test is your judgment. No one can tell you anything. Don't forget, you are a chartered accountant. Yeah, okay. Clear? Clear? निकली जाऊँ क्या उधर निकलूँ 5 मिनट 5 मिनट कर ली. Okay, moving on next. Okay, one last time. Let's make brief summary. Come on. Inquiry, observation, inspection, re-performance. Tell me which is the most effective method. Effective, best, re-performance, but least efficient because lot of time. Which is the most efficient method? Inquiry, but least effective. So inquiry together with inspection. Wonderful. While testing in an automated environment, some more methods are more methods. Yeah. More methods are, this can also come. Obtain understanding of how automated transaction is done by doing walkthrough of one end-to-end transaction from starting to end using combination of method like inquiry, inspection, observation. Did not understand. See, testing, more methods to test if they ask, then this can also come. Then long list. Obtain understanding of how transaction is done. Okay, using walkthrough. Walkthrough means starting to end. You will see entire transaction from customer coming to getting a bill. See entire transaction by using combination of method like inquiry, inspection, observation. First point, obtain understanding of how automated transaction is done using combination of method like inquiry, inspection, observation. What is walkthrough? Walk through the entire transaction from starting to end, see entire transaction using combination of method like inquiry, inspection, observation. Second, observe how a user does transaction under different scenario. With discount, transaction is like this. Without discount, it is like this. Are you clear? How user does transaction under different scenario. This is nothing, mix of methods only. Okay, just to complicate they have given. In first, combination of method. Second, observation is there. How a user does transaction under different scenario. Now 3 times inspect word will come. Inspect the configuration in the app. See the coding done in the app. Okay, you are also IT developer. You are in IT team of audit. In auditors also there is a IT team. So that IT team will check the configuration in the app is proper, coding, etc. Inspect the system logs to determine any changes done since last time testing. Last time you had tested. Now check in the app logs. Logs is record. Call record. You must have heard. Call record. Whom you have called at what time. See the system logs to see any changes are made since last time you did testing. If changes are made, then you need to test again. But if no changes are made, last time it was effective. This time also will be effective. Last time you checked, no baby. Why to check again? Why? Inspect the system logs to see any changes made since last audit testing. If no changes are made and controls were good, no need to test. Inspect the technical or user manual of application. To use the app, there will be manual. For using TV, there is a manual. For using microwave oven, there is a manual. Same way. Carry out test check and observe the error. Intentionally enter wrong password. See whether it is showing error or allowing you. If it is showing error, very good. If it is allowing you, problem is there. Problem is there. Okay. Conduct reperformance. Reperformance means again enter data using raw data, independently applying formulas, rules, validation using CAT, computer assisted audit tool. Conduct reperformance using raw data, independently applying rules, regulation, formulas. Enter new data and see how is it doing the processing. Can we start? Yes, sir. While testing in an automated environment, baby, some more methods are obtain understanding of how automated transaction is done by doing walkthrough and using combination of method like inquiry, inspection, observation. Then observation again. Observe how user does transaction under different scenario. Learn 2 points. Done. Done. Inspect the configuration in the app. Inspect the system logs to see any changes are made since last audit testing. Inspect configuration in the app. Inspect the system logs to see any changes made during last system testing. Inspect the technical or user manual in the app. 3 inspect are there. Inspect the configuration defined in the app. Inspect the system log to see any changes are made since last audit testing. Inspect the technical or user manual of the app. Inspect 3 times, inspect, learn, break 10 seconds. Done. Carry out test check and see the error message. Carry out test check, enter wrong password and see, and conduct reperformance by using raw data and independently applying rules, regulation, formula using computer assisted audit tool. Simple. Leave this also. Now 2 times we'll speak because it is too easy. Obtain understanding of how automated transaction is done using combination of method like inquiry, inspection, observation. Observe how user does transaction under different scenario. Inspect the configuration in the application. Inspect the system log to see any changes are made since last audit testing. Inspect the technical or user manual of the application. Then carry out test check and observe error message displayed by application. Conduct reperformance using raw source data, independently applying rules, regulation, etc. Very simple, amazingly simple. One last time. Obtain understanding of how automated transaction is done using combination of method like inquiry, inspection, observation. Observe how a user does transaction under different scenario. Inspect the configuration defined in the application. Inspect the system logs to see any changes are made since last audit testing. Inspect the technical or user manual of the application. Last 2 points. Carry out test check and see the error message displayed by application. Okay. Conduct reperformance using raw source data, independently applying rules, formula, etc. Simple. So first is observe, inspect, negative testing and raw data. Data analytics for audit. Oh my God, amazing. Do you know data analytics? Using methods, tools, techniques to extract useful data. There is big mine. Whole data is like the garbage. Out of that garbage, you have to find out those gems which are relevant. Those things which are relevant, that is data mining. Huge data is data warehouse, from where we find out mines, patterns, trends, relationship. That is data mining. Data analytics is not only used in business. In business, it is used, of course. Let me take one example. Amazon has huge data. Out of that, they will find out that data which is useful. For example, you are clicking on product again and again. You will get an offer. Baby, why are you clicking so much? Please buy. Buy, no. Buy. Are you clear? Okay, so that is data analytics. Combination of tool and technique we use to get useful trend from large amount of data is data analytics. When auditor uses these tools and techniques, it is known as data analytics for audit. Data analytics is in EIS. How does auditor do data analysis? There are wonderful software available these days for doing audit, for analyzing the data and finding useful data for audit, which will make our audit more effective, make our audit more efficient. When auditor uses data analytics, when auditor uses the tools and techniques to do audit in a better way, to find out trends, unusual things, it is known as data analytics for audit. Let me read. Even auditor can use these tools and technique. Tools and technique which auditor uses for data analytics are known as CAT, Computer Assisted Audit Tool. One last time, Computer Assisted Audit Tool. One last time, Computer Assisted Audit. When auditor uses these tools and technique to analyze the data, CAT. We use specialized tools or use IDEA ACL. You know what is ACL? Audit Command Language. All Big Four, ENY, KPMG, PwC, Deloitte use these tools. Data analytics for audit. When auditor uses the tools and technique for analyzing data, it is known as data analytics for audit. Now, for what all purpose these tools help you? These tools like IDEA, ACL help you for what purpose? Number one, check completeness of data for TOC or substantive. When you are doing test of control or substantive, it will check completeness of data. Example, in TOC, we have to select 25 samples out of all the samples. So as soon as you put the samples in IDEA software or audit command language ACL software, what it will do? It will calculate total and match that total with financial statement sales total. You are saying there are 23,000 voucher. It will do total of 23,000 voucher. Is it matching with the financial statement total? Are you clear? Of sales? Both are matching, then we know data is complete. So these tools help in determining completeness of data for TOC or substantive. Out of that, these tools will only give you samples. See, rather than you applying, they will use statistical technique to select those samples. If you select them, they will match with the population. Okay, so selection of sample. Check completeness of data for TOC or substantive. Selection of samples out of that. Recomputation of balances, reconstruction of trial balance from transaction data. Single entry, you must have heard. You give him certain data, they'll give you balances. Reconstruction of balances, reconstruction of trial balance from transaction data. Understood? You give him some balance out of all entries, they'll tell you this is the creditor's balance. Okay, recomputation of balances. Out of trial balance, they can give you reconstruction of data from transaction data. Reperformance of mathematical calculation. Software will calculate depreciation, interest. Then you can check, is it matching with the system or not? Okay. IDEA calculation, is it matching with the system calculation or not? Analysis of journal entry as per SA 240. It will analyze all entry and tell you fishy things. These entries are passed at 10 p.m. These entries are passed by CFO. These entries, something is fishy. These entries should be passed from PC number 8, but they are passed from PC number 9. Investigate them in detail. Fraud can come. Fraud investigation. And last, evaluating impact of control deficiency. Here, control is not followed. There is a deficiency. That it will tell you. So tell me, this tool will help me in what thing? Very simple, 2 points. Check completeness of data for TOC or substantive. Out of that data, selection of audit sample. 2 point done. Recomputation of balances, reconstruction of trial balance from transaction data. Reperformance of mathematical calculation, depreciation, interest. Clear? Analysis of journal entry as per SA 240, out of which fraud investigation, evaluating impact of control deficiency. Over. So easy. Very easy. Tell me, what all these tools are? Tools like IDEA and ACL helps to check completeness of data for TOC or substantive. Second, selection of audit samples. Recomputation of trial balance from transaction data. Reperformance of mathematical calculation, depreciation, interest. Analysis of journal entry, out of which fraud investigation, evaluating impact of control deficiency. One last time. Check completeness of data for TOC or substantive. Out of that, selection of audit samples, it will help me. Reconstruction of balances, reconstruction of trial balance from transaction data. Reperformance of mathematical calculation like depreciation and interest. You don't know, sir? I know. Second, analysis of journal entry as per SA 240. Out of that, fraud investigation, we will know these entries are fishy. These are evaluating impact of control deficiency. Now, last point, 1 minute over. Whenever there is deficiency in control, what is deficiency? Control cannot prevent or detect and correct material misstatement. Our controls are not strong enough to prevent or detect and correct material misstatement. Any mistake, control cannot prevent. Okay, if it cannot prevent but it cannot correct also, then there is deficiency in control. There is deficiency in control. Deficiency is there in control. If control cannot prevent the mistake, there is deficiency. Two types of deficiency are there, baby. Normal, significant. What is normal? What is normal? What is normal? If probability and impact is low. Probability means chance of happening. Impact, if it will happen, how much loss. Probability and impact is low. Normal deficiency tell to management. Here control deficiency is there, but little impact will be there. So we are telling you, please correct it. Yeah, correct it, baby. But significant deficiency, probability impact huge, huge. I will tell to TCWG, the BAP of management. Are you clear? Are normal deficiency, you tell Dhanush. Dhanush. But if significant deficiency, Rajni Anna, all the Rajni fans, alive. Clear? Clear. At the conclusion, there will be findings. Normal deficiency to management, significant deficiency, TCW. Deficiency is there if control cannot prevent or detect and correct material misstatement. I want to show you one last chart. Wow, you are showing us everything. Yes. Yes. This book is in fully question answer form, I think. Yes. Along with magic book, this book also comes. Okay. See everything. Past year question also given. Hey, wow. Excellent book. Amazing book. Yes. Yes, yes, yes. All amazing things. See here. Does the finding result in control deficiency? Yes. Report to management. If there is control deficiency, report to management. If there is control deficiency, report to management. Evaluate the likelihood and magnitude, impact and probability. Probability and impact, huge. Huge, 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 huge. Is it significant deficiency? Yes. Communicate to TCWG. No, not significant, not significant. Test compensating control. Compensating control are there. Main control. Biometric is not working. Security guard was there. Yes, it is there. No problem. Document the result and write. If compensating control is also not there, then mitigating factors are there. Mitigating factors are also not there. Then document and conclude. Very simple. Let me conclude. Normal deficiency management, significant deficiency TCWG. If significant deficiency, document, tell to TCWG. This all impact can be there. If it is not significant deficiency, is it normal? But test compensating control. Compensating controls are there. Tell to management. Compensating controls are good enough. Okay, we have tested. If compensating controls are not there, mitigating factors are there. You can write tested compensating control not there. Mitigating factors are there. Mitigating factors are not good. Okay, then of course we'll communicate to management. So normal deficiency management, but to communicate 2 more steps. First, check compensating control or mitigating factor. Compensating control, you can write compensating control are good. They are not good. Mitigating factors, check. Mitigating factors are good. They are also not good. Then tell. Normal deficiency, we want to tell you. This is the impact. But significant deficiency, TCWG. Chapter is over. Whatever I had told, all done. Meaning of automated environment and its feature. What all activities happen? Situations in which IT will be relevant. Whenever IT will be relevant, obtain their understanding. Risk, type, risk, impact of risk, type of control, testing of control, data analytics for audit and report on the control. Normal deficiency management, significant deficiency TCWG. I hope you enjoyed as much as I did putting this up forward for you. Okay, if you really enjoyed, okay, if you really liked our hard work, do appreciate it by giving a thumbs up, giving a like. Do consider subscribing India's most positive YouTube channel where we only bring positive content and share with all your friends. Let's make a difference. We are trying very hard. Okay, you try little hard and we'll achieve miracles. Okay, thank you so much. If you put in a nice comment, it will motivate us to work even harder, even better, give you the best test quality content of India. Good night. Bye-bye. See you. Take care. Thank you. Very good morning, guys. Warm welcome to the best lectures of EISSN and Audit nationwide. Yes, guys, continuing with the revision series on CA Inter Audit. All chapters, detailed revision. Today we are coming up with wonderful chapter number 7. Yes, chapter number 7 is audit sampling. We will discuss entire chapter right away. In 1 hour, you will be super confident in this chapter. Stay tuned. Let us start right away. So from where are you doing the revision? We are doing this revision from our magic book, which covers entire subject in 86 to 90 pages, all detailed coverage. If you wish, you can purchase this book. There is no soft copy because hard copy only brings hard result. If you wish, you can purchase it from www.mrugeshmadlani.com. Let's start right away without wasting any time. Let's start. Okay. So, what is the name of chapter? Audit sampling. Okay. SA 530. Standard on auditing 530 is about audit sampling. Okay. Before we start, let me tell you why this chapter came or why this essay came. Understand one thing in very much detail. Today, the audit is more placed on internal controls. Detailed checking is a gone concept. Amazon has so many transactions, okay? Stock exchange has numerous transactions. Reliance Jio has numerous transactions. Impossible to check all transactions. So the emphasis is on internal control. So if controls are strong, I will do sampling. I will do less checking. That is why this chapter came into existence. That is why SA 530 came into existence, which is audit sampling. Because gone are the days where everything was checked. Today there is focus on internal controls. So I will not check everything. I will check a little and make conclusion about entire population. Sampling is not a new concept. It is carried since years. Let me take 3 examples. You will understand in the best way. Okay. Number 1, wheat grains. Whenever you want to buy wheat, we see some wheat, okay, we see some grains, and based on that conclude how the entire basket would be. Second, mango. You buy a box of mango, 25 kg, 15 kg box. You don't check all mangoes. You check one mango and conclude whether it is good or not. You go to a birthday party, you have a small piece of cake and you conclude whether you want to have more cake or not. Okay. Last example, we go to Naturals ice cream. We take little ice cream and see which flavor is good. Same way, sampling is carried on since years. These are basic example of sampling. What is sampling? Look at this. It is defined as application of audit procedure to less than 100% of items in population. So based on sample, I can make conclusion about entire population. One more time. What is audit sampling? Application of audit procedures. Applying to procedure. RAP, FAP. Risk assessment procedure, further audit procedure, applying audit procedure to less than 100% of items in population. How much sampling to do? No one tells you what to check, how much to check, in what detail. You are an auditor. Okay. So sampling is application of audit procedure to less than 100% of items. Not less than 100% procedure full, but to less than 100% of items, maybe 20%, 30%. So based on sample, I can draw conclusion about population. Sample is like this, population will be like this. One last time. It is application of audit procedure to less than 100% of items in population. So based on sample, I can draw conclusion about entire population. Clear? Yes, sir. How our population should be? First question, characteristics of population. It should be complete. See, if we are doing sampling, the population from which you are selecting sample, population means entire amount of data is population. All the vouchers is population. That population should be complete. Example, I want to check sales, okay, then I should have voucher of all 12 months. If I take voucher only from May to August, it will not be correct. Why? I need all 12 months so that my sample will be matching with population. So it should be complete. Population needs to be complete. It needs to include all the relevant item and throughout the period. Are you clear? Appropriate. Population from which sample is done should be appropriate for the audit objective. Let's take an example. What do you mean by appropriate? Okay, for example, you are checking cutoff. You are checking what? Cutoff. Cutoff means what? You understand? Okay, the March voucher should not go in April. Many times what do? Okay, we receive the order in March, but we dispatch it in April. Then when is risk and reward transferred? April. So it should be April sales. I want to check that all the sales in March are of March only. They are not of April. Then appropriate. Okay. Population from which sample is selected should be appropriate. means I will only select March vouchers. I will not select January vouchers. Why? Because my audit objective is what? Cutoff testing. So population from which sampling is done should be appropriate for the objective. For checking cutoff, I need to check March vouchers only. Are you clear? So appropriate to the objective. Third, information upon which sampling is done should be accurate and reliable. All the data on which sampling is done, those vouchers, okay, those information fed in should be proper, accurate and reliable. Means voucher should match with the rate of contract. If voucher is correct, only then sample would be correct. Okay. So how should our population be? Our population should be car. Completeness, accuracy, reliability, completeness, appropriateness, reliability. One more time. Completeness, appropriateness, reliability. Completeness means that should be all the period vouchers should be included. Okay, it should cover entire population. Appropriate to the audit objective and reliable. Information on which sampling is done should be complete and accurate. Moving on, sample design. Okay, we can discuss one more also. Factors to be kept in mind for deciding extent of checking based on sample. How much checking you shall do? You shall do more checking or less checking, depends on 5 factors. Size of organization under audit. Tell me an example. Listed company, more testing or unlisted? Of course listed, because so many people are involved. So of course, based on size of organization, testing will depend. If it's a listed company, more testing. Second, adequacy and reliability of books and records. Are the books and records adequate or reliable? If they are adequate, less checking. If they are not adequate, more checking. Able to understand? Yes, sir. Third, state of internal control. If internal control are strong, checking would be less. Internal control are weak, checking would be more. Tolerable error range. It is usually 5 to 10% of performance materiality. But forget, if you don't know performance materiality, how much error I can tolerate. If I can tolerate more error, less checking, because I can tolerate error. If I can tolerate less error, more checking, because I can't tolerate any mistake. Degree of desired confidence. If I want more confidence, less checking. Less confidence, more checking. Are you clear? Okay. Sorry. If I want more confidence, more checking. If I want less confidence, less checking. Very simple. Factors to be kept in mind for deciding extent of checking based on sample. 5 points. Size of organization under audit, adequacy and reliability of books and records, state of internal control, tolerable error range, degree of desired confidence. Tolerable error range, degree of desired confidence. One last time. Size of organization under audit, adequacy and reliability of books and records, state of internal control, tolerable error range, degree of desired confidence. Tolerable error range, degree of desired confidence. Break. 3 seconds. Okay. Factors to be kept in mind for deciding extent of checking. Size of organization under audit. Okay. Adequacy and reliability of books and records. State of internal control. Tolerable error range. Degree of desired confidence. Tolerable error range. Degree of desired confidence. Moving on. Now, sample design. Inside the sample, see, sample design is what is inside the sample. So while designing a sample, 3 things are to be kept in mind. See, sample design means what should be inside the sample. To decide what should be inside the sample, 3 things to be kept in mind. Point number 1. Nature of evidence sought and possible deviation or misstatement condition that will help in defining what population to use for testing. Little difficult. Concentrate. See, whenever you are checking either test of control or test of detail, you should know these 2 things. Okay. What is test of control? I am checking control. What is test of detail? I am checking voucher. So in test of control, if control fails, are you clear? Then we will call it a deviation. Example, let me tell you. We tested 20 vouchers. In all the vouchers where discount is given, store manager sign should be there. Out of 20, in 2 sign was not there. In 2 sign was not there. So I will say 10% is the rate of deviation. Are you clear? Possible rate of deviation is 10%. So whenever in TOC controls are not followed, it is known as deviation. Let's take one more example. All invoice above 1 lakh will be signed by managing director. So in 4 invoices out of 20, sign was not there. So rate of deviation is 20%. 4 by, I hope you are clear. Okay, 4 by 20 into 100. I hope you are clear. So nature of evidence sort and possible deviation. What is misstatement? When you are checking all the vouchers, when we are checking all the vouchers, not test of control, voucher, you find certain mistake. Example, rate is not matching with the contract. In purchase order, different rate is there, but in invoice, different rate is there. Okay, invoice the rate is more and you are making more payment also because there is a fraud. You have told vendor I'll pay you more, but you pay me 10% out of that. Any kind of fraud, that is misstatement. See, in TOC, when controls are not followed, deviation. In TOD, when there are mistake, it is misstatement. Very, 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 very. One more step I am telling, very important. Divide into two parts. Deviation, misstatement. Whenever in case of TOC, controls are not followed, deviation. In case of TOD, test of detail, if there is a mistake, misstatement. Okay, control, deviation. Okay, TOD, misstatement. Control, deviation. TOD, misstatement. Control, deviation. Okay. Nature of evidence sort and possible deviation or misstatement condition that will help in telling what population to use for sampling. Wherever there is deviation or misstatement, no, tell me, I will check more or less. More. Okay, that samples I will definitely include. So in sample size, number one, nature of deviation or misstatement, nature of evidence sort and possible deviation or misstatement, which will help in deciding what population to use for sampling. Example, there are a lot of misstatement in purchase. Then purchase vouchers will be more or less, more voucher I will take. Why? To check actual deviations are as expected or even more. I hope you are clear. Nature of evidence sort and possible deviation or misstatement. Specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. Whether we want to check TOC or TOD. Are you clear? So for example, TOC, sample size would be only 25 population. In TOC, we take 25. In TOD, so what is the purpose of audit? Are you checking TOC or are you checking TOD? Are you checking cutoff? Are you clear? Then what procedure will be used for cutoff? I need to check that March sales, okay. Okay, April sales are not taken in March. Many times they are dispatched in April, but I take in March. So for that, I need to check what? I need to check documents. So that is inspection. Okay, and I'll do some inquiry also, inquiry and inspection. So what is the purpose to be achieved and combination of procedure which can help to achieve that purpose? Third, expected rate of deviation in case of TOC. Expected rate of deviation also I need to check, because if expected rate of deviation is more, then I will do more checking and vice versa. Why I will do more? Because if expected rate of deviation is more, actual rate may also be more. So I need to conclude that actual rate is same as expected or even more. Are you clear? Okay. So in sample design, three things to be kept in mind. MSD. One more time. This is little tricky. Three things to be kept in mind in sample design. MSD. M. Nature of evidence sought and possible deviation or misstatement condition which help in deciding what population to use for sampling. Number two, specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. Expected rate of deviation, D for deviation in case of TOC. One last time. Okay, what are three things to be kept in mind in sample design? Mahendra Singh Dhoni. Athalaiva. Okay, M. What is M? Nature of evidence sought and possible deviation or misstatement condition which help in deciding what population to use for sampling. Specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. Okay, expected rate of deviation in case of TOC. Break starts now. 5 seconds. Done. Okay. Audit sample. Three things to be kept in mind. MSD. What is M? Nature of evidence sought and possible deviation or misstatement which will help in deciding what population to use for sampling. Specific purpose to be achieved and combination of audit procedure likely to achieve that purpose. Expected rate of deviation. Okay. To design audit sample in case of TOC. Clear? Yes, sir. Now, factors deciding sample size for TOC. For TOD also answer is same. Okay, sample size should be more sample to test or less. Depends on this many factors. For TOC and TOD, same answer. Auditor's risk assessment of relevant control. If you feel there is more risk, means ROMM, risk of material misstatement is more, I will do more testing. If risk is less, I will do less testing. Second, increase in tolerable rate of deviation. I can tolerate more deviation. sample size would be less because I can tolerate the deviation. Take opposite. If I cannot tolerate deviation, okay, means I cannot tolerate any mistake, I need to check more, sample size would be more. Increase in expected rate of deviation, okay, we know that expected rate of deviation will be more, then more checking I will do to check actual rate of deviation is same as expected or even more. Whenever expected rate of deviation is more, I will do more checking to check actual rate of deviation is same as expected or even more. Increase in desired level of assurance. If I want more assurance, my sample size will be more. Less assurance, it will be less. In case of large population, see, in case of TOC, sample size is nowhere related. In case of TOC, we are checking control. How much ever transactions are there, I will take 25 sample only in case of TOC. Okay, but in TOD, sample size, okay, number of items in population has an effect on sample size. Listen nicely. Divide into two parts, TOC, TOD. Only this point is different in both. Otherwise, all points are same. Listen nicely. In case of TOC, population has little effect on sample size because we are testing controls. If it is not in 10, if it is not followed for 2, be 10,000, ratio will still be 20%. So in case of TOC, population size has little effect on sample size, but in case of TOD, population is more, sample may be little more. Are you clear? For small population, sampling is not the best way. Check all. If there are only 12 sales done in a year, you are selling to only one party, every month you prepare a bill, only 12 sale, sampling is not adequate. Check all 12. Okay, BRS, bank reconciliation statement, every month prepared, check all 12. In that 25 sample is not there. Listen nicely. In case of TOC, if population is large, it has little effect on sample size. Why? Because we are testing controls. I will check 25 only. If controls are not followed, it will not be followed. But come here, in case of TOD, okay, population has a great effect on sample size. More population, more size. I hope you are clear. Moving on. Now, what are sample selection methods? Okay, sample selection methods. What all methods are there? Before that, we have to come here. What are two approaches of sampling? Listen, 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 listen. Statistical, non-statistical. Statistical, non-statistical. What is statistical? They use mathematical rules of probability to select the sample and evaluate the result. To select the sample in software, mathematical rules of probability are applied. Mean, median, mode. It is a very nice method because it is unbiased. It is more scientific. It is more objective. Closeness of qualities of sample with population can match. Sample will match with population. Why? Because we are using statistical rules of probability. Are you clear? It is based on statistical judgment. It is based on mathematical rules of probability. Okay, so statistical sampling, mathematical, 10 points. Mathematical rules of probability. Okay, second, unbiased approach. Okay, more objective, more defensible approach. Okay, number one, it is used when there are large number of similar items. So when there are a lot of similar items like sale, purchase, okay, payroll, best method is statistical, because in that, rather than checking entire, if you check little also, it will be same as entire. It will give you better description of large mass of data than checking entire thing. Closeness of qualities of sample with population can be matched. If we are saying sample is like this, population will be like this only, because it will select the best sample, because we are using statistical rules. Are you clear? What is non-statistical? More simple. Okay, your sample size is determined by judgment of auditor. He will tell, in January I will check first 15 voucher, February last 15 voucher, March middle 15 voucher. I will check those voucher where entry is after 10 p.m. I will check those voucher entry usually passed from PC number 9. Whenever passed from PC 10 or 8, I am going to check that. I will check all entries after 11 p.m. Are you clear? So under this, it is based on personal experience and judgment. Simple, neither subjective nor objective. Closeness of qualities of sample cannot be matched with population. Are you clear? Okay. Now, what are advantage of statistical sampling? Memory technique later. Understand first. Amount of testing doesn't increase in proportion to increase in population. Population will increase. Okay, testing may increase but not that much. Why? Because we are using mathematical rules of probability. In little sample also, it can easily conclude about population. So first, amount of testing doesn't increase in proportion to amount of increase in population. Sample selection is more objective and more defensible. Tomorrow anyone will tell you did not check. What will tell? See, I applied mathematical rules. I applied a software and you got this sample. So no one can accuse you. Even if fraud happens, you will be defended. More objective, more unbiased, more defensive. It is a method of estimating minimum sample size with specified risk and precision. In this, in minimum size also I can get a precision. Why? Because it uses mathematical rules of probability. It provides better description of large mass of data. If I check entire thing, it is so time consuming. This gives better description of that entire data than complete examination. Last, it provides a method of taking. We are taking a calculated risk because I don't have unlimited time. It is a method of giving calculated risk, but at the same time, there will be precision. It is a method of getting calculated risk and corresponding precision. We'll learn this. What are advantage of statistical sampling? Pause, pause, pause. Technique is POSE. Pause. P. Amount of testing doesn't increase in P for proportion. In proportion to increase in population. Sample selection is O. More objective and thereby more defensible. Okay. Third, method of estimating as minimum sample size with specified risk and precision. E, it is better than complete E for examination. Complete examination of large mass of data. It provides a better description of large mass of data than complete examination. See, it gives you better description rather than checking full. And last, it is a method of deriving at calculated risk and corresponding precision. For this, no technique is there. POSE, pause. Amount of testing doesn't increase in proportion to increase in population. Sample selection is more objective, thereby more defensible. It is a method of estimating minimum sample size with specified risk and precision. E, it provides a better description of large mass of data than complete examination. It is a method of arriving at calculated risk and corresponding precision. Small break, 15 seconds. Time starts now. P, proportion, objective, minimum sample size, complete examination. 15-second break. I think done. Okay. What are advantages of statistical sampling? Pause, pause, pause. Amount of testing doesn't increase in proportion to increase in population. Sample selection is more objective, thereby more defensible. It is a method of estimating minimum sample size with specified risk and precision. One more E. It is better than complete description. It provides a better description of large mass of data, okay, than complete examination. It is a method of deriving calculated risk and corresponding precision. Now, what are sample selection methods? I want to select sample. So many methods are there. Random sampling. Inside this two, simple random sampling, stratified random sampling, simple random sampling, stratified random sampling. What is simple random? Out of all, I will randomly select few samples which I want. Okay. In this, out of all, we'll randomly select few samples. It is a statistical method. Are you clear? Based on mathematical rules of probability. There are many software available out of which we can select. Okay. Random number generator is one such software. It is used when there are large number of similar items, sale, purchase. Okay. We can say closeness of quality of sample with population can be matched. Okay. Like drum also we can use. For example, drum is that this. Let me take example. This one. Let's assume this is a drum. I will mix everything and select samples. Are you clear? So unbiased approach, objective approach, defensible approach. Nice. What is stratified sampling? When there are population is divided into groups. Okay. When population has different characteristics, at that time we'll take stratified. We'll divide population into group and select sample from each group. So in minimum size, I can get maximum precision. Let's take example. We have several debtors. Okay. Some are below 2 lakh, 2 to 5 lakh, 5 to 10 lakh, about 10 lakh. So I will decide about 10 lakh, I will check all. 5 to 10 lakh, 60%. 2 to 5 lakh, I will check what? Maybe 30%. Below 2 lakh, I will check 5%. Understood? Whenever population has different characteristics. Second example, we have two types of sale, FOB, CIF, free on board, cost insurance free. So I will select samples from both. Otherwise, what will happen? I will get one sample only. I cannot conclude about population. Okay. When we have sales to 4 countries, Japan, Indonesia, Malaysia, and US. Japan, Indonesia, Malaysia, US. I will divide the population into 4 parts. Are you clear? And select sample from all 4. So I can get conclusion about population. But when this is used, when population is homogeneous or heterogeneous? Heterogeneous. When population is different, I will divide into stratas and select sample from each strata. So based on that, I can get conclusion about population. Enough example taken. Next, interval sampling. How do you get this? Total population upon total sample size. Let me take example. Out of 10,000 vouchers, I want to check what? 1,000 voucher. Out of 10,000 voucher, I want to check what? Tell me. 1,000 voucher. Okay. So out of 10,000, I want to check what? 1,000. So every 10th would be checked. What is the formula for interval sampling? Total population upon total sample size. What is total population? 10,000 units are there of sales, out of which I want to check how much sample size, how much? 1,000. So I will do 10,000 upon 1,010. Every 10th sample would be checked. So first I will check 1, then 11, then 21, then 31, then 41, then 51. Are you clear? Every 10th would be checked. Okay. Good method or bad method? Good method, but not good in one situation where population is arranged in a certain way. Let me take example. For example, 1 to 5 is one lot, then second is 6 to 11, then 11 to 15, 15 to 21. Okay, so if population is arranged in certain way, it is not good. Why? Because 1 to 5 is Ahmedabad sale. Okay, 6 to 10 is what? Baroda sale. 1 to 5 Ahmedabad, 6 to 10 Baroda. Then again 11 to 15 Ahmedabad, 15 to 20 is Baroda. Okay, understood. So in that, what will happen? This is not a good method when population is arranged. Why is it not a good method? Last time I'll explain. 1 to 5 is Ahmedabad, 6 to 10 is Baroda. Okay, 11 to 15 Ahmedabad, 15 to 20 Baroda. Okay, 21 to 25 Ahmedabad, 26 to 30 is Baroda. So what will happen? I am checking 1, 11, 21, 31. So by default, I am checking Ahmedabad only. Baroda is getting mixed. So when arrangement is in such a way, for example, 1 to 5 entry will be passed by accountant A, 6 to 10 by accountant B, 1 to 5 by again A, 6 to 10 by B. Now if I check 1, 11, 21, by default I am checking A only. Are you clear? So in order to make it successful, we can start interval midway. For example, in January month I am starting from 1. In February I can start from 6. Are you clear? So I hope you are clear. Method is effective when population is not structured in a particular way. Monetary unit sampling. Here I will arrange amount wise. So higher to lower amount wise I will arrange. So I will check 20% of sales, okay, which cover 80% value. I will arrange all sales based on monetary unit. I will check 20% sales. Okay, 20% of those vouchers which have 80% value. So I will sort it out. Okay, highest value I will check those 20% which have 80% value. Haphazard sampling. No method is there. On random basis. Okay. In January I am checking first 5. February I am checking last 5. Okay. In March I am checking only 3. April I want to check all. Okay. May I want to check mid 10. Haphazard sampling. No method. Not statistical. Okay. It is in this closeness of sample with population cannot be measured because I am using my judgment. Last is block sampling. In this I will check block. Okay, for example, there are 10,000 vouchers. I will check, make it divide into block of 100. So I will check 1 to 100. Then I will check what 200 to 300. Then I don't want to check anything. I will check what 7,000 to 7,100. Then I will check what 8,000 to 8,100. Then I will check what 9,000 to 9,500. 100 block we will divide. I will check a few blocks and conclude about entire population, good or bad. Very bad. Why? Because all the block will have similar characteristic. 1 to 100, all voucher will be passed by one person. If one is correct, all will be correct. One is wrong, all will be wrong. Because closeness of block will have same characteristics. Okay. So this is not a nice method, but in one case it is nice if you have seasonal business. Your majority business is in March and April only, mango business. Majority in March and April. And if you check March and April block, 90% value covered. So it is good if we have seasonal business. In this, we'll select the block. It is not effective because items in same block have similar characteristic, but effective when we have seasonal business. If we cover that lot, everything covered. So all are statistical except FSR. Random divide into 2 parts. Simple random, stratified random. Interval sampling. Every interval. Total population upon total size. monetary unit sampling, haphazard sampling, block sampling. Okay. Last two, okay, almost on the verge of ending it. Oh my god, concentrate, 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 concentrate. Sampling risk. What is a sampling? Now little hard is starting. If you are active, say yes. Oh, come on, get up, come on, baby, concentrate here. Okay, arey bhai, if you like our lecture, please put like. We will be so motivated with this. Put a nice comment also. We are working so hard. If you put a comment, we become so happy. We feel, oh my god, at least someone is praising our effort. So I hope you will share with friend. Give a like button. This is free of cost. What else can we ask for? Only like we are asking. Okay, sir. Sampling risk. It is a risk that auditor's conclusion based on a sample may be different if entire population was subject to same audit procedure. What did you understand? See, based on population, I conclude. But if I check whole population, no. Okay, sorry, based on sample, I conclude. If I check whole population, answer would be different. What is a sampling risk? It is a risk that auditor's conclusion based on a sample may be different if entire population was subject to same audit procedure. My conclusion based on sample may be different had I checked the entire population. That is sampling risk. So based on sample, I am saying it is good, but actually it is bad. Had I checked all, I would have known. Or in sample, I am saying excellent it is, but actually it is bad. Or in sample, I am saying it is very bad, but when I see population, I feel it is best. Are you clear? What is sampling risk? It is a risk that auditor's conclusion based on sample may be different if entire population was subject to same audit procedure. Two types of things can happen here. Listen nicely. Listen nicely. Okay, sir. Okay, sir. Okay, sir. Okay, sir. Okay, sir. Okay, sir. See you. See. There are two types of wrong opinion which can come. In case of TOC, I am saying controls are effective, but actually they are not effective. Are you clear? I am saying controls are good, but they were actually not good had I checked all items in population. I am saying there are no misstatement. Are you clear? Means good. No misstatements are there. In case of TOC, we say what? I said it's very important. In case of TOC, we say what? Deviation. In case of TOD, if mistake come, misstatement. I say there are no misstatement, but actually misstatement is there. Okay, so I am saying everything is good, but actually it is not good. It will affect my audit effectiveness because I am giving wrong opinion based on sample. One more time. In sample, I am saying controls are good, actually they are not good. I am saying there is no misstatement, but there is misstatement. This will affect my audit effectiveness. Why? Because it can lead to wrong opinion. Opposite can also happen. Opposite can also happen. Will affect the audit effectiveness. What is opposite? I am saying control are not good, but actually they are good. I am saying that there is a misstatement, but actually there is no misstatement. Okay, listen nicely. I am saying controls are not good. I am saying there is a misstatement, but actually controls are good. Actually there is no misstatement. Okay, this will just affect audit effectiveness because I need to do more procedure to prove that my earlier conclusion was wrong. It nowhere affects anything. I just need to do more work to prove in the population that what I had thought is not true. Effectiveness, which is bad. First opinion. If you did not understand, parallel example. You feel that the girl is too good, but actually girl is very bad in real life, then divorce will happen. Very bad because your opinion was wrong. Audit effectiveness is affected. When you go for arranged marriage, in second situation, you feel girl is not good, but still you want to get married. Okay, you feel she will be very dominating. She will not manage my parents nicely. She will not talk with my parents nicely. She will not respect me. Okay, so you feel she's not good, but you still end up marrying. But when she came to home, even good than you, excellent girl, very good, very, very good, I love you. Then no problem. I just need to do more work to prove my initial conclusion was wrong. One last time. What is sampling risk? Auditor's conclusion based on sample may be different if entire population subject to same audit procedure. Okay, two things: effectiveness, efficiency. Effectiveness, efficiency. What is effectiveness? I feel controls are good, but actually they are not good. I feel there is no misstatement, but actually there is a misstatement. Okay, this will affect effectiveness because it is leading to wrong audit opinion. Come here. Efficiency. I feel that controls are not good, but actually they are good. I feel that there are no misstatement. Okay, okay. I feel that there are lot of misstatement, but actually there are no misstatement. One more time. What is audit efficiency? I feel that, see, effectiveness is wrong opinion that you understood. What is efficiency? I feel that controls are actually not good, but actually they are good. I feel that, okay, misstatement exists, but actually it doesn't exist. Okay, so that is efficiency. I hope you are clear. One last time, if you want, we'll lead to this. In case of wrong, two conclusion is that effectiveness, efficiency. What is effectiveness? Controls are good, actually not good. No misstatement, actually there is misstatement. So it will only affect my audit effectiveness and is very severe. Why? Because it will lead to wrong audit opinion. Come here. In case of TOC, I feel controls are not good, but actually they are. I feel there are a lot of misstatement, but actually there are no misstatement. So it will affect audit efficiency. I need to do more work to prove my initial conclusion was wrong. Come here. What is non-sampling risk? Auditor reaches to wrong conclusion for reason not associated with sampling. I give wrong opinion, nothing related to sampling. I couldn't understand the sampling results. I misinterpreted the sampling results. I did not apply correct audit procedure. I did not select red sample properly. Human mistakes are there. Okay. So there is not sampling risk. Auditor reaches to wrong opinion, reason not linked with sampling, applying wrong procedure, misinterpreting the evidence, not applying proper procedure, okay, human mistake, etc. Very simple. Almost on the verge of ending. Conclusion is very difficult. Concentrate, concentrate, concentrate. Performing audit procedure. Auditor will perform audit procedure on selected item. If you cannot apply on selected item, do it on replacement item. I did not understand this. Example, you are checking payment. By mistake, you found cancel check. No problem. Find another payment. Are you clear? Replacement item. Second example. You are checking sale. You found scrap sale. What will you do? Replace it. Check new item. Simple. So if auditor cannot do procedure on selected item, baby, he will do it on replacement item. Okay. Next, if auditor is unable to apply the procedure, then we will apply alternate procedure. Then we'll apply what? Alternate procedure. Then we'll apply what? Alternate procedure. Okay. Example, you want to check sales, but one voucher is not in system. Check manual bill, no problem. If not in system, alternate procedure, manual bill. You are checking biometric, it not there. No problem. Check register. Okay. If you cannot do on that audit procedure, do it alternate procedure. And if that also cannot be applied, or if there is a mistake, it is deviation in case of TOC and misstatement in case of TOD. If test of control mistake comes, deviation. If in test of detail mistake comes, it is a misstatement. One last time. Get up, get up, get up, get up, get up. Auditor will do audit procedure on selected item. If you cannot do, replacement item. If you cannot do that procedure, do alternate procedure. If you cannot do that also, or if mistakes come, when you are checking TOC, mistake comes, it is deviation. When you are checking TOD, if mistake comes, it is a misstatement. Hope you are clear. Nature and cause of deviation or misstatement. What is the cause of deviation or misstatement? Is it due to a common feature? Example, okay, in purchase only mistakes are there. Common feature, okay. Then check all the items that have common feature. Let me take example. Whenever we are doing purchases from Rameswar Corporation, there is a mistake. Rameshwar Corporation, a party in Indore. Okay, whenever we are purchasing from, we have to see deviation or misstatement have a common feature. What is common feature? Rameshwar Corporation. Whenever we are doing purchase in Indore, we are always paying him more. Okay, we will see in case of deviation or misstatement, does it have a common feature? Then we'll check all the items that have that common feature. Okay, for example, March and April, 2 months are there where huge mistakes are there in Rameshwar Corporation. We will check all the vouchers of Rameshwar Corporation of March and April because they have common feature. Okay, to see whether it is fraud or not. Okay, one more time. Many times deviation or misstatement have a common feature. Example, in purchase, whenever we are purchasing from Indore, whenever Rameshwar Corporation. Okay, then what we'll do? Check all the items that are purchased from Rameshwar that have common feature to check whether there is a fraud. In case deviation or misstatement is an anomaly, very very important. What is anomaly? One of a incident. It is not always one of a incident. Example, you are checking withdrawals. 10 lakh withdrawal by employee without any sign of managing director, without any sign of CFO. What is this? Which employee has employee run away? 10 lakh mistake, fraud. He will say, sir, is it of 19th December? Yeah, how you know? Fraud you did it that day. Sir, his mom was not well. His mom was not there, so immediately we had to pay. We did not sign voucher. There is a clause of humanity. It is an anomaly. One of a time it happened. Check in the company, such mistake will never be there again. Okay. So if deviation or misstatement is an anomaly, you have to do sufficient procedure to see whether it is an anomaly or not. Okay. Whether, and it should not affect entire population. You saw and you realized, okay, yeah, they are genuine. It is an anomaly only. Very simple. Nature and cause of deviation or misstatement. Whenever deviation or misstatement come, ask one question. Does it have a common feature? Then check all the items that have the common feature to see whether there is a fraud. In case deviation or misstatement is one of an incident, it is an anomaly, rare, then do sufficient procedure to see it should not affect entire population and really it is an anomaly. Okay, last slide. Over. Hey. Projecting misstatement. If you want, you can take small break. 15-second break take. Welcome back after the break, guys. Welcome back. Projecting misstatement. I need to project the misstatement. Listen very nicely. First, let's take TOC. In case of test of control, okay, there will be deviation rate. Actual rate of deviation is only projected rate of deviation because we are not checking amount. In TOC, we are not concerned with amount. We are concerned with deviation. We are just concerned with how much controls are not followed. So you checked how many vouchers, okay, 25. In 5 controls are not followed, then what is the rate of deviation? 5 upon 25 into 100, 20%. So actual rate of deviation is only projected rate of deviation. First, I need to project misstatement, okay. So first take TOC. In case of TOC, actual rate of deviation is only projected rate of deviation. See, it is written here. In case of TOC, no projected rate of deviation is there. Since sample deviation rate is only projected deviation rate. So now I have to come to TOD. In TOD, what I will do? I need to project the misstatement, okay, in the sample to entire population. Okay, I don't want to record a journal entry, but still I need to project the misstatement. How will I project? While checking vouchers of 1 lakh, I found mistake of 1000. While checking vouchers of 1 lakh, I found mistake of 1000. Now, in 100 crore, how much will be there? While checking 1 lakh, I found mistake of 1000. In 100 crore, how much it will be? Cross multiply. Whenever I want to project misstatement, I will only project for TOD, test of details. How I will project? In this much voucher, total is 10 lakh. Mistake is 1000. So if 1 crore is the amount, how much mistake will be? I will cross multiply. Okay. But in that don't include anomaly because anomaly is one of a incident. Anomaly is one of a incident. Then how will I project the misstatement? Okay. How is projected misstatement obtained? Very simple. 1 second over. Okay. So in this, in checking 10 lakh voucher, 1000 mistakes are there. 1000 rupees. 10 lakh, 1000 rupees. 100 crore. How much mistake? Amount you got. Plus add anomalous uncorrected misstatement. If anomalous is there, tell management this is a rare misstatement, correct it. If they don't correct, add that also in projected misstatement. So what is projected misstatement? Projected non-anomalous misstatement plus anomalous uncorrected misstatement, if any. I hope you understood. Read. Auditor is required to project misstatement to obtain broad view of scale of misstatement. But this projection is not sufficient for amount to be recorded. When misstatement is an anomaly, it is excluded in projecting. Why? Because it happens only one at a time. Tell them to correct it. If they don't correct, then you have to add it. Projected non-anomalous misstatement plus anomalous uncorrected misstatement. Correct them do. However, effect of such misstatement, if uncorrected, still needs to be added to projected non-anomalous misstatement. In case of TOD, I told you. Last, evaluate the results of sampling. Finally, chapter is ending. Evaluate the result. Baby, evaluate. For TOC, high sample deviation rate means what? High sample deviation means in lot of samples there are deviation, controls are not followed. If controls are not followed, control risk is high. If control risk is high, ROMM is also high, risk of material misstatement, because that is IR into CR, inherent into control risk. So if control risk is high, okay, then this is also high. Then there is increase in risk of material misstatement. I need to do more substantive procedure. Very simple. If you did not understand, okay, for TOC, sample deviation rate is high means controls are weak, control risk is high. Control risk is high means IR into CR, risk of material misstatement is also high. If risk of material misstatement is high, more procedure need to be done, more substantive procedure. Very simple. For TOC, if controls are weak, more substantive would be done. Directly also you know this. Come here. For TOD, for test of details, projected misstatement plus anomalous uncorrected misstatement, projected anomalous misstatement plus anomalous uncorrected misstatement, if it is greater than or equal to tolerable misstatement. Tolerable misstatement is what? Certain percentage of materiality. Okay. Okay. Now in case of TOD, projected misstatement plus uncorrected anomalous misstatement is greater than or equal to tolerable misstatement. I can tolerate this much, but projected are even greater than tolerable. Then there is a sampling risk that actual misstatement can also be more than projected misstatement. Okay, whenever tolerable misstatement, okay, whenever projected misstatement, that is projected anomalous misstatement plus anomalous uncorrected is greater than tolerable misstatement, three things will happen. There is a sampling risk that actual misstatement can also be more than tolerable misstatement. I will do more checking. Number one, we may request the management to investigate for further misstatement and potential for further misstatement. Ask management, please tell me, are there further misstatement or not? Or change nature, timing and extent of audit procedures. Okay, I will do more checking to know that actual misstatement is more than tolerable or not. I hope you understood. Last, in case of TOD, when projected misstatement plus anomalous uncorrected is greater than or equal to tolerable misstatement, there is a sampling risk. I need to check more sample to see actual misstatement should not be more, is not more than tolerable misstatement. Okay, or we may request the management to investigate for further misstatement. Okay, ask management, are there any further misstatement? Or change nature, timing and extent of audit procedure. We will check in more detail. Okay, because sampling has not given me valid conclusion. I hope you are clear. Whenever I feel misstatements are more than tolerable, three things. There is a sampling risk that actual misstatement can also be more than tolerable. We may request the management for, if there are potential, investigate about more misstatements if any, or if management is not cooperating, we may change nature, timing and extent of further procedure. We'll apply more procedures to know that actual misstatement are more or less. Okay, I hope you enjoyed as much as I did putting it up forward for you. Wonderful, amazing, mind-blowing, easy chapter. Essay 530, audit sampling. Don't check full, check a little and get conclusion about full. Okay, I hope you enjoyed. Put in a like button. Okay, do put in your comments, share with your friends. We are working very hard. Let's make it super duper mega revision series of audit. Take care of yourselves, take care of your parents. Bye bye, good night, take care. Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, today we will be revising chapter number 8, continuing with mega marathon series on auditing and assurance. Today we'll complete chapter number 8. Stay tuned. Very small chapter in the nicest possible way we are going to do. Sir, from where are you doing the revision? Tell me, please, sir. We are doing it from our magic book. Okay, if you don't know, magic book is a book which covers entire syllabus in just 86 to 90 pages. Wonderful book of India, summarized book. Okay, if you wish, you can order hard copy. Okay, soft copy will never bring results, so we don't have. Only hard copy brings hard result. So if you wish, you can order. Otherwise, no need. You can revise from here also. Let us start right away. Very good morning. Welcome. Vanakkam. One more time. Okay, what is the name of chapter, sir? Chapter number name is Analytical Procedure. SF 520. What is SF 520? SF 520 is analytical procedure. We discussed sampling also, analytical procedure. What do you mean by the word analytical procedure? See, there are two things, okay? Whenever you look at the full chart and you will understand little better, okay? Audit procedure, RAP, FAP, RAP, FAP. What is RAP? Risk assessment procedure. What is FAP? Further audit procedure. Inside further audit procedure, TOC, substantive, TOC, substantive, TOC, substantive. Inside substantive, TOD, analytical, TOD, analytical, TOD, analytical. We are discussing what? Test of details, no, analytical procedure. What is analytical procedure? Just calculating ratios, doing analysis in a AC cabin and making the evaluation whether everything is proper or not. Analytical procedure is checking the relationships are consistent or not. Okay, before reading definition, let me name 5 analytical procedure. You will understand in the best way. It doesn't mean checking voucher, just doing analysis and getting comfort on the figure. 1 month rent is 1 lakh. 12-month rent is 12 lakh. Tell me, do we need to check? No, it's the same, right? 1 month is 1 lakh, so 12 months will be 12 lakh. If 12 lakh appears, I get a reasonable assurance that rent is proper. What have I done? I have just done analytical procedure. Per square feet rent is 100 rupees. Okay, I have taken a 30,000 square feet job. Okay, so 30,000 multiplied by 100, whatever figure comes, analytical procedure. Third, whenever I want to calculate my income, how will I calculate? TDS. Okay, I go to many classes, teach there. Okay, they will deduct TDS and pay me. TDS on profession is 10%. For example, total TDS deducted during the year is 70,000. Okay, or 7 lakh. 7 lakh. So this is 10% is 7 lakh. So how much will be 100? My income would be 70 lakh. So simple. This is analytical procedure. Okay. For example, another sales and freight. Generally, sales to freight ratio is 10%. Whatever is the sales, freight is 10. Whatever is the sale, freight is 10. Whatever is the sale, freight is 10. In case the ratio is coming too less, okay, it is coming just 6%, I will realize that there are dummy sales. Why? Because it is showing freight but no sales. Okay, sales are showing but there is no freight. Then how the hell freight it is not showing? On an average for sale, freight should be 10%. It is not showing freight as 10. Means dummy sales are booked during the year which are not dispatched. Okay, it might be possible. See, this is what analytical is all about. I will get a brief analysis. There is a possibility of dummy sale. Okay, 10,000 workers are there. Per worker salary 8,000. Multiply. In 1 second I will get comfort it is correct or not. Depreciation also I can do analytical. What I will do in depreciation? Land and building, this is the value, multiply by rate from company Z. Plant and machinery, rate from company Z. Furniture and fixture, rate from company Z. I will cross multiply and see, is it matching the total depreciation, is it matching with the company's figure or not. Analytical procedure is just doing analysis in a AC cabin and concluding, not checking vouchers, okay, just doing brief analysis and getting a brief idea. If it is correct, I will not go in detail. I will get certain comfort directly by doing analytical only. I hope you are clear. Lots of example, of course, we are going to take. Okay, let's take one last. Average room rent. Okay, let's take room rent multiply by average occupancy. Every month occupancy report will calculate in a hotel. Okay, occupancy report multiplied by average room rent. Average room rent into occupancy. I will get total revenue. Approx if it is matching. 5% variation, okay, I have got comfort on full sales in just 2 minutes. This is what is the power of analytical procedure. Last example, okay, I can also link factory light bill with number of units produced. Okay, for producing 1 unit, I require 4 units of electricity. So in a year, I have produced 40,000 units. Multiply by 4, multiply by what is the rate per unit. I will get brief comfort. Hope you are clear. Okay. Now let's learn definition. As per SA 520, analytical procedure is evaluation of financial information through analysis of plausible. What is plausible? Believable, possible, reasonable relationship with financial and non-financial data. What is SA 520? Analytical procedure means evaluation of financial information. See the financial data by just checking relationship, by checking plausible, possible, believable, reasonable relationship with financial and non-financial data. Let's take financial to financial. Every year sales are increasing by 10%. This year also it increased. I am getting a comfort, sales are okay. But if sales are increased by 500%, I will need to check in detail. Baby, analytical will not work. Understood, sir. So analytical procedure is evaluation of financial information through analysis of plausible relationship between financial and financial. Second example of financial and financial is what? Freight and sales, as I already told, inventory turnover ratio, debtor turnover ratio. By these ratios or financial and non-financial data, number of workers to total salary, number of workers per worker salary, this much total salary, per square feet rent multiply by total square feet, non-financial data. 1 month rent is 1 lakh, 12 months is 12 lakh, non-financial data. Number of units produced with electricity bill, non-financial data. Understood? Analytical procedure is evaluation of financial information through analysis of plausible. What is plausible? Possible, believable, reasonable relationship with financial and non-financial data. It also covers investigation of identified fluctuation or relationship that are inconsistent with the relevant amount or that differ from relevant values by a expected or huge value. It will also cover the investigation. So in case it is not matching, it will investigate what are the reasons. If you find reasons are genuine, okay, no need to check. If you don't find, we will do test of details. Are you clear? It also covers investigation of identified fluctuation or relationship that are inconsistent or that differ from significant or differ from expected value by significant amount. So example, 1 month rent is what? 1 lakh. 12 months is 12 lakh. But on the books it is showing 18 lakh. Then I will ask, oh, bhai, what is this? What is this? They will say, sir, we have taken a new go down of 50,000. So multiplied by 12, 6 lakh. Okay, 12 plus 6, 18. Okay, got it, got it. So we'll also investigate. Clear? Okay. What is the purpose of analytical? Of course, SA 520, to get relevant and reliable evidence. To get relevant and reliable evidence. And next, to design and perform analytical procedure near the end. It is not perform. See, near the end. So we can get conclusion. Okay, that assists the auditor in forming overall conclusion as to whether financial statements are consistent with auditor's understanding of entity. Did not understand. I will do analytical procedure in the end to see all relationships are consistent. Sales and freight. Okay, this is the ratio 10%. If it is not 10, I should know the reason. Due to this, it is not 10. Okay, example, rent is this much. Okay, I should know. So it is done in the end also. We do analytical to see that auditor's understanding is matching with the understanding of financial statement. Auditor is able to analyze all the figures. Okay. Timing. When is analytical procedure performed? It is performed during 3 times. During planning, during testing, during completion. During planning, during testing, during completion. Okay. When is analytical procedure performed? It is performed during 3 times. During planning, during testing, during conclusion. During planning, during testing, during conclusion. Shall we start? Yes, sir. Okay. Planning. See, whenever you go for audit, no, there is the one manager. Okay, in a big four, there is a manager. He will check. Okay. He will directly tell you this sales you need to check because sales and freight are not matching. Freight this much it should show. Maybe there is possibility of dummy sale. He will directly tell you in debtors check. Okay, his debtor is huge. Okay. Third, he will tell you depreciation, there seems to be some problem. Oh, fixed asset, they have acquired new fixed asset. Please check, please check. This is analytical. During planning, he will see the trial balance and directly tell you this 10 accounts you see. Okay. Why? Because he knows analytical procedure. This. He knows several relationships. If not matching, he will check. Planning. Then in testing also you will apply analytical. And in the end, you will see all figures are consistent with your understanding. Whatever is there in trial balance, everything should be consistent. So analytical procedure is done during 3 phases. Planning, testing, completion. One last time. Planning, testing, completion. One last time. Planning, testing, completion. Clear? Okay. Planning. In planning, what do we do in analytical? In planning, analytical procedure, now the chapter starts. In planning, analytical procedure helps in understanding the client business. Identify areas of potential risk which he was earlier unaware of. Very simple. At the planning stage, analytical procedure help you in understanding the client business and identify areas of potential risk which you were earlier unaware of. See, in planning only you will understand the business. Your risk can be there. In sales, risk can be there. In fixed asset, risk can be there. In inventory, risk can be there. Second, based on that, I will determine nature, timing and extent of further audit procedure. Wherever there is a risk, I will apply more test of detail. Okay. Third, in planning, I use both financial and non-financial data. Very simple. Financial data means sales of several years. Okay. TDS and professional fees I can compare. Okay. Non-financial, per square feet rent this much, workers, etc. Okay. So in a planning stage, analytical procedure helps in 3 points. In planning stage, analytical procedure help in understanding client business, identifying areas of potential risk. Okay. Second, based on that, I determining nature, timing and extent of further audit procedure. In analytical procedure, last point, I will use both financial and non-financial information. In analytical procedure in planning, auditor uses both financial and non-financial information. Break 10 seconds. Seems good? Okay. In planning stage, analytical procedure help in understanding the client's business, identifying areas of potential risk which he was earlier unaware of. Based on that, I will determine nature, timing and extent of further audit procedure. In planning analytical procedure, auditor uses both financial and non-financial information. Very good. Moving on. Come towards next. Factors to be considered for substantive analytical procedure. When should you do analytical or when should you do test of details? This many factors. Planning is done. Testing and completion is pending. Don't worry. First see this question. Nice question. Factors to be kept in mind for substantive analytical procedure. When should you use analytical, or if not suitable, use test of details? Number one, predictability. When relationship between several items are predictable. Let's take three examples. Okay, debtors and sale, predictable relationship is there, I can use analytical. Sales and freight, predictable relationship is there, I can use analytical. Fixed asset and depreciation, predictable relationship is there, I can use analytical. Number of production unit and electricity bill of factory, predictable relationship is there, I can use analytical. It is used when relationship between several elements are predictable. Inherent risk, if any area there is more inherent risk. What is inherent risk? Before implementing control, what risk are there? Inborn risk. If inborn risk is more, inherent risk is more in sales, inherent risk is more in inventory, inherent risk is more in purchase, then analytical will not give comfort. I need to do test of details. I can do analytical, but compulsory test of details I have to do. Whenever inherent risk is high, only analytical will not help us. We need to design test of detail to address inherent risk. Third, availability of data. Most important thing about analytical is data should be available. If number of production units are not available, how will I compare it with factory bill? Number of production units 10,000. To make one unit, 5 units of electricity required. So 50,000 unit multiply by rate. But data should be available. For doing analytical, data availability is a must. Account type, it is more useful for income accounts rather than balance sheet accounts. Okay, it is more useful for income statement account because they are predictable, but balance sheet is at a point of time. Okay, income accounts are over a period of time. Let's take example. Freight, you can easily predict because it is over a period of time. Sales, you can predict because it is over a period of time. More suitable for purchase, it is more suitable. Salary, okay, in this you can apply worker salary, of course. Okay, so in this you can apply analytical. More useful for income accounts. Balance sheet you cannot apply. In cash, what will you do analytical? You need to check cash. Investment, what will you do analytical? In interest of investment, you can do investment 1 lakh multiply by 10%, 10,000. But investment, so you need to check only. Okay, fixed asset you cannot do analytical. Depreciation of fixed asset you can do. Understood? It is more suitable for income account rather than balance sheet account, because income account is over a period of time, balance sheet is at a point of time. Source, it is more suitable for similar transactions. Okay, but for non-routine transaction, judgmental matter, analytical is not good. Okay, predictable transaction means, of course, sales again, freight again, rent again. Are you clear? So all this force for similar transaction, but non-routine, estimated, Scott, significant class of transaction, non-routine transaction, research and development, what will you do analytical? Advertisement, what will you do analytical? 8 crore research expenditure, how will you do analytical? 9 crore ad, how will you do analytical? So source, from where transaction is coming, it is more useful for routine transactions. Whereas uncertain transactions, rare transactions, those which require judgment, analytical is not good. TOD. Nature of assertion, analytical is more suitable to certain types of assertion. Assertion, I hope you know what all you need to check. Assertions are represent. Chapter 3 we have discussed. Management is saying we have followed this. As auditor we will check. Okay, wonderful technique was there. PC move right, PC move right. Okay, come here. P for presentation, completeness, measurement, occurrence, valuation, existence, rights and obligation. By any way, these are revision lectures, okay? If you are looking for full course, fast track, India's best lectures are available. Concentrate. Nature of assertion. Analytical will give you, on certain types of account, it will give you more assurance as compared to other account. Can you tell some example? I will understand. Completeness. 1 month rent, 1 lakh. 12 months is 12 lakh. 12 lakh. Did you get more comfort on completeness? Yes. On measurement also I got, sir. So completeness, measurement, fix the set. 100 crore. Now SLM I followed, so 90 crore is there. Then again I followed SLM, 80 crore is there. 10 will come. Then again SLM, 70. So I will get comfort on valuation. Okay, this will give me comfort on completeness, measurement, valuation. It is good, but I cannot check rights and obligation in analytical. Are right means it is the name of the company. Asset should be in the name of the company. That fixed asset is in the name of company. For that I need to check voucher. Are you clear? Obligation is liability is of company. I need to check loan document. Understood? So it will give me more comfort for which all assertions, maybe completeness, maybe measurement, maybe occurrence, maybe valuation. Okay. For all this it will give me. Freight, it is complete. Sales, it is complete. Measured properly. Okay. Actually occurred. Understood? So it is more suitable for which all accounts? Tell me, which all assertion? Completeness, measurement, occurrence, valuation, but not suitable for rights and obligation. Last, disaggregation of data. The extent to which data can be divided, analytical is very good. If data can be divided, analytical is excellent. Let me take example. Okay, last example. For example, I want to check freight. I do my operations in 8 countries. So in 8 countries, freight ratio would be different, yes or no? Okay. So 8, somewhere it might be 8%, somewhere 4, somewhere 3, somewhere 8, somewhere 9, somewhere 10. So country-wise freight data should be available and country-wise sales should be available. Only then I can do analytical. Let me take one more example. I want to compare number of production units with light bill. Number of production units in 8 factories are there. 8 factory production should be available because everywhere rates would be different. Are you clear? Maybe in Haryana, the rate would be 3 rupees. Gujarat, 5 rupees. Tamil Nadu, 9 rupees. So, factory wise production data should be available. The extent, the time during which amount can be disaggregated, it is very good. If amount or cannot be disaggregated, disaggregated means cannot be divided. Analytical is not good. Last example, I want to check sales commission to sales. So agent wise commission should be available. Only then I can reconcile it with sales. Are you clear? Okay. Degree to which information can be disaggregated. Factors to be kept in mind for substantive analytical procedure. Prasad. Following factors to be kept in mind. Prasad. P. Predictability. I. Inherent risk. Predictability. Inherent risk. Account type, availability of data. Account type, availability of data. Account type, availability of data. R. Prasad. Okay. Sad. S. Source of transaction. Source. Then A. Nature of assertion and disaggregation. Little difficult it is. Very simple. Don't worry. Prasad. Factors to be kept in mind for substantive analytical procedure. Prasad. Predictability. Inherent risk. Account type, availability of data. Account type, availability of data. Account type, availability of data. Source. Nature of assertion, disaggregation of data. Nature of assertion, disaggregation of data. Okay. Read till here first. PRA. Pro is done. Prasad is the technique. Predictability, inherent risk. Double A, account type, availability of data. Account type, availability of data. Break 3 seconds. Done. SAD, source. After source A is what? Nature of assertion, disaggregation. Source, nature of assertion, disaggregation. Source, nature of assertion, disaggregation. One last time. Okay. Read this also. Done. Okay. Chalo, what are factors to be kept in mind for analytical? Prasad. Predictability, inherent risk, account type, availability of data. Account type, availability of data. Source. Nature of assertion, disaggregation of data. Nature of assertion, disaggregation of data. Are you clear? One last time. What are factors to be kept in mind for analytical? Prasad. Predictability, inherent risk, account type, availability of data. Account type, availability. Source. Nature of assertion, disaggregation of data. Now, analytical procedure at 3 stage: planning, testing and completion. Testing we'll do later. Okay. Let's finish the other questions first. Very nice question. Technique available as analytical. There were several techniques. Okay, in analytical, what all technique is there? You want to apply analytical, understood. Which technique you will apply? Trend analysis. What will trend do? It will see 2 or more prior period trend and tell you the figure should be this. If it is this only, then you don't need to check in detail because it is as per the trend. Let me take one example. Sales every year increasing by 10%. This year also increased by 10%. Good, no. What do I check? Trend is there. You see exam trend, this question is coming. Are you clear? So it will come again also. Trend analysis. You see chapter wise trend at times. This chapter has come for how many marks in last 5 years? Trend analysis. Comparison of 2 or more prior period. Okay. With a trend to predict the future balance. Comparison of 2 or more prior period trend to predict the balance for future. Ratio analysis. I will check ratio to analyze asset, liability, income, expense. Asset, liability, income, expense. 3 example I will check. Okay, sales to freight ratio. Okay, inventory turnover ratio, GP ratio, gross profit ratio I can check. Okay, if I know that GP ratio is coming very high, expenses it is not showing, it is showing sale, there is a possibility of dummy sale. So I can check GP ratio. Okay, I can check inventory turnover ratio. I can check what freight ratio. I can check, understood, 100 type of ratios are possible. Marketing to sales ratio is there. Okay, marketing to sale is not a good ratio actually, but several other ratios are there. Debtor turnover, creditor turnover. Based on that I can predict every time sales increase by this, debtor should be 70%. Debtor is not 70. Oh, means cash will be increasing. Cash, lot of cash has come. I will check like that. Useful for analyzing asset, liability, income, expense. Ratio can be compared over time or to ratio of separate entity within the group or ratio of other companies in the same industry. Next, reasonable test. Very important. This relies upon non-financial data for the audit period under consideration. Here I will not use financial data. Non-financial data and I will predict the balance. Example, 10,000 workers are there. Okay, one worker's salary is 7,500. 7,500 multiplied by 10,000. Non-financial data. If the figure is coming same, I will not check in detail. Rent, 1 month 1 lakh, 12 month 12 lakh. Non-financial data. Are you clear? Third example, shall we take for you? Understood. Production units to light bill. Are you clear? This relies upon non-financial data. Based on that, financial number of units produced is non-financial. Based on that, I will predict the light bill. Okay. These are more applicable to income statement and accounts. Structured modeling. It uses statistical technique, okay, to predict the balance. It uses statistical technique to predict the balance by using both financial and non-financial data. It will use financial and non-financial data and apply statistical technique to predict the balance, okay. Like in share market, we do prediction. Are you clear? This should be there. So that is structured modeling. Very simple. What are techniques available as substantive analytical procedure? Which technique are used for substantive analytical procedure? TRS. Memory technique is TRS. Very simple. Trend analysis, ratio analysis, structured modeling, and reasonable test. One more time. Trend analysis, ratio analysis, reasonable test, structured modeling. Trend analysis, ratio analysis, structured modeling, reasonable test. Trend analysis, ratio analysis, one more, reasonable test, structured modeling. One last time, trend analysis, ratio analysis, okay, reasonable test, structured modeling. Trend analysis, ratio analysis, reasonable test, structured modeling. Very briefly, trend, ratio, asset, liability, income, expense. Reasonable test, it will use non-financial data and predict the balance. Structured modeling uses statistical technique to predict the balance by using both financial and non-financial data. What are techniques available as substantive analytical procedure? TRS. Trend analysis, ratio analysis, reasonable test, structured modeling. Shall I explain again or clear? Clear, clear, very, very clear. Trend analysis, ratio analysis, reasonable test, structured modeling. One last question, then only 2 parts are pending. Consideration to public sector entity. In public sector, in government accounts, okay, in sale, bail, public sector company, can we apply analytical? Little difficult. Why? Because there is no relationship between revenue and expenditure. Okay, in public sector, there is no relationship between revenue and expenditure. In government, what relation will be there? No relation. COVID has come, huge expense will come. They are not working for profit. Their main aim is welfare of public. Okay, let's take second example. Okay, whatever expenditure is done, there everything is charged to PNL. If they purchase the asset also, they'll give grant to someone. Okay, so assets are not capitalized. There is no relationship between income and expense, and there is no prior period data also. In government, every year is different. Plus, you cannot compare with industry also. I cannot compare India data with US data. US government spending this much on education. India should also spend. Oh, baby, crazy. People don't have food here. What education? Understood. So in government accounts, okay, public sector entity, difficult to use analytical procedure, same way as we use in private company. Okay, read. Relationship between various items may not be relevant in audit of government or public sector entity. There is little relationship between revenue and expenditure. Expenditure on asset is also not capitalized. Whatever machine they'll purchase, they'll charge to P&L. Also, industry data, comparative data is not available. However, certain relationship can be there. Per kilometer of road, we cost 12 rupees. Okay. So this year we have constructed 7 lakh kilometers of road. So multiply. Understood. Okay. Nothing great. Now, last two questions. Analytical procedure during testing and completion. In the planning, we understood. Now, during testing and completion. In testing, while performing substantive analytical procedure alone or in combination with TOD, 4 points are there. While applying, see, during the whenever you are doing testing, at that time also you will apply analytical procedure. While designing substantive analytical procedure alone or along with TOD, 4 points. Determine the suitability of substantive analytical procedure for given assertion, taking into account risk of material misstatement. Will that substantive analytical procedure give me comfort for relevant assertion? Let's take brilliant example. 1 month rent is 1 lakh, multiply by 12 month, 12 lakh. Okay, you just have to see. Okay, in rent, what you want to check? Determine the suitability. You want to check completeness of rent? Yes, analytical will give you completeness. Okay, 1 month 1 lakh, 12 month 12 lakh. Second, you want to check what? Measurement, amount of 12 lakh. Yes, analytical will give you that. Completeness, it will help. Measurement, it will help. Occurrence, it will help. Rent has actually occurred. Okay, but for rights and obligation, it is not good. Are you clear? Determine the suitability of particular analytical procedure for given assertion. Will it satisfy the assertion? So it is more useful for income accounts. Okay, in detail it will come. More useful for such accounts which are predictable over time. I hope you understood. Second, but not useful for rights and obligation. Second, evaluate the reliability of data from which auditors' expectation of recorded amount or ratio is developed. Whether the data on which we are doing analytical is reliable or not. Let's take example. 1 month rent is 1 lakh, 12 month 12. But where did I get 1 lakh from? Whether that 1 lakh figure is reliable. Okay, reliability of data from which auditors' expectation of recorded amount or ratio is developed. Is that 1 lakh reliable? Then there are several points. Always remember, external is more reliable than internal. But if controls are strong, internal is reliable. So where this figure has come from? This figure has actually come from contract. Okay, we have signed the deed. Okay, there is a deed, there is a contract. In contract, figure is 1 lakh. Properly lawyer's signature are there. Okay, stampage is done. Okay, then I can rely, because external is more reliable than internal. Company, anyone tells, don't rely. Reliability of data. Third, determine an expectation of recorded amount or ratio. Now we have to do what? Multiply. 1 month is 1 lakh, 12 months 12 lakh. Determine expectation 12 lakh. In book, if it is same 12 lakh, excellent. If it is not, then fourth point. Determine the amount of difference of recorded amount from expected. Recorded amount from expected value, that is acceptable without any investigation. Determine this much difference if it comes. Okay, that is immaterial. 2 or 3% difference. Sales and freight, I am reconciling. Freight is not reconciling by 3%. Okay, big deal. There is materiality concept. Okay, 4 points. During testing, 4. Now this all 4 will come in detail. All 4 will come in detail. Very simple. Number 1. Okay, determine the suitability of substantive analytical procedure for given assertion, taking into account risk of material misstatement. Will it be suitable for this assertion? Only then apply analytical. Second, evaluate the reliability of data from which auditor's expectation of recorded amount or ratio is developed. Is the data reliable? Third, determine expectation of recorded amount or ratio. Fourth, determine the amount of difference, okay, of recorded amount from expected value, that is acceptable without investigation. One last time. Determine the suitability of substantive analytical procedure for given assertion. Evaluate the reliability of data from which auditor's expectation of recorded amount or ratio is developed. Determine an expectation of recorded amount or ratio. Evaluate the amount of difference of recorded amount from expected expected value that is acceptable without any difference. Very simple. In first, is it suitable? Second, is the data reliable? Third, predict how much balance should be there. Fourth, see how much difference if it comes recorded to our expectation that is acceptable. Now they have given all these points in more detail. Can we start? Yes. First point. This cannot come. I will just read. Suitability of analytical procedure for given assertion. Analytical procedure is always suitable for. Same things in Prasad, it was there. This one. They have copied this. It is more applicable to large volume of transaction predictable over time. Means income accounts. It is based that relationship exists. Already covered. Suitability of analytical procedure will be how effective it will be in detecting misstatement. Different analytical procedure give different level of assurance. Let's take example. Okay, for example, in sales you might get assurance, but to check cutoff you need to do TOD. Okay, determination of suitable analytical procedure is influenced by nature of assertion and risk of material misstatement. It might give you comfort on certain assertions, but if the risk is too high, analytical is not good deal. Go for TOD. Particular analytical procedure can be done when test of detail is done in same account. Let's take example. In sales I did analytical, but for cutoff I need to do test of detail. In debtors I did analytical, but to do subsequent realization of debtor. What is subsequent realization? After March there is April. I need to check whether I have received the amount from debtors in April. But you are auditor till March only. I need to still check because the audit is done in June, July. Okay. So that is what? That is not analytical. That is test of detail. So on same account you can apply to analytical and TOD. Very simple. It is more applicable to things which are predictable. It is based on expectation that relationship exists. Different analytical procedure provide different assurance. If you don't get assurance, use TOD. Next, particular analytical procedure can be done if TOD is done in same account. Now second point, nothing can come from here. Reliability of data. 4 points are there. Can come. Source of information. Always remember external is more reliable than internal. We have already read in chapter number 3. But when internal controls are strong, internal is more reliable. SA 500 if you remember. External is more reliable. Control over preparation of information that are designed to ensure completeness, accuracy, validity. But if internal controls are strong, internal is reliable. Third, comparability of data. More easily it can be compared, more reliable it is. And nature of relevance available. Nature and relevance of information available. Whatever you are getting, it should be relevant. Okay. For example, you are making the expectation of sales 10%, 10%, 10%. Every year it will increase by 10%. Understand this year COVID was there. Okay. Now if you tell 10%, how will it increase? Everything was closed. So whenever you predict the balance, it should be nature and it should be relevant. Rather than goals, it should be more relevant. Okay. Relevant only then analytical can be applied. If you are telling sales will increase 10%, no, you have to predict nicely. You want, whatever you are predicting as balance, it should not be like Narendra Modi figure. Narendra Modi will tell this year GDP 12%. Maybe it is minus 12. So it should be as a result of expectation rather than over ambitious goal. Little difficult point. Hope you understood. One more time. Can I rely on the data? 4 points. External is more reliable than internal. But if internal controls are strong, internal is reliable. Nature of information should be comparable. Comparability of information. Nature and relevance of information available. Whatever information should be there, it should be relevant. It should be as a result of expectation rather than goal. Don't set your goal, I want to double the sale. No. What is reasonable, that much expectation should be there in analytical. Clear. Source, internal control are strong internal. Comparability, nature and relevance of information available. Risk of material misstatement. Now, third point is here. Determine expectation of recorded amount or ratio. Expectation you have to develop. Whether expectation can be developed sufficiently precisely or not. Whether can you develop expectation precisely or not. Okay. Depends on 3 factors. Degree to which information can be disaggregated. If you can divide the information, analytical is very, very, very good. And accuracy will also be more. For example, sales commission, you are dividing agent wise. Then the reliability will increase. Degree to which information can be disaggregated. Data should be available, of course, and accuracy with which the results of analytical procedure can be predicted. Very simple. Okay. Whether expectation can be designed precisely depends on degree to which information can be disaggregated. Availability of data, both financial and non-financial. Accuracy with which expected result of analytical procedure can be predicted. If accuracy is more, I will rely more. Accuracy less, I will rely less. Okay, degree to which expectation can be developed sufficiently precisely depends on three factors. Degree to which information can be disaggregated. It can be disaggregated, then expectation would be nice. Okay, availability of data is available, then great expectation can be developed. Third, okay, accuracy with which the results of analytical procedure can be predicted. Okay, now, investigate the difference. Determine the amount of difference of recorded amount from expected value that is acceptable without difference. Okay. So, inquire with management and obtain the evidence. Okay. What evidence? That why such difference is coming. Is it consistent with auditor's understanding of entity? Inquire with if difference comes. Okay. Of course, if it is material, big difference comes. Inquire with management. Obtain appropriate evidence regarding management response and evaluate those response taking into account auditor's understanding of entity. Example, rent 1 month 1 lakh, 12 month 12 lakh, but it is coming 18 lakh. You ask them, sir, 18 lakh. Sir, go down we have taken. Let's go to go down. I will show you it is nearby only. Oh, and you realize go down was there. Understood. I inquired. Okay. Inquire with management and obtain evidence and see whether that evidence is consistent with auditor's understanding of entity. Okay. You understood go down is really there. Okay. Over. But if you are not convinced, you have to perform other procedure as necessary in the circumstances so we can get sufficient and appropriate evidence, or else we'll qualify the report. Perform other procedure as necessary when we are not able to get sufficient and appropriate evidence. If you don't get evidence by after inquiry, you don't get evidence or you are not satisfied, we'll perform further procedure. Very simple. Last, how are analytical procedure used during the end? Or tell me now, how are they are used during the end? How are analytical procedure in the last? The conclusion drawn from analytical procedure designed and performed should corroborate means support the conclusion formed during audit of individual components of financial statement. Means in the end you will look at all the ratios. Okay, you will see entire trial balance. Everything should be as per your comfort. 1 month rent 1 lakh 12 lakh, it is 18 lakh. Oh, this is go down, you should know. Okay. Second query, oh, freight is coming too less. Okay, understood. Japan rates have reduced. Okay. Third, oh, inventory turnover ratio is so much. Oh, COVID was there, so they could not sell the inventory. Understood. Okay, the conclusion drawn from results of analytical procedure should support the conclusion auditor has formed during audit of individual component. This helps to draw reasonable conclusion on which we can make our opinion. Very simple. Yes. So, as told, very small chapter, very amazing, mind-blowing, excellent chapter. Analytical procedure are done during 3 times: planning, testing, completion. We are done. Very small, cute, nice chapter. I hope you enjoyed as much as I did putting it up forward for you. We are working very, very, very hard. I hope you are working hard as well. Do give a like button. It will inspire us to work even harder and give better, nice, amazing, excellent quality of content. Put in a nice comment. Okay, YouTube works in such a way, if you put a comment, it will show video to others also. We are working very hard. I hope you work a little for us. Okay, and let's make everyone proud. Okay, thank you so much. Do consider subscribing if you are new to this channel. Bye bye. Good night. Take care. Thank you. Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, warm welcome to Mega Marathon series of Audit. Yes, continuing with the revision series on CA Inter Auditing, all chapters in only English. Today, it's the time for chapter number 4, Risk Assessment and Internal Control. One chapter which students consider very difficult, but we are here for you to make it super easy, super fun. Stay tuned, sit back, relax. We will complete this chapter in the nicest possible way. Yes, guys, but a small thing, okay? These lectures are in no way substitute to the regular or fast track lectures. These are just revision lectures. Without wasting any time, let's begin. Yes, guys, we'll do today chapter number 4, considered to be one of the hardest chapters by students. Okay, but yes, of course, we are here to make it super easy for you. Chapter 4, what is the name, sir? What is the name? Risk assessment and internal control. Let's understand the name for exactly 30 seconds. Risk assessment means seeing which risk is important and which is not. Okay, why do we need to see? Because for important risk I will implement control first, then I will implement for second, then I will implement for third, then I will implement for four, and so on. If I have money 5, 6, 7, I don't have money that I can reduce all the risks. So I will identify which risks are important, which are not. Whichever are important risks, first I will implement control for them, then second one, then third one, and then depends on money. Okay, so this is the meaning of risk assessment and internal control. One more thing, sir, where are you doing this revision from? This revision is done from Magic Book, in which we have entire syllabus covered in just roughly around 86 to 90 pages. Okay, so we are doing revision from that Magic Book. Let's start. What is audit risk? First topic. Audit risk is a risk that auditor gives an inappropriate opinion when financial statements are materially misstated. Tell me, whenever financial statements are materially misstated, which opinion should come? Sir, when misstatements are material, a qualified will come. But the effect is spread everywhere, then adverse will come. Are you clear? Only material misstatements are there, qualified. Material misstatement and their effect is pervasive, then which one will come? Adverse. So either qualified or adverse should come, but you have given which opinion? Clean report. That is a audit risk. It is a risk that auditor gives a wrong opinion, that is a clean report, when the financial statements are materially misstated. Whenever misstatement is there, either qualified or adverse should come, but you have given clean report, that is a audit risk. It is a risk that auditor fails to express a correct opinion on the financial statement. Very simple. Risk of material mistake. Now audit risk is three things together: IRCRDR, inherent risk, control risk, detection risk. Let's understand these three terms nicely. First of all, what do you mean by inherent risk? See, before implementing any control, whichever risk is there, in English you call it inherent risk. Are you clear? See, whenever in a certain business there are certain deemed risks are there. Are you clear? Let's take one simple example. You cannot complete entire syllabus on last day. What is this? Inherent risk. Before implementing control, certain risks are there. These are inherent risks. In jewelry business, inventory valuation is an inherent risk, because same jewelry is of 1 lakh, 10 lakh, 1 crore. That same ring can be of 10 crore also, solitaire ring. Are you clear? Second example, in retail business, cash is always inherent risk. Frauds are going to happen if it's a retail business in cash. Whenever incentives are linked with sales area is going to be inherent risk. Why? Because people will do fraud in sales because they want their salary to be more. I hope you are able to understand. Yes sir, yes sir, yes sir. Okay, deemed risk before implementing control is inherent risk. Now let's read English. Possibility of an assertion about class of transaction, account balance, disclosure. There can be risk in class of transaction, account balance, disclosure. What is the difference between these three? Can you tell me, sir? Yes. What is class of transaction? P&L transactions. What is account balance? Balance sheet transaction. What is disclosure? Notes to accounts. Let's take one example. Possibility of an assertion about class of transaction. So in sales there is a risk in occurrence. In sales there is a risk in measurement. Class of transaction. What is account balance? Okay. Fixed asset. There is a risk in valuation of fixed asset in case of mining business. Are you clear? Valuation of fixed asset can be risk. Understood? Valuation. Particular debtors, there is a little risk that debtors may be overvalued or undervalued. Understood? Account balance, any account balance is wrong. What is disclosure? Related party completeness, we have doubt. Complete list of related party will not be there. Why? Because many times management only don't know how many related party are there. So these three words you understood, because again and again it will come and I cannot explain. So class of transaction is what? P&L. Okay. Then what do you mean by class of account balance? Account balance means nothing but balance sheet. And what is disclosure? Disclosure is what but notes to accounts. Possibility of an assertion about class of transaction, account balance, disclosure to a misstatement that could be material either individually or when aggregated with other misstatement before implementing control. See, before control, whatever risk can happen, whatever are deemed risk in business are known as what risk? Inherent risk. I hope you understood. Every business there are few inherent risks. Possibility of an assertion about, tell me three things: CAD, class of transaction, P&L, account balance, balance sheet, disclosure to a misstatement that could be what? Material. That could be what? Material, either individually or when aggregated with other misstatement before control. Before control. Now continue. Now for this, all the risk, like in jewelry business, what is the risk? Tell me. Inventory valuation. Retail business, what is the risk, sir? Cash valuation. Third, for all this, management will implement what? control. Those controls are not strong and they cannot prevent or detect and correct material misstatement, that is control risk. Risk that there could be material misstatement in class of transaction, account balance, disclosure. That could be material either individually or when aggregated with other misstatement. These things are same. Okay. And control cannot prevent or detect and correct material misstatement. Are you clear? If control can, control risk will be low. But sometimes we implement control. Control can also not prevent that or detect and correct. What is prevent? Misstatement should not happen. If it doesn't happen, detect and correct. If control cannot prevent or detect and correct, it is known as which risk? Control risk. Let's take an example. Okay. For example, in retail business, we have a wonderful cash is an inherent risk. We have a wonderful system for sales. Still something wrong is happening. That is control risk. We implemented few control. After that also wrong thing happens. That is known as which risk? Control risk. Risk that there could be misstatement. Okay. Either individually or when aggregated with other misstatement, and it cannot be prevented or detected and corrected by entity's internal control system. So our controls are not strong enough to protect that risk. That is known as control risk. Of course, 100 mistakes will be there. Control can prevent a few mistakes or detect and correct. Let's assume 60 are corrected. Still 40 are remaining. No, that is control risk. Understood? Okay. Now, for that control risk, I will implement what? Tell me. Audit procedures. So as auditor, I can prevent them. Are you clear? But just to let you know, inherent into control risk is known as ROMM, risk of material misstatement. IR into CR is known as ROMM. What is ROMM? Risk of material misstatement. Now, what is the relationship between ROMM and detection risk? But what do you mean by detection risk first? Detection risk is audit procedures performed by auditor will not detect a misstatement that could be material either individually or when aggregated with other misstatement. Are you clear? See, audit procedures also will not catch the risk. After that, whichever risk remains is known as detection risk. Okay. Now, 100 mistakes were there. 60 we implemented control. How many are pending? 40. That is control risk. Out of 40, auditor could detect only 20. 20 are still remaining. These are known as detection risk. Risk that audit procedure performed by auditor will not detect a misstatement. Not will detect. Okay. If it will detect, it is not a detection risk. Will not detect a misstatement. That could be material either individually or when aggregated with other misstatement. Are you clear? Now, ROMM and detection risk are inversely related. How? Let me show you. Let me show you. Very easy, oh. Don't worry at all. Extremely easy. Oh, ho, ho. Yeah, you are saying so. It has to be easy only. Yeah, see you. See, there is company A and company B. In company A, there is less risk of material misstatement. How do I get risk of material misstatement? IR into CR. Inherent into control risk is known as risk of material misstatement. If risk of material misstatement is low and your risk of material misstatement is high, understood? Tell me, if risk of material misstatement is high, I will implement more procedures or less? Sir, more procedure because more mistake are there. Very good. More procedure means there is a high probability that I will correct every misstatement. High probability of detecting misstatement. Very low probability of not detecting misstatement. So detection risk is low. I hope you are clear. Detection risk is not detecting misstatement. Very less possibility that I will not detect misstatement. So detection risk is low. Understood? Yes sir, ekdam understood. Oh, very nicely understood. Wow. Excellent. Now come here. Company A. In company A, risk of material misstatement is low. Are you clear? So I will implement more procedure or less. Sir, if risk is very low, why to implement so many procedure? Why, sir? Wow, wonderful. So less audit procedure. Less audit procedures are there means there is more chance of not detecting misstatement. So detection risk will be high. That is why whenever there is ROMM is low, detection risk is high. Whenever ROMM is high, detection risk is low. I hope you understood one last time. ROMM and detection risk are inversely related. Why? Whenever there is high risk of material misstatement, I will implement more procedure. More procedure means there is more chance of detecting misstatement, less chance of not detecting. So detection risk is low. Now come here. Here. Less ROMM means there is less chance of there will be less audit procedures. Okay, less audit procedure means high chance of not detecting misstatement. So detection risk will be high. I hope you understood. Absolutely understood, sir. Very nicely. Okay. Now come here. I hope all ROMM and detection risk are inversely related. So very simple, IR, CR, DR. If you don't understand anything, just listen, very simple. What is IR? It is a risk that could be misstatement either individually or when aggregated with other misstatement that could be material. Only one line, before control. Before implementing control, whatever risks are there, are known as IR. I hope you are clear. Now come to what? CR. Risk that could be misstatement either individually or when aggregated with other misstatement, and those misstatement will not be prevented or detected and corrected. First I will try to do no prevent. If I cannot prevent, detect and correct. But they can neither be prevented nor detected and corrected by entities internal control. Controls are not strong enough, that is control risk. Now auditor will try to correct them. Mistakes auditor will try. He also cannot try, that is detection risk. And after that whatever remains is audit risk. After that also, if there are a lot of misstatements but we are saying there are no misstatements, that is audit risk. I hope you understood. Detection risk is a risk that audit procedures performed by auditor will not detect a misstatement that could be material either individually or when aggregated with other misstatement. Now come here. Risk of material misstatement, that is IR into CR, is at two levels. Okay, overall financial statement level, assertion level. What is overall financial statement level? Which affect the financial statement as a whole and affect many assertions. It doesn't affect one account, many account, and in those account it affects valuation, measurement, occurrence. About assertion, detailed discussion is already done in chapter number 3. Oh yeah, I remember, sir. Overall financial statement risks are those risks which affect financial statement as a whole and affect one assertion or many assertions. Let's take an example. Financial statements are not valued at cost. If financial statements are not valued at cost, when going concern is in doubt, they should be valued at what? NRV, but they are valued at cost. When going concern is in doubt, financial statements are valued at cost, but they should be valued at what? NRV. This is affecting one account or all account? All accounts. That is why it is known as overall financial statement level risk. I hope you are clear. Second example, there is a fraud in a company. Tell me it affects one account or several accounts? All accounts it will affect. Accounting standards are not followed. These are overall financial statement level risk, affect all account, all assertions. I hope you are understanding. Yes, sir. What is second? Assertion level risk for particular class of transaction, account balance disclosure. What is assertion level risk for class of transaction, account balance disclosure? One last time I will take example. Sales risk is there, sales measurement, sales occurrence risk, that is assertion level risk, only particular transaction. Second, let's take account balance. Debtors are overvalued, fixed assets are not properly valued, creditors are not valued, account balance risk. Are you clear? Valuation, assertion level for class of transaction, account balance. Related party disclosures are not complete, rights and understood, related party, so that is disclosure. Why do I find assertion level risk? To determine nature, timing and extent of further audit procedure. Wherever risk is there, tell me FAP, further audit procedure will be more or less? More. These risks are there to determine nature, timing and extent of further audit procedure necessary to obtain sufficient and appropriate audit evidence to reduce the audit risk to an acceptably low level. Means if I know assertion level risk, I will perform more procedure or less? More procedure in those assertions, so I can reduce the risk to a low level. Are you clear? So two risks: overall financial statement level, assertion level. What is overall financial statement level? Affect many account and many assertion. What do you mean by assertion level risk? Affects particular class of transaction, particular disclosure, particular account balance. It is known as CAD. What is the full form of CAD? Class of transaction, account balance, disclosure. Class of transaction, account balance, disclosure. Why do I find those? So I can perform more procedure for those class of transaction, those account balance, those disclosure. Hope you are clear. Yes, sir. Now, auditor assesses control risk to see whether to rely on control or not rely on control. Very good. Nice. What do you mean by control risk? See, control risk means controls are strong or not. If controls are strong, substantive would be less. If controls are weak, substantive would be more. That part is already taught in chapter 3 also, but here again telling you. Okay. Auditor assesses control risk to see rely on control or not rely on control. Control environment. What is control environment? Overall atmosphere, how TCWG is, how management is, how company is behaving, what is the management of company, what is integrity of owner. Overall control environment is good. Can I say that their controls also will be strong? High possibility it can be strong, but I need to test the control. Are you clear? That is what is given. Favorable control environment means good family means kids will be good, but we are not sure sort saying that kids are good only, because from good family also fraud will happen. Oh yeah, understood, sir. Favorable control environment. However, we need to test the controls. Are you clear? Good control environment means control risk can be low, but we have to test the control. Unless and until we TOC, see, control And first of all, control risk is assessed as high, medium, low. If control risk is low, means controls are strong, but still I need to test the control. How much ever good bucket is, still I need to put the water to see bucket is leaking or not. I want to check leakage in bucket. Bucket is very good, but I need to put the water to check the leakage. Same way, controls can be good, but we need to test the control. Understood? Okay. If the auditor says rely on control strategy is there, and if that control is not working, we will check another control. Example, see there are two strategies: rely on control, not rely on control. What is rely on control? I am depending on control, then substantive would be less. Okay, further audit procedure less because my controls are strong. Opposite strategy, I am saying not rely on control, then substantive would be more because my controls are not very good. There are two strategies: rely on control, not rely on control. Rely on control means controls are very good. Now I will do less substantive. Not rely on control, controls are weak, I will do more substantive. So whenever auditor says rely on control strategy, tell me what will happen. Whenever there is rely on control, no sir. Okay, and if that control is not working, I will check another control. Example, biometric not working, I will check manual attendance is there or not. Are you clear? Okay, now let's continue. If that other control is not there or not working, I will check compensating control. If rely on control is there, check other control. Other control is not working, I will check substantive. I will do compensating control. I will check. Let's take another example. Sales are done. Whether sales have actually occurred or not, we are checking lorry receipt. Yes sir, lorry receipt we will check. If it is going out from the godown, then completely sale has occurred. But the lorry receipt is not available. Oh, then we can check with the party whether he has received or not. If the party has received, compensating control is strong, still rely on control. So whenever we adopt rely on control, check main control. If that is not working, check the other control. If that other control is not working, check compensating control. If any of these three is positive, any of these three, we will still rely on control. But if we have only one control and that is not working, then not rely on control will be there. And whenever not rely on control is there, no, procedure will be too much. Sir, what is the difference? Rely, not rely, what to happen? Are huge procedures are there. Whenever there is not rely, no, work will increase like anything. Are you clear? So let's conclude this. 1, 2, 3, 4. Start. Tell me, two strategy are there: rely on control, not rely. Whenever we rely on control, tell me what will happen. I will check main control. If it is working, very good. Not alternative, check. That is also not working, check compensating. If compensating also working, still rely on control is there. If any of them doesn't work, okay, main doesn't work, alternative is working, okay, main control is not working but alternative, still rely. Main not working, alternative not working, compensating working, still rely. Any of them are not working, then not rely. Or if there is only one control, not rely. Come here. Identifying and assessing risk of material misstatement. How do I find ROMM, risk of material misstatement? Sir, you already told IR into CR, but still they have given another procedure. Listen. Obtain understanding of entity including its environment and internal control. Obtain understanding of entity and its environment including internal control is known as IR. So first find out IR. What is IR? Inherent risk. Obtain understanding of entity, its environment and internal control. How is the entity? How is environment? How is internal control? Assess the risk whether it is related to financial statement as a whole and affect many assertion. Second point is assess the risk whether they relate to financial statement as a whole and affect many assertion. Whether this is a financial statement level risk or assertion risk. What is financial statement? Affect different account. Like financial statements are not valued at cost when going concern is in doubt. There is a risk of fraud. Accounting standard are not followed. Okay. Second, relate whether the risk is a assertion level risk. Relate the risk to what can go wrong at the assertion level, taking into account relevant controls we want to test. And third, consider likelihood and probability of misstatement and whether it can become material misstatement. I hope you did not understand. Now you will understand. First, obtain understanding of entity, its environment and internal control. SA 315. Obtain understanding of entity, its environment and internal control. Second, see whether it is a financial statement level risk can affect many assertion. Third, see whether it is a assertion level risk. Okay, and also check the control we need to check. For example, in sales, if occurrence is a doubt, I have to check that occurrence part only, not everything. Relate the risk whether it is a financial, whether it is a assertion level risk, and taking into account relevant control. And third, consider the likelihood of misstatement. Now, whenever you get error, multiply two things: probability, impact. Probability, impact. What is probability? Chance of happening. What is impact? If it has happened, what will happen? Are you clear? Multiply those and we will know that these are material misstatement whose probability and impact is high. Probability of happening this misstatement is also high. If it happens, impact is also high. Then we will get material misstatement. Those which have high probability, high impact. Because I don't need to protect all error. I need to protect only those which have high risk of material misstatement. Okay. Very simple. How to identify risk of material misstatement? Obtain understanding of entity, its environment and internal control. Second, assess the risk to what can go wrong at the assertion level and whether assess the risk and whether see it is a financial statement level risk affecting different accounts. Third, see whether it is a assertion level risk taking into consideration relevant control. And fourth and last, consider the likelihood of misstatement. Likelihood and impact. Likelihood means probability, impact means how much impact, and see whether it is a material misstatement. Which will be material? Which has higher likelihood, higher impact. Read nicely. 10-second break. Done. Obtain an understanding of entity, including its environment, including its internal control. Assess the risk, whether see whether it is a financial statement level risk can affect several assertions. Third, relate the risk to what can go wrong at the assertion level, taking into consideration relevant account. And C, consider the probability and impact of the risk and see whether it can become material misstatement. Consider likelihood and probability of misstatement and see whether it can become what material misstatement. I hope you are clear. Come to RAP now. You want to perform RAP. What is RAP? Risk assessment. There are two procedures: RAP, FAP, RAP, FAP, RAP, FAP. To perform risk assessment procedure, several procedures are done. Risk assessment procedure is nothing but doing walkthrough. That is seeing whether controls are strong or not. Inquiry is done. Tell me to check control. Yes, I will do inquiry with management. Example: all invoice above 50,000 is signed by purchase manager. I will ask manager, is it really signed by purchase manager? Analytical procedure also I can do, that is check ratios. Okay, with ratio I will realize that certain accounts have a lot of mistakes. This account has mistake, this account has mistake. Third, observation and inspection I will also do. Already these are covered. This risk assessment procedures. Okay, methods to perform risk assessment procedure also covered in chapter 3. A RIO, analytical procedure. External confirmation. Okay, what is P? RIO, R, re-performance, recalculation. I, inquiry, inspection. O was what? Observation. I hope you remember. Okay. So RAP also includes, if you want to perform RAP procedure, you can do inquiry, analytical procedure, observation and inspection. Now, I think the chapter is starting now. Just check it out here. As per SA 315, internal control is a big thing. Tell me few internal controls relevant to financial reporting. Few controls can you tell? Example, all invoice above 50,000 will be signed by purchase manager. Discount will be given only by store manager. Okay, let's take audit is also internal control. Work of one will be reviewed by another, that is known as segregation of duty. Budgets is also internal control. Authorization is there. Access control is there. ID, password, these are few internal control. As per SA 315, internal control is a process which is designed, implemented, maintained. Any control is first designed, then implemented, then we have to maintain it. Example, discount will be given by store manager, designed, then implement. We will implement it in system, only store manager can give discount. Now maintain, when he is absent, no one can give discount. Internal control is a process which is designed, then implemented, maintained by from above to down. TCWG, management, other personnel. TCWG, management, other personnel. TCWG means those charged with governance. After that, management comes. After that, who comes? Okay, who is TCWG? Those who give direction to the company, who make the policies and procedure of the company, who give vision to the company. Ratan Tata and board of directors are TCWG. For every Tata group, there is a head that is known as management. Tata Steel, different head. Tata Motors, different head. Taj, different head. Tetley, different head. Are you clear? TCS, different head. Those are management. So internal control is a process which is designed, implemented, maintained. Three things: designed, implemented, maintained by TCWG, management and other personnel. One more time. Who will do it? TCWG, management, other personnel. To provide reasonable assurance about achievement of entity's objective with regard to care. See, if you follow control, you will get reasonable assurance about achievement of objective. Every day you study. Whatever happens, you study. You never fail to study. Are you clear? It will give you reasonable assurance that you will pass this exam. It will give you reasonable assurance about care. What is care? Compliance with laws and regulation, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. See, if you follow all control, laws will be followed. Your assets will be safe. Financial reporting will be proper. And operations, production, finance, marketing, HR, everything would be good. Are you clear? Yes. Start. Internal control is a process which is designed, implemented, maintained. Where did it go? Oh, baby, where are you? Okay, yeah. Internal control is a process which is designed, implemented, maintained. Internal control is a process which is designed, implemented, maintained by TCWG, management, other personnel. TCWG, management, other personnel that give you reasonable assurance about achievement of objectives with regard to care. What is care? Compliance with laws and regulation, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. Clear? Read this. Entire read. Break 10 seconds. Done. Tell me. Internal control is a process which is designed, implemented, maintained by TCWG, management, other personnel. TCWG, management, other personnel that give you reasonable assurance about achievement of objectives with respect to care. What is care, sir? What is care, sir? Whose care? Compliance with laws and regulation, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. What are objectives of control? Very simple. If controls are there, transactions are done according to authorization. Transactions are done with general or specific authorization. What is general? All the sales, all the purchases will be approved by someone. General authorization. Specific, all purchase above 1 lakh will be authorized by only purchase manager or CFO. Are you clear? Specific authorization. What is the objective of control? Transactions are done as per general or specific authorization. What is general? All purchase will be signed by someone. What is specific? All above 1 lakh will be signed by CFO. Second, all transactions are recorded with correct amount, correct account, correct period. All transactions are recorded with correct amount, correct account, correct period. Assets are safeguarded from unauthorized acquisition, use or disposition. No one is misusing the asset. Recorded assets are compared with existing asset at reasonable interval. Means inventory verification is done. Recorded assets are compared recorded assets are compared with existing assets at reasonable interval. An action is taken about differences. Be it fixed assets or inventory, regular verification is done. That is also good control. Okay, and action is taken about differences. What are 4 objectives of control? Simple? No, very simple. Let's speak one. Transactions are done as per general or specific authorization. All transactions are recorded with correct amount, correct account, correct period. Third, assets are safeguarded from unauthorized acquisition, use, disposition. Recorded assets are compared with actual assets. Okay, at reasonable interval, action is taken with regard to differences. Very easy? Yes, sir. Learn nicely. Very simple. Chalo, done. What are objectives of internal control? Transactions are recorded as per general or specific authorization. Okay. All transactions are recorded with correct amount, correct account, correct period. Assets are safeguarded from unauthorized acquisition, use or disposition. Recorded assets are compared with actual assets at reasonable interval. Action is taken about differences. Simple, yes. Now, 4 things we have to study in internal control. Out of which 4th point is the biggest one. All others are simple. Continue. Okay. General nature and characteristics of control. Control relevant to audit. Nature and extent of understanding of control relevant to audit. Components of internal control. 4 things we have to study in control. General nature and characteristics of internal control. Which controls are relevant to audit. Third, nature and extent of understanding of relevant control. And last, components of internal control also. Yes, sir, yes, sir, yes, sir, yes, sir. So much to study. Very good. We have one more time. We have to study 4 things here. General nature and characteristics of control. Which controls are relevant to audit? Whichever are relevant, nature and extent of understanding of relevant control and components of internal control. Ready? Not ready, sir. Super ready. Please start. Okay. Nature and characteristics of control. Controls are designed, implemented, maintained. Controls are designed, same thing is given. Purpose of internal control same. Control are designed, implemented, maintained by TCWG management other personnel to provide reasonable assurance about achievement of objectives with regard to care. Care will be there. What is care? Compliance with laws and regulation, safeguarding of assets, reliability of financial reporting, effectiveness and efficiency of operation. Same thing given. Internal control are designed, implemented, maintained to achieve reasonable assurance with regard to care. What is care? Compliance with laws and regulation, safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. Simple, simple, simple. No, very simple. Understood? So if you follow controls are designed, implemented, maintained to provide reasonable assurance about achievement of objective with regard to care. What is care? Compliance with laws and regulation. A. Safeguarding of asset, reliability of financial reporting, effectiveness and efficiency of operation. Come here. What are limitations of internal control? Few limitations are there. Okay, let's discuss. Human judgment in decision making. Sometimes human decision making can be faulty. Example, you were doing audit, okay, there was some mistake, but you could not recognize. Are you clear? There were a lot of misstatements, but still you said rely on control is good. Human judgment. So human judgment is there. Sometimes we say rely on controls, actually control were not good. Entire audit can fail. Okay. So second example if you want. For example, there was a big mistake. Entry is passed by junior level, CFO will approve it. But CFO while approving did not recognize the mistake. Human judgment can be faulty. Second, judgment by management. Okay, nature management will always see here I can implement control, here let us leave the risk. Why? I don't have money to implement all the controls. I don't have money that I will reduce all the risk. So management takes a judgment. In this risk I will implement control, this risk I will not implement. Example, you think small pilferage is there, leave, it will happen. Okay, let's not implement any systems for this, let's not implement any procedure. When that small became big, you did not realize. Are you clear? So judgment by management. Management always makes a judgment on nature and extent of control it wants to implement, nature and extent of risk it is willing to take. Are you clear? Third, lack of understanding purpose of control. We implement control, but the person who is responsible doesn't understand its purpose. Let's take an example. Okay, example would be what? Lack of understanding the purpose of control. You are telling someone you have to call the debtors. Okay, so debtor calling is based on MIS report. So from a system, information system report, from a system you are calling debtors. Okay, you have Mahesh Kumar money pending, Ramesh Kumar pending, Suresh Kumar money is pending. Now that person is not calling only properly. Why? He has not understood his purpose of calling. You have to tell him, oh baby, if you don't call and we don't receive money, one day your job will go. Don't take it so lightly. This control is very effective. Due to this only money will come in the company and out of which you will get salary. So if it doesn't understand the purpose, it will fail. Limitation in case of small entity. In small entity, enough controls are not possible. The turnover is small. Are you clear? And owner only takes care of everything. So when owner takes care of everything, small frauds can happen and you tend to compromise those frauds. Fifth, internal control can only give reasonable assurance. How much ever you put machines to check COVID, okay, no one should enter, we check COVID, okay, we do this test, but still something wrong can happen. In malls, okay, they check entire, that is there, no, systems will check whether you're not carrying gun or any suspicious, but still bomb blast happen in mall. In airports, even after checking so much, wrong things have happened. Internal control will only give you, tell me, reasonable assurance. Okay, collusion among people. What is collusion? Controls can be misused when two or more people come together, or management itself will misuse the control. Example, all the purchase above, all the purchase will be signed by department head and CFO. All the purchase will be signed by department head, but if it is above 1 lakh, it will be signed by CFO. Department head and CFO both come together. Arey, we will authorize fake purchase. Half money you keep, half money I will keep. इसमें तेरा घाटा मेरा कुछ नहीं जाता. Of course it can happen. So collusion. Control can be misused when two or more people come together. Okay, so that is known as collusion among people. Now if they both come together, who can do nothing? Nothing can happen. What are limitations of internal control? Nice, you have to learn this. Judgment in LIC. Judgment in LIC. Judgment in LIC. Human judgment in decision making. Judgment by management. Two judgment over. Human judgment in decision making. Judgment by management. LIC. Lack of understanding purpose of control. Lack of understanding purpose of control. Okay. Internal control can only give you reasonable assurance. Internal control can give you reasonable assurance. See, collusion among people. Collusion among people. Simple. No, two L are there. Okay. So what are limitations of internal control? Two, human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. L. Lack of understanding purpose of control. Limitation in case of small entity. Lack of understanding purpose of control. Limitation in case of small entity. Internal control can only give you reasonable assurance. Collusion among people. Collusion among people. Let's learn it. Human judgment in decision making, judgment by management. Human judgment in decision making, judgment by management. Lack of understanding purpose of control, limitation in case of small entity. Lack of understanding purpose of control, limitation in case of small entity. I. Internal control can only give you reasonable assurance of collusion among people. Collusion among people. I hope you are able to understand. Any doubt? No doubt whatsoever. Perfectly able to understand. Yes, sir. Okay. Start. What are limitations in case of internal control? Judgment in LIC. Human judgment in decision making. Judgment by management. Lack of understanding purpose of control. Limitation in case of small entity. Internal control can only give you reasonable assurance. Collusion among people. Simple. Break 10 seconds. Learn. I think done. Human judgment in decision making. This is judgment by management. Human judgment in decision making. Judgment by management. Lack of understanding purpose of control. Limitation in case of small entity. Internal control can only give you reasonable assurance. Collusion among people. Clear. Done. Now, nature and characteristics are over. Nature is what? Care only. And in that characteristics, what are limitations were also given. Now, control relevant to audit. Tell me which control are relevant to audit. Which control? Following factors to be kept in mind for understanding of control relevant to audit. Now, as soon as we obtain relevant, control relevant, we will obtain their understanding and then components of internal control. Understood? Now, which control are relevant to audit? Following things need to be kept in mind for understanding control relevant to audit. We are not concerned with all control. We are only concerned with those control which are relevant to financial reporting. But they have given few factors. Factors to be kept in mind for deciding control relevant for audit. You don't have to learn this, just understand. Size of entity. Tell me if size of entity is big, more controls will be relevant for audit. Nature of entity, trading, manufacturing, what business it is doing. Based on that, controls will also change. Okay. Nature and complexity of system. Tell me where more controls will be relevant for audit. Murugesh Madlani, virtuals or Reliance? Of course, Reliance complexity is huge. So many business there. We to have only teaching business. Okay. Diversity and complexity of operations. How big the business is. How diverse are their operations. Legal and regulatory requirement. Liquor business versus normal business. In liquor business, more controls will be relevant. Why? Because compliance are many. Okay. Listed company, more compliances. In case of virtuals, no compliance is there. Okay. Circumstances and applicable components. Materiality is there. If account is material, more control will be relevant. Significance of related risk. In that risk, ROMM is high. More control will be relevant. Whether control can prevent or prevent or detect and correct material misstatement. If controls can prevent or detect and correct material misstatement, then they are relevant for audit. Are you clear? So following factors help to determine control relevant to audit. Very simple. Nature of entity, okay, operations of the entity, diversity of operation, legal and regulatory requirement, materiality, significance of risk, whether control can prevent or detect and correct material misstatement. Don't need to learn. I hope you are clear. Okay, rough idea you got. Where controls will be relevant depends. Size of entity is more control relevant. Less nature of the entity, diversity of operation, legal and regulatory requirements, materiality, significance. Hope you understood. In that only, control over completeness and accuracy of information. Is the information complete and accurate? Are those controls relevant? To ensure information is complete and accurate, are those controls relevant? Depends. If auditor uses this information in applying further audit procedure, then relevant, otherwise not relevant. Control over completeness and accuracy of information, just MCQ can come. These controls are relevant if auditor makes use of this information in applying further audit procedure. If it doesn't use those information, then not relevant. Second, control relating to operations and compliance objective. Relevant if auditor makes use of this information in applying further audit procedure. Same point. If auditor uses the data in applying further procedure, relevant, otherwise not relevant. Control over safeguarding of asset. In asset, there are two things: financial reporting, operating of assets. Yes, financial reporting part of asset is relevant. Okay, assets are valued at fair value, cost. Okay, that is important. Auditor's consideration of control is relevant, is limited to reliability of financial reporting. Financial reporting of the asset is important because we will value whether asset is properly valued or not. That is important. But asset is operating properly or not, that is not relevant. Tell me, machine is operating properly or not, not relevant for me. It may be relevant for internal auditor. We are talking from statutory auditor point of view, external auditor, not relevant. Operating of asset is not relevant. Control relating to objectives that are not relevant to audit. Control relating to objectives that are not relevant to audit, okay, those controls are also not relevant. Example, subsidiary making investment, not relevant. We are a holding company. We will care for subsidiary but little only. Their investments we are not concerned. Statute may tell auditor to report on certain control. Then it is relevant. Why? Because we have to report on those control. Example, Caro. Every control or every point related to Caro is relevant. Why? Because we have to report on Caro. Internal controls over financial reporting. All the controls of financial reporting are relevant because auditor has to report under section 143. I hope you are clear. Yes, sir. So again, we'll summarize factors which need to be kept in mind for identifying control relevant for audit. Easy. Here all MCQ. Control over completeness and accuracy of information. Relevant, not relevant. If auditor makes use of this procedure, then relevant, otherwise not relevant. Control over operations and compliance objective. Relevant if auditor makes use of information in applying further audit procedure. Internal control over safeguarding of asset. Financial reporting, operations objective. Financial reporting, operations objective. Financial reporting relevant or not relevant? Financial reporting, how will I know? Are they relevant? Because auditor, see, financial reporting part is relevant, but asset is operating properly, that is not relevant. Control relating to objectives not relevant for audit. Those controls are also not relevant. Statute may tell auditor to report on certain control. Relevant because auditor has to report as per statute. Now, 2 points are done. Nature and characteristics. Control relevant to audit. Now, nature and extent of understanding control relevant to audit. I will understand those control. Very good. Evaluating the design. I will first see the design, whether control is designed properly. No use in checking the control unless it is designed properly. If control is only not good, why to check? Array, tell me this is there. This bucket is torn. Are you clear? Here holes are there. Hole is there. Hole. See, hole is there. Hole. Array, hole. No use in checking. Array, why should I put water in this hole? I know there is a hole here. Okay. No use in checking. No use in putting water on a bucket which is what? Broken. Why? Because anyways we know there is leakage. So we will first check the design of control. If design is strong, I will test the control properly. But if design is only weak, why should I check? Are you clear? I know this boy is not good. Why will I get married to him? I will meet the boy if he is good. Understood? No? Yes. All the girls of South India, come on. Please comment. If you are enjoying lecture, liking lecture, your one comment can give us lot of inspiration in life. Please comment. Please share with your friends if you have found this revision series very useful. We shout like mad. At least expect little response from you. Okay. Like the lecture, love the lecture, share the lecture, subscribe, do whatever you want. Okay. It went. Involves considering whether control can prevent or detect and correct material misstatement. Means control exists. First we will see the design and only then we will check what implementation. RAP, risk assessment procedure, already discussed. See here. Obtaining understanding of control is not sufficient to test operating effectiveness of control. Only understanding is not enough. We need to test the control, but we will test only when controls are good or bad. Good, only then test. No use in putting water on a bucket which already has hole. Unless they are automated control. In automated control, no need to check. Why? Because system is there. If last time they were effective, this time also they will be effective. Good. Now, last part which is the biggest part. Till now, how many parts done? Sir, 3 parts. Purpose and characteristics of control. Control relevant to audit. Understanding of control relevant to audit. In that nothing was there. Now components of internal control. With the help of component, I will know control is strong or weak. Okay. Components has 5 parts. Very nice part. Number 1, control environment, risk assessment, information system including the related business process, control activity, monitoring of control. One more time. First point, control environment. Second, risk assessment, information system including the related business process. Okay. Fourth, control monitoring. Fourth, control activity. And fifth, monitoring of control. One last thing, control environment means what? How we want our controls to be. What is the overall environment? Environment will decide whether control will be strong or not. Control environment. Risk assessment, we will identify and assess which risk is important and which is not. Third, understand the system of financial reporting, information system including related business process relevant for financial reporting. Tally, we are using ERP. Now I will design control to protect from risk, control activity, and monitor whether controls are working properly or not. 5 steps are there. Any one step question can come. Okay. One last time. Control environment, risk assessment, information system including the related business process, control activity, monitoring of control. Understood? Yes, sir. Fully understood. Okay. Let's start. Components of internal control. Number one is what? Control environment. What do you mean by control environment? Control environment sets the tone of organization. How should our control be? Control environment will decide. You walk in a company, security guard will stop you. He will tell, sir, please make entry before going. Control environment is strong. Control environment is the overall environment. It will decide all components of control. If environment is weak, everything is weak. I hope you are able to understand. Yes, sir. Now, elements of control environment. What do you mean by control environment? First one, participation by TCWG. Okay, how is those charged with governance? Are they independent from management? What is their experience? What is their stature? Okay, how they receive information? Do they take action on the information? Sometimes what happens? TCWG and management both are together only. TCWG has to be independent people, those charged with governance. They give direction to the company. Whenever we complain about management, they should take action. If they don't take, company is not good. How experienced they are? Are they just the owners who have come from jail? If they have come from jail, company would also will be in jail only. Understood? We have to see how the TCWG is. How are they independent from management? Whenever we give them any complaint, do they take action or not? Are they independent from management? What are their experience? Okay, they are selected just like that. Okay, second. After that, after TCWG, we have to see management. How is management? Are you clear? Management philosophy, management style, how management manages the risk. What is their attitude towards financial reporting? They will tell just focus on selling, forget financial reporting, journal entry and all is useless. Audit is useless. Means realize nothing is good in this company, all is really useless. Are you clear? So you have to check. Second is management. First is what? TCWG. Second, whom to check? Tell me, baby. Management, sir. Management we will check. Very good, very good. Management approach to taking risk, their actions of financial reporting, how they information processing, how they focus on accounting. Second, third, HR policies and procedure. Policies regarding recruitment, selection, orientation, training, promotion. Is it done based on merit or some other thing? Okay, you do gossiping and you are promoted. What are the HR policies? It is not good control environment. If such things are there, control would be third class. Communication and enforcement of integrity and ethical values. Are management independent people? Are they like Tata? Or are they like Adani's? Are you clear? Adani is not good. Integrity and enforcement, ethical values are not there. You have to check if Adani is there. Then chance of control failing will be more. Control will not be good. But it will be Tata. There is a high chance control can be good. Commitment to competence. Management consideration of competence level for particular job. Are you clear? Do you see competence level or nepotism is there? Automatic Karan Adani became the managing director instead of Gautam Adani. Is it like that? Or there is a right person, right chain? Baby, decide and tell me. Commitment is considered or not? Organization structure. Framework within which activities are planned, implemented, monitored. Plan, executed, controlled and reviewed. What is the framework? Ideally, a very big structure is also not good. 8 levels of hierarchy are there. You can never meet boss. 2 levels are also not good. Medium structure should be there. Okay. Framework within which activities are executed, planned, implemented, monitored. Are you clear? What is the organization structure? Framework within which activities are planned, executed, monitored, reviewed. Planned, executed, monitored, reviewed for achieving objectives. This is to done. Assignment of authority and how authority and responsibility is given. Is it given based on merit? Okay. Or just like that, she is a girl, so let's give work to girls first. Then boys will suffer later on. What the hell? How responsibilities are assigned. Reporting thing is there. Hierarchy is established. Okay. You have to work in particular group only, then control may fail. Or there is independence. Everything you have to see. So control environment, I hope you understood overall environment of the company. If environment is strong, everything will be strong. Simple example, Tata versus Adani. Who is better? Tata's control environment is better. We cannot say controls are good, but there is a high chance it will be good. Adani's environment is bad. Are you clear? We will not say Adani is bad. We will still check the control. But in Adani, rely on control is not possible. I need to test in detail. Okay. Elements of control environment. Memory technique is PC, 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 participation by TCWG. HR policies and practices. Okay. So 2P are done. Participation by TCWG. HR policies and practices. Okay. C. Communication and enforcement of integrity and ethical value. Communication and enforcement of integrity and ethical value. C more. Commitment to competence. Commitment to competence. Comma. O. Organization structure. Management philosophy and operating style. Assignment of authority and responsibility. Too easy. Let's learn first PC. Participation by TCWG, HR policies and practices. Policy, P for policy, PC, comma, PC, comma. Participation by TCWG, HR policies and practices. So PC is done, P is done, sorry. What is C? Communication and enforcement of integrity and ethical values are there in TCWG or not? Okay. Communication and enforcement of integrity and ethical value. Learn till here. PC done. Participation by TCWG done. Okay. HR policies and practices done. Communication and enforcement of integrity and ethical value done. Okay. What is comma? Commitment to competence. Organization structure. Management's philosophy and operating style. Assignment of authority and responsibility. Learn till here. Communication to competence. Organization structure. Management philosophy and operating style. Assignment of authority and responsibility. I hope you are done. Done? Yes, sir. Let's speak two types. You will understand. PC, comma. What is P? Participation by TCWG. HR policies and procedure. Okay. What is C, sir? What is C, sir? Communication. One more time. Participation by TCWG. HR policies and practices. Okay. Then communication and enforcement of integrity and ethical values. Commitment to competence. O. Organization structure. Management philosophy and operating style. Assignment of authority and responsibility. One last time. Participation by TCWG. HR policies and procedure. What is C, sir? What is C, sir? Communication and enforcement of integrity and ethical value. Comma. One more C. Commitment to competence. Organization structure. Management's philosophy and operating style. Assignment of authority and responsibility. Any doubt? Any doubt? Any doubt? No doubt, sir. No doubt, sir. No doubt, sir. Perfect. Okay. Now this first point is done. Control environment. Risk assessment, very, very simple. Auditor shall obtain understanding of whether entity has a proper risk assessment process. Number one, identify the business risk relevant to financial reporting. Estimate the significance of the risk. Assess the likelihood of risk and take steps to reduce the risk. Very simple. See, what is risk assessment? Identify which risk is important, which is not. How do we identify probability and impact? For all risk, probability multiplied by impact. Probability, impact. Whichever has high probability impact, those are material risk. Okay. Identify the business risk relevant to financial reporting. Identify risk relevant to financial reporting. Assess the likelihood of risk, means probability. Assess the impact of the risk and take steps to reduce the risk. Simple. In risk assessment, only 4 steps are there. Identify business risk relevant to financial reporting. Assess the likelihood of risk. Assess the impact of risk. Take steps to reduce the risk. Simple. Learn. 5 seconds. Done. Auditor shall obtain understanding of risk relevant to financial reporting. Second, assess the likelihood of risk. Third, assess the impact of risk. Take steps to reduce the risk. So simple, baby. Over. Now, information, third point. Information system including the related business process relevant to financial reporting. We will obtain understanding of what? Information system including related business process relevant for financial reporting. In short, information system relevant to financial reporting. Which information system are you using? Tally or ERP? Tally or ERP? Depends. Auditor shall obtain understanding of information system including related business process relevant for financial reporting. Number one. Class of transactions that are significant to the financial statement. Which all accounts are significant? Okay. Is sales significant? Purchase significant? Identify class of transactions that are significant to financial statement. Second, procedure by which the transactions are initiated, processed, recorded, corrected, and transferred to general ledger. Procedure by which such transactions are initiated, recorded, processed, corrected, and transferred to general ledger. Very simple. Number one, class of transactions that are significant. What is significant? Purchase, sale, debtor, creditor, fixed asset. All significant accounts identified. Number one, class of transactions that are significant to financial statement. Procedure by which such transactions are initiated, recorded, processed, corrected, and transferred to general ledger. First you initiate, record, process, correct, and transfer to general ledger. Related records supporting information and accounts that are used to record the transaction. Related records supporting information and accounts used to record. So all the supporting documents behind sales, lorry receipt, invoice, okay, contract, etc. Next, controls surrounding journal entry. Same point, controls of journal entry. Financial reporting process used to prepare financial statement. What is the reporting process? Source document, journal, ledger, trial balance, and last, how system capture event and condition that are significant to financial statement. This is a different point. How system capture event and condition. What is event? Maybe subsequent events after balance sheet date. Okay, condition means what? Contingent asset, contingent liability. How system capture event and condition that are significant to the financial statement, notes to accounts, etc. So only four or five points are relevant. Number one, class of transactions that are significant to the financial statement. Understood. Second, procedure by which such transactions are initiated, recorded, corrected, and transferred to general ledger. Okay, all the supporting information and documents used to record these transactions. Next, control surrounding journal entry. Financial reporting process used to prepare financial statement. How system capture events and transaction that are significant, events and condition that are significant to financial statement. Very simple. See, you have to obtain understanding of tally or ERP. Why? Because if there are risks there, of course risk will be there in transaction. Very simple. Information system including related business process relevant for financial reporting. Less chance of coming, but let's close this. See, class of transactions that are significant. Procedure by which such transactions are initiated, recorded, corrected, and transferred to general ledger. All the related records and information used to record such transaction. Controls surrounding journal entry. Financial reporting process used to prepare financial statement. How system captures event and condition. What is event? Subsequent event. What is condition? Contingent asset, contingent liability that are significant for the financial statement. Read once, exactly break of 30 seconds. Done. 1, 2, 3, start. Class of transactions that are significant in the financial statement. Procedure by which the transactions are initiated, processed, recorded, processed, corrected, and transferred to general ledger. Okay. Then all the related records and information used to record such transaction. Controls surrounding journal entry. Financial reporting process used to prepare financial statement. How system captures events and condition that are significant to financial statement. Points to be kept in mind for understanding financial roles and responsibility. Means in finance department, who all are there? Their roles and responsibility we need to understand. Why? If they are not good, controls will not be good. Oh yeah. Understanding roles and responsibility. Communication by entity of understanding roles and responsibility of all the people who are responsible for internal control over financial reporting. Whoever is responsible for finance department understand their roles and responsibility. If they don't know, okay, communication may take the form of manuals. Policy manuals are there. This is what is expected of you. This is what is your work. Okay. Number one, understanding roles and responsibility. If they don't know, policy manual and financial reporting manual is there. Third, understanding relation of activity. How work of one is related to another. If he will not work, he will also not work. So they need to understand that all works are related. So they will work in better way. Unless journal entry is passed, how the hell will see a senior approve it? So first passing entry is must. Only then approving can be done. I hope you are clear. Understanding roles and responsibility. If they don't know, policy manual are there. Understanding relation of activity. Open communication channel. Any doubt is there, you should directly tell the person. If open channel is not there, tell me what will happen. Entire system will lapse one fine day. Are you clear? So any problems are there, open channel, I can directly go and meet CFO. I can tell him this problem is there, so it can be sorted at earliest. Otherwise, what will happen? People at bottom or medium will keep on doing fraud. No one will know. Less structured and easier for smaller. In small entity, there is no such thing. Are you clear? Because there is one person only who is taking care of everyone. There are only 4 people in a company, and there is one finance head who takes care of all the 4 people. So greater visibility is there. I can clearly know if anything wrong is going on. Are you clear? Okay. It is easier and structured due to fewer levels of responsibility and management, and our greater visibility and availability of management. Very simple. Understanding of roles and responsibility. If they don't know, okay, there is policy manual. Third, understanding relation of activity. Open communication channel. Less structured and easier for smaller entity. Okay. So understanding roles and responsibility, 5 points. Understanding of roles and responsibility. If they don't know, policy manual. Understanding relation of activity. Open communication channel. Less structured and easier for smaller entity. Learn nicely. Then understanding of role and responsibility, policy manual, open communication channel, less structured and easier for smaller entity. Understood? Yes, sir. Now, next, control activity. What is control activity? All till now 3 points are done. Number 1, don't forget. Don't forget. What is the first point we discussed? Okay, control environment elements. Then second, risk assessment. Third, information system including related business process relevant for financial reporting. Now, control activity. Auditor shall obtain understanding of all the control activities related to audit. Control activity are policies and procedures by which risks are reduced and objectives are achieved. Whether IT or manual controls, we need to check everyone. Which controls are relevant for audit? Those controls which are related to significant risk and for which substantive procedure alone do not provide sufficient and appropriate evidence. See, whichever significant risks are there, those controls are relevant for audit, or those that are considered to be relevant in the judgment of auditor. Following points help in determine which all are significant risk. Why I need to identify significant risk? All the controls related to significant risk will be relevant to audit. Okay. Number 1, following 4 are always significant risk. Remember, always fraud related party, non-routine judgmental matters, fraud related party, non-routine judgmental matters. Are you clear? See, which controls are relevant to audit? Controls that relate to significant risk are relevant for audit. And second, those that are considered to be relevant in the judgment of auditor. See, whichever, forget everything, okay? Forget everything. Which controls are relevant for audit? That relate to significant risk. If the ROMM is high, those controls are relevant for audit. I need to test those controls. Are you clear? So, tell me, following are always significant risk. Don't forget, 4 are always significant. Number 1, if it is a risk of fraud. Second, related parties always a significant risk. Why? Because we will never know how much related parties are there. Okay, and if we know also, wrong things happen in related party only. Fraud, related party. Third, non-routine transaction. Fourth, judgmental matter. Non-routine transaction, judgmental matter. Understood? We will of course discuss. Auditor should keep in mind following while identifying significant risk. Whether it is a risk of fraud, whether it involves a related party, whether it involves significant risk of transactions that are outside the normal course of business. I already told you, non-routine transaction. Complex transactions, degree of subjectivity in measuring the information, or where there is significant change in accounting or other development like law, regulatory requirement change, accounting requirement, schedule 3, schedule 6, revised schedule 6. Are you clear? Those keeps on changing. First AS was there, then Ind AS came. Okay, IFRS will come in future. Understood? Then these are significant risks. Now remember, if you did not understand anything, which controls are relevant for audit? Control that relate to significant risk. 4 are always significant risk. Which one? Fraud, a related party. Second, risk of material misstatement due to fraud. A significant transaction with related party that are outside normal course of business. Risk of material misstatement is greater for non-routine transaction. Can you give few example of non-routine? Number 1, scrap sale. Non-routine transaction. Scrap sale of 25 crore is there. We need to check controls. Why? Because it can be significant risk. Non-routine transaction. Research and development. Because it comes only few times. Are you clear? Non-routine transactions these are. Scrap sale. This sale and lease back. You selling the asset and lease back the asset. These are significant risks. Are you clear? Because these are non-routine transactions. Judgmental matter. Judgmental matter is what? Fair value of asset, judgmental matter. Actuarial valuation, judgmental matter. Life of asset, judgmental matter. Rate of depreciation, judgmental matter. Are you clear? So, which controls are relevant for audit? Control that relate to significant risk. Okay, following are always significant risk. Number one, fraud. Number two, related party, non-routine transaction, judgmental matter. Fraud, related party, non-routine transaction, judgmental matter. And one more add to this. Okay, significant change in accounting, development or regulatory requirement. Significant change in accounting or regulatory requirement. These five are always significant risk. Remember. So, which controls are relevant for audit? Control that relate to significant risk. Five are always significant risk. Number one, fraud, related party, non-routine transaction, judgmental matter, significant change in accounting and regulatory requirement. Last, monitoring of controls. Controls to are implemented. Why do I need to monitor? To check the effectiveness of control. Are you clear? I need to check whether it's effective or not. CCTV is there, but we still see the footage. People are not doing wrong. Monitoring of control. ID password is there, but after 3 times wrong entering my ID password, it will be blocked. Monitoring of control. Are you clear? Helps in assessing the effectiveness of control on timely basis. To check whether controls are properly operating or not, we need to monitor the control. And if they are not proper, take remedial action. CCTV not working, CCTV you have put, not working, you need to change it. Number one, monitoring of control is there to check effectiveness of control. Second, helps in assessing the control on timely basis. Management accomplishes monitoring through ongoing evaluation, separate evaluation or both. Ongoing means you are seeing the ongoing footage of CCTV. After that, sometimes those CCTV is there. You personally visit, separate evaluation or combination. Ongoing evaluation are inside, separate evaluation. Management monitoring includes. It also includes information from external party. Sometimes you come to know from outside party that this wrong is happening in the company. Customer may complain us. Are you clear that this control is lapse? In case of small entity, management monitoring of control is often accomplished by. In small entity, the owner is only there. He will only monitor everything. So you don't need strong controls. Are you clear? Okay. He will identify the variances and lead to remedial controls or actions. Are you clear? Number one, monitoring of control as defined helps in assessing the effectiveness of control on timely basis. Management accomplishes through ongoing evaluation, separate evaluation or combination. Management monitoring includes also external party complaint or third party complaint or customer complaint. And last, in case of small entity, very simple, 5 points are there. Helps in assessing the effectiveness of control. Monitoring of control is defined, helps in assessing effectiveness of control. Management accomplishes monitoring through ongoing evaluation, separate evaluation or combination. Management monitoring includes, and in case of small entity, very simple. I hope it is easy or it is very easy. One last time. Monitoring of control is defined. Monitoring of control on timely basis. Management monitoring includes, are you clear, or accomplishes through ongoing evaluation separate. It includes, and last, in case of small entity. 5 points are there. Number one, monitoring of control is defined. Okay, helps in assessing effectiveness of control on timely basis. This is so easy. Management accomplishes through ongoing evaluation, separate evaluation or combination. Management monitoring includes, and last, in case of small entity. With this, all 5 points are over. High chance that control environment elements may come. Control environment, risk assessment, information system including the related business process relevant for financial reporting, control activity, monitoring of controls. Now, evaluation of internal control by auditor. Now, I understood the control. Are you clear? After understand, I will evaluate whether it is good or not. If it is good, I will test the control. So there are 3 steps in control. First, understand, evaluate, test. Understand, evaluate, test. Understand, evaluate, test. What is the first step, sir? Understand the control. What is the second step, sir? Evaluate the control. What is the third step, sir? Test the control. Okay. So understanding we did. Now we will evaluate the control. Formulate audit program after understanding the control. See, why I need to make, what is audit program? Series of step auditor will perform in every account. Why I need to do this only after understanding control? If controls are good, I will check less steps. If controls are weak, I will check more steps. Understood, sir? After understanding control, we need to review and evaluate control. Auditor can use any methods to review or evaluate the internal control. 4 methods are there, very simple. What is narrative record? in this, in MS Word we will write this is how system works. Okay, it is complete description and exhaustive description of system as found in operation by the auditor. Actual testing is necessary before I write anything about the system. It is good where there is no formal system in place. In case of small entities, narrative record is there. Narrative record is auditor will write in paragraph form, maybe 1 or 2 pages of entire purchase system works in this way. It is good where there is no formal system. With the help of writing, he will understand the system better and he can see whether controls are strong or weak. Very simple narrative record. Check it out. Complete and exhaustive description of system as found in operation. But testing is necessary before he writes. If he wants to write purchase process, he need to test the process. Good in cases where there is no formal system. Good only for small business. Exactly opposite is flowchart. Graphical representation of entire system. It gives bird's eye view of entire system. So in case of big companies, flowchart are already prepared. If not prepared, auditor can prepare. Okay. From this you can easily identify your problem is there in control. So here I need to design more procedure or less? More, sir. It gives bird eye view of entire system. In EIS we have flowcharts. If you are looking for best lectures of EIS, no solution is there. It is also necessary for auditor to identify the significant features done by the business. Very simple. Most best way of recording the system. It gives bird's eye view of entire system. From starting to end, I can understand exact entire system. It is necessary to see the business done by the company. Are you clear? So to record. Number one, narrative record flowchart. Narrative record flowchart. What's it? Checklist. Checklist is series of question or member of auditing staff will prepare according to the client. Okay, so based on client, he will prepare series of question. In purchase, I will ask this question. In sales, I will ask this question. So it is a on-job requirement done by member of auditing staff. Okay, based on the client requirement, he will prepare customized checklist. In this, the answer will be yes, no, not applicable. Yes, no, not applicable. If control is strong, yes. If control is weak, no. For every no, you have to give a reason also why the control is like this. Are you clear? It is on job requirement and it is based on what? Based on desirable elements of control. It is a customized checklist is there for every client. Different member of auditing staff will prepare. After going in the company, will decide that here I need to ask this question. What is ICQ then? Comprehensive series of questions are there about every area. It is not customized. It will include all the possible questions. But auditing staff will not fill. Client will fill. We will send this to client. They will fill entire data and give it back to auditor. Then auditor will go through the entire data and ask clarification from the client if required. Answer is in yes, no, not applicable. Yes, control is strong. For every no, we have to give explanation why there is a weak control. Comprehensive series of question. Widely used information. It is most widely used. MCQ can come most widely. ICQ. Internal control questionnaire. For collecting information about existence operation. It is issued to client and client gets it filled by its staff. Okay. From staff, it will again go back to the auditor. Then member of auditing team can visit or ask few questions if they want. All inconsistencies are discussed with client employee. Then auditor will prepare report of deficiencies and recommendation. Very simple, 4 methods. Which is the best one? Cannot say. Complete paragraph form, narrative record, diagram form, flowchart. Member of auditing staff will fill based on after going in the company based on requirement is known as what? Is known as checklist. But they will only fill, client will fill it, member of auditing staff will not fill. Very detailed series of questions are there and then those are forwarded to auditor. Then auditor can clear the doubts by going to client's place or discussing with client's employee. ICQ, internal control questionnaire. So based on any of these 4 methods you can adopt to understand and evaluate the controls. Are you clear? What will I get by evaluating control? Nice question. Benefits of evaluation of internal control. What do I get by evaluating internal control? I will know adequate internal control system is in use and operating as planned. Whether effective internal audit department is there. Number one, I will know, see if controls are good, adequate internal control system is there. Second, whether effective internal audit department is there. Last time also controls were weak, this time also weak and nothing is there in internal audit report. Means internal auditor are third class, enjoying chance pe dance marele. Effective internal audit department is there, I will know. Areas where control is weak and where excessive. Sales it is too good, purchase it is too bad. Extent and depth of examination he needs to do in different areas. Now in sales if it is bad, he needs to check in detail. Purchase it is weak, he doesn't need to check in detail. I hope you are understanding. Extent and depth of examination he needs to carry in different areas. What would be the audit technique and procedure in the given circumstances? Tell me. In sales, controls are good, it will be rely on control. In purchase, it is weak, it is not rely on control. Whether control can safeguard the assets, if controls are good, they can safeguard. Whether error and fraud are likely to occur, if control is good, it will not occur, otherwise occur. Whether worthwhile suggestion can be given to improve the control system or not. If weak, you can give, otherwise no. What are benefits of evaluating internal control? We will remember 6 points, more than enough. Start. Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is operating. Read 2 points. Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there or not. Learn this much. Done. What are benefits of evaluation of internal control? Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is operating. Clear. Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there or not. Next, very simple. 3 points. What are the areas where control is weak and excessive? Extent and depth of examination we need to carry out in different area. Depends on first point only. Where controls are strong, depth would be less. Where controls are weak, depth would be more. Areas where control are strong and weak. Extent and depth of examination he needs to carry out in different areas. Whether what would be the audit technique and procedure in the given circumstances. So all three are same points. If controls are good, rely on control strategy will be there. If not good, not rely on control. Read 3 points are same. Then what are the areas where control is weak and excessive? Extent and depth of examination he needs to carry out in different area. What should be the audit procedure and technique in the given circumstances? Simple. 5 points are done. Whether control can safeguard the asset, whether errors and frauds are likely to be located in the business, and whether worthwhile suggestion can be given to improve control system. Again, break 10 seconds. Done. Yes, sir. Perfectly done. Let's speak. What are benefits of evaluation of internal control? I will know after evaluating internal control whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there or not. Areas where control is strong and where it is weak. Extent and depth of examination I need to carry out in different areas. Are you clear? What should be the audit procedure and technique in the given circumstances? I hope you are clear till here. Clear till here. Break 5 seconds. See, these are linked points. Whether adequate internal control system is in use and operating as planned. Whether effective internal audit department is there. These two are done. Okay, very good. Areas where control is strong and weak. Extent and depth of examination we need to carry out in different area. What should be the audit technique and procedure in the given circumstance? Last three also simple. Whether control can safeguard the asset. Whether errors and frauds are likely to be located in the normal course of business. Whether worthwhile suggestion can be given to improve the control system. Easy it is, sir. Yes, sir. Yes, sir. Speak from here. Break 10 seconds. Exactly 10. Done. Fully done, sir. Fully done. Absolutely done. Okay, we will speak then. Areas where control is. Chalo, start. What are benefits of evaluation of internal control? Whether adequate internal control system is in place and operating as planned. Second, whether effective internal audit department is there or not. Areas where control is strong and weak. Extent and depth of examination he needs to carry out in different areas. What should be the audit technique and procedure in the given system? Whether control can safeguard the asset. If they cannot safeguard, error. Whether error and fraud are likely to be located in the normal course of business. Whether worthwhile suggestion can be given to improve control system. I hope you are clear. Yes, sir. Next, almost on the verge of ending, guys. Oh my God, how did you find this chapter? Sir, till now to very easy ho. Hey, very easy ho. Hey, concentrate. Testing of control. Tell me first, I will understand the control or evaluate or test. First understand, then evaluate with the help of 4 methods. Flow, chart, narrative, record, ICQ, question. ICQ and question are same, checklist will come. Okay. Flow, chart, narrative, record, ICQ. Flow, chart, narrative, record, ICQ, checklist. Why I forget checklist every time? Oh, sorry. Yeah. Test. I will test the control. After understanding control, it's the time to test, baby. Do. I will test whether controls are nice or not. Testing is done on selective basis. I will not perform TOC on all accounts. Okay. First, this year I will do purchase sale. Next year I will test controls of operating expense and maybe payroll. Then next year I will do in such a way that all accounts are covered in 3 years. Understood? Test of control. Why do I need to test the control? Array control is good, but I still need to test whether it is operating effectively throughout the period. It is good, but it may be good during 3 months, not during 9 months. So I need to take samples of all 12 months already covered in last chapter to test the operating effectiveness of control. Control is good, but is it operating throughout the period or not? That is why we need to test the control. Control design can be good, it is good, but throughout the period, through 12 months, it is operating properly or not. That is TOC. For this, we have already discussed for TOC. If I want to test the control, will I see the documents? Yes. Seeing documents is inspection. Will I ask two people whether discount is given only by store manager? Inquiry. Reperformance is what? Auditor's independent execution of procedures which were performed as part of entity's internal control. They are saying depreciation is this much. I will also calculate depreciation and see it is really this much or not. That is reperformance. Auditor will again reperform that procedure. If I get the same figure, my comfort would be high or low. High you are saying, wrong, very high. Are you clear? Okay. In control, I will check 3 things. Already discussed how they were applied, by whom they were applied, consistency with which they were applied. I hope you are clear. Simple. If satisfactory control environment means there is no fraud. If good family is there means fraud will not happen. Wrong. Control environment is good. It gives me reasonable assurance that control will be good. But I still need to test the control. How much ever Tata is good, can Tata also do fraud? Yes. Adani can do more fraud. Adani's control environment is weak. TCWG is weak. Management double weak. Are you clear? So, existence of good control environment is a positive factor when auditor assesses risk of material misstatement. However, it may reduce the fraud. But a control environment good is not an absolute guarantee that there will be no fraud. Control environment in itself cannot prevent or detect and correct material misstatement. It will give me assurance controls can be good, but not 101% assurance. Okay, sir. Materiality and audit risk are inversely related. Very simple. Okay. Materiality and audit risk. If more materiality is there, tell me what is materiality and audit risk? Audit risk is ROMM, risk of material misstatement. Whenever there is high risk of material misstatement, more chance of error, materiality will be low. Why? Because I need to check all the mistakes. But whenever there is less risk of material misstatement means less mistakes are there. My materiality would be higher. Why? Amount would be higher. Materiality is the amount above which we will check everything, below which we will not check. Already discussed in chapter 2. I hope you know. Materiality and ROMM are inversely related. Whenever risk of material misstatement is high, materiality is set at lower level. Whenever risk of material misstatements is low, materiality is higher level. Why? Because there are no misstatements only. I hope you know this. If you don't know, that chapter it is discussed. Whenever there are more chance of mistake, lower amount would be set. So all mistakes above that will be corrected. Whenever risk of material misstatement is what? Lower, there are less mistakes. There are no mistakes only, but still we need to check. But we'll not check everything. Little only check because we know there are no mistakes. Or even if we find mistakes, those are not material. Okay. But still we should check everything. No, sir. Hey, we don't have unlimited time. I have to do lot of clients, baby. Oh, yeah. I am busy person. I am CSR. Very good. Internal audit. Oh my God. Last few topics. Are you ready? Are you excited? Yes or no? If you want, you can take break of 2 seconds. Welcome back. Okay. Section 138. Don't forget 138. Internal audit. What is difference between stat audit and internal audit? External audit is stat audit which is done once a year. What is internal audit? Let me explain. Earlier companies were very small. Yeah. But now companies have become very big. So management and TCWG doesn't have time. Or TCWG doesn't have time to review everything. Okay. Or management also doesn't have time. So management has decided SOP. They have made SOP. What is SOP? SOP, Lux SOP? No. Standard operating procedure. For purchase, this is the procedure. For doing sale, this is the procedure. For recruitment, this is a procedure. For paying salary, this is a procedure. For giving leave, this is a procedure. Standard operating procedures are there in every company for every process. As auditor, what will standard operating procedure say? What to do, when to do, who will do, okay, what time he will do, who will do the work, what he will do, how he will do, when he will do, who, which, when, how, where, who will do the work, which work he will do, how he will do, when he will do, where he will do. Everything is decided in the form of SOP. What is SOP? Standard operating procedure. For every department are there. Now, management has designed this procedure. So, management itself cannot check. Otherwise, it will be biased. You only write paper, you only check, too much fun. So, there is an independent person who will check whether these SOPs are followed or not. Standard operating procedure. It is the work of internal audit. Statutory auditor is only concerned with one thing. What? FS. What is FS? Financial statements. Internal auditor is not concerned with financial statement, but all department, purchase, sale, expense, income. Are you clear? Yes, sir. Absolutely clear, sir. What is internal audit? It is an independent management function. Okay. So one last time I will explain. There are SOPs everywhere. Standard operating procedure of purchase, sale, inventory. Management has only designed, so they cannot check. So auditor will check whether the standard operating procedure are followed. Statutory auditor is only concerned with one department, finance department. Internal controls only of finance, but internal auditor is concerned with everything. Okay. So it is the work of internal auditor to check the standard operating procedures. If they are proper, company will work in a nicer way. What is the work of internal audit? It is an independent management function which involves continuous and critical appraisal of functioning of entity. They will check functioning of entity, okay, with a view to suggest improvement, add value and strengthen, overall governance mechanism of the entity. Overall company should be managed in proper way. Governance means control, including risk management and internal control system. Are you able to understand? Yes or no? Yes, sir. What is internal audit? It is an independent management function which involves continuous and critical appraisal of functioning of entity with a view to suggest improvement, add strength and strengthen overall governance mechanism of the entity, including risk management and internal control system. Very simple. What is internal auditor? It is an independent management function. It is an independent person, independent management function, which involves continuous and critical appraisal of what? Functioning of an entity with a view to suggest improvement, and strengthen overall governance mechanism of entity, including risk management and internal control system. Is it simple? No, because it is very simple. What is internal audit? It is a definition. Don't remember if you don't know, but try. Independent management function which involves continuous and critical appraisal. Appraisal means review of functioning of entity. Why do I see? With a view to suggest improvement and add strength. To overall governance mechanism of the entity. Overall governance is proper, including risk should be managed, including risk management and internal control system. What is risk management? Risk should come to tolerance level, acceptable level, and internal control system is proper or not. One last time read. 15 seconds break. Try. What is internal audit? It is an independent management function which involves continuous and critical appraisal of functioning of an entity with a view to suggest improvement, add strength and strengthen overall governance mechanism of the entity. Governance means everything should be managed in proper way, including risk management and internal control. Risk management should be low, risk should be low, and control should be strong. Understood? Okay. So, to whom internal audit is applicable? Is it applicable to everyone? No. It is applicable to listed companies, unlisted public companies. See, public company are two types: listed, unlisted. Listed public company, everything applicable. Why? It is people's money, baby. You cannot take chance. Everything applicable. Listed. In unlisted public company, to whom it is applicable? That is a wonderful technique. But first, let's read criteria. Deposits are 25 crore or more at any point of time during the preceding financial year. At any point of time in February 8th, your deposits were 25.1 crore or exact 25, internal audit applicable. Any point of time. But sir, during the March, so I repaid those deposits. Any point of time. Okay. Deposits are 25 crore or more at any point of time during preceding financial year. Second, paid up share capital is 50 crore or more during preceding financial year. So paid up share capital is seen at the year end only. Borrowings. Borrowings are more than 100 crore, not equal to, only more than 100 crore at any point of time during preceding financial year. But why internal auditor applicable? Whenever you borrow from someone, you can do fraud. You can do fraud. So internal auditor applicable. Are you clear? Why deposits? Why deposit point? Whenever you take deposit from some people, it is your responsibility to maintain deposit. Not do wrong. Trust the deposit holder. Okay. Value the money of that. So internal audit applicable. Turnover is 200 crore or more at any point of time. How can turnover be more at any point of time? Turnover will be more during the year end only, no, because turnover is plus. Oh yeah, it will be added, so more. Understood. Turnover is 200 crore or more at any point of time. Sorry, during the preceding financial year. Only two things are at any point of time: deposit, borrowing. Deposit, borrowing. Other two are during preceding financial year. In unlisted company, there is one technique. The PBT goes on doubling. 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 What is the deposits are 25 crore or more at any point of time? Okay, the P paid up share capital is more than or equal to 50 crore during preceding financial year. Borrowings are double of 50 is 100. Borrowings are 100 crore, more than 100 crore, not equal to, more than 100 crore at any point of time during preceding financial year. Turnover is 200 crore or more during preceding financial year. If any one is also applicable, internal audit applicable. Why? Because you can do little fraud, we need to take care of you extra. Statutory audit plus internal audit. Now you cannot do fraud, oh baby. Okay. Understood? The PBT goes on doubling. The PBT goes on doubling. What is deposits? Deposits are 50 crore, 25 crore or more at any point of time during preceding financial year. Okay, the P paid up share capital is more than 50 crore during preceding financial year, more than or equal to. PB borrowings are more than 100 crore during any point of time, and turnover is more than 200 crores, okay, during preceding financial year, more than or equal to. In all equal to is there except borrowing. Now, if you are private company, only BT is there. BT goes on doubling. BT goes on doubling. What is BT? Borrowings and turnover. I hope you are clear. Yes, sir. Same criteria. Borrowings are in borrowings equal to is also written here. It is wrong. Only greater than. In borrowings, only greater than will come. Okay. Great. Not equal to. Who can be internal auditor? Internal auditor, of course, can be chartered accountant. Yeah, I can be there. I can be there. Or engaged in practice or not. If you are not holding COP, also you can do internal audit. Such other professionals, CS can also do, CWA can do, MBA can do, lawyer can do. Anyone, internal audit is allowed. Why? Because statutory audit is our monopoly. Internal audit is not there. He may or may not be employee of the company. As per section 138, who can do internal audit? Chartered accountant holding COP or not. Any other professional, CS, MBA, lawyer, are you clear? He may or may not be the employee. So what are three things in internal audit? Come back to definition. Internal audit is continuous and critical appraisal of functioning of entity with a view to suggest improvement and add strength and strengthen overall governance mechanism of the entity, including risk should be less, risk management and internal control system. Understood? Same things are given. Your governance, risk management and internal control. So first thing is governance. Internal auditor will check companies governed in proper way. TCWG is proper, their independence from management is proper, their decisions are proper, external and internal auditors are proper, overall communication is proper, integrity and enforcement of values is proper. I hope you understood. Okay. Overall, you will see everything should look proper. Okay. Activities relating to what? Governance. Okay. May assist governance in accomplishing objectives on ethics and value, performance, communication, appropriateness of TCWG, management, the relationship with auditors, 100 things. I hope you understood. Risk management. Here I will identify and assess the risk and see they are within the tolerance level. Identify and assess the risk and see they are within tolerance level. Are you clear? Okay. Activities relating to internal control. I will evaluate internal control. Whether internal controls are strong in purchase, sales, etc. Examination of financial and operating information. If in any account I find deviation, I will go in detail. Production there is a mistake, I will check in detail. Doob jaun teri. Understood. Are you clear? May be recognized to review and identify, recognize and make specific inquiry in detailed item, testing, balances, etc. Operating activities are proper or not. Everything is operating properly or not, economy, effectiveness, and compliance with laws, rules, and regulation. So, inside internal control, there are 4 points. First, internal auditor is basically concerned with 3 things: governance, risk management, internal control. Governance, risk management, internal control. That is in definition only. Activities relating to governance, activities relating to risk management, activities relating to internal control. In internal control, 4 points: evaluation of internal control, examination of financial and operating information, review of operating activity, compliance with laws, rules, and regulations. If you don't remember, see, activities relating to internal control, that evaluation of internal control, you remember. Activities relating to internal control. In that, of course, I will check internal control now. Yes, evaluation of internal control. Then CFO. What is C? Compliance with laws and regulation. What is F? Review of financial and operating information. What is O? Operating activity. Easy? Easy, easy, easy. Yes, sir, yes, sir, yes, sir, yes, sir. So, activities relating to internal control. Review of internal control. Then CFO. Compliance with laws, rules, and regulation. What is F? Review of financial and operating information. O. Review of operating activity. Simple. CFO. Check it out. Review of compliance with laws, rules, and regulation. Review of financial and operating information. Review of operating activities. So simple. So tell me, internal auditor is basically concerned with 3 things: activities relating to governance, activities relating to risk management, activities relating to internal control. In that, review of internal control, CFO. Next, review of compliance with laws and regulation, review of financial and operating information, and last, review of operating activities. Too good, sir. Thank you. Done. Last chart is there. What is internal financial control? Internal controls are controls of all department: purchase control, sale control, marketing control, HR control, payroll control. But controls of only finance department are internal financial control. Sir, tell me 5 controls only of finance. Audit, budgets, segregation of duty, authorization, logs are maintained. These are only finance department controls. Are you clear? Review of work, audit is there, internal audit, all these are journal entry controls. Are you clear? These are only finance department controls. So what is IFC? Policies and procedure adopted by company for orderly and efficient conduct of business, including PASTA. First, you remember internal control. What is difference between internal and internal financial control? What is internal control? Controls of all department. Policies and procedure adopted by company for orderly and efficient conduct of business. Okay. What is internal control? Policies and procedure adopted by management, TCWG, and employees to achieve reasonable assurance with regard to CAP. Those were internal control. Compliance with laws and regulation, safeguarding of asset, review of reliability of financial reporting, effectiveness and efficiency of operation. I hope you remember. 100% remember, sir. Now come here. What are internal financial control? Policies and procedure adopted by company for orderly and efficient conduct of business, including pasta. Yeah, pasta eating? No, this pasta. Okay. Policies and procedure adopted by company for orderly and efficient conduct of business, including pasta. Prevention and detection of fraud and error. Adherence to company's policy. Safeguarding of assets. Timely reporting of important financial information. A. Accuracy and completeness of accounting records. Simple. See, these all are only finance department control. What is difference between internal control and internal financial control? Internal control are controls of all department. Internal financial control are control only of finance department. Policies and procedure adopted by company for orderly and efficient conduct of business, including pasta. Prevention and detection of fraud and error. Adherence to company's policy. Safeguarding of assets. Timely preparation of financial information, accuracy and completeness of accounting records. Very simple. One last time. Policy and, if you remember well and good, otherwise okay. Policy and procedure adopted by company for orderly and efficient conduct of business, including PASTA, prevention and detection of fraud and error, adherence to company policy, safeguarding of assets, timely preparation of financial information, accuracy and completeness of accounting records. Hey, wow. Yeah. Read nicely. Break 5 seconds. Done. Tell me, prevention and detection of fraud and error, adherence to company's policy, safeguarding of assets, timely preparation of important financial information, accuracy and completeness of accounting records. What is internal financial control now? Tell me. Internal financial control. Okay. That already told, no sir. Now remember, auditor doesn't have to report on all control. Earlier we were only responsible for financial statements. Now we are also responsible for internal control, but not all. Internal control over financial reporting means only finance department controls. Last time I am teaching you 3 things and chapter is over. Internal control, all department. Internal financial control, controls of finance department. When auditor will check those control, it is known as internal control over financial reporting. Auditor is not concerned with all controls, only internal controls of finance department. When auditor will check finance department control, it is known as internal control over financial reporting. Section 143.3. 143. I love you. What is one? I. Love is 4-letter words of 4. You is 3-letter. I love you section. 143.3. Requires auditor to state whether adequate internal financial controls are in place and operating effectiveness of control. We are not concerned with all control. Auditor has to report adequate internal financial control is there. Audit is working properly, internal audit. Okay. Review is working properly, budgets are properly set, segregation of duty is done. We have to check adequate, okay, verification of assets is done. We have to check adequate internal financial controls are there and effectiveness of control, whether they are operating throughout the period or not. Two things are there, having a control and operating. You are watching this lecture or studying, only watching is having a control, but studying effectiveness of control. So auditor has to check two things, adequate internal financial control is there and operating effectiveness of control, whether it is working throughout the period. Auditor has to express an opinion on internal controls over financial reporting along with audit of financial statement. He doesn't have to report on all control. He has to report on internal controls over finance department, over financial reporting. Three things. Internal control means control of all department. Internal financial control means control only of finance department but from management perspective. When management will implement control, it will tell IFC, internal financial control. When auditor will check those control, he will tell internal control over financial reporting. Internal control over financial reporting. It is carried along with audit of financial statement. Requires board to report on all internal financial control with reference to financial statement. Board has to report on all internal financial controls. I hope you are clear. They have to report that internal financial controls are proper or not. But when auditor will report, it is known as what? Internal control over financial reporting, meaning same. Last time, three things. Control of purchase, sale, marketing, HR, internal control. When management will implement financial control of finance department, it is known as internal financial control. When auditor will check those control, it is known as internal control over financial reporting. So these days, auditor is not responsible for only financial information, also responsible as per section 143.3 on internal control over financial reporting, that is of finance department internal control. He has to check whether controls are there and their operating effectiveness of control, whether they are operating effectively or not. I hope you are clear and I hope you enjoyed this complicated chapter as much as I did putting it up forward for you. If you like our lectures, if you like our hard work, please give a thumbs up. It will motivate us very, very much to prepare even better videos, work even harder. Do share with your friends, okay? Do consider subscribing India's #1 channel. We will keep on bringing positive, unlimited motivation and every possible content so we can make this CA journey very easy for you. Thank you so much. Do take care of yourselves. Bye-bye. Love you. Very, very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, continuing with the Maha Marathon Revision series on all chapters of CA Inter Auditing. Today, it's the time for chapter number 11. A very easy chapter, very nice chapter. Stay tuned, okay? We are going to make it amazingly easy for you and you are going to enjoy this chapter. Chapter number 11. One more thing, these are just revision lectures. These are in no way substitute to the regular or fast track lectures. Let's start right away. Chapter number 11. Enough of audit done. It's the time to give report. So chapter 11 is about audit report. Okay, let's start without wasting any time right away. Yes guys, where are you doing this revision from, sir? See, this is the chart. It is done from our magic book. If you don't know what is magic book is truly magical, in which entire syllabus is covered in 86 to 90 pages. Okay, if you wish you can take hard copy of the same. If you don't wish, you can do it from here as well. Let's start right away without wasting any time. Wonderful chapter. It's one of the nicest and easiest chapters. Can we start? Yes sir. SS 700, forming an opinion and reporting on the financial statement. Tell me, two things are there. Do we have to form an opinion or report? Sir, do both. If we only form the opinion but don't report, what is the use? Are you clear? So number one is forming an opinion. Number two, reporting on the financial statements. Okay, let's start. Why this essay came? If you don't understand why this essay came, let me tell you. Okay, earlier everyone used to use different formats for reporting. So someone will use this format, someone will use different format, someone will use third type of format as per their wish they used to use. SS 700 said, close this masti, we want to do grand masti, and they introduced one common format for all. Now everyone has to follow same format. Okay, you are anywhere, these are international standard, US, UK, France, China. Okay, everywhere, not only in India but in the world, same format should be used. So it will bring what? Consistency and comparability, and I can do comparison very easily. I can compare with my firm or other firm, both. I can also compare with my firm. Last year my reporting was different, before that last year different, so I could not compare. Now every time same format will be there, so I can compare with myself. I can also compare with my peer company. Example, Tata Motors is there, okay, Hero Honda is there, Bajaj is there, okay, now MG Hector is there. All these people can compare because everyone has same format of audit report. I hope you understood me. Okay, so this will bring, number one, what is the objective of SS 700? To form an opinion on the financial statement based on evaluation of conclusion drawn from evidence obtained. Tell me one brief order. First of all, what is there? You perform lot of audit procedures. On audit procedure, you get what? Audit evidence. Based on audit evidence, you draw conclusion. So what is this? To form an opinion based on evaluation of conclusion drawn from evidence obtained. So this will do what? This will help us in forming an opinion on the financial statement based on evaluation of conclusion drawn from evidence obtained, and to express that opinion clearly through a written report. We don't only have to make an opinion. You are going to see a girl, okay, you went to see that girl, you are like, no, but I will not tell whether girl is good looking or not. Dad, I don't know whether shall we get married or not. Then why the hell are you doing? You are just going to see the girl but not giving report. So same way, we have to get, first of all, get a evidence, okay, and then express that opinion clearly through a written report. So two objectives are there of this essay: to form an opinion on the financial statement, okay, based on evaluation of conclusion drawn from the evidence obtained, and to express that opinion clearly through a written report. I hope you are clear. Very clear, sir. What is the purpose of this essay? It is aimed at bringing consistency in comparability and consistency in audit reporting. Earlier, there was no consistency. Why? I only used to follow different formats, or everyone used to follow different. So I cannot compare with maybe Bajaj Auto. I cannot compare with Hero Honda. I cannot compare with what any other Mercedes. Now I can compare with everyone. I am Tata Motors, I can compare. It will aim at bringing, number one, consistency, number two, comparability in audit reporting globally. Two, it will increase the value of auditor's report by making it more relevant to the user, because user also knows this is the format we have to follow. Every time this format will be there, he will understand better. It will increase the value of auditor's report by making it more relevant to the user. Clear? It is aimed at bringing consistency and comparability in the audit reporting, and helps in increasing the value of auditor's report by making it more relevant to the user. Start. Now, in this, there is a format, basic element of auditor's report. In every auditor report, this 13 points should come. We have to understand this point, of course. Also learn this point, of course. Okay. So all 13 elements should come. In every auditor's report, 13 points should be there. Can we start? Yes, sir. So this, in this, nothing is there, only this much is there. Yes. This essay is only the format of audit report. Everyone has to follow these 13 points. Compulsory. You are anywhere in India or abroad, you have to follow these 13 points. Are you clear? These are of course Indian essays, little bit may change, but basic thing of formatting would be same. Okay, number one should be title. It should state it is the report of an independent auditor. Okay, because if title is not there, hello Mahesh, hello Kirtika, hello Suresh, hello Kamal Gant, are you clear? If your name is only not there, how we will call you? So first of all, name should be there. Anushri, are you watching it? Are you clear? So same way, title. 4 or 5 children are there, we cannot tell please come, which child will come? So title should be there. Tell me in title what should be there? Report of an independent auditor. Shall we continue? Second, addressee. It is required by circumstances of engagement. Addressee, to whom to address depends on the engagement. Example, sometimes the report is only prepared for board of directors. Sometimes the report is, for example, normally the report is only for what? Shareholder. I hope you are able to understand. So, addressee will be decided by circumstances of engagement. Sometimes fraud report is there. SEBI has told you have to prepare a fraud report, do investigation audit. Then this report is only addressed to one person. Tell me who? Regulators. Are you clear? But normally statutory audit report is always towards the shareholder. So you have to say that it is addressed for whom. Number one, title. For whom? Okay, usually it is for shareholder, but sometimes it can be only for board of directors. Some report can be only for regulator. Some government has told you to do audit, so it can be for government. Title and to whom we are addressing. Third, auditor's opinion. It should say, see, no beating around the bush. Earlier, what was given? First, basis of opinion. On this basis, we have given the opinion. Close. We don't want time pass. We directly want what is the opinion. Are you clear? Because 99% people are not interested in reading rubbish things. They only want to know which opinion is there. There are 4 opinions: unqualified, qualified, adverse, disclaimer. Unqualified, qualified, adverse, disclaimer. Okay, opinion. So I will write opinion and then write identify whose financial statements have been audited. State that the financial statements have been audited. Okay, number one, identify entity. So I will write we have audited the financial statements of Reliance. Second, state that the audit has been done. Okay, identify title of each statement comprising financial statement. You have to write title of each statement. We have audited balance sheet. Okay, P&L. Then we have audited cash flow statement, statement of changes in equity, notes to accounts. 5 things are there. Okay, P&L, balance sheet, notes to account, statement of changes in equity and cash flow statement. Refer to notes also give reference to notes. And last, specify the date or period covered by each statement comprising financial statement. Example, P&L is for the year, balance sheet is as at. Are you clear? P&L is over a period of time, balance sheet is as a point of time. Okay, so you have to write the period covered. So in balance sheet we will write as at 31st March 2023. In P&L we will write from 1st April 2022 to 31st March 2023. Very simple. In opinion you have to write which opinion it is. Then identify the entity whose financial statement are audited. State the fact that the financial statement are audited. Identify title of each statement comprising the financial statement. Also give reference to notes. Also give the period covered by each statement comprising financial statement. Nothing great. Basis of opinion. On what basis you have given this opinion? You have to write this also. Audit was conducted as per essay. Second, refers to section of auditor's responsibility that states auditor's responsibilities under essay. We have also followed this responsibility. Number one, audit was done as per essay. And give a reference to a section which specifies auditor's responsibility under essay, which we will learn. Continue. State that auditor is independent and it has followed relevant ethical requirement and code of ethics issued by ICI. Very important. Auditor is independent and has followed all the ethical requirement and code of ethics issued by ICI. So auditor is independent and ethical requirements are followed. Ethical requirements already discussed in chapter 1, ICOP. Integrity, confidentiality, objectivity, professional competence and due care, professional behavior. If you don't remember, okay. Auditor also believes that we have obtained sufficient and appropriate audit evidence for purpose of forming audit opinion. Simple? Yes, sir. Excuse me. Start. What is basis of opinion? Audit was conducted as per essay. Section. Refer to section of auditor's responsibility that states auditor's responsibility under essay. Auditor is independent and has followed relevant ethical requirement and code of ethics. Whether auditor believes he has obtained sufficient and appropriate audit evidence. Very simple. As per essay, section of auditor's responsibility, auditor is independent and is following the relevant ethical requirement, and auditor believes he has obtained sufficient and appropriate audit evidence. Simple? Yes, sir. Now, till now, how many points are done? Very simple. 4 point. Title, addressee, opinion, basis of opinion as 4 point. Okay, you don't have to learn, but briefly understand. See what 4 points are there. Audit was conducted as per essay. Auditor is independent and has followed ethical requirement. Auditor's responsibility and whether he has obtained sufficient and appropriate audit evidence. Going concern. Auditor has to state that going concern is valid or not valid. He has done going concern testing as per SA 570, about which we have already learned in chapter number 3. So going concern. Till now, how many points are there? 5. Title, addressee, opinion. On what basis you have made? Basis of opinion. Going concern. Then key audit matters. Key audit matters, separate essay is there, 701. We will learn in this chapter only. But briefly, I will explain. Key audit matters are those matters that in auditor's judgment are most significant for audit of financial statement, and users should have knowledge of that. Okay, those matters which took most of our time, which are most significant, top 5 matters, these are written in key audit matters. Okay, as of now, did not understand, forget it. Key audit matter. Then responsibilities of management. Tell me, 7th point is, what are management responsibility? Number 1, to prepare financial statement. Number 2, internal control. Number 3, assess that entity will continue as going concern. 3 responsibility management has. Number 1, preparing financial statements as per FRF. Okay, you have to prepare as per schedule 3. Okay, prepare financial statements as per FRF. Second, internal control as is needed for preparation of financial statement. We have followed all internal controls in preparing financial statement, so they are free from What is Not Murugesh Madlani, material misstatement. Okay, assess the entity's ability to continue as going concern. Entity will continue as going concern, they have to assess. This auditor will not assess. First they will assess, then I will check. Okay, understood. Tell me, 3 point. Prepare the financial statement as per FRF. Second, internal controls as necessary to ensure that financial statements are free from material misstatement and entity's ability to continue as going concern. 3 responsibilities of management: preparation of financial statement, internal control, assess the entity's ability to continue as going concern. Till now, 7 points are done. All are easy. Title, to whom you are addressing, opinion, basis of opinion, going concern, key audit matter, responsibilities of management. Now, a bigger point, responsibilities of auditor. Auditor's responsibility for audit of financial statement. Sir, management responsibility to given. Hey auditor, what is your responsibility? Yeah. I will tell her. Okay. In this, there are 3 points. Auditor's responsibility shall. Then they have given shall, further. Here they have given also shall. Understood? 3 parts it is divided. Shall further, also shall. Oh, too much fun. Yes. Auditor's responsibility shall ensure that auditors have obtained. State, objective of auditor is to obtain reasonable assurance that the financial statement are free from material misstatement. Unlimited times this word has come. Now, issue a report that includes. Now they will explain reasonable. See, what is our main objective? They are just reminding the section of auditor's responsibility shall state that the objective of auditor is to obtain reasonable assurance that the financial statement are free from material misstatement. Now, reasonable assurance is high level of assurance but not a complete assurance, because complete assurance we can never give. Why? Inherent limitation of audit, already studied multiple number of times. Okay, there are limitations of audit discussed in chapter 1. Reasonable is a high degree of assurance but not a complete assurance that auditor will always detect material misstatement. Misstatement can arise from fraud or error. They can be considered material if they influence the economic decision of user. Nothing is there. The auditor's responsibility shall include that auditor will give reasonable assurance. Nothing. They have just given the objective of auditor is to give reasonable assurance that the financial statement are free from material misstatement. Then they explain reasonable assurance. Reasonable assurance is a high degree of assurance but not a complete assurance that the financial statement are free from material misstatement. Simple. Misstatement can arise from error or fraud. This they explain. But we have to identify all misstatement or material. Material. Nothing is there. Simple, I want to tell you. They have explained 2 words. See, first, objective of auditor is to get reasonable assurance that financial statements are free from material misstatement. What is reasonable assurance? Reasonable assurance is a high degree of assurance, but not a complete assurance. In English, we call it reasonable assurance. Okay. Now, come to material misstatement. Misstatement can arise from error or fraud, but we have to identify all misstatement. No, 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 no. Only material misstatement. Simple. So they explain two words: reasonable assurance, material misstatement. This we just have to read. Okay. Auditor's responsibility for audit of financial statement shall understood, shall further, what further shall? State that the audit was done as per essay. Auditor has exercised professional judgment and professional skepticism. Audit was, here audit process we have to write. Very simple. Audit was done as per essay. Auditor has followed professional judgment and professional skepticism. What is professional judgment? Everywhere there is a professional judgment involved by evaluating all the estimates. Okay. What is skepticism? Okay, you have to stay alert, being alert to circumstances that there can be possible misstatement due to fraud or error. Are you clear? You should have a questioning mind that fraud can happen. Or it was done as per essay, and auditor has exercised professional judgment and professional skepticism. Now, describe an audit by stating auditor's responsibility. Now, they are describing what all we do in audit. Already done everything in audit, we just have to read. Our work is to identify and assess risk of material misstatement and perform audit procedure for the risk. Already understood. Wherever risk of material misstatement is high, audit procedure would be high. Second, obtain understanding of internal control relevant to audit. Not only obtain understanding, but we also have to comment on those internal control, IFC, if you remember, internal financial control. Auditor will not only obtain understanding but also report on internal financial control as per section 143.3. I have to report on two things, okay? Whether controls exist and operating effectiveness of control. But not all control, internal financial control. That is what they have given. Evaluate on appropriateness of accounting policy and accounting estimate. You have to see accounting policy, accounting estimates are normal. We also have to see management's assessment of going concern is appropriate or not. They have told going concern is valid, but if not valid, you have to check. You are auditor. Next, whether financial statements are prepared as per FRF. Are you clear? Financial reporting framework. To evaluate overall structure and context. Using the work of another auditor, indicating the extent to which we are using another auditor's work. Understood? Okay. Nothing great. Very simple. See, audit was conducted as per essay and auditor has exercised professional judgment and professional skepticism. Then they have just described, we have to find out ROMM. We have to obtain understanding of internal control. To make an opinion on internal control. We not only understand, but we also have to report as per IFC, internal financial control. Appropriateness of accounting policy. Management assessment of going concern. Are you clear? And financial statements are prepared as per FRF using the work of another auditor. Next is what? Auditor's responsibility. Oh, shall further. See, shall further, also shall. In this point, we have to understand only one TCWG, those charged with governance. Tell me, we tell everything to TCWG? No, we have to tell them significant deficiencies in internal control. Normal deficiency is there in internal control. Few controls are not working. I can tell to management. But if the probability and impact is high, it is a significant deficiency in chapter 6 it had come. I have to tell to whom? TCWG. State that the auditor communicates with TCWG regarding scope and timing of audit, significant audit finding and any significant deficiency in internal control. State, auditor has provided TCWG, it has complied with all ethical requirements. Okay, I will tell TCWG I have complied with all ethical requirements. And key audit matters also I will communicate with TCWG. Clear? So, three things I will tell to TCWG. Number one, significant deficiency in internal control. I have followed all ethical requirements. Are you clear? And independence requirement. And third, key audit matter. So, I will tell with TCWG. What I also shall, number one, tell TCWG about all significant deficiencies in internal control. Wherever I have complied with all independence and ethical requirement and key audit matter, about which we are yet to study. So till now 8 points are done. Inside these three were there. Shall further, also shall. In shall only two words. Reasonable assurance, material misstatement. Shall further, professional judgment, professional skepticism and then process. And then also shall TCWG. In that TCWG 3 points were there. Tell me, what was the first point in TCWG? I will tell TCWG about significant deficiency. What was the second point? I will tell to TCWG, I have complied with relevant ethical requirement. And what is the third point? Key audit matter. Layout of description of auditor's responsibility. Okay, auditor's responsibility for audit of financial statement as required shall be included. See, auditor's responsibility are too bulky. Very big it is actually. 3-4 pages it can go on to. So, where to write? You can write in auditor's report line wise only 1 to 8 points, so 8 points in the body. Second, appendix to auditor's report. You can say in the end, appendix means in the end page you can write, okay. In 8th point you can write, refer to this appendix, appendix 1. And then people can read that within appendix of auditor's report, in which we have to give reference to the appendix, okay. And third, by specific reference, within auditor's report, by specific reference, location of description of website of appropriate authority. You can also write in company's website that auditor's responsibility are these, okay. So at 3 place, number 1, within the body of auditor's report. I don't like within the body. You can write in appendix to auditor's report or website of appropriate authority where law or regulation permits. So if it permits, then we can write in the company's website also. Why? Because many people are not interested in reading all this. Why to make the report bulky? Why to make the report boring? Understood? Okay. So at 3 place. Number 1, I can write in independent auditor's report. I can write where? If I don't like independent auditor's report, I can write in appendix to the report. Or third, website of appropriate authority where law or regulation permits. Understood? Now, other reporting responsibility. Many times in every country, main reporting responsibility understood, but we have to report as per the law. Example, in India, CARO is there. Okay, for banks, long form audit report is there. Several other compliance requirements are there. So, if there are any other reporting responsibility other than SA required by law or otherwise, it will be mentioned here. And what heading we will give? Reporting on other legal and regulatory requirements. You can check all these things in Reliance report also. We do it live. Are you clear? So all these points are there. Number 1, okay. If there are other reporting responsibilities like in India are there required by law or regulation, we will write reporting on other legal and regulatory requirements. So for example, in India, we have to report as per CARO. We have to give for bank long form audit report. All this will also come. Very simple. Other reporting responsibility. Now last 3 are very simple. Signature, place, date. Signature, place, date. Signature, place, date. What is signature? You have to sign. If you are signing report in your own name, you will write your name, your registration number or your membership number and sign. 3 things. If you are signing in your personal name, you have to write your name, your membership number and signature. If you are writing in the signing in the firm's name, then you also have to write, okay, firm registration number. What you have to write? Firm registration number. Okay. Report is signed personal name where firm is appointed. Personal name of auditor and name of firm. Okay. So if you are appointed in your personal name, only 2 things: your name, your membership number, sign. If you are signing in firm's name, ABC Associates, ABC is signing. Then ABC Associate, firm registration number, your name, your membership number. In case of firm, membership number is not there. FRN is there. Firm registration number. You have to mention. Very simple. If you are signing in your name, membership number, firm name, firm registration number, member and membership name, members number. Are you clear? Membership number and sign. Place of signature: Mumbai, Ahmedabad. Where are you signing? Chennai. Audit report shall be signed. Specific location, city in which report is signed. Signature, date, signature, place and last date. Date on which report is signed. Okay. But remember, we have obtained management representation should be obtained before signing the report. If you are getting management representation after signing the report, what is the use? Understood? Okay. Simple. 3 points. Signature, place, date. If you want, I can show you. And which page it is, we have to check it out. Here they will give. $297. See, all points are given. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Are you clear? Just showing you. Now see here. This is joint audit. So what they've given? Number one, form, chartered accountant, firm registration number, then partner name, partner, membership number. UDIN is digital signature these days. Digital signature. Place, date. Simple. Okay. Now we'll learn this. Very simple. Okay. In 1 second we will learn. Start. So 13 points are there. We will learn how much? 7, 8. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Till here clear. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Learn till here. Done. Title, addressee, opinion, basis of opinion, going concern, key audit matter. Very simple. Responsibility of management, responsibility of auditor. Responsibility of management, responsibility of auditor. Auditor responsibility is too big. So you can also write somewhere as layout of description of auditor's responsibility for audit of financial statement. Layout. You can write in body of auditor's report or appendix to auditor's report or website of appropriate authority, law or regulation permits. Simple. Layout of description of auditor's responsibilities of management, responsibilities of auditor, layout of description of auditor's responsibility. Next, other reporting responsibility if required. In every country this is different. In India we have other reporting responsibility. Okay. Last three are simple. Okay. Very simple. Signature of auditor, place, date. Signature of auditor, place, date. Signature of auditor, place, date. Very simple. So now remember balance. After 6, 7 to 13 you have to remember. Done. Chalo, one last time. Title, addressee, opinion. Title, addressee, opinion. Basis of opinion. Going concern. Kem cho? Majama. Key audit matter. After key audit matter, tell me what will happen. Responsibilities of management, responsibilities of auditor. As they are too big, layout of description of auditor's responsibility for audit of financial statement. Other reporting responsibilities. Okay, last three are very simple. Okay, 1, 2, 3. Tell me what is one? Signature of auditor, place of signature, date. Signature of auditor, place of signature, date. Very simple. Now come to second essay. In this lot of essay are there. 700 we are going to discuss. 701, 705, 706, 710. Enjoyment. This was the most boring one. Now all are interesting. Start. Modification to opinion in independent auditor's report. Very easy essay. Before we start this, if you understand this, majority essay is over. Now, there are 4 types of report. Unqualified, qualified, disclaimer, adverse. Unqualified, qualified, disclaimer, adverse. What do you mean by unqualified, qualified, disclaimer, adverse? Everything is perfect. No mistake is there. Financial statements are prepared as per FRF. Mistakes are there also, but they are not material. Unqualified or clean report. When misstatements are there, but they are in 1-2 areas only. Effect is not pervasive. It is not spread across different account and different assertions. Okay. Mistake is there in debtors. Mistake is there in fixed asset. Mistake is that the depreciation is not charged later. Okay. These misstatements are material, I know, but they are not pervasive. So qualified report will come. See what is written. Financial statements are materially misstated. Qualified. Why? Because effect is not pervasive. Okay. Now come here. If effect is spread everywhere. Okay. For example, one branch trial balance is only not included. Means tell me one branch trial balance is not included. It will affect asset, liability, income, expense. Everything. Adverse report will come. Are you clear? Or second example. Mistakes are in cash and bank, land and building, plant and machinery, furniture and fixture. Okay. Also in inventory valuation. Also in repairs and maintenance are wrongly capitalized. Lot of mistakes are there. Effect is spread everywhere. Okay, all account, all assertion. Fraud is there. Effect is everywhere. Very nice example I will take, you will understand in 1 second. Going concern is not valid. Still, financial statements are valued at cost. If going concern is not valid, financial statements should be valued at NRV, but they are still valued at cost. So, effect is not material, it's pervasive also, adverse. Material and pervasive. What is pervasive? Effect is spread across multiple account and multiple assertions. If going concern is not valid, financial statement should be valued at NRV. But every account is valued at cost. So, effect is in all account, everything. Okay, so adverse. Now, when you don't obtain evidence, they are saying you can check everything, but you cannot check one debtor. One debtor, except that debtor all is good. That effect is material, but it's not pervasive that affects all account. Qualified opinion. Whether you get evidence or don't get evidence, okay? If you feel misstatements are material but not pervasive, qualified. Get evidence, then also qualified. Not get, then also qualified. But if material misstatements are there, effect is not pervasive, okay? Disclaimer: accounting records are only not there. Are you clear? They are saying records are burnt. They are saying that records are with income tax authority. They are saying records are with GST. I was only engaged to do audit. I could not do audit. So disclaimer opinion. Why? I am disclaiming my opinion. I cannot form an opinion. But I feel misstatements can be material and pervasive. Why? Because I have not audited only. So I feel it can be material and pervasive. So if you have not got evidence but only in one area, if effect of death is material but not pervasive, qualified. If you have not got evidence in all area and you feel effect can be material and pervasive, can be, disclaimer. I hope you understood. One last time, everything perfect, unqualified. Mistakes are there, but they are material but not pervasive, not spread to different account, different assertions, qualified. Effect is material and pervasive, adverse. Okay, we have not got evidence but only in one area, otherwise all is good, qualified. We have not got evidence in any area because records only they don't have, disclaimer. I hope you are clear. If you understand this, essay is easy. Modification to opinion in independent auditors report. There are 4 reports: unqualified, qualified, disclaimer, adverse. What is modification? Modification is very simple. When you don't issue clean report, so you will issue 3 reports: qualified, disclaimer, adverse. Very simple. Let us read. Qualified is issued when auditor, after obtaining evidence, concludes there are misstatements without seeing tell. There are misstatements which are material but not pervasive. Second, auditor is unable to obtain audit evidence but concludes misstatement could be material in debtors. Are you clear? Because main debtor information not obtained but not pervasive. Still qualified. So in qualified, 2 things are there: evidence got or not got. Material is there but not pervasive. Understood? Okay. Adverse. Auditor issues adverse when having obtained sufficient and appropriate audit evidence. You know that there are misstatements, they are material and pervasive. See, I forgot to tell one thing. If you tell them to correct misstatement and they correct, then clean will only come because they have corrected it. If they don't correct only, then these reports will come. Okay. Misstatements are material and pervasive. Adverse will come. Material, yes. Pervasive, yes. Disclaimer. Auditor is unable to obtain sufficient and appropriate evidence to form an opinion, and he concludes there can be misstatements which are material and pervasive. Why can be? Because he has not audited. Okay. So this. Other consideration when you give adverse or disclaimer opinion. Okay. Whenever, see, whenever, very important MCQ. Whenever you give adverse or disclaimer opinion, you cannot give separate opinion on any one set of financial statements. See, inside financial statements, 5 things are there: balance sheet, P&L, notes to accounts, cash flow statement, statement of changes in equity. You are saying adverse means entire financial statements are showing wrong view. You are saying disclaimer means you have not audited only, you could not form opinion. Then you cannot say that P&L is good. Are you clear? If you say this person is bad, then you cannot say his attitude is good. Baby, bad is bad only. First you insulted, now you are correcting. Too much fun. English. When auditor issues adverse or disclaimer opinion on financial statement as a whole, auditor's report shall not include unmodified opinion with respect to same financial reporting framework on single financial statement or one or more element of financial statement. Means if you have given adverse or disclaimer report on financial statement as a whole, you cannot give separate report on what? On on single set of financial statement or one or more specific elements. You cannot say that in holding subsidiary, holding company is bad, but this subsidiary is good. Are you clear? No. You are auditing CFS, consolidated financial statement. Or better example, 5 things are there. You are saying it is adverse report, but P&L is good. Wrong. Are you clear? Now, consequence of inability to obtain sufficient and appropriate evidence due to management imposed limitation. Sometimes what happens, due to management limitation, we are unable to get sufficient and appropriate audit evidence. Due to management limitation, then what you will tell? For example, you are telling, okay, management, I want to go to Australia to check this plant. I want to go to Australia to check this plant. Are you clear? Or please tell me, get me debtor confirmation of Hansen. Okay, now one party, B party, give me debtor confirmation of B. Management is saying that that confirmation will not come because that debtor very busy, he doesn't send, he's busy. Okay, are busy for auditor also? Yes, yes. Okay, so if the auditor is unable to obtain sufficient and appropriate evidence due to management imposed limitation, we will tell management, Mahesh Kumar, please tell them to send debtor confirmation, please. If management is not agreeing, we will go to the dad of management, TCWG, those charged with governance. If management refuse, auditor shall communicate to TCWG and see whether we can perform alternate procedure. Example, debtor confirmation you are not getting, you can see credit sale, or you can check with inventory if that inventory is already sold. Okay, anything. So number one, if management limitation is that, request management. If they don't agree, ask TCWG, baby, will you help me? No, I will also not help. After that also, if auditor is unable to obtain sufficient and appropriate evidence, he asked management, management does not respond. TCWG, they also did not respond. Alternate procedure also I cannot do. Then what I will do? I will see effect of that misstatement is material but not pervasive, then qualified report. Material but not pervasive. If I feel effect is material and pervasive, effect could be material and pervasive, then I will resign from the audit if not prohibited by law. If prohibited, then I will have to stay in the audit and issue disclaimer report. Understood? Sir, not understood. English. Only 4 steps and over. Whenever management will impose a limitation on you, tell me, what will you tell? Management impose limitation. I am auditor. I am very famous. I understood. Okay, management is imposing limitation on you. Tell me what you will tell. Tell management to remove the limitation. After management did not remove, you talk to TCWG. Hey, please, you remove the limitation, please. TCWG is also not cooperating. Then we will see whether we can perform alternate procedure. That also we cannot do. And we feel misstatements are material but not pervasive. Qualified report. We feel the effect can be material and pervasive. Resign from audit if allowed by law. If not allowed, issue disclaimer report. Means they want 99% you should not issue disclaimer report. But still, if nothing is in our hand, we will issue. If it is too late, we have to issue. Okay. In early stages of engagement, maybe you can withdraw. Otherwise, you cannot. Nice question. Display of material misstatement on the basis of nature of material misstatement. Okay. How to display material misstatement? You have to write specific amount in the financial statement. Whatever misstatement is there, example, land and building is overvalued by 50 crore. Okay. Second, depreciation is undercharged by 30 crore. Okay. In inventory valuation, there seems to be overvaluation to the extent of 80 crore. Include description and quantification in the financial statement unless impracticable. If it is not practicable, auditor shall write in basis of opinion paragraph, it is not practicable to find out exact amount. So number one, write specific amount. Narrative disclosure. In basis of opinion, you have to write how disclosures are misstated. Example, they have written net worth is eroded, but actually net worth is eroded 4 times. Means they have misstated. It has not eroded. You have to write that it is eroded 4 times. Where? In basis of opinion. Number one, specific amount in the financial statement. Number two, narrative disclosure. Non-disclosure. Non-disclosure also you have to write in basis of opinion that this related party are non-disclosed. These are new cases on the company, they have not disclosed. Disclose non-disclosure with TCWG. Describe. If they disclose it, very good. If they don't write, I will write in basis of opinion paragraph, nature of omitted information. So 3 things. How many things, guys? 3. Display of material misstatement on the basis of nature of material misstatement. 3. Specific amount in the financial statement. Narrative disclosure, non-disclosure. Specific amount in the financial statement. Narrative disclosure, non-disclosure. Explain or understood. Understood. Three things. Display of material misstatement 3. Number 1, specific amount in the financial statement. Narrative disclosure, non-disclosure. Specific amount in the financial statement. Narrative disclosure, non-disclosure. With this, essay 705 is also over. Now we'll move on to another essay. Very easy. Easy is there. 700. Forming an opinion and reporting on the financial statement. 705. Modification in independent auditors report. 706. EOM and OM in independent auditors report. What do you mean by EOM and OM? I am unable to understand. Can you please tell? Emphasis of matter paragraph and other matter paragraph in independent auditors report. See, why did this essay come? Three reasons. Audit report earlier were very boring. They were very mundane. 99% people felt that auditor only issues clean report. Whatever happens, they don't work only. So there was a huge pressure on auditors report, auditing profession. That is why they were telling that remove only audit, because auditor does nothing. Every time he issues clean report, people stopped reading the report. Audit reports were boring. Okay, no one liked doing audit, or no one read audit's report. Finally, just to show people, increase the transparency, make reports more communicative, okay, interact with shareholder, tell them auditing how much hard work is done. These all new set of essays have come, which we will discuss now. Okay, so it is there to increase the value of auditor report, to make communication more better. What are these essay? 706 EOM and OM in independent auditors report. Why did this essay come? So we can make the audit report more interactive. We can communicate in a better way. We can talk in a nicer way. I hope you are clear. Objective of auditor: to draw attention by way of clear communication to matter, although appropriately presented or disclosed, is of such importance that it is fundamental to users' understanding of financial statement. As appropriate, any other matter that is relevant to users' understanding of audit, auditor's report, or auditor's responsibility. In 1 minute over, very easy. Come here. I will speak definition of both and you will understand very easy. What is EOM and OM? Emphasis of matter paragraph is a paragraph in independent auditor's report. This too I know. About a matter that is appropriately presented or disclosed in the financial statement, but is necessary for users' understanding of financial statement. Okay. See, EOM is any part which is already there. Emphasis of matter paragraph is we are emphasizing on one thing in the financial statement which is appropriately presented or disclosed, but in auditor's judgment is necessary for users' understanding. I want to tell user, please look at this, please. Please, I want to emphasize on that part. It doesn't mean that I am issuing qualified report, but I just want to emphasize. Example, anything, any aspect of financial statement, be it balance sheet, P&L, cash flow, statement of changes in equity, notes to accounts. If anything is there, I want to highlight that, I will write in EOM paragraph, which comes after basis of opinion and before key audit matter. But that is not in syllabus. Now read definition. A paragraph in independent auditor's report that refers to a matter which is appropriately presented or disclosed in financial statement that in auditor's judgment is necessary for users' understanding of financial statement. This thing is already written here, but user, I still want to tell you. Are you clear? It is a thing which is already mentioned in independent auditor's report, but that in auditor's judgment is necessary for users' understanding of financials. I still want to tell you. Can you give 5 examples? Why not? Number 1, new legal cases are there on the company. Already given in notes to accounts, okay? But still, please read. I want you to tell that 4 new cases are filed on the company. Second, asset, liability, income, expense have increased due to acquisition of company. This year we acquired 2 big companies due to which it has increased. So although all this is there, but I want user to emphasize and understand that we have done audit in nice way. You emphasize everything has not increased because company has improved operations. It has increased because of acquisition. Turnover has decreased, okay, everything, asset, liability, income, expense decreased. Why? We have sold the entity, okay, we have sold a major division. So this all is in EOM paragraph. What is EOM? Emphasis of matter paragraph refers to a matter that is appropriately presented or disclosed in the financial statement that in auditor's judgment is necessary for users' understanding of financial statement. Very simple. EOM, emphasize. I want to emphasize. Emphasis of matter paragraph is a paragraph in independent auditor's report that refers to a matter that is presented. Presented means first floor. Disclosed, notes to accounts, presented or disclosed, that in auditor's judgment is necessary for users' understanding of financial statement. Lots and lots of examples are there. I already took many. Sales have reduced due to COVID. Change in accounting policy. Change in inventory method. Simple. Okay. What is other matter paragraph? Other matter paragraph refers to a paragraph, okay, which refers to a matter not presented or disclosed in the financial statement. Other matter paragraph is a paragraph in independent auditor's report that refers to a matter not presented or disclosed in financial statement, but that in auditor's judgment is necessary for users' understanding of three things: audit, auditor's responsibility, auditor's report. This paragraph is not given, okay, it doesn't refer to any matter which is there in the financial statement. It is a other matter, but still I want to tell you so you understand audit better, auditor's responsibility better, auditor's report better. Without any matter of financial statement, what is such thing? Example, last year audit was done by another auditor. It has no relation with financial statement, but I want to tell you, in last year if any fraud is there, I am not responsible. Last year audit was not done. I am appointed this year only. Okay. Audit of few branches is done by another auditor. Audit of 5 branches we could not do this year. This doesn't refer to the thing which is presented or disclosed, but still I need to tell. So they understand the audit better, auditor's report better, auditor's responsibility better. Come here. However, auditor's opinion is not. A paragraph included in auditor's report that refers to a matter not appropriately presented or disclosed in financial statement, but according to auditor's judgment is necessary for users' understanding of audit, auditor's responsibility, auditor's report. I hope you understood. Audit, auditor's responsibility, auditor's report. With this, I can understand audit better, auditor's responsibility better, and auditor's report better. I took example, few branches not audited, last year not audited, last year audited by another auditor, few branches audited by another auditor, 8 subsidiaries audited by another auditor. Okay, reporting on more than one set of financial statements. I am reporting on both AS and IFRS. This report is only for board of directors. All such things are there. Over. When auditor include emphasis of matter paragraph, auditor shall include the paragraph in separate section after basis of opinion it comes. That is not in our syllabus. Maybe in final we'll have. Okay, with appropriate heading EOM. So where you have to show after basis of opinion, emphasis of matter. I am emphasizing on this matter. This matter is already there in financial statement. But baby, I want you to look at it better. Better. It should give clear reference to the matter being emphasized and where that will be found in financial statement. This matter is in page number this. Are you clear? Clear emphasis should be there. And also indicate I am not modifying opinion. I am not giving qualified report. But I just want you to see this. Because this is a significant matter that has occurred and as user you should know. When auditor includes other matter paragraph. Okay, where does that come? It should include separate heading other matter paragraph. It comes after reporting on other legal and regulatory requirements. Just for your knowledge. Not required actually. Before reporting on other legal requirements. So in that is the title, addressee, opinion, basis of opinion, going concern, key audit matter, responsibility of management, responsibility of auditor. Now after that other matter will come. Responsibility of auditor, after that other matter, and then reporting, other reporting responsibility. Not relevant. Okay, forget. Very simple. If you did not understand in 1 minute over, if there is any 5 things in the financial statement, what 5 things? Balance sheet, P&L, cash flow statement, statement of changes in equity, notes to accounts. I want to emphasize in any of the 5 things. Are you clear? I will issue what? EOM, full form. Emphasis of matter paragraph. Any 5 thing I want to emphasize on any one matter, EOM paragraph. Anything outside the 5 things, are you clear? If I want to emphasize that last year audit was not done by me, I am reporting only to board of directors. Are you clear? A subsidiary audit is not done by me. Last year unqualified report was there. Forget. I want to refer to any other matter outside these 5 things. Other matter paragraph. So one last time. Any out of the 5 things I want to emphasize, EOM paragraph. Anything which is not in these 5 things, but I want to emphasize on that. Are you clear? Other matter paragraph, which helps the user to understand audit better, auditor's responsibility better, auditor's audit better, auditor's responsibility better, and auditor's report better. I hope you understood. Till now 3 essays are done. Hope you enjoyed. Oh, get up guys, if you like the lecture, please give a like button and comment it. Okay, it will motivate us to make even better content in future. Okay, if you are new to this channel, do consider subscribing. I know chapter is still left. We will continue with 2 more easy essay. Till now 3 are done. Forming an opinion and reporting on the financial statement. 705 modification to independent auditors report. 706 emphasis of matter and other matter paragraph in independent auditors report. Now it's time for 2 more essays. Yes guys. Next in the list is Kem Cho Majama Kem communicating key audit matters in independent auditors report. Same explanation as was given to essay 706. Okay, EOM and OM in independent auditors report. Audit report were very boring. 99% of the time we only had one report, clean report. Then why the hell I am doing auditing? I was unable to understand. In 99% of the cases, auditor gave a clean report. He himself did not understand why the hell is he doing audit. Second, audit report were very boring. People felt ultimately result is fixed only. They will give unqualified report. This is just time pass which auditors are doing. So SS 701 came. In 701, what we will communicate? Key audit matters. Sir, what are key audit matters? Key audit matters are those matters that are most significant in the audit of financial statements. Are you clear? Those are known as key audit matter. Very nice essay, very interesting essay, very simple essay also. Let's read why did it come. Number 1, to enhance the report of the auditor's report to increase the value. Second, provide additional information to users of financial statement which help in understanding the matters that were most significant in the audit of financial statement. Sir, what do you mean by most significant? Matters which took maximum time of ours. We invested heavily. We want to tell to users. We did not do time pass shareholders. We spent a lot of time on these methods. So we can communicate the audit report better. We can communicate our work better. We can increase the value of reporting, make it more transparent, make it more communicative. And third, communicating matter may help in understanding the entity and areas of management judgment in audited financial statement. I hope you understood what is key audit matters. See, how to find out key audit matter is a very interesting task. Once you understand that, 99% game is over. See here. This is the best possible diagram you can see. Number 1, matters that are communicated to TCWG. I will tell those charged with governance 100 matters. Out of which matters that are significant, that require significant auditor's attention, and with lot of time was there. Significant attention. Out of 100, maybe 20 required significant attention. Out of that, only 5 which are most significant will be key audit matters. Separate heading is also given. Do you remember format of SS 700? Title, addressee, opinion, basis of opinion, going concern, came cho, majama, key audit matter came, same key audit matter is there. And matters which are most significant. Are you clear? How to identify? Matters communicated to CCWG. Matters that require significant auditor's attention. In that also matters that are most significant. Are you clear? What do you mean by the word most significant? That take maximum time of hours are known as what? Most significant. One last time, matters told to TCWG are 100. Matters which require significant auditor's attention. Significant means maybe EOM. Significant is emphasis of matter paragraph. But matters that are most significant. Are you clear? Maybe 5 matters which are most significant. Those are known as key audit matters. Usually, there is a EY report which says out of more than 150 audit report analyzed, these 5 are always key audit matters, or they can be key audit matter. Impairment of tax. Why? Because it's subjective. Impairment involves lot of assumptions. Okay, lot of fair value we have to calculate. Tax, goodwill impairment, management himself overriding control, fraud in revenue recognition. These are few key audit matters. I hope you are able to understand. Yes, sir. This can be, not are few, this can be few key audit matter. Come here now. Key audit matter is not a substitute to following disclosure. Whenever these things are given, separate disclosure is necessary. You cannot just write key audit matter. You can write key audit matter, agreed, but it is not a substitute for disclosure. These disclosures are compulsory required. Which disclosure? Oh my god, memory technique. See, separate opinion is required on individual matters. Example, Caro. All companies have to give Caro. You cannot say that Caro is a key audit matter and you did not do reporting as per Caro. We have to do separate reporting. You can tell that Caro took significant time of ours. Okay, agreed. Second example. Okay, long form audit report which bank have to prepare. Every bank has to prepare LFAR. It cannot be key audit. It can be key audit matter, but we still have to report. It is not a substitute to following disclosure. Following disclosures are compulsory. They can be key audit matter if you want. Understood? Yes. Second, when we have to express a modified opinion, you cannot just write key audit matter. Are you clear? It is a key audit matter, but we are not modifying the report. Modification is compulsory. That issue due to which modification came. Okay. For example, lot of time was taken in fixed asset valuation, inventory valuation. It can become key audit matter, but it is not a substitute to modified report as per SS 705. Third, a substitute for reporting on SA 570 when a material uncertainty exists regarding going concern. When you feel there is a material uncertainty regarding going concern, you have to compulsory write. Point number 5. Okay, title, addressee, opinion, basis of opinion, going concern assessment. You remember, compulsory we have to write. You cannot write it is a you cannot write it as key audit matter. Okay, you can if you want, but going concern compulsory disclosure is required. So it is not a substitute for following disclosures. Oh my god, separate opinion is required on matters. Okay, it will lead to a modified opinion as per SS 705. And what is the G? Oh my god, G. When a material uncertainty exists regarding going concern as per SA 570. Very simple. Oh my god, separate opinion is required. When we want to express a modified opinion, when a material uncertainty exists regarding going concern, then it is not a substitute. One more time, shall I explain or understood? Key audit matter is not a substitute to 3 disclosure. Oh my god, what is O? Separate opinion is required on these matters. M, when we want to express a modified opinion as per SS 705, when a material uncertainty exists regarding going concern, then we cannot just write key audit matter. You can write, but these disclosures are compulsory. Tell me which 3 disclosures are compulsory. Break 5 seconds. Separate opinion is required on these matters. M, when we want to express modified opinion as per SS 705, or when there is material uncertainty as per SA 570 regarding going concern assessment. Are you clear? Just read 5-second break. Sir, done. Separate opinion is required on individual matters. Okay, we have to issue a modified opinion as per SS 705 when there is a material uncertainty regarding going concern assessment. Applicability. To whom it is applicable? Very simple. Listed company. Okay. Circumstances when auditor wants to communicate key audit matters when required by law or regulation. See, simple. Listed company. Required by law or regulation. SEBI will tell for this class of company it is compulsory. Telecom Regulatory Authority of India says that all telecom company have to give key audit matters. Okay. Number 1. Listed company, everything applicable. When required by law or regulation. Third, circumstances in which auditor wants to communicate. When auditor will communicate? Maybe in which there is a lot of public interest. Okay, insurance company, banking company, telecom company, charitable organization, public trust. In that, lot of people have public interest. Auditor may decide to communicate. Tell me in 3 situations it is applicable. Listed company, very simple. Second, required by law or regulation. Third, circumstances in which auditor wants to communicate key audit matter. Very simple. When auditor will communicate? When there is public interest. When you disclaim a opinion, you cannot use key audit matter. How nicely. Few lines are too good. Love you, ICI. See, whenever we are issuing disclaimer report means we were engaged to do audit, but we could not do audit. And then you are saying this was key audit matter in audit. Ha, too much fun you are having. On one side, you are saying that you could not do audit. On another side, you found out key audit matter also. Understood? Okay. Determining key audit matters. We should take into consideration following things while determining key audit matter. Whenever you want to find out key audit matter, 3 things you need to keep in mind. Oh wow, yeah. Number 1, areas of higher risk of material misstatement or significant risk as per SA 315. Whenever there is higher risk of material misstatement or it is a significant risk, it is always a key audit matter. Following points need to be kept in mind while determining key audit matter. Areas of higher risk of material misstatement or significant risk as per SA 315. As per SA 315, wherever there is higher risk of material misstatement or significant risk is a key audit matter. Auditor's judgment relating to areas that involve management judgment, including accounting estimates with high degree of uncertainty. Okay, auditor's judgment that involves manager's judgment, including accounting estimates with high degree of uncertainty. Example: impairment is there, fair value of asset is there, depreciation is there. Are you clear? Sale and lease back. All the transaction which involve, okay, auditor's judgment, which involves manager's judgment, that can be key audit matter. Or any significant event or transaction that has occurred during the period. We have acquired a company, we have sold off a company. Are you clear? This can be key audit matter. Following things need to be kept in mind while identifying key audit matter. Areas of significant risk or where there is higher risk of material misstatement as per SA 315. Auditor's judgment that involve areas which involve manager's judgment, okay, significant, including accounting estimates with high degree of uncertainty. And third and last, significant event or transaction occurred during the period. Very simple. Following things need to be kept in mind while identifying key audit matter. Significant risk as per SA 315 or where there is higher risk of material misstatement. Auditor's judgment that involve manager's judgment, including accounting estimates with high degree of uncertainty. And third, significant event or transaction occurred during the period. Communicating key audit matters. Key audit matters are those matters that are most significant in the audit of financial statement. These matters are addressed in the context of financial statement as a whole and in forming opinion. Auditor doesn't provide separate opinion on this matter. This I did not understand. Second point. Can you please explain, sir? Why not? Why not? Why not? Why not? Listen. See, they are saying that we did not want to express opinion on this only. While doing the audit, we found out this matters. But our opinion is on the whole report and not only on this. But these are those matters which took our most significant time. Are you clear? How do we identify key audit matter? Matters communicated to TCWG. Matters that require significant attention. Matters that are most significant. Are you clear? So those are second point. Key audit matters are matters that are most significant. Second, this came when we were auditing financial statement as a whole, and we don't want to express separate opinion only on these things. There are 100 things, okay, but these are those which are most significant. Understood, sir? So till now all are done. Now last one we have, okay, but quick recap: 700 forming an opinion and reporting on financial statement. 705 modification in independent auditors report. 706 EOM and OM in independent auditors report. 701 Kem Cho Majama communicating key audit matter in independent auditors report. 710 comparative information, corresponding figure and comparative financial statement. Wow, what a essay, what a essay, lovely. Okay, corresponding comparative information, corresponding figures and comparative financial statement. Let me take an example. This year profit is 1000 crore, good or bad? 1000 crore in such a inflation, tremendous profit. Wrong. Last time it was 2000 crore. Are you clear? You have to compare with last year only, then you can say. Someone passed in inter, but in foundation he had got a rank, means it is bad. Someone in inter, okay, failed in one, passed in one group. Very good. In foundation he had taken 8 attempts to pass. At least inter one group to clear. So we cannot say anything unless we compare with last year. Okay. Comparative information. In this there are two approaches. Corresponding figure, comparative financial statement. Corresponding figure, comparative. Comparative information. See, any figure we can say it is good or bad when we compare with last year. So there are two approaches here: comparative information, corresponding figure, comparative financial statement. Listen to me 30 seconds very nicely. What is corresponding figure? Year, I give opinion on current year only. Last year figures are just for reference. One more time, I give report on current year only. Last year figures are just for reference. In comparative financial statement, I give report on all the financial statements which are presented. I am giving my opinion on all the financial statement and not only last year. Able to understand? Yes or no? Yes, sir. Well, let's take example. Schedule 3. Schedule 3 only tells us you have to report on this year. Last year figures are just for reference. In Schedule 3 we are giving, see, which to follow? Tell me. In comparative information shall, this is little hard, so you have to concentrate, but very small, 15 minutes but hard. Okay, corresponding figure we shall for our comparative financial statement. That law will define, regulation will define, terms of engagement will define. Let's take example. Okay, for example, schedule 3 tells you have to report on this year figure only, last year is just for reference. But whenever you want to file IPO, okay, while filing IPO, okay, we have to give 5 years figures, last 5 years figures, but we are doing audit on last 5 years figures. We are not only submitting this year. In this, our auditor's report is on, or our report is on all the past years for which we are submitting, and not only current year. I hope you did not understand. One last time I will explain. Comparative information has two things: corresponding figure, comparative financial statement. What is corresponding figure? We are giving opinion on this year only, last year is just for reference. What is comparative financial statement? We are giving opinion on all the past years for which financial statements are presented, this year and all the past year. Which to follow? Sir, comparative only follow. That law will tell. Schedule 3 has told that you have to report on this year only, last year is just for reference. But whenever we file IPO, we have to give last 5-year financial statement. In that, we have to give audited financial statement of last 5 years, that is comparative financial statements. But every time I will follow comparative financial statement only. Why? Who will give you money? Your dad will give. Understand, your dad will not give money. Regulation will specify, law will specify, terms of engagement will specify. If they want corresponding figure, we will do audit as per that. If they want comparative, we will do audit as per that. Fully understood. There are two approaches for comparative: corresponding figure, comparative financial statement. Which approach to follow is specified by law, regulation, terms of engagement. For corresponding figure, auditor's report is on current year only, but last year is just for reference. For comparative, auditor's opinion refers to each period for which financial statements are presented. Here we give opinion on all the previous years. Now, three questions will come. Audit procedure regarding comparative information. Comparative information means first approach or second? Heading. Neither of the approach. Seen, heading is there. Okay, understood, 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 understood. Fully understood. Oh, okay. Auditor shall Auditor shall see financial statement include comparative information as per applicable FRF. What is FRF? Schedule 3 will tell that you have to give on current year only. So we have to see comparative information is as per FRF. For this purpose, we will evaluate. Comparative information agrees with the amount and other disclosure presented in prior period. Whatever amount and disclosures are there in prior period, same consistency is followed. Accounting policies are consistently carried out, or if any changes are there, they are properly accounted, classified, disclosed. Properly accounted, presented, disclosed. Very simple. Comparative information. Whenever you are checking, you have to see it is as per applicable FRF. Comparative information agrees with the amount and other disclosures for prior period. Whenever there is changes in accounting policy, effect is properly classified, presented, disclosed. Classified, presented, disclosed. Accounted, presented, disclosed. Now, two approaches are there. Audit reporting regarding corresponding figures. In corresponding figure, remember, we are giving opinion for current year only. Last year is just given for reference. Yes, sir. When corresponding figures are there, audit opinion refers to current period only, except in three situations. In three situations, we will also comment on last year. Right now, you told not to comment now again. That is why essay is there. If everything was normal, why will be essay? Okay, understood. When corresponding figures are presented, audit opinion refers to current period only. Last year is just given for reference, except three situations. If in the previous year there was qualified disclaimer or adverse report, and matter which gave rise to modification is still not corrected, then I will write a reference. Last year our report was qualified adverse disclaimer. This year also this matter is not corrected, so I am giving the same report. Are you clear? We usually in corresponding figure don't give reference to last year, except three situation. Number one, last year report was qualified disclaimer adverse, and this year this mistake is not corrected. Then we will say last year mistake is not corrected this year, and we are writing that due to this only we are giving modified report this year also. Second, if the auditor obtains evidence that material misstatement exists on the prior period on which unmodified opinion was issued. If last year you had given a clean report, but there were material misstatement, then what you will do? Auditor will say issue is solved or not. If not solved, express qualified or adverse opinion in current period financial statement and also write Last year also these misstatements were there, but we by mistake gave which report? Clean report. It will come. Third, prior period financial statements are not audited. If they were not audited, auditor will write the same in other matter paragraph. Already learned. Tell me in corresponding figure, will I give reference to last year? No, 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 except three situations. Last year we had issued qualified disclaimer adverse report, and this year also the mistake is not yet corrected. Then I will write due to this reason this year also we are issuing same report. If auditor obtains evidence that material misstatement exists in prior period in which unmodified opinion was issued, then if this year it is not corrected, we will issue what? Qualified disclaimer or adverse. Qualified or adverse report. Of course, material misstatement are there, then disclaimer will not come. We will issue qualified or adverse report, and also write this is prior period misstatement which is not yet corrected, in which unmodified opinion was issued. Prior period financial statements were not audited. We will just write a reference in other matter paragraph. Last year financial statements are not audited. Okay. In comparative, in this amount and disclosure for prior period are included for comparison with current period. But if audited, we will write. In this, auditor's opinion refers to each period for which financial statements are presented. When reporting on prior period in connection with current year, auditor's opinion differs from the one that was previously expressed. Auditor should write the reason in other matter paragraph. In this, only one point is nice. See, if we gave clean report last year or qualified report, but we feel there was a mistake, are you clear? Clean should not come. Then we will write that last year we had issued clean, but qualified report should come. Or last year, okay, qualified we had issued, but clean should come. Then we will write. Otherwise, nothing. So in comparative financial statement, our report is on each period for which financial statements are presented. Only one point. When reporting on prior period along with current year, if auditor opinions differed, we have to write in other matter paragraph that our opinion is different and these are the reasons. Understood? Very simple. Let's summarize this. Only two questions are good. Number one question. It has already come, so less chance, but again can come. Tell me, in case of corresponding figure, our opinion is on current year except three situations. Number one. Last year we had issued qualified adverse or disclaimer report and misstatement is still not corrected or issue is still not corrected, I will write. Last year we had issued unmodified opinion, but there is material misstatement in prior period. If it is still not corrected, I will issue qualified or adverse report and also write that last year we had issued unmodified report. If prior period financial statement are not audited, I will write a note. In comparative, I give report on this year only. Last year, baby. No. I give report on all the years and not only this year. Okay. In this only in one reason. If last year I had issued some opinion which is changed now, then I will write the reason. That last year we had issued this opinion, but according to me, misstatement was there. So qualified or adverse should come. Understood? Over. With this, all essays are over. I hope this chapter was super fun, super easy for you. Okay, very quickly. Name all essays. Forming an opinion and reporting on financial statements, 700. Came cho Majama 701. Communicating key audit matter in independent auditors report 705. Modification to opinion in independent auditors report 706. EOM and OM in independent auditors report 710. Comparative information, corresponding figure and comparative financial statement. I hope you enjoyed as much as I did putting it up forward for you. If you like our videos, do give a like button, put in a nice comment. It will motivate us to work even better, even faster, and doing even more research and presenting top-notch quality lectures at your doorstep free of cost. Okay, of course, if you want in detail our revision, like these are just revision lectures, regular lectures are out of the world, fast track lectures are mind blowing. Okay, your mind will blow away. This is what we want to say. Okay, do share with others as well. If you like our lectures, do consider subscribing India's #1 channel. Thank you so much. Bye bye, take care. Thank you. Very good morning, guys. Warm welcome to the best lectures of EISSF and Audit nationwide. Yes, guys, continuing with the mega marathon revision series of CA Inter Auditing in only English. Today we are going to do chapter number 5, one of the easiest chapters considered and is also very easy. Without wasting any time, let's start right away. Come on, everyone. Okay. What is the name of this chapter? Fraud and responsibilities of auditor in this regard. Okay. Let me just show you. Start. So the name of chapter is fraud and what are the responsibilities of auditor with regard to fraud. Whenever there is fraud, three things will click. Are you clear? Number one, essay 240 is about fraud. Okay. How to remember 240, 420, 420, 420 means fraud. Okay. 420 means forgery. Reverse that. Okay. Reverse of forgery, 240. You will remember. Essay 240. How to remember fraud essay? 420 is forgery. 420 is forgery. Are you clear? 420. So reverse of that 240. So essay 240 is about fraud. Second, in Caro also we have to report the fraud. All frauds done by the company or on the company. So second is Caro. Third, section 143 subsection 12. Section 143:12. There also we talk about fraud. So at three cases we talk about fraud. All three will be considered here. And let's start right away. Very easy chapter, very nice chapter, very relaxed chapter. So be rest assured, we are going to make it super easy for you. One more thing, these lectures are in no way substitute to the regular or fast track lectures. Doing them is a must, okay? After that, this will give you immense confidence. Having said that, let's make this journey super easy. Sir, one last question. Where are you doing this revision from? We are doing this from our Magic book. Magic book is a book which covers entire syllabus in 86 to 90 pages. Okay. No soft copy is available because only hard copy brings hard result. If you wish, you can purchase the book from www.mrugeshmadlani.com or as no need. Let's start with revision. Fraud. As per essay 240, fraud is an intentional act by one or more individual among TCWG, management, employee or even third party involving the use of deception to obtain unjust or illegal advantage. Sir, I did not understand. One more time. Fraud is an intentional. See, by mistake if I do, it's an error. If intentionally I do something wrong, that is a fraud. Fraud is an intentional act by one or more individual among. You have to start from top to bottom. Top to bottom. Tell me in top who will come? TCWG, then management, then other employees or even third party. One more time. Fraud is an intentional act by one or more individuals among. Number one, TCWG, management, employee or even third party. Number one is those charged with governance who are responsible for the company. If they don't do, management can do, employee can do, even outsider third party. Okay, so TCWG, management, employee or even third party involving use of deception. They will deceive means cheat us. Are you clear? To obtain unjust or illegal advantage. Very, very simple. I hope you are clear. Tell me what is fraud. Fraud is an intentional act by one or more individual among. Tell me who? Management, TCWG, employee or even third party. Okay, TCWG, management, employee or third party involving use of deception to obtain unjust or illegal advantage. Absolutely clear. One last time, break of 1 second. Intentional act by one or more individuals. Who are individuals? TCWG, management, employee or even third party involving the use of deception to obtain unjust or illegal advantage. Now, are we concerned with all fraud? No, we are only concerned with those fraud that causes material misstatement to the financial statement. What do you mean by material misstatement? Only those things which are material. Are you clear about materiality and all already discussed in earlier chapters? Material misstatement. Let's take three examples. You will understand two examples better. Number one, my employee comes at 11 o'clock. Okay, I am not there in office. Instead of 10, he will come at 11 o'clock and not tell me. Is this a fraud? Yes, intentionally he is coming late. It is a fraud, but I am not concerned because it doesn't cause material misstatement to the financial statement. Are you clear? I am not concerned in production. Someone is stealing few units. I am not concerned. Are you clear? Because these are not material misstatement. In audit, we are only concerned with material misstatement to the financial statement. Third, in provision store, you are taking few things, okay, for your own home. You are taking butter, you are taking bread. Every day you have to close the store, you steal. A employee steals a few things for his home also. Okay, it's pilferage, small quantity, but that doesn't cause material misstatement to the financial statement. So auditor is concerned with all fraud. No. Those fraud which causes to FS, material misstatement to the financial statement. I hope you are clear. Second, characteristics of fraud. 2 point. It should be intentional. See, if it is unintentional, in English we call it error. Same thing, repeat again. Fraud is an intentional act. Definition also given. Here also given. Same. So, misstatement in financial statement can come due to error or fraud. The one which is intentional is fraud. Simple. It is a broad legal concept. See, fraud is very big, but auditor is not concerned with all fraud. We are concerned with those fraud that causes MM to FS, material misstatement to financial statement. Let's take another example. We have a sari shop. There is an employee. Whenever my uncle goes for lunch or whenever my uncle goes for lunch, this employee will sell a few sarees and put money in pocket, not prepare invoice. Okay, he will sell the saree, put money in pocket, not prepare. Is this a fraud? Yes, but we are not concerned because it doesn't cause material misstatement to the financial statement. So 2 points. Number one, it is intentional, broad legal concept. An auditor is not concerned with every fraud. We are concerned only with those fraud which causes material misstatement to the financial statement. Clear? Yes, sir. Come here now. Reasons for committing fraud. Tom, temptation, opportunity, management. What is temptation? Certain individual possess set of character values which force them to do the fraud. Since years they are doing the fraud. Their character value and ethics are only like that. They will tend to do fraud. Example, police. Are you clear? Now, every other policeman is doing so. A honest one will also do. Why? Because their salary is too less. So they feel temptation. Let me do the fraud. Their actual salary is 20,000, but by stopping people for helmet, signal, they earn 40,000. So that is why their net CTC is 60,000. Are you clear? Individual possess set of character value that allow them to do the fraud. By seeing them, even honest employee will do. Let me take another example. You will understand even better. There is one purchase manager. Whenever he purchases material, he will tell the vendor, oh, remember, whenever I purchase material, you have to supply same material at my home also because another house is going on. Your big corporate house of company is there, but with corporate house of company, my small house also construct free of cost. Keep on adding in the bill, don't worry, charge more. Temptation. Are you clear? So certain individuals possess set of character value which tell them to do the fraud. By seeing them, even honest employee will do. Opportunity. Whenever an individual feels internal control can be misused, he will do the fraud. Can you tell an example? Why not? Definitely, I will tell. Okay, then please tell. Okay, an individual believes that internal controls can be compromised. Okay, let's take an example of what? Example. Okay, whenever you feel someone will give you too much trust, sir, you are the main manager, whatever you say we will do, from whichever vendor you tell we will purchase, we trust you blindly. Oh, so much blindly you trust, then chance pe dance mare le. Are you clear? Then you will, of course, when someone gives you immense power, you will misuse that power. Individual beliefs. When there is an opportunity. Management. Certain pressure is then on management to achieve certain targets or budgets. Are you clear? Due to which they will do the fraud. All startup companies, by Jews, their financial statements were inflated. Okay, the auditor told that they are doing wrong. Why? There is lot of pressure from investor. They will not give them money. All the people who are working on funding, Zomato, Byju's, Paytm, all have immense pressure, due to which even if they don't want to do, they will do the fraud. Second, Credit Suisse, we are hearing these days. Credit Suisse, they are saying since 3 years our financial statements are wrong. Okay, why? There is immense pressure from investor. If you don't achieve this earning, funding will stop. So I hope you understood. Okay, management. Pressure is there on management due to earnings. Second, sometimes bank loan we want to get. If certain profit is not there, bank will not give us loan. So this is also there. To maintain share price, certain times we show higher earnings. Okay, or sometimes managerial remuneration is linked to sales. So I will show higher sales, so my remuneration is higher. Understood? So these are few reasons. Tell me, what are reasons for fraud? Tom, temptation, opportunity management, temptation, opportunity management. One last time. Temptation, opportunity management. Break 10 seconds. Done. What are reasons for fraud? 3. Temptation, opportunity management, temptation, opportunity management. Okay. Why do employees do the fraud? Tell me. Reasons for fraud are Tom, temptation, opportunity management. Why do management or employee do the fraud? FM ke don, FM ke don, FM ke don. Financial obligation or pressure, same point repeated. Management's unrealistic goal. We will achieve profit of 20 crore. Arey, understand lockdown is going on. How will you achieve? You told investor you will achieve this, but then you couldn't achieve. Then what do? Show inflated figure, window dressing. Okay. Dissatisfied employees are there. Many people don't get money only. So why they do the job? Because they are doing fraud and earning from them. Many admin managers, what they do, they earn from, whenever we have to order from vendor, they tell vendor 10% my cut should be there. If my cut is not 10%, I will not order from you, I will order from another person. Dissatisfied employee. Third, opportunity, same point. Okay, when you trust someone too much, he will betray you. That is the rule of life. Opportunity. Name game. Sometimes you don't do in your name, you do in others' name. For example, okay, you will give order to someone else and not to your relative, okay, and then do setting with them that they'll pay you back. Name game. Generally senior managers are not involved in fraud. They will tell purchase manager, oh, order from this vendor. Sir, why shall we order from this vendor? Actually this vendor A is cheaper. Why to order from C? Don't ask me. 10% I will give you. Okay, understood, sir. Understood. 10% I am getting of purchase order. Great. No, I will order from C only. And he will get 20%. He will get 10%, 30%. Who is suffering? Company bajate raho. I hope you are clear. Okay. Why do management or employee do fraud? FMK Don. FMK Don. FMK Don is the technique. FMK Don. Financial obligation or pressure, management unrealistic goal, dissatisfied employee, opportunity to do fraud, name game. One last time. FMK Don, FMK Don, FMK Don. Financial obligation or pressure, management's unrealistic goal, dissatisfied employee, opportunity to do the fraud, name game. One last time. Why do management or employee do the fraud? FMK Don, FMK Don. Financial obligation or pressure, management's unrealistic goal, dissatisfied employee, opportunity to do fraud, name game. Small break, 10 seconds. Done. Why do management or employee do fraud? FMK Don, financial obligation or pressure, management's unrealistic goal, dissatisfied employee, opportunity to do the fraud, name game. I hope you are clear. Okay. Yes, sir. Moving on. Auditor is not concerned with all fraud. Two types of intentional misstatement are relevant for auditor. How many types? Two. Fraudulent financial reporting, misappropriation of asset. Auditor is not concerned with all fraud. All the frauds that causes material misstatement to the financial statement, he is concerned with those. Which causes material misstatement to the financial statement, he is concerned with those. In that also, two types of intentional misstatement: fraudulent financial reporting, misappropriation of asset. Fraudulent financial reporting, misappropriation of asset. What is fraudulent financial reporting? Window dressing, showing fake financial. From the window you show that your house is very nice, but inside when you go to house, nothing is there. Many times we Indians tend to decorate hall a lot, living room a lot. Are you clear? Wherever you go, hall is nicely decorated, entrance is nice. Inside the house there is nothing. Window dressing. From window I am showing that everything is good, but actually not good. Same applies. All the startup companies are doing this only. That is why so many frauds are coming. Number one, fraudulent financial reporting. Number two, misappropriation of assets. In asset, two things are there: goods and cash. About this we will learn. Can we start? Yes, sir. A faster, come on, baby. Okay. Fraudulent financial reporting involves what? Showing fake financials. In financial reporting, showing window dressing, showing nice financial. Actually, in the company, nothing is nice. Fraudulent financial reporting involves intentional misstatement, including omission of amount or disclosure to deceive the financial statement user, to deceive them, to cheat them. Okay. Fraudulent financial reporting can be done by three ways. How many ways? Three ways: manipulation, falsification, or alteration of accounting records and supporting documentation. Let me explain. What do you mean by the word manipulation? Okay, changing the records. Falsification, again altering the records, changing the manipulation means showing fake invoices sometimes. Okay, sometimes not showing invoices. Falsification means what? Changing the invoice amount or inflating the invoice amount. Alteration means same. Manipulation, falsification, or alteration of accounting records and supporting documentation. Auditor requires greater tact and intelligence to catch this fraud because sometimes it is done by management. And remember, management is very intelligent. You can catch the fraud of employee. Why? Because employee fraud, first management will only catch. If they cannot, you can catch. Are you clear? But fraud, if it is done by management, difficult to check because they know what you are going to check, how you are going to check. Okay, what are your points, what you will do in future, and they can easily hide. So auditor requires greater tact and intelligence to detect manipulation in accounts as these frauds are done by senior management. They know what you are going to check, so they will check do in such a way that you will not check those things. Are you clear? Why they do fraud? Very simple, tax. Okay. Number one, they want to show less tax, so they will inflate the expenses. Are you clear? Show less profit, so less tax. Sometimes they want to show more tax also. Who will pay more tax? Are you mad or what? Tax so less only I will pay. Are you think like that? For listed companies, share price is important and not tax. For them, tax is like what? Chana mamra, peanuts. Tax is peanuts for them. For Mukesh Ambani, 1,000, 2,000 crore, tax is peanuts. Just pay tax. Because share price is high, then their valuation will increase. Because they are holding 10% shares in company. So their wealth is linked to share price, not tax. They are not concerned. So some companies will show high tax and your dad and my dad will show less tax. Are you clear? We do the fraud. Dividend. Many companies, they don't want to pay dividend, so they show less profit, so dividend comes less. Many companies want to pay high dividend. Why? If you pay dividend, share price will increase. Oh, understood. Or many times remuneration is linked to profit, so intentionally I will show high profit because my remuneration I will get high. Are you clear? Very simple. Manipulation, falsification or alteration of accounting records and supporting documentation. Auditors requires greater tact. Tact means skill and intelligence to catch these type of fraud, because these are usually done by not me, management. Why they do that? Three reasons. Tax, dividend, remuneration is linked to profit. Remember, tax, dividend, remuneration is linked to profit. Understood? Fully understood, sir. Misrepresentation or intentional omission of the from the financial statement of event, transaction, other significant information. Listen, misrepresentation or intentional omission. You are misrepresenting or intentionally omitting what? Events. What is event? Debtor being insolvent. After balance sheet date, debtor was insolvent, but before signing report. If he is insolvent, you have to book the loss in same year. Though this event occurred after balance sheet date, it is a subsequent event. Are you clear? But you did not do that. Misrepresentation, you did not include this fact only. Second, 4 new legal cases are filed on the company. Okay, we lost the case, but you are not including that event. Why? Otherwise, company will come in loss. Understood? Misrepresentation or intentional omission from financial statement of event. Second, many transactions you are ignoring. Huge purchase was done on 30th March of 82 crores. You are not ignoring that bill and you took it in April. This is what? Misrepresentation or intentional omission from financial statement of event. Transactions. Are you clear? Or other information. You are omitting any. You have acquired a company, but you are not writing those details. Or ratios you are changing. You are manipulating the ratios. Okay. So misrepresentation or intentional omission from financial statement of event, transaction, other significant information. Current ratio is coming 1:1. Okay. Or you are intentionally making it 2:1. So I hope you understood. Misrepresentation or intentionally omitting from financial statement. Three things: events, transaction, other significant information. Event means subsequent event. Transaction, other significant information, changing the ratios. Disclosures not showing fully, not showing all related parties fully. Understood. Intentional misapplication of accounting principle relating to amounts, classification, manner of presentation, disclosure. Intentional misapplication of accounting principles. Changing the useful life of asset to show more depreciation or less depreciation. Okay. Fair value of asset you are intentionally changing because these are estimates. Okay. Impairment loss, intentionally not showing impairment loss. Any such thing intentional. Change in method of depreciation, you are not showing the effect properly. Intentional misapplication of accounting principles relating to amounts, classification, presentation, disclosure. Very simple. 3. Fraudulent financial reporting can be done in 3 ways. Manipulation, falsification or alteration of accounting records and supporting documentation. Second point is what? Okay. Misrepresentation or intentional omission from financial statement of event, transaction and other significant information. Last, intentional misapplication of accounting principles. I hope you are clear. Or one last time. Sir, one more time. Okay. Tell me 3 things it is possible. 1, 2, 3. Number 1, manipulation, falsification or alteration of accounting records and supporting documentation. Misrepresentation or intentional omission from financial statement of event, transaction, other significant information. Misapplication of accounting principles. Intentional misapplication. This to manipulation, falsification. Just read this break 10 seconds. Done. Fully done, sir. Chalo, we'll speak one last time. Number one, misrepresentation or intentional omission from financial statement. Okay, sorry, alteration, manipulation, falsification of accounting records and supporting documentation. Misrepresentation or intentional omission of financial statement of event, transaction, other significant information, and misapplication of accounting principles. Now come here. Misappropriation of assets. In these 2 points are there, goods, cash, but small intro is also given. Assets. It can be done by emblazing receipt. Okay, what you are doing? Few receipts you are not showing only, or you are showing at a lesser amount. Example: few people came to shop, boss was not there. You put money in pocket. It happens in our sari shop many times. Emblazing receipt. Second, stealing physical assets, taking stationery from office. Many CS students realize that now I have joined office, so I will not purchase stationery. All I will steal from office only. Stealing physical assets, intellectual property. Okay, clients' data. Okay, for example, new serial was going to be launched, new episode, new web series, entire script of that you copied in pen drive and gave it to another producer. They made before you. Huge loss. Are you clear? Stealing physical assets or intellectual property. Intellectual COVID medicine was made by one company, another one stole and launched it before the main company could launch. Okay, so intellectual property, embezzling receipts, stealing physical assets or intellectual property, causing entity to pay for goods and services not received, showing fake bills, fake workers you are showing and paying to them also. Too much fun. Using entities asset for personal use. You ordered a car in entity's name, but your wife is only using. Too much fun. It happens only in India. Dun, 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 dun. Okay, this Ashneer Grover and all was there. Her wife treatment was there 8 lakhs. 8 lakh rupees treatment was there, the wife. He showed it in company's expense. So, okay, it happens. Okay, misappropriation of asset, embezzling receipt, stealing physical assets or intellectual property, causing entity to pay for goods and service, using the entity's asset for personal use. Misappropriation of goods is there now. What is misappropriation of goods? And here will be misappropriation of cash. Misappropriation of goods, misappropriation of cash. Shall I explain? Yes, sir. What is goods? Let's take 2 examples. Many times in hotel, we have a hotel also. Okay, in hotel what happens? Towels are there, okay, brush is there, toothpaste is there, okay, butter is there, bread is there, lot of things are there in hotel, and people keep on stealing these things. Are you clear? So what to do? Misappropriation of goods. This is one hotel example. Second, you can also take example of a big maybe big bazaar, okay, maybe D-Mart, where huge inventory is kept. What all they can do? Measures to prevent misappropriation of goods. No one should steal these goods. So what do we do for this? Lot of points are there. Number one, record keeping about physical quantity. Measures to be, see, these 2 questions can come. This and this. This is 1, this is 2. Misappropriation of goods. Now, see, second point is misappropriation of assets. Inside goods, cash. Goods, cash. So we are learning goods now. Record keeping about physical quantity. Whatever physical quantity is there, you have to keep a record. Okay, these cups are this many, towel are this many, okay, maybe a wine bottle is this many. Requirements of record keeping about physical quantity. Periodically check whether records are kept or not. Requirements of record keeping about physical quantity. Periodic check. Third, physical verification of goods should be done. Okay, physically verify and check with records whether it is matching or not. Till now 3 points are there. Record keeping about physical quantity. Periodically check whether records are kept. Okay, physical verification of goods should be done. Fourth, rules and procedure for allowing people inside where goods are kept. So if anyone is coming to the go down and taking a few towels, okay, rules should be there. His entry should be made that he has taken, so tomorrow any fraud happens, we can catch them. Rules and procedure for allowing people inside where goods are kept. Okay, external security arrangement. So goods are not taken without proper authority. Whenever you go to Big Bazaar, D-Mart, whenever these employees are going, there is a security guard who will check. Okay, so these people don't carry any goods. External security arrangement to ensure goods are not taken without proper authority. And keep on making the ratios. Okay, so you can analyze. If any ratio is coming adverse, you will know that here stealing has happened. Okay, here some wrong is there. So ratio analysis is to be done. Very simple. 6 point. Requirements of record keeping about physical quantity. Periodically check whether periodic check records are kept or not. Third, physical verification of goods should be conducted. Now, okay. Rules and procedure for allowing people inside where goods are kept. External security arrangements so goods are not taken out without proper authority. And last is ratio analysis. Very, very simple it is. Listen nicely. Number one, requirements of record keeping about physical quantity. Periodically check records are kept or not. Okay. Third is what? Physical verification of goods should be conducted at regular intervals. Okay. Now, rules and procedure, inside, outside, inside, outside. Whenever anyone comes to go down also rules. Whenever he goes to home also rules. Rules and procedure for allowing people inside where goods are kept. External security arrangements of goods are not taken without proper authority. Ratio analysis to be done. Clear? One more time try. Okay. Requirements of record keeping about physical quantity. Their periodic check. Third, physical verification of goods should be conducted. Rules and procedure for allowing people inside where goods are kept. External security arrangements of goods are not taken without proper authority. Ratio analysis to be done. Learn nicely, your time starts now. Measures to prevent misappropriation of goods. Break. 15 seconds. Done. Start. Requirements of record keeping about physical quantity. Second, their periodic check. Okay. Physical verification procedure to ensure physical. The number one. Sorry. Start again. Requirements of record keeping about physical quantity. Their periodic check. Physical verification of goods should be conducted at regular intervals. Okay. Rules and procedure for allowing people inside where goods are kept. External security arrangement. So goods are not taken out without proper authority. Ratio analysis to be made. I hope you are clear. Defalcation of cash. Two way you can do cash fraud: inflating cash payment, suppressing cash receipt, showing more payment and actually making less payment and balance in pocket, or showing less receipt and balance actually what is received 100 but you are showing 80, 20 putting in pocket. So two ways defalcation of cash can take place: inflating cash payments, suppressing cash receipt. How you can inflate cash payment? Very simple, you know all this. Making payment against dummy voucher. You are saying, okay, in our hotel many time it happens. Bisleri, we have to order cartoons of mineral water. Okay, so 12 cartoons are ordered, but they will say, manager will say 16 cartoon ordered. Who will check? Are you clear? And he said 4 are consumed also. So inflating cash payments. Okay, making payment against dummy voucher. Making payment against the voucher whose amount is inflated. Intentionally showing high amount. To driver we have paid 800 rupees. Instead of actual payment was only 500. So 300 that driver did not keep, that manager kept the money. Are you clear? Making payment against dummy voucher. Making payment against original voucher. Amount is inflated. Third, manipulating total wage roll by including dummy worker or inflating them. Now, how you will inflate wages? You will say 100 workers were there. Okay, but actually only 80 you called. 20 workers money you put it in the pocket. I hope you understood. Number one, making payment against dummy voucher. Making payment against the voucher whose amount is inflated. Third, manipulating total wage roll by including dummy worker or inflating. Casting larger total for petty cash expenditure and adjusting the excess total in detailed columns. So cross total shows agreement. Did not understand. See, petty cash expenditure, instead of 1000 you showed 1200 and 200 you adjusted in 50 rupees tea, 50 rupees refreshment, 50 rupees stationery, 50 rupees petrol. Are you clear? So total showing larger and adjusting the detail balance in detailed column. So people don't suspect you also. Very simple, nothing great is there. Suppressing cash receipt, showing less receipt. In this first point is good. So I will teach with second, third, fourth, fifth, sixth and then first. Giving unauthorized discount. Are you clear? Okay. Example, he paid full amount only, but you prepared discount voucher. Why? Balance discount you paid, put in pocket. A customer came, he purchased 1000 of goods. You said that he asked for discount and 20% discount you gave. He did not take the bill. Okay. And 200 in your pocket. Writing of debts in respect of balances against which cash is received. We received the amount, but we wrote off as bad debts. Or some amount which was already written as bad debts. He came to pay, but we did not account for it because we are getting the money. Not accounting cash sale fully. Okay, sales is done 2000. You prepared a bill of 1500. Miscellaneous receipts, scrap sale and also you don't account only. You understand and you put in your pocket only. Writing down assets entirely, selling subsequently and misappropriating the proceeds. You write down the asset fully and whatever is left, for example, asset was of what? 1 crore. It is of no use. So you write off the asset. But you got 10 lakh for the asset and put it. 10 lakh is little too much. Okay. 1 lakh you got and put in pocket. Okay. Writing down assets entirely, selling the proceeds and keeping the money in pocket. What is teaming and leading? Amount received from customer being misappropriated. Also to prevent its detection, amount received from customer thereafter credited to the account of first customer. Amount received from customer thereafter credited to the account of second customer. So no customer is outstanding for a length of time which will allow management to send a confirmation or communicate with them. Sir, I did not understand anything. Same here. Understand now. In 1 minute over. Yeah, where is it? Here. See this. 4 people are there. Anurag, Ajay, Karan, Abhay. If you cannot see A, B, C, D, you catch. Are you clear? Anurag, Ajay, Karan, Abhay. Now, pending 1000, 2000, 8000, 3000. This is the amount pending from them. I want to do fraud of 1000. I received from Anurag 1000 rupees, but I did not show. I put it in my pocket. Now, teaming and leading will start. Amount received from customer being misappropriated. So, I misappropriated 1000. Also, to prevent its detection, I want that no one should catch it. Amount received from customer thereafter. Now Ajay paid me how much? 2000 will be credited to account of first customer. I will credit 1000 in Anurag and balance 1000 in Ajay. Anurag's money I put in pocket. Ajay I received 2000, 1000 I will show received from Anurag, 1000 from Ajay. So Ajay how much pending? 1000. Amount received from customer thereafter. Karan paid how much? 8000. I will show first recover 1000 of Ajay. I will say that Ajay paid 1000 and 7000 who paid? Karan. So Karan how much pending? 1000. Then Abhay paid how much? 3000. I will show balance 1000 in Karan and 2000 in Abhay. I hope you understood. So still Abhay money is pending, no, but amount received from customer thereafter will be credited to Abhay's account. Thereafter will be credited. Understood? Iski topi uske sir, I will keep on doing this. One day I will get caught, but by that time fraud will become huge. Are you clear? Okay. I will leave the company by that time. So easy. One last time. Amount received from customer being misappropriated. To prevent its detection, amount received from customer thereafter being credited to first customer. Okay, amount received from there credited to second. Amount received from thereafter credited to third, and so on. So no account is outstanding. No account will be outstanding for a long period of time, which will allow us to send confirmation or communicate with them. If we don't communicate, fraud will continue. Simple. Teaming and leading. Amount received from customer misappropriated. Also to prevent its detection. Amount received from customer thereafter credited to the account of customer who has paid earlier. Amount received from customer thereafter credited to account of second customer. Amount received from customer thereafter credited to account, and so on. So no account is outstanding, which will allow us to send a confirmation or communicate. Easy. Detection of fraud and error. Duty of auditor. Tell me, as per SA 240, is it my duty to detect fraud and error? No. Auditor is a watchdog and not a bloodhound. Are you clear? We are dogs. Whenever we find anything, okay, we will try our best. We are not murderers. We are not investigators. We are not CBI. Are you clear? I will keep on smelling. If I find too much I took inside, I think. Okay. If I find anything, I will check that thing in detail. But my primary responsibility is not to detect fraud and error. It is to do audit. And I always go with one mindset that management is doing everything correct. Nothing wrong is there. I am not CBI. Are you clear? When there are doubt, I will check in detail. But otherwise, my primary work is not to detect fraud. My primary work is to do audit, baby. Auditor has to obtain reasonable assurance that financial statements are free from material misstatement. Risk of not detecting material misstatement from fraud is higher than error. Why? Because fraud is planned in such a way that I cannot catch. I will try my best. Every time auditor cannot escape. Oh, reasonable assurance, reasonable. You baby, you have to check. But at the same time, my work is auditing is designed in such a way that my work is not to detect fraud and error. My work is to do audit. If I find fraud and error, I will check in detail and report. But my primary work is not that. Understand? Okay, auditing is designed in such a way. We are taught in SA 240. Management fraud is even more difficult to catch as compared to employee fraud. Why? Because employee fraud to management can catch. If they cannot, auditor can catch. But management fraud, who will check? Okay. So what we have to do? Maintain an attitude of professional skepticism, professional judgment. What is professional skepticism? Questioning mind. Why are you ordering from this vendor only? Have you invited quotation from this vendor? Since 4 years you have not changed the vendor. Do you have special relation with the vendor? Is he your related party or not? Why are you making payment on the spot to the vendor? I wonder why they don't send confirmation every time. Who is this vendor? Where does he live? 100 questions I will ask. I will maintain professional skepticism. Are you clear? A questioning mind, being alert to circumstances that can be fraud. But I will not go with the intention that fraud is there. Very simple. Tell me. It is not primary duty of auditor to detect fraud and error. Auditor is a watchdog and not a bloodhound. We are not murderers. We are like dogs. I will smell. If I find anything suspicious, I will check in detail. Otherwise, my primary responsibility is not to detect fraud. It is to do the audit. And especially when there is a management fraud, chance of not detecting is higher because they have planned in such a way. So auditor has to maintain professional skepticism, questioning mind, being alert to circumstances that can be possibility of fraud. Over. So tell me, auditor is concerned with two misstatements: fraudulent financial reporting, misappropriation of asset. Fraudulent financial reporting, fraudulent financial reporting, 3 points. Manipulation, falsification, alteration of accounting records and supporting documentation. Point number 2, intentional omission or misrepresentation of event, transaction, other significant information. Misapplication of accounting principles. Clear. In misappropriation of assets, two things: goods, cash, goods, cash, goods, cash, goods, cash. Okay. Last. Very, very nice. Amazing. Fraud reporting to central government. Oh my God. Last part. Get ready, boys and girls, everyone. As per section 143.12, 143, how to remember? I love you. What is I? One letter word. Love is 4 letter. U is 3 letter. Okay. प्यार ने 12 बजा दी. Okay. As per section 143, subsection 12 and rule 13 of Companies Audit and Auditors Rule. Companies Audit and Auditors Rule. Rule 13 of Companies Act. Okay. As per section 143.12 of Companies Act and rule 13 of Companies Audit and Auditor Rule. Auditor during the one last time. As per section 143.12 and rule 13 of CAR, Company Audit and Auditor Rule. Auditor during performance of his duties as statutory auditor. Slowly. Whenever we are doing statutory audit, we have reason to believe that an offense of fraud which involves or is expected to involve individually amount of 1 crore or more. Let's break. Whenever I am doing statutory audit, I find fraud, not error, fraud, okay, which involves, I don't know exact amount, involves or is expected to involve individually amount of 1 crore or more. There are 3 fraud: 30 lakh, 40 lakh, 30 lakh. Not allowed. Individually fraud should be 1 crore or more. Is being or has been. Is being means is going on or it is already done. In future it will happen, I feel that is not covered. Is being or has been. One more time. Is being or has been committed against the company by officer or employee. We will report to central government. Arey, but for Reliance 1 crore immaterial. Friends, fraud is there. Fraud means person is wrong. Whenever person is wrong, today he has done 1 crore, tomorrow he will do 1000 crore. Central government now wants to investigate. Are you doing something wrong or your entire company is wrong, baby? Are you clear? One more time. As per section 143.12 and rule 13, auditor during performance of duties as, I will take a pause when important, statutory audit, has reason to believe that an offense of fraud, not error, fraud, okay, is individually amount of which is 1 crore or more. Individually amount is 1 crore or more. Not exact amount, I don't know. Okay, is being or has been, is already been or continuing, has been committed against the company by 2 people, officer or employee. We will report it to central government. Understood? Very, very nice. Huh? As per section 143.12 and rule 13 of Companies Audit and Auditors Rule and Companies Act section 143.12, auditor during performance of duties as, which auditor? Tell me. Statutory auditor. Has reason to believe offense of fraud. Has reason to believe offense of fraud. Okay, which involves or is expected to involve individually, means that one fraud should be there. 30 lakh 4 fraud are there, not covered. Individually amount of 1 crore or more. 1 crore also allowed. Okay. Is being or has been, is going on or has already been committed against the company by officer or employee, we will report to which government? Which government? Which government? Baby, don't forget central government. Okay. Now, how to report to central government? Huge procedure is there. Okay. I will show from diagram form. It will be more easy. Chart form. Here. Start. So fraud of 1 crore or more. How to report this fraud? Very, very simple. Whenever the fraud is 1 crore or more, how to report to central government? Within 2 days, you have to report to board or audit committee. Tell me, sir, perfect, board or audit committee? It depends. Audit committee section 177 is not applicable to all, only to big company. If audit committee is there, inform to audit committee. If not, board. Are you clear? Okay. Seeking their reply within 45 days. You have to ask for their reply in 45 days. Now, two things will happen. Either they will reply or not reply. If they reply or observation is received within 45 days, you have to forward the report plus reply or observation, forward the report plus reply or observation plus your comments to central government within 15 days within 15 days from the receipt of reply. So if they reply within 30 days, after that 15 days. If they reply in 44 days, from their 15 days. Understood? In which form you have to reply? Form ADT4. Form ADT4. 4 for fraud. Is it matching? In Ahmedabad, we have a restaurant. First, say food. 4 for fraud. 3 times you speak. 4 for fraud. 4 for fraud. 4 for fraud. 4 for fraud. Is it matching? If not matching, you have to match it. Are you clear? You have to report in ADT4. One more time, shall I explain? Yes, sir. Whenever fraud is of 1 crore or more, you have to report to central government. Tell me within how many days? Within 2 days, you have to report to board or audit committee. Okay, asking their reply within 45 days. Whenever they reply, you have to give that, you have to send that report, okay, plus reply of a board or audit committee plus your observations or comments on those reply, and send it to central government within 15 days of the reply or receipt. Are you clear? You have to send to central government whom? Amit Shah or Narendra Modi? In central government, Amit Shah, no Narendra Modi. You have to send to Secretary, Ministry of Corporate Affairs, Secretary MCA, Secretary MCA, Secretary MCA, Secretary MCA. In registered post, acknowledgement due. Registered post, acknowledgement due. In registered post, you have to ask for acknowledgement also. Or you can also send by speed post, but then obtain their confirmation on email that you have received. Take their confirmation. Whenever you receive speed post, please send mail. So we understood that you have got the fraud. Then you can take the action whatever you want to take. Secretary MCA. Report shall be sent in form number ADT4. 4 for fraud. 4 for fraud. Understood? Okay. I hope you are clear. One last time. Sir. Main thing though you forgot. Oh wow, thank you for telling. If fraud is of if they don't reply, what to do? You have to inform to central government, but first you have to inform within 2 days to board or audit committee, seeking their reply within 45 days. If they don't reply in 45 days, okay, what will happen? Forward the report plus note containing that they did not reply to central government. Forward the same report plus note that they did not reply, okay, within 15 days after expiry of 45 days. Within 15 days after expiry of 45 days. In which form? ADT4. Whom? Amit Shah. Not Amit Shah. You have to send to Secretary, Ministry of Corporate Affairs, Secretary MCA. Registered post, acknowledgement due. Ask acknowledgement from them, or send by speed post but confirmation obtained from email that you have received. Understood? And you have to send in form number ADT4. ADT4. For fraud. Understood? If fraud is of less than 1 crore, then what to do? Then you have to report only to board or audit committee. If it is less than 1 crore, don't disturb. Ministry of Corporate Affairs, Anurag Bhai, very busy. Who is Anurag Bhai? He sits in MCA. Report to board or audit committee within 2 days. Okay, you have to report 3 things: PAN, party involved, amount involved, nature of fraud with description. 3 things: PAN, party involved, amount involved, nature of fraud with description. Only inform to board or audit committee. Party involved, amount involved, nature of fraud with description. And also in board of directors report, they will write party involved, amount involved, nature of fraud with description, and remedial action taken. Okay, what action they have taken. In board report, they will write. Board report is issued by board of directors. In board report also they will write what? 3 things. You have to check whether they have written party involved, amount involved, nature of fraud with description, and action taken on the fraud. If not taken also, you have to write no action taken. I hope you are clear. Very, very simple. Absolutely simple. Shall we revise the last time or no need? No need, sir. Now you speak once. Okay. Tell me, whenever there is a fraud of 1 crore or more during statutory audit is being or has been committed while I am doing the audit, I have to report to board or audit committee within 2 days of the fraud. After that, give time to board or audit committee of 45 days. If they reply, then as soon as reply comes within 15 days, I have to report to central government, secretary, ministry of corporate affairs in registered post acknowledgement due or speed post followed by email. But this should be in auditor letterhead. And which form? ADT4. ADT4. If they don't reply also, okay, after expiry of 45 days, I am given 15 days in which I have to send. Are you clear? Okay. But if it is less than 1 crore, then what to do? Only inform to audit committee. Tell me, audit committee or board, I will tell 3 things: party involved, amount involved, nature of fraud with description. And then in board report, 4 things should be there: party involved, amount involved, nature of fraud with description, and remedial action what they have taken. What board have taken the action? Okay. This also applies mutatis mutandis. In the same way, in the same form, also to cost audit and secretarial audit. What is cost audit? Our friend cost auditor ICWA, secretary auditor our other than friend CS, CA and CMA, CS and CMA, CS and CMA. CS section is 204, CMA is 148. This provision shall also apply to cost auditor 148, secretarial auditor 204. Okay, so cost audit and secretarial audit also have to report the fraud while they do the audit. Okay, if we fail for listed company, penalty can be, if we fail to comply with the provisions. Okay, if auditor fails, then what will happen? He has to pay listed company penalty 5 lakh, other company 1 lakh. Listed company 5 lakh, another company 1 lakh. Are you clear? See here. If any auditor, cost auditor, company secretary fails, in case of listed company, penalty is be liable to a penalty of 5 lakh, and in case of any other company, unlisted company, it can be what? 1 lakh. I hope you are clear. Yes, sir. Very, very simple. Now last, auditor unable to continue the engagement. If due to some reasons, okay, due to fraud or suspected fraud, you are unable to continue engagement. First point, determine professional and legal responsibility. Whether you have to inform to the people, okay, who made your appointment, or to whom a TCWG management that you want to leave the assignment. Determine legal and professional responsibility, including where you have to report to person or person who made the appointment, or regulators you have to tell. Whether it is appropriate to withdraw, under the law or regulation or not. Sir, when it will be appropriate, when it will not be appropriate. See, during the initial stages of audit, you can leave. Otherwise, later, when the audit is just supposed to end, you cannot leave. Are you clear? Okay. So number 1, if auditor wants to withdraw, if due to fraud or suspected fraud, auditor cannot continue. First point, determine legal or professional responsibilities. Whether he has to report to persons who made the appointment or regulator. Second, okay, see whether it is possible to withdraw under law or regulation. If you are government auditor, you cannot leave. Are you clear? So if auditor withdraws, determine, discuss with appropriate level of TCWG and management reasons for withdrawal. If you withdraw, you have to discuss with TCWG and management. This is the reason I am leaving. Determine professional and legal responsibility to appoint to person or person who made appointment or regulator. Tell regulator I am leaving due to this reason. So whenever new auditor comes, they will take care that in Byju's such thing is happening. Are you clear? Very simple. Now, conclude. If as a result of fraud or suspected fraud, you encounter exceptional circumstances, you cannot continue engagement. Determine legal or professional responsibility to inform to people or persons who made your appointment or to regulator. Second man, see whether it is possible to withdraw under law or regulation. If not possible, continue. If possible, what you will do? Determine appropriate level of, discuss with appropriate level of TCWG and management reasons for withdrawal. And also determine legal and professional responsibility to tell to person or persons who made appointment and regulator that I am leaving, so they will be more cautious when new auditors come. Last, in Caro also we have to write, whenever fraud is done, see, we have to inform central government is fraud is done on company by officer or employee. In Caro what will happen? Any fraud is done by the company or on the company. If company does or someone does on the company, both is covered. Auditor is required to report under Caro whether any fraud done by the company or on the company by officer or employee. And another difference is, be it 1 rupee also, it is covered in Caro. Caro 1 rupee also covered, but that will learn in Caro separately. I hope you are clear. In Caro, what is there? Okay. Auditor is required to report under Caro whether any fraud is done by the company or on the company by officer or employee. So there are few differences between central government and Caro. In central government, if it is 1 crore or more, only report. Here, Caro, what you have to report? Every fraud, be it 1 rupee also, done by the company also. There it was only on the company. Here, by the company or on the company, by officer or employee, you have to report. Okay, you have to write nature and amount. Nature and amount. Wonderful chapter. I hope you enjoyed as much as I did putting it. There's one fraud risk factors, but that is same as this fraudulent financial reporting. Fraud risk factors. So that is exactly same you can read. I hope you enjoyed this wonderful, nice, amazing chapter as much as I did putting it up forward for you. If you like our videos, do give a like button. Put in a nice comment, okay? It will motivate us to work even better, even best, okay? And do consider subscribing India's #1 channel. We bring here only positive content. Thank you so much for listening to us. See you in the next chapter. Bye-bye. Take care. Thank you. Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, warm welcome to our YouTube channel. Continuing with mega marathon revision series on CA Inter auditing in only English. Today we are starting with chapter number 10, one of the nicest chapters, easiest chapters, but little lengthy chapter. Be rest assured, we are going to make this super easy for you. Okay, one more thing. These lectures are in no way substitute to the regular or fast track lectures. Of course, you have to do them. Okay, after that, this will be immense confidence booster lecture for you. Let's start. Sir, I want to ask one thing. Okay, we are starting with this, but I want to ask one more thing. Where are you doing this revision from? We are doing this from our magic book, which covers entire syllabus in 86 to 90 pages. We have worked very hard for this book. If you feel, you can purchase the book. If you already have some material and you are comfortable, no need to purchase. Can we start, sir? Yes, sir. Let's start. So chapter 10, company audit, qualification and disqualification of auditor. Who can do company audit? See, Companies Act you have already learned. Yes, sir. Companies Act, I am champion. I know Companies Act best. Okay, very good. Companies Act you have already learned. What this chapter will tell you then? This chapter will talk about all the sections which are relevant to auditor. Okay, in Companies Act there were a lot of things, but whatever is related to audit, which that we are going to study again in this. So it's a repetitive chapter. Already all things you have studied under Companies Act, but those things which are relevant for audit, relevant for auditor, which has any relation with company audit are covered here. So it covers basically section 139 to 148. Okay, in that also not everything, few sections. Can we start? Yes, sir. Okay, who can do audit of company? Tell me. Number one, any person who is a chartered accountant can do audit of company. A person who is eligible for appointment as auditor should be chartered accountant and holding COP. See, there are two kinds of chartered accountant, one who is doing job and another who is holding certificate of practice. Okay, those who are doing job, okay, there are two certificates: certificate of membership, certificate of practice. As soon as you are a member, you have to take certificate of membership. He cannot do audit. Membership plus he should have COP. For that, additional fees are to be paid. Practicing chartered accountant can do audit of company. So it can be done by any CA having COP. Okay. Second, can firm be appointed auditor? Yes, firm including LLP can be appointed, but majority of the partners should be what? Chartered accountant. Let's take an example. Firm can be appointed including limited liability partnership also is appointed as auditor of the company. Okay. Now, I want to ask one example. Majority partners should be CA. 3R, 4R CA. Okay, 3R CMA and 3R CS. Okay, so total how many partners are there? 4 plus 3, 10. Okay, so in 10 partners are there, 4 C are there, 3 CS are there, 3 CMA are there. Total are 10. Okay, so out of which CMA and CS are 3 each. CA is 4. Can CA be appointed as auditor? CMA CS33 but CA4 majority तो CA is there can be appointed. Absolutely wrong. Majority in total number you have to say. Total number is 10, so more than 5 should be 6 people should be chartered accountant. Understood? A firm can be appointed as auditor, but total majority should be chartered accountant. Firm can become the auditor if majority of the partners practicing in India are qualified for appointment as auditor. So if 3 are CS, 3 are CMA, 4 are CA, it is not eligible because total number is 10. More than 5, at least 6 CA should be there. I hope you understood. LLP can also become auditor. Okay, firm including LLP can become the auditor, but only partners who are CA can sign on behalf of the firm. Any other lawyer partner, CS partner cannot sign. Only this is an exclusive right only given to chartered accountant. So very simple. Qualification: who is qualified to do company audit? Okay, any CA plus holding COP. Okay, can firm be appointed? Yes sir, firm can very much be appointed, but in firm there is one clause, don't forget, majority of the partners should be CA. Total majority. LLP can be appointed, yes, but only the partners who are CA can sign on behalf of the firm. Now come here. Disqualification list is huge. Don't worry, but we will make it super easy. What is disqualification? Body corporate cannot do the audit. Okay, body corporate other than LLP. So number one, disqualified means these people are not qualified to do company audit. They cannot do company audit. Okay, what do you mean by the word disqualification? These are not qualified. See, this disqualification we have to check on date of appointment and thereafter. Before he was disqualified, forget it. You have to check on the date of appointment and thereafter. So if the auditor is appointed on 1st July, we have to check disqualification on 1st July and not before that. And of course thereafter. Number one, body corporate. Body corporate is not allowed company audit. Let me tell you the logic. Body corporate is artificial legal person. Okay, if any fraud happens, who is responsible in company? There is no one. Company is different, shareholders are different, owner is different, company is artificial legal entity, directors are different, company is different. Audit is a business of trust, reliability, authenticity, etc. Okay, so in audit there should be someone responsible if fraud happens. Otherwise, so many shareholders will suffer. So for a company, if a company does audit, who will be responsible if fraud happens? No one in company, so it is artificial person. That is why company cannot do audit of company. Okay, company audit cannot be done by another company. But LLP is also like that, only separate legal entity. But LLP is a new form of organization. It has majority features like partnership. Okay, just only one thing is related to company, artificial person, and in that partners, though partners are not liable in LLP also, but we want to promote LLP. It's a new form of organization. So LLP is allowed, but body corporate is not allowed. Understood? Because in body corporate, who will be responsible if fraud is that? If that company does fraud while doing auditing, who is responsible? Are you clear? So number one, body corporate including dash, would including LLP is not responsible. Shall we go ahead? Okay. Body corporate is not allowed other than LLP. LLP is allowed. Continue. Officer or employee of company. How is officer and employee? Understand. How can he can do company audit? He is officer, his employee has to be biased. Mr. Jayesh Bhai is the officer of Reliance. Can Jayesh do audit? Of course no. Jayesh has to listen to Mukesh Ambani. Are you clear? How the hell Jayesh will do audit? There is an employee of Reliance. Okay. Mangesh. Can Mangesh do audit? Are Jayesh Kumar also cannot make own decision. How will Mangesh make? So officer or employee is not allowed. Third, partner or employee of officer. Partner or employee of employee is also not allowed. See, officer or employee not allowed. Now Jayesh Kumar has another firm, Jayesh and Associate. Partner of that Jayesh and Associate is Nishit. Can Nishit do company audit? Of course, Nishit can also be influenced by Jayesh Bhai, and Jayesh Bhai is fully influenced by Mukesh Bhai. All are Bhai. So Nishit also cannot do partner or employee. Jayesh Bhai employee is Pooja. Can Pooja do audit? Of course no. If Jayesh Bhai cannot do, why the hell Pooja can do? Are you clear? So officer or employee of, sorry, partner or employee of officer. Second, partner or employee of employee. Mangesh is there. Mangesh partner is Sangesh. Mangesh and Sangesh associates. Can Sangesh do? No. Why? He is influenced by Mangesh, and Mangesh is so fully influenced by Mukesh Bhai. If by mistake Mangesh will tell, I will issue adverse report. Mukesh Bhai, I will make your life adverse. Your job is gone. Okay, so no, partner or employee. Now Mangesh employs Shreya. Can Shreya do? Arey, Mangesh employs Sangesh also cannot do what Shreya will do. Shreya has to listen to Mangesh. Mangesh has to listen to Mukesh bhai. I hope you are clear. Till now 3 points are done. Body corporate other than LLP. Officer or employee of the company. Partner or employee of officer. Partner or employee of employee. I hope you are clear. Partner or employee of officer or employee. Third, a person or his relative or his partner. Person, relative or partner. Let's understand three. Person himself CA. What are his relative? List of relative is long, so listen only one time. Okay. It is actually in revision lecture we cannot cover, but still we will cover. Don't worry, don't worry. Okay. Arey, open fast. Student getting late. Okay. Year. Not year. See this person, who all are his relative? Dad, stepdad, mother, stepmother. Understood above. Dad, stepdad, mother, stepmother. Come below. Son, stepson, son's wife, stepson's wife. Simple. Son, stepson, son's wife, stepson's wife. Daughter, daughter's husband. Stepdaughter, daughter also we are allowing is a big thing. Stepdaughter, she will go get married, so not allowed. Okay. Daughter, daughter's husband. Now, stepdaughter's husband not covered. I hope you are clear. Spouse, of course, spouse, so you have to consider no. Everything in India we will transfer in spouse name only. Okay. Brother, stepbrother, sister, stepsister. These all are relative. One last time I will explain. Dad, stepdad, mother, stepmother, son, stepson, son's wife, stepson's wife. Okay. Then who was there? Daughter, daughter's husband. Come this side. Brother, stepbrother, sister, stepsister, spouse. Are you clear? Now, all these are allowed or not allowed? Person, relative or partner. If a person is there or his relative or his partner is holding any security or interest in five company. Now understand this five very nicely, because again and again same thing will come. And I cannot explain again and again. Your time also wasted, my time also wasted. So listen very nicely. Yes, sir. If you are holding any security or interest, security means share. What is interest? In companies limited by guarantee. Okay, companies limited by guarantee, cooperative society, etc. In that securities are not there. Okay, interest is there. Cooperative society. There are 26 homes. So you get one home. If you purchase one home, you are holding one unit. Okay, so it works like that in cooperative society. But forget, a company, person or his relative or his partner is holding any security or interest in chain is nice. Company, if you are holding any security in the company, holding company, subsidiary company, associate company, subsidiary of such holding, then you are not qualified for appointment as auditor. Oh my God, really? Yeah. If you are holding any security in the company, okay, you are not holding in company, but you are holding in holding company, then also not qualified for that company. Subsidiary, then also not qualified. Associate, then also. Subsidiary of such holding, then also you are not qualified for appointment as auditor. Understand very nicely. What is holding company? If they have more than 50% stake in your company. What is subsidiary company? You have more than 50% stake in their company. What is associate? Okay, you have 20 to 50% stake, that is significant influence. And of course, holding of such subsidiary, you understand. So, one last time, person or his relative or his partner. One more time please. Person, relative, partner is holding any security or interest in company, holding company, associate company, subsidiary company, associate, subsidiary of such holding is not qualified. You cannot do the audit of company. If you are holding any security interest in company, above holding, subsidiary, associate. See, simple. Holding, subsidiary, associate. Subsidiary of such holding, then you are not qualified. Relatives can hold share up to face value 2 lakh. Relatives are, see, person and his partner cannot hold even 1 paise of share. Okay, relative can hold up to 2 lakh. But the day it goes above 2 lakh, you are given time to rectify within 60 days from the date of acquisition. If you rectify, you are still qualified. If you cannot rectify, are you clear? Then you are disqualified. One last time, you are holding any security or interest in company, holding company, subsidiary company, associate company, subsidiary of such holding company, then you are allowed. Relative can hold shares. Relative can hold how much? Face value 2 lakh. Market value 25 crore allowed. Yes, market value how much ever. Relative can hold how much? Up to 2 lakh. But one clause is there. Okay, they are given time to rectify within 60 days from date of acquisition. Within 60 days. If it goes above 2 lakh limit, they have to rectify within 60 days. Up to 2 lakh allowed. Otherwise, to every relative will hold 1 lakh share, you are disqualified. Too much fun. Okay, that much fun they don't want to have. You are indebted to company, holding company, subsidiary company, associate company, subsidiary of such holding in excess of 5 lakh. If you are indebted for more than 5 lakh, then you are disqualified. You have given guarantee or security in connection with third party. You have given guarantee or security in connection with third party to company, holding company, subsidiary, associate company, subsidiary of such holding in excess of 1 lakh. If you are giving guarantee in excess of third party, then also you are disqualified. I hope you are clear. Next, person or firm has business relationship. If you do any business relationship with company, holding company, subsidiary company, associate company, subsidiary of such holding company, then you are disqualified. Except, okay, in the nature of professional service you are rendering as auditor, that is allowed. Okay, professional service you are giving, that otherwise business relationship is not allowed. Why? If you keep business relationship, what will happen? Whenever there is business relationship, you will be little biased towards them. You want them to do well, so you receive the order. So professional service is allowed by auditor. In ordinary course of business at arm's length price, at market price, if you do ordinary course of business, allowed. Okay, but exceptional relationship should not be there in the ordinary course of business for hat industry. What is hat? Hotel, hospital, airline, telecommunication and similar other business. See, if you are going to Jaipur and there is only one hotel by your client, there is one nice hotel of your client, why will you not stay there? Allowed, you can stay. Are you clear? If that is a nearby hotel, you are allowed to say. Hotel, hospital, your mom is not well, suddenly you have to go to Ruby Hospital Pune, Ruby Hospital Pune, and Ruby Hospital is your client. Will you let your mother die or go? Sir, I will go, whatever happens. Allowed. They understood this. Hotel, hospital, airline, you are the auditor of Indigo Airlines and you have to suddenly go honeymoon you have to go, and Indigo flight only available Jammu Kashmir. Will you go? Yes sir, why will I not go? Honeymoon is there. Okay, telecommunication, you are the auditor of Jio, can you use Jio SIM card? Allowed. If you are using a Jio SIM card and you are doing audit of Reliance, is it allowed? Yes, allowed, because services of Jio are good. So for similar industry like hotel, hospital, airline, telecommunication, hat industry, hotel, hospital, airline, telecommunication, it is allowed. Why? Or any other similar industry, it is allowed. Professional service allowed in the nature of, okay, ordinary course of business at arm's length price for hat industry. Okay, so this is allowed. Second, a person, if your relative, who is a relative, I already told you, is a director or is employed as a director or key managerial person, then you are disqualified. If your relative is a director in a company, of course you will be selected, or you are selected as auditor because of your relative only, and you will be influenced by his decision. Or he is employed as director. Many times he is not the director, but we give positions like he is the finance director, he is HR director, he is marketing director, employed as director or given a position of director or key managerial person, then also you are disqualified for audit. Why? Because you will be influenced by him and you are selected as auditor because of him only. Continue. A person who is in full-time employment as well. If you are doing employment as well, you cannot hold COP, you cannot do audit. Okay, sir, I am holding COP, then also. Or if a person or a partner of his firm is holding more than 20 company audits as on the date of appointment, other than one person, company small, company dormant, company private, company having paid up share capital 100 crore or more. Let me explain this better. Come here, come here, come here. Where to come? 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 I will let you know. Here. See, if you are in full-time employment as well, you are disqualified. Otherwise, also ceiling limit of 20 company audit is per auditor. You can only do 20 company audit in a year. Why? We want to do good quality assignment. We want to give work to everyone. Two reasons are there. I want to do excellent quality of assignment, and I want to give work to other also. Listen one more time. There is only 20 company audit which a CA can do. Why? Okay, two reasons are there. Number one, I want quality audit. limits. Okay, excellent quality. And second, see, if the limit is not imposed, only senior people will keep on getting auditing. All our junior members like you are going to be CA will never get audit because senior will keep on getting more audit. Okay, that is why 20 limit. Ceiling of 20 limits as on the date of appointment, excluding. In this 20, don't include this company. Why? You want quality audit, then why not to include? 14 lakh companies are there, 15 lakh companies are there, only 3 lakh charter accountant are there. In practice, only 2 lakh are there. If everyone will do 20, then also limit will not get over. Only 4 lakh will be there. 15 lakh companies are there. Are you clear? Number of CAs are very less. Okay, that is why these are excluding 1% company, dormant company, small company, private company having paid up share capital less than 100 crore, who are not included. From small to large, 1% company, small company, dormant company created for future projects, sleeping company created for future projects. Okay, private company having paid up share capital less than 100 crore. If it is more, it is included because it is like a big company only. But in this also include if they have done default in filing annual returns under section 92 or filing financial statement under section 137. Are you clear? Yes, sir. Okay, include in the ceiling limit of 20 if they have done default in filing annual return under section 92 or default in filing financial statement under section 137. Are you clear? 20 limit is person wise and not firm wise. Are you clear? Person wise and not firm wise. Absolutely clear? Yes, sir. I hope you are clear. Okay, one more time shall I explain? Ceiling limit of 20 company audit is per person, in that don't include from bottom to top 1% company, small company, dormant company, private limited company if the paid up share capital is less than 100 crore, but include in the limit if they have done default in filing annual return or financial statement. Annual return or financial statements. Are you clear? Then include. 20 limit audit is per person and not per firm. In a firm, if there are 4 partners, limit would be 80. Okay. Then, if a partner is in 3 firms, then total combined capacity of that 3 firm is 20. 20 is per person. I hope you understood. Okay. Next, a person has been convicted by court of an offence involving fraud and a period of 10 years have not elapsed since the date of such conviction. Lot of points are there. Person has been convicted by court. If convicted by tribunal, anyone has not allowed. Convicted by court. Only case is going on. Still he can be given audit. Convicted by court of an offence involving fraud. If he has done error, then allowed. He can do audit. Okay. Of an offence fraud, it should be intentional. And 10 years have not elapsed from the date of conviction. 10 years. After 10 years, can he do? Yes. So, Paresh Sarjan has been convicted by court of an offence involving fraud and 10 years have not elapsed since the date of such conviction. A person whose subsidiary or associate is providing any service to the company, holding company, subsidiary company, okay, services under section 144, disqualified. One more time. Person, his subsidiary, associate, person, his subsidiary, his associate is giving any service to the company, holding company, subsidiary company, okay, prohibited services, then is not allowed to do audit. What are prohibited service given under section 144? Quickly come here. Certain services are prohibited. Certain services are prohibited. Certain services are, come on, prohibited. Which are prohibited? Bad mafia, bad mafia, bad mafia. First, let's understand investment banking service. Where do I invest my money? Investment banking. I want to acquire one company. Are you clear? So, merger acquisition is done. In merger acquisition, we have to decide the price. This is the fair price at which we can acquire company. If that services are given by CA, not allowed. Investment banking. Investment advisory. Put money in this share, put money in this share. If you are giving this service to the company, then you are not eligible for appointment as auditor. Investment banking, investment advisory. Investment banking, investment advisory. Design and implementation of financial systems. You are helping company in implementing ERP. Okay. You want to implement ERP. We will help you now. We will do consultation. No problem. Then don't do stat audit. Are you clear? Statutory audit. Management service you are giving. Actuary service. You understand what is actuary? Provident fund gratuity. See, provident fund gratuity is paid at the time of retirement, but every year I have to book an expense. So those are actuarial service. Outsourced financial service. You know what is outsourced financial service? Okay, which is better, from where to take loan is better, debenture is better, which bank is better. Okay, they will help you in getting the loan. If you are giving such services, okay, then you are not allowed to do audit of that company. Internal audit, if you are doing internal audit, you cannot do stat audit. Okay, accounting and bookkeeping service, any other service as may be prescribed. Okay, any other service also allowed. So if you are giving this services to company, holding company, subsidiary company, you are not eligible for appointment as auditor. With service, bad mafia, bad mafia, bad mafia, investment banking service, investment advisory service, investment banking service, investment advisory service, design and implementation of financial systems. Remember, learn, bad. Done. Investment banking service, investment advisory service, design and implementation of financial system. Mafia, management service, actuary service, outsourced financial service, internal audit, and last, accounting and bookkeeping service. We will learn mafia one more time. Management service, actuary service, outsourced financial service, internal audit, okay, accounting and bookkeeping service, last, any other service as may be prescribed. Sir, one more time, can you do? Mafia, management service, actuary service, outsourced financial service, okay, internal audit, accounting and bookkeeping service, any other service as may be prescribed. I hope you are clear. Yes, sir. Let's try. Certain services are prohibited by auditor. Bad mafia, bad mafia, bad mafia. Investment banking service. A. Investment advisory service. Design and implementation of financial systems. Mafia. Management service. Actuary service. Outsourced financial service. Internal audit. Accounting and bookkeeping service. Any other service as may be prescribed. Break of 10 seconds. Done. Okay, try. Okay, certain services prohibited. Bad mafia, investment banking service, investment advisory service, design and implementation of financial system, management service, actuary service, outsourced financial service, internal audit, accounting and bookkeeping service. Over. Disqualification. Tell me who all is disqualified for appointment as auditor of the company. Long list is there. Okay, body corporate other than LLP. You don't have to learn these points, but each point should be officer or employee of the company, partner or employee of officer, partner or employee of the company, person, relative or his partner is holding any security or interest in company, holding company, subsidiary company, associate company, subsidiary of such holding. However, relatives can hold share up to face value of 2 lakh, but they have to sell within how many days? 60 days, not from date of appointment, date of acquisition. You are indebted to that in excess of 5 lakh. You have given guarantee in connection with third person in excess of 1 lakh. Person or his firm or his partner has business relationship directly or indirectly with 5 people as told. Company, holding company, subsidiary company, associate company, okay, subsidiary of such holding. Okay, professional service are allowed. Okay, and then in the nature of ordinary course of business at arm's length, price is allowed for hat industry. What is that? Hotel, hospital, airline, telecommunication. Hotel, hospital, airline, telecommunication. A person who is in full-time employment as well. If you are doing a full-time employment as well, or you are holding more than 20 company audits, okay, then you are not qualified for appointment. In 20, don't include one person company, small company, dormant company, private company, paid up share capital is less than 100 crore. Include the company if they have done default in filing annual return or financial statement. Person has been convicted by court of an offense involving fraud and a period of 10 years have not elapsed since the date of such conviction. Person or subsidiary or associate is giving any service to company, holding company, subsidiary company, okay, a prohibited service under section 144. What is prohibited, sir? List is big. Bad mafia, investment banking service, investment advisory service, design and implementation of financial system, management service, actuarial service, outsourced financial service, internal audit, accounting and bookkeeping service, any other service as may be prescribed. Now, let's come to second, appointment. See, this qualification and disqualification is fully over. Okay, that is section number 141. Qualification, disqualification, fully over. Don't remember subsections if you don't know. Okay, this is okay. If you can, well and good, otherwise it's okay. Appointment of first auditor. Let's finish first. Non-government company. What is non-government company? Which is not owned by central, state government, etc. Non-government. Who will appoint the first auditor of non-government company? BOD 30D. You have to remember BOD 30D. It matches BOD OD 30D BOD OD OD BOD 30 by board of directors within 30 days of registration of the company. First auditor shareholder cannot appoint. It's a new company. Okay, if we try to gather all shareholder, it will take lot of time, and auditor has lots of work. Okay, so appoint very fast. First auditor will be appointed by BOD 30D by board of directors within 30 days of registration of the company. If they fail, then members will appoint within 60 days after expiry of 30 days by holding EGM, extraordinary general meeting. 90 days. If they fail by members within how many days? 90 days. Okay, in case of government it is 60 days, here it is 90. Don't forget, if they fail, members will appoint within 90 days at EGM. Till how much time he will remain auditor? Till the next AGM. Whenever AGM is conducted, okay, till that time he will remain the auditor. I hope you are clear. One last time, let's sort it out. Okay, appointment of auditor, non-government company. First auditor has lots of work, so BOD 30D, BOD 30D by board of directors within 30 days of registration of the company. If they fail, members will appoint within 90 days at EGM. Okay, continue. How much time you will remain till that AGM? Now come to non-government company. Oh, boys and girls, what is non-government? Subsequent auditor. Subsequent auditor. Subsequent means next time onwards. Of course, members will appoint in the AGM. Members will appoint in AGM. Till how much time he will remain the auditor? Till 6th AGM. See, first auditor was appointed, then first AGM came in which he got removed. Now another came. Till 5 years he will remain in the company. Why? So he gets used to everything. In 1 year you are not getting used to only. So 5 years. So first 6th AGM he will be there. 6th AGM again members will appoint one more. He will remain till 11th AGM. Okay. Then 16th AGM and so on. I hope you are able to understand. Over. One last time shall I explain? BOD 30D within 30 days of registration of the company. If they fail by members within 90 days at EGM. Okay, sir. How much time he will remain? Till that AGM. Okay, then suppose subsequent auditor, non-government company appointed by members, shareholders. Okay, but remember he will be there for a term of 5 years, so he is appointed in first AGM, he will remain till 6th AGM. In 6th AGM again members will appoint till 11th AGM. Come to government company. In government company there is only one person who will appoint. CNAG. CNAG is no one, he is a person who will appoint. Okay, right now it is Girish Chandra. I think it is Girish Chandra right now. Okay, who will appoint? By Comptroller and Auditor General of India within 60 days of registration of the company. Within 60 days CNAG will appoint Comptroller and Auditor General of India. If they fail, BOD do all work in 30D. OD. OD. BOD does all work in 30 days only. If they fail, board of directors will appoint within 30 days of registration of the company. If they fail, members will appoint within 90 days. No, 60. Why? Because 30 already occupied above. About 30 occupied, so how much balance left? 60. Okay. If they fail by members within 60 days at EGM, how much time it will remain? Till conclusion of next AGM. I hope you are clear. Yes, sir, fully clear. He will remain till next AGM. Subsequent auditor. See, subsequent auditor by CNLG within 180 days of commencement of the financial year. Why such bumper time is given? 180 days, lot of time. Why? Because see, new company will be one only. New government company will not be 10,000 new companies. Okay, new government company every year will be 5, 6. So within 60 days. But next year, see, next year there will be old company plus new company. Lot of companies are there, so CNAG will take time within 180 days of commencement of financial year. Okay, understood. New companies are 1, 2 only, but subsequent auditor, so for every company we need to appoint, but it will be valid for 5 years. No, only one AGM. In government company only next AGM again new one is appointed. Who will appoint? CNAG within 180 days of commencement of financial year. I hope you are clear. Government company, let's close this. By CNAG within 60 days from date of registration of the company. If they fail, by member within 30 days. If they fail by BOD in 30 days. If they fail by members within 60 days after expiry of 30 days by holding EGM, extraordinary general meeting. Subsequent auditor, always remember only one person, CNAG, within 180 days of commencement of financial year. Over. Now, Government company, filing of casual vacancy. Whenever there is a casual vacancy, okay, what do you mean by the word casual vacancy? Earlier he was qualified, now he is disqualified. Okay, due to any reasons he attracts disqualification. His relative is a director, his relative is holding more than how much shares? More than 2 lakh of share. Disqualified. How to fill that? How to fill that? Okay, casual vacancy. Casual vacancy, how to fill that? Section 139 only, casual vacancy. If it is due to other than resignation, auditor is not resigned, then if it is due to death, disqualification, the death of the auditor, dissolution of the firm, disqualification, BOD 30D, BOD 30D. Very simple. Yes, sir. Any other reason is there, then board of directors will hold a meeting and come out with a name in 30 days. Such appointment shall be approved by members within 3 months from the date of recommendation. Okay, so if it is due to resignation, means it is a serious matter. Resignation means auditor will never leave. There's something wrong in the company, so procedure is little big. Okay, detailed procedure will come later, of course. If it is due to resignation, board of directors will conduct a meeting and come out with a name, conduct a meeting and come out with the recommendation within 30 days. Such recommendation shall be approved by shareholder within 90 days from date of recommendation, or 3 months from the date of recommendation. In case of government company, if it is due to death, disqualification, dissolution or resignation, only one person, C and AG within 30 days. C and AG within 30. If they fail, member BOD within 30 days. BOD 30 days. BOD 30 days. I hope you are clear. If in government company, all work will be done by C and AG within 30 days. If they fail, BOD 30 days. BOD 30 days. Clear. Now come to next, rotation of auditor. Remember one very important thing. Auditor section 139 is only there. Appointment, rotation, all 139. Qualification, disqualification 141. Remember now. Okay, rotation of auditor. Remember, auditor should not get used to a position. Whenever you are too used to something, what will happen? There is a high chance you will do fraud. Let me take an example. Reliance. Chaturvedi and Shah is the auditor of Reliance since 36 years. Aditya Birla, Kimji, Kuvarji since 17 years. Tata Steel, Deloitte is auditor since 17 years. Infosys, BSR. BSR is auditor of Infosys. BSR is Deloitte only. Okay. Deloitte is auditor since 16 years. Whenever you are too used to certain thing, you will never catch the fraud. You will not even audit a few areas, because if you tell them, sir, please show this in detail. So last year you had seen, you are our auditor since so many years. So when you are too used to something, are you clear? There is a high chance fraud will happen. That is why government realized this and section 139 came. Auditors need to be rotated. So all auditors get a chance. Plus, we are not used to a particular assignment and frauds will come out if any. Let's do it. Rotation is applicable to whom? Tell me, listed public company, unlisted public company, listed public company, of course applicable. Unlisted public company, okay, having paid up share capital 10 crore or more. First of all, so to listed, everything is applicable. Unlisted public company paid up share capital 10 crore or more. Private company paid up share capital 50 crore or more. Okay, companies other than 2 and 3, other than unlisted public company or private company, if their borrowings are 50 crore or more from bank, public institution or financial institution or public deposits, then also they are allowed. Are you clear? Let me tell first, it is applicable to whom? Listed public company applicable to them, everything is applicable. Unlisted public company, if their paid up share capital is 10 crore or more. Private company, if their paid up share capital is 50 crore or more. Companies other than unlisted public company or private company, if by mistake they are borrowing 50 crore or more. Why? See, whenever you take borrowing, there is a high chance you will try to show more earnings. You will do fraud with the help of auditor. So if your borrowings are 50 crore or more, though your paid up share capital is less, still it is applicable. Still rotation is applicable to you. Understood? Okay. Borrowing include bank, financial institution, public deposit. PBF, public deposits, bank, financial institutions. Are you clear? It is not applicable to whom? Small company, one person company. Small company, one person company. To them it is not applicable. Understood. Okay. Now, shall I explain one more time? Yes, sir. To whom rotation is applicable? Listen very nicely. Listed public company, everything applicable. Unlisted public company paid up share capital 10 crore or more. Private company paid up share capital 50 crore or more. Companies other than unlisted public company or private company. If, listen no, if, listen no, listening sir, speak. If, their borrowings are 50 crore or more from PBF. What is PBF? Public deposit bank financial institution. Okay, though their paid up share capital is less borrowing, then what to do if rotation applicable? You cannot appoint an individual auditor for more than 5 years. After every 5 years, auditor has to be changed if he is an individual auditor. In firm, okay, it is 10 years. Audit firm for more than 2 terms of 5 years means audit firm is there, then 10. Why for firm 10 and individual 5? Are in firm lot of partners are there, so together that firm, all partners will do audit. Okay, so 10 years is allowed. Otherwise, what will happen? Again, you have to keep on changing. Understood, sir? Individual auditor 5 years. Firm is there 10 years. After that, for how much time we cannot appoint? 1 year. Then again next year, 1 year I will relax. Then again appoint same auditor. No. Cooling period is 5 years. Okay, 5 years you cannot appoint the same auditor. No audit firm having common partner or partner to other audit firm whose tenure has just expired, okay, shall be appointed as auditor for a period of 5 years. 5 years cooling period is there. After your term got over, 5 years you have to relax and do other company's audit. After that again you can come back. 5 years cooling period. In that 5 years, no other firm can be appointed which has three things: common partner, common brand name, common trade name. Common partner, common brand name, common trade name, common control. These four words you have to remember: common partner, common brand name, common trade name, common control. Let me explain. Common partner: if ABC is a firm, okay, in which A is a partner, PQR is a firm in which A is a partner, PQR cannot be appointed. Why? Because common partner is there. Common partner. Common brand name, ENY. Companies like ENY have what? See here. ENY. Inside ENY, this many companies are there. SR Bartley Boy, SV Khataria, SRBC, Ernst Young LLP. This all cannot be appointed because brand name is common. When Reliance is audited by SR Bartley Boy and Company, SR Bartley Boy and Associate cannot audit Reliance. Why? Why? Because it is under ENY only. Okay, common brand name not allowed. So all these are under ENY only. They are just using different names. Yes. Okay. So common brand name. Common trade name is also same. Common control. Sometimes though firm is of different, okay, but you are only controlling, then also not allowed. Four words: common partner, common brand name, common trade name, common control, not allowed. Internal rotation is allowed. ABC is a firm. 2 years audit is done by A, signing partner. Then 2 years B is doing audit. Then 2 years C, that is allowed. Incoming auditor shall not be associated with outgoing auditor under same network. Four words: common partner, common brand name, common trade name, common control, common network. Okay, not allowed. Same network means same brand name, same trade name, control. I said common partner, no. Common brand name, no. Common trade name, no. Common control, no. Break in 5 years shall be continuous. Okay, understood, sir. Auditors rotation is clear. Yeah, fully clear. Remuneration of auditor shall be appointed. See, who will fix the remuneration of first auditor? Who appointed them? BOD 30D. Let them only fix. Board may fix remuneration of first auditor. After that, of course, members will fix every time. First auditor who appointed? BOD 30D. Let them fix. Otherwise, it shall be fixed in general meeting by members. What will include in remuneration? Fees payable, expenses if any incurred in connection with audit, any other facility given to him, hotel, cab, okay, all this, out of pocket expense, flight tickets, etc. That is number one, fees payable. Expenses if any incurred in connection with audit and any other services given to him. It doesn't include any other service rendered at the request of company. For example, you are doing tax audit also. Those fees are not included in auditor's remuneration. It has to be shown separately. Tax audit, GST filing you are doing, okay. Recruitment you are doing. So all that is not allowed, not included. Three things: fees payable, expenses if any facility given to auditor. How many company audit can you do, guys? How many company audit? 20. But tax audit you can do is 60 per person. Company audit 20 per person. Tax audit 60 per person who is a CA. So now, company audit, if I am doing English, included in which limit? Company audit limit, not tax audit. Company tax audit I am doing. It is included in which limit? Tax audit. Why are you counting limit? Because I can do only 60 tax audit and 20 company audit. Okay. If I do, usually third point is done, stat and tax audit, both I do, then both it will be included. If I individual tax audit, not included. These are what? These are what? No, individual tax audit also included. Individual tax audit is included in tax audit. If I file income tax returns, then it is not included in any. Not included in any. Okay. Because that is not doing audit. Okay. So tax audit 60, be it company, individual, and company audit 20. Next. Let's come here. Constitution of Audit Committee. For those of you who don't know what is Audit Committee, in law you must have learned. If not learned, I will tell you. Audit Committee is responsible for 4 to 5 things. Accounts of the company, okay, coordination with auditor, completing audit on time, okay, overseeing that auditors have no problem while doing the audit, finishing all compliances of auditor in time. For that there is an audit committee. In that, two-thirds should be what? Independent directors. Okay, so they can do audit, so auditor can coordinate with them in unbiased way. Okay, so audit committees are there in bigger companies. To whom it is applicable? All? No, limited company only audit committee is applicable. Can we start? Yes, sir. But briefly, you understood, in law also covered. They will be responsible for accounts, audit, okay, overseeing audit is done properly. Auditors will communicate matters with them. They will help us, auditor, in doing audit in a better way. Whom applicable? Listed company, everything applicable, I told you. Unlisted public company, PBT 10 50 100, PBT 10 50 100, PBT 10 50 100, paid up share capital 10 crore or more, borrowings 50 crore or more, turnover 100 crore or more. Even if one point is applicable, audit committee is applicable to you. One more time, it is applicable to whom? Company, listed public company. Unlisted public company, if paid up share capital is 10 crore or more, borrowings are 50 crore or more, turnover is 100 crore or more. Borrowing include deposit, debenture, loan, borrowing. Now, what is there? Why did I explain you the word audit committee? Okay, why? Because in selection of auditor, audit committee plays very important role. Whenever I want to select auditor, audit committee plays very important role. Okay, so first, audit committee will give the name to board of directors. Understand, board of directors is big, out of which certain directors are part of audit committee. Auditors are also part. Okay, they coordinate with auditor and help in doing audit and accounts in a better way. Now, audit committee will tell Mr. Mahesh should be appointed as as auditor. Board of director may agree or disagree, but let's assume they agree with Mr. Mahesh name. Board of director will give the name to shareholder in the meeting, and shareholder will appoint them. Further recommendation is made by board of directors to members who will appoint the auditor in AGM. This is simple situation. Read once. Now, many times board of director don't like the name. Audit committee has given the name to board of director. Board of director don't agree. Then they will send the name back to audit committee citing reasons for disagreement. Okay, due to this reason I don't like. Audit committee can again give a name to board of directors or even not give. If board disagrees with audit committee, it shall refer back recommendation to audit committee citing reasons for disagreement. If audit committee, after seeing the reasons, okay, decides not to reconsider its original recommendation, after the reason they find that board of director is just doing time pass, okay, now decide that will not reconsider our recommendation, will not send it back, then board will come out with their own name and send it to member. Write that audit committee has given this name, but we did not agree. Okay, according to us, he should be audited, and then members will appoint them in AGM. Okay, then members will decide. Send its own recommendation to members in AGM. I hope you are clear. Very simple. One more time. See, audit committee will give a name to board. Board agrees with the name, it will give to members who will appoint the auditor in the AGM. Now, board doesn't agree. Board will write reasons for disagreement with audit committee. Audit committee may decide not to send its recommendation again. If they send, well and good. If they don't send, what will happen? Board will write its own name along with reasons for disagreement with audit committee to the members, who will decide whom to appoint as the auditor in the AGM. Clear? Yes, sir. Come to next now. Auditor's duty in case of resignation. Whenever auditor resigns, remember, most important thing is you will never resign as an auditor. No one likes resigning as auditor. If you are resigning, you are losing your fees. When do you lose your fees? When there is a small matter or big matter? Has to be very big matter, only then I will lose my fees. Otherwise, why the hell will I lose my fees? Understand? Are you clear? Auditor's duty in case of resignation. Whenever I want to resign, within 30 days file a statement in form ADT3 with company and register stating the facts and other reason causing resignation. Sir, I did not understand only. Let me tell you better. Whenever you are resigning, you have certain, see, remember, you will never resign, and whenever auditor resigns, no, remember, next year big fraud is going to come out, because no one will resign. Understand? When you are resigning, there is a big fraud which will come up, because why will I leave the assignment? Within 30 days you have to file a statement in form ADT3. You have to file a statement stating and send it to company and register, okay, stating facts and other reason causing resignation. For government company, we need to send to company, register as well as CNAG. Okay. So as soon as you want to resign, within 30 days, you have to file a statement in form ADT3 causing facts and reason causing resignation to company and register. In case of government company, three people: company, registrar and CNAG. Company, registrar and CNAG. Now, okay, if we fail within 30 days, if we fail by mistake, you couldn't file ADT3 in 30 days. On 31st day, we are liable for how much? Section 140, we are liable for auditor's remuneration or 50,000, whichever is less. So if your remuneration is 20,000, you have to pay 20,000. If it is 1 lakh, maximum 50,000 you have to pay. Are you clear? On 31st day. If after that also you don't file ADT3, then you are liable for 500 per day. Maximum limit is 2 lakh. Okay, 500 per day, maximum limit is 2 lakh. Shall we close this now? Yes, sir. What is auditor's duty in case of resignation? Auditor has to file a statement in form ADT3 causing facts and reason causing resignation. These are the facts, these are the reason causing resignation. To whom? Who appointed you? Company and register. Company and ROC. Now, if it is government company, company, ROC, CNAG. If you fail on 31st day, you are liable for auditor's remuneration or 50,000, whichever is less. If after that also you fail, you don't file ADT3, 32nd day, you have to pay penalty of 500 per day. Keep on calculating. Max penalty is 2 lakh. Okay. Very good. Now, removal of auditor before expiry of his term. He is not resigning. We want to remove him. Okay. See, normally first auditor is appointed till AGM. Then from that AGM for 5 years, we will select another auditor. Okay. First to sixth. In between, we want to remove him. Why? Reason can be anything. We are not concerned. Okay. Removal of auditor before expiry of his term. Remember, removing auditor is a big thing. No one in this world has right to remove auditor because we are chartered accountant. But if there is a serious thing, you are incompetent or anything, okay, we want to remove. Board of directors shall pass a resolution in a meeting. Board of directors will pass a resolution. After dissolution, you have to inform central government in form ADT2 along with fees within 30 days of passing resolution. Why central government? So central government will take care. This company is removing auditor. We need to take care. Is there something wrong in this company? Why the hell are they removing auditor? And auditor is so much trust. He has done CA degree. Understand? Board of directors will pass resolution in a meeting. Within 30 days of passing what? Resolution, inform central government in form number ADT2. Okay. After approval from central government, members will see special resolution. See, normal resolution 50%, 75% approval. Remember, special resolution is passed only for few, very few things. Out of them, one is removal of auditor before expiry of his term. After approval from central government. Okay, members will pass special resolution within 60 days from approval of central government by holding EGM. but auditor should be given reasonable opportunity of being heard. Being heard, he should be given reasonable opportunity. I hope you are clear. Yes, sir, very much clear. One more time. Removal of auditor before expiry of his term. Listen, board of directors shall pass a resolution for removing the auditor. Board of directors shall pass the resolution for removing auditor. Within 30 days of passing resolution, take approval from central government in form number. You have to file a form ADT2 along with fees and take approval from central government. After approval from central government, within 60 days, members will pass special resolution, okay, of by holding EGM. But before removing auditor should be given reasonable opportunity of being heard. Sir, why such long procedure? First, board of directors will pass resolution. Then central government will give approval in 60 days. Then within 30 days. Then within 60 days again special. Because auditor is special. You are chartered accountant. We cannot remove you. But if something is seriously wrong, we can remove. Understood? Now, appointment of auditor other than retiring auditor. Appointment of auditor other than retiring auditor. You are not appointing the same auditor but the different one. Special notice is required for appointing auditor other than retiring auditor. After, if you are not appointing the same auditor, special notice is required for appointing. Special notice can be passed only by those who have more than 1% of voting rights. Okay, just for knowledge, I am telling, ignore. Special notice is required for appointing auditor other than retiring auditor. Retiring auditor, okay, can make representation in writing why he should not be appointed. Of course, the special notice, copy of the notice will go to all the members before 21 days of AGM. Okay. So, these representation should be circulated. See, if we are appointing normal auditor, nothing to do. If we want to appoint auditor other than retiring, special notice is required for appointing auditor other than retiring auditor. This representation should be this representation shall be sent to all the members. This special notice is sent to all the members. Along with that, auditor can make representation in writing why he should not be appointed. Okay, why he should not be removed. Auditor can make representation. This representation should be circulated to whom? Okay, all the members along with notice of AGM. Whenever notice of AGM will go 21 days before the meeting, representation of auditor can also go why he should not be removed. If company fails to circulate the representation, why? Either it is received too late from the auditor or company forget it, okay, then auditor can also read them out at the meeting. Auditor can read it out. If copy is not sent to members of representation, it will be filed with registrar. If any person feels auditor is misusing the rights, then copy of representation need not to be sent or need not to be read in the meeting. I hope you did not understand. Now you will understand. Appointment of auditor other than retiring auditor. 1, 2, 3, start. Whenever we want to appoint auditor other than retiring, special notice is required for appointing auditor other than the retiring auditor. This much understood. Special notice who can pass? More than 1% of voting right. Now, retiring auditor can make representation in writing why he should not be removed. He can write, people, maybe company, I am catching too many frauds of company, so company is removing me. Are you clear? Anything. He can write the reasons why he should not be removed, what work he has done, why these people feel that he is not doing the work, whatever he wants to write. Then notice will go of the meeting to members. Along with that, representation of auditor will also go. 100%, 21 days before the meeting, notice has to go. If that representation of auditors will also go. If it doesn't go, why? Either received too late from auditor, okay, already notice is sent, or company fails, then this representation will be read out in the AGM, okay, or if it is not sent to members, representation will also file with registrar, such representation. Now, if you feel that he is taking just publicity, okay, he is writing those things which are unnecessary, he is defaming the company, any person can send a request to tribunal, okay, tribunal. To whom? If any aggrieved person or company complains auditor is misusing his right and tribunal agrees, then it will not be read out or sent out to members. Understood? Yes. Next concept. All three are good. See, auditor's duty in case of resignation. Removal of auditor before expiry of his term. Appointment of auditor other than retiring auditor. All is 140. Very good. Next, easy topic, easy topic, easy topic. Almost on the verge of ending. If you are tired, don't worry. You can take 10-second break and come back. Very good. Welcome back. Essay 299. How to remember 9 and 9 both are related joint audit. See, joint audit is coming together of two or more auditor to do a particular assignment in a specific time and with specific resource. Sometimes big work is there, one auditor cannot do, so joint audit is required. In France, it is a rule compulsory, whenever there is consolidated financial statement, joint audit is compulsory. Two auditor, two firms have to come together. Reliance joint audit is done, Tata joint audit is done. Why? These are huge assignment. Joint audit is combination of two or more firms coming together to do a assignment in a specific time. Are you clear? Pooling of resources of more than two firms. In India also rule is going to come soon. Whenever there is consolidated financial statement in India also, joint audit will be compulsory. Now, what are advantage of joint audit? Very simple, sharing of expertise. One small firm is there Chaturvedi, another is what? ENY. So both can share expertise. Advantage of mutual consultation. You are not clear with particular IFRS, you can ask them. They are not clear, they can ask you. Better quality of performance, improved service to the client, lower workload will be there. Okay, lower staff development cost. You have to train only one staff, they will train another. Are you clear? Staff development cost, lower cost to carry out the work, your cost will be lower, of course fees also will be lower. Displacement of auditor, taken over in takeover, often prevented. Listen now, A acquired B, A acquired B. Okay. Now, auditor of A was P, auditor of A was X, and auditor of B was Y. Now, as A acquired B, okay, they can do joint audit. Joint audit of A can be done by XY. So, auditor will not be removed. Displacement of auditor, taken over in takeover, will be prevented. One more time. A acquires B, auditor of A is X, auditor of B is Y. Now, if A will acquire B, only A will remain. A joint audit can be done by X and Y. So auditor of B will not be removed. He can become joint auditor. Displacement of auditor, taken over in takeover, will be prevented. In respect of multinational company, you have branches in US and India. Joint auditor can be there. US appoint different one. Here India, joint audit. They will do their work, you will do. In respect of multinational company, work can be spread to local firm. Sense of healthy competition will be there. Both will work towards one target. Quality of audit will be better. Understood? Nothing great. 5-6 points will remember. What are advantage of joint audit? Sharing of expertise, advantage of mutual consultation, better quality of work, improved service to the client. 4 points simple. Sharing of expertise, mutual consultation, improved service to the client, better quality of performance. Okay. Then three lower are there. Lower workload, lower staff development cost, lower cost to carry out the assignment. Lower workload, lower staff development cost, lower cost to carry out the assignment. Last 2 to 3 points. Displacement of auditor, taken over in takeover, will be prevented. In respect of multinational company, work can be given to local firm and sense of healthy competition. If you cannot learn this much, 6-7 points are enough. Very simple. Sharing of expertise, advantage of mutual consultation, improved service to the client, better quality of performance. Okay, lower staff development cost, lower overall cost, lower staff development cost, lower workload. Okay, lower cost, lower staff development cost, displacement of auditor, taken over and takeover, prevented. In respect of multinational company, work can be given to local firms and sharing of expertise. I hope you are clear. Healthy competition. What are disadvantage? Fees can be shared. Okay, psychological problem can be there. Someone firm is very superior, another is inferior, so inferior cannot work nicely because superior will keep on telling something. General superiority complex of some of the people. Easy, nothing great. You can easily write. Very less portion pending, but let's finish it off. Cost records. Remember section 148 is cost record. Qualification, disqualification 141. Resignation, removal 140 is there. Appointment of auditor, rotation 139 is there. Cost audit is 148. Are you clear? 177 was audit committee. Cost audit is 148. Listen, maintenance of cost records in CRA1. Why cost record is necessary? Understand very nicely. In 10 minutes, I will finish in the best possible way. 1, 2, 3, start. What is cost records? Okay, see. for those things which are critical for India. Okay, we want their cost to be less. When cost will be less? When they maintain the record, we will tell them in this don't earn profit. Okay, these are basic goods, essential goods. We don't want inflation to peak out. Are you clear? So we want the prices of this goods should be in control. So central government for certain things, if you are making those things, okay, compulsory you have to maintain cost record, so you don't charge exorbitant prices. Okay, government will tell don't earn profit in this. Remember, these are basic things. Okay, so who has to maintain cost record? Who are making those things which are very critical for India, those things which are basic necessities. Class of companies engaged in manufacturing or providing goods or service. Which class of company have to maintain cost record? Including foreign company also has to maintain, if they have total turnover of 35 crore or more. Listen very nicely. What is class of company? Regulated, non-regulated. Regulated sector. These are critical companies. Are you clear? Set dip. Sugar, electricity, telecommunication, drugs, industrial, alcohol, pharmaceutical, petrol and gas. One more time. Sugar, electricity, telecommunication, drugs and pharmaceutical, industrial, alcohol, petroleum and gas. If you are making any of these products, okay, this plus another product, and your total turnover is 35 crore or more, you have to maintain cost record of all the products which are regulated. Not all. Example, today Reliance has how much business? Reliance has petroleum business, Reliance has telecommunication business, Reliance has what? Reliance Trends, Reliance has what? Hamlet Toys. They don't, come on, are they making telecommunication? Critical sector. Are they making petroleum? Critical sector. Yes, they have to maintain cost record only for electricity and, sorry, telecommunication and petroleum, not Hamleys, etc. Understood? Okay. So class of companies means those companies that are engaged in production or distribution of goods and services. What are class of company? Regulated, non-regulated. Regulated is set, dip, set, dip, set. Regulated means those which are very important. Non-regulated, important but not that much. Are you clear? Okay, set dip, what is the full form? Sugar, electricity, telecommunication. Sugar, electricity, telecommunication. Drugs and pharmaceutical. Industrial, alcohol, petroleum and gas. Clear? These are very important. Now come here. What is non-regulated sector? Not that much important, but still important. A tax on CM. This you don't need to learn. If you can, well and good. A tax on CM. Arms and ammunition. Tire, tube, turbojet, arms and ammunition. Tire, tube, turbojet, arms and ammunition. Tire, tube, turbojet. A tax spelling is like this. K is silent, S, steel, cement, medical device, cement, medical device. One last time. A tax on CM. A tax on CM. Arms and ammunition. Tire, tube, turbojet. Tire, tube, turbojet. What is S? Steel, cement, medical device, cement, medical device, cement, medical device. I hope you are clear. Absolutely clear, crystal clear, amazingly clear. Okay. Now, class of company. If you are a class of company in regulated or non-regulated sector, you have to compulsory maintain cost record. Okay, set dip, set dip, set dip. Sugar, electricity, telecommunication. Sugar, electricity, telecommunication. Drugs and pharmaceutical. Industrial, alcohol, petroleum and gas. Non-regulated, a tax on CM, arms and ammunition, tire, tube, turbojet. S, a tax, as steel, cement, medical device, cement, medical device. If you are making any of these goods, okay, even one good, and total turnover, not from these goods, all the goods, entire turnover is 35 crore or more, you have to maintain cost record. It is not applicable to companies which are MSME, micro, small and medium enterprise, as per MSME Development Act 2006. One last time, to whom it is applicable? Class of companies engaged in providing goods or service. Cost record you have to maintain in CRA 1. One more time, CRA 1. Format is CRA 1. What are class of company? Regulated, non-regulated. Regulated you have to learn. Set. Sugar, electricity, telecommunication, drugs and pharmaceutical, industrial, alcohol, petroleum and gas. What is non-regulated? Non-regulated, a tax on CM, arms and ammunition, tire, tube, turbojet, tire, tube, turbojet, steel, cement, medical device. If you are making any of these goods and total turnover is 35 crore or more, cost record applicable. What is cost audit? When is cost audit applicable? Regulated, non-regulated, different criteria. See, audit. If your individual turnover is 25 crore or more from all the products which are in regulated, you are in regulated sector. Reliance is making telecommunication and one more thing. Tell me what? One is telecommunication they are making and another petroleum gas. If the turnover from telecommunication and petroleum gas is 25 crore or more and total turnover is 50 crore or more, it is applicable. Understood? 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 Yes, sir. Non-regulated. See, non-regulated is not that much critical, but still, if the individual turnover or total turnover from all non-regulated is 35 crore or more and total turnover is 100 crore or more, cost audit is applicable. Sir, did not understand. Okay, and I understood you did not understand. Still, if above criteria is fulfilled, but still, if you are operating from special economic zone, cost audit is not applicable. Second, okay, 75% revenue is coming from export. Then we don't need to control your cost. Your majority revenue comes from outside only. No, no problem, no problem. More than 75% revenue comes from export. Or you are engaged in captive generation of electricity for captive power plant. You are making electricity for yourself only. Then not applicable. Why? Because you are not charging to public. No. Okay. Three situation not applicable. Operating from special economic zone, 75% of the revenue is revenue from export, or you are engaged in generation of captive consumption through captive power plant. You are making electricity for yourself only. Captive power plant you have for own consumption. Okay, then not applicable. I hope you are clear. This is not that much clear, but I'll make it clear. Okay, come here. See, if you are making, let's do these situations fast, you will understand better. Okay, we will do how many situation? Two. Okay, now 1 2 3 start. Applicable, not applicable? Can we start? Yes, sir. Are you making regulated? Yes. Is your total turnover 35 crore or more? It is 90 crore. Applicable. Applicable. Understood? Yes. Cost record is applicable. Audit applicable. For regulated is 25 50 3500. Regulated, if you are making regulated products, is your total turnover 25 crore or more? Yes. And total should be more than 50 crore? Yes. Applicable. From regulated, turnover should be 25 and total should be 50. Then for regulated, audit is applicable. Unregulated, 3500. Unregulated total is 35, but total is not 100. Not applicable. Understood? Cost record applicable. Cost audit for regulated applicable. Unregulated not applicable. Second situation. 125 turnover. Are you making regulated, unregulated? Yes. Total turnover 35 crore more. 125 applicable. Cost record applicable. Audit applicable. Regulated turnover 25. 55 is more. Total is more. Unregulated is how much? 3500. Here it is 50 applicable. I hope you are clear. I hope you are clear. One last time I want to tell you, when is cost record applicable? When is cost record applicable? If you are engaged in production of goods and service of regulated, non-regulated. Forget their turnover. Total turnover is 35 crore or more applicable. Unless you are MSME. Okay. What is cost audit applicable? For regulated. Total of regulated should be 25 crore and total should be more than 50 crore. Both applicable. Okay. Unregulated. Unregulated total should be 35 and total should be 100. Both applicable. Okay. Now, even if this is applicable, but if you're operating from special economic zone, not applicable. More than 75% revenue comes from export, not applicable. If you are engaged in consumption of electricity, generation of electricity for captive consumption, not applicable. Learn this. Break of 10 seconds. Chalo, clear? Yes, sir, fully clear. One last time. Individual turnover is how much? Okay, you are making any products, total turnover 35 crore or more. Regulated 2550, unregulated 3500. Cost auditor has to be appointed within 180 days from the commencement of financial year. Okay, company will inform cost auditor of his appointment and file a notice of his appointment to central government, because central government has told this. Inform CRA2 within, see, cost auditor has to be appointed within 180 days from the commencement of financial year. So 1st April to 180 days. As soon as he is appointed, okay, we have to inform central government of his appointment. Inform CRA2. Company has to inform central government of his appointment within 30 days of board meeting in which he is appointed, or maximum time is 180 days from the commencement of financial year. Example, listen, if he is appointed on 50th day, then only 30 days. Are you clear? So within 80 days. If he is appointed on 160th day, then maximum time is 180. Within 20 days you have to inform. Understood? Very simple. When should cost auditor be appointed? Within 180 days from commencement of financial year. As soon as he is appointed, we have to inform central government. Okay, inform CRA2. Why? What to inform? Within 30 days of the board resolution in which is appointed, board meeting, or maximum 180 days, whichever is early. Whichever is early. Auditor will submit cost audit report to board of directors in form CRA3. Okay, you have to submit your report to board of directors in form CRA3. As soon as audit is done, auditor will submit the report to who appointed the auditor, board of directors, in form CRA3 within 180 days from the closure of the year. So 180 days you have to submit the report in form CRA3. Then board of directors will report to central government inform CRA4 within 30 days of receipt of the report with information and explanation to every reservation, every point they will clarify. If the company has taken extension is holding AGM, such extension is also available in filing CRA4 by board of director to central government. Very simple, in 1 minute over. Cost auditor has to be appointed within 180 days from commencement of financial year. As soon as he is appointed, okay, central board of directors will inform central government within 30 days. Okay, has to appoint central government. How much time? Number one, within 30 days of board meeting in which is appointed, or 180 days, whichever is early. As soon as he is appointed, cost auditor will submit his report in form CRA3 to whom? Board of directors. Okay, board of directors, as soon as report is received, within 30 days has to give file a form CRF4 with every information and explanation to every reservation. Whatever reservation is there, whatever points are there, they have to give information, explanation to every point. Inform CRF4 and inform to central government within 30 days. If there is extension in filing financial statement, that much extension is available to board of directors also. Very simple. Cost record maintenance, CRA1. Okay, as soon as you appoint CRA2, then cost auditor will submit his report in CRA3. Board of directors will write qualification in CRA4. Okay, I hope you are clear. Very easy, nothing great. Next, powers and duties of auditor. Number one, power of auditor. What is the power of auditor? See, power and rights are different. Power means with great power comes great responsibility. Auditor has taken lots of responsibilities and duties. That is why these powers are available. So duties will come first or power. More duty you do, more power you get. Why you get unlimited power? You have studied the hardest exam. You are signing on the audit report. You are liable for a lot of things. So with great power comes great responsibility. You have taken this many responsibilities. That is why you enjoy this power. Power to access books of accounts. I can access all books of accounts kept at registered office or branch office. Okay. Auditor of holding company can access record of associate and subsidiary as far as it relates to consolidation of financial statements. Did not understand? One more time. I can access all books of accounts of registered office, branch office. I can also access records of subsidiary and associate as far as it is related to consolidation of financial statements. Right to obtain information and explanation. I can obtain any information, any explanation from any person and they have to respond provided I am asking during office hours. Okay. I have the right to obtain all the information and explanation. Right to attend general meeting. Auditors are right to attend any general meeting. Okay, it is not compulsion, but it is your right. You can attend, except not board meeting, general meeting, members meeting, any meeting. You have the right to attend. It is not compulsory. You have to go, except in two situation compulsory. Where you feel directors are concealing the state of affairs, directors are hiding, or shareholder can misinterpret the report, or if he comes to know anything after signing the report, had he known before, he would have changed the report, then he has to go to the meeting and tell shareholders these are the matters which has happened after me signing the report. Remember, director has the right to attend general meeting, but not compulsion. Okay, he can attend all general meeting, but not board meeting. Board meeting not allowed. A board meeting, okay, he doesn't have the right to go there, but he can still go. It is not compulsory to exercise his right, except where he has reason to believe directors are concealing the state of affairs, or shareholders are likely to misinterpret the report. In two situations, he has to compulsory go, where directors are concealing certain things, or shareholders can misinterpret the report. Second, he comes to know certain things after signing the report. Had he known before, he would have changed the report. Then he will go there and tell, I have signed the report, but these are the things which you have to know as a shareholder. Right to report to members. I will attend general meeting and report to members on fast. Fourth thing, every aspect of the financial statement, P&L, balance sheet, cash flow, on the accounts, accounting and auditing standards which are to be followed, and matters included. And last, whether financial statements show true and fair view of state of affairs. So on four things I have to report fast. Auditor has right to report on fast on every aspect of financial statement, on accounts examined by him. Okay, whether accounting and auditing standards are followed or not, whether financial statements show true and fair view of state of affairs of the company. Very simple. Right to report. I have right to report on four things fast, on every aspect of the financial statement, on the accounts examined by him, whether accounting and auditing standards are followed or not, whether financial statements show true and fair view of state of affairs and assets and liability. I hope you are clear, super clear, amazingly clear, no problem whatsoever. Perfect. Yes, sir. Okay. Auditor has the right to report to member on fast every aspect of the financial statement, on accounts examined by him. A, accounting and auditing standards are followed or not, and T, whether financial statements show true and fair view of state of affairs. Clear? Okay. Right to lien. I can also keep the books of accounts. See, lien means I can keep the books of accounts of client. When will I do right of lien? ICAEW has told in four situations you can exercise lien. You can exercise lien means you can retain the records of client when number one, documents are of the client who owes the money. They have come into possession of auditor not by irregular or illegal means. When you are doing the audit work, at that time only you can keep documents. You cannot go there, okay, do some dacoity, etc. Okay, or keep a gun and keep the record. No, no. They have come into means, but not by irregular means. Number one, document are of the client who owes the money. They have come into possession by not illegal or irregular means. Auditor can retain only those documents on which he has done the work. And last, such documents, if he has done, such documents can be written which are connected with work, okay, on which fees have not been paid. Example, you cannot retain last 5 years record. If fees are not paid this year, only this year records you can keep, not last 5 years. Understood? Okay. Right to lien. Auditor can exercise lien in four situations. Document are of the client who owes the money. They have come into possession of the auditor not by illegal or irregular means. Auditor can retain only those documents on which he has done the work, and auditor can retain only that much document for which fees are not paid. For which fees are not paid. Very simple. Understood? 4 points. When do I exercise? I see India Institute. See, our Supreme Court has given one judgment here. What judgment they've given? You cannot exercise lien. Why? Because anyways you'll get the money. In India, unless you communicate with previous auditor, new auditor will not take assignment. So whenever new auditor takes the assignment, he will tell first clear the fees of my old auditor, my friend. He's a CA only. So in India, we cannot retain the documents, but still, okay, right to lien. ICAEW, Institute of Chartered Accountant of England and Wales, have told we can exercise lien. Number one, four situation. Documents are of the client who owes the money. They have come into possession of the auditor, not by irregular or illegal means. Those documents can be retained on which work is done. Only those documents can be retained on which fees have not been paid. Very simple. How many right are there? Extremely simple. Right to access books of accounts. After that, I will get lot of doubts. So right to obtain information and explanation. I got information. Right to, now I have to tell to member. Right to attend general meeting. In general meeting, what I will do? Right to report to member. Right to report to member. And last, right to leave. Right to leave. Is it easy? No, because it is very easy. One last time. You have to speak. 1 2 3 English. Let us start. Number one, only one point, remember, right to access books of accounts. What I will do, I will get a lot of doubts. Right to obtain information and explanation. Okay, then I will tell in meeting, but first I should get invitation. Right to attend general meeting. In that I will write to report to members of the company. Right to leave. Simple. Understood? Yes. One last time. What are the rights of auditor? Number one, right to access books of accounts. I will get lot of doubt. Right to obtain information and explanation. In that, I want to tell that information explanation in meeting. Right to attend general meeting. Right to report to members and right to leave. Now come here. Duties of auditor. I have got so much right because I am doing so many duties. I am CA. I have passed exam. With great duty come great right. Are you clear? With great responsibility comes great rights. So you have this unlimited rights because you have doing lot of duties. Duty of auditor. So a lot of duties are there. Duty to inquire on certain matter. On this matter, compulsory you have to ask. Okay, but you have to report only when answer is negative. If answer is positive, no need to report. If answer is negative, we need to report. Duty of auditor to inquire on certain matter. On this matters, we have to report only if answer is negative. If positive, not report. Okay. Whether shares have been allotted for cash. Adequate cash is received. If not received, position is stated in books of accounts. Understood? If shares are allotted for cash, all cash has been received. If not received, calls in arrears are shown. A position is shown in books of accounts. Now, if investment is done in the form of shares, debentures, security, are they sold below cost price? Okay. If you are doing investment, why are you selling below the cost price? Except if you are investment or banking company, then your work is only purchase, sell, you are allowed, otherwise not. If any investment is done in share, debenture, security, are they sold below cost price? Except banking and investment company. In that it is allowed because their business is only purchasing and selling. Loans and advance made by the company are prejudicial to the interest of company. Is it harmful for the interest of company? Is loan made at a very less rate? Is there no proper security? Is there no proper repayment terms? Are you clear? Loans and advance made by the company are prejudicial to the interest of company. Next, loans and advances are shown as deposits. See, loan is what? Loan is giving someone some money. Are you clear? What is advance? Advance is what? Sure, advance is for raw material. Usually we give for raw material services, we give advance. What is deposit? Surety for future. Deposit is any surety for future. For example, in PG you pay deposit. Okay, any other place you are paying a deposit. Deposit means you are going to receive in future. Now, see, deposits auditor will not check much. Why? Because they know that we are going to receive this. Whether loans and advances you have shown as deposits, so people don't check. Have you done this mistake? Giving loan is bad. Giving advance is more bad, but deposit is the worse. Are you clear? If you have shown loan and advance as deposit, you are gone. Whether personal expenses are charged to revenue, and whether book entry transactions are compromising to the interest of company. Book entry means dummy sales entry are passed. All this, if it is done, you have to report. On these 6 points only you have to report if comment is negative. If positive, nothing to do. Number one, when shares are allotted for cash, adequate cash has been received. If not received, position is stated in books of accounts. Now, lot of money is there. I will do what? Investment. Okay. If investment is done in share, debenture, other security, are they sold below cost price? Okay, except investment banking company. Still some money is left after doing investment. Whether loans and advances are prejudicial to interest of company. Okay, have you given loans to related party at a very cheap rate? Okay, no proper security is there, no repayment conditions are there, still money is left. Whether loans and advances are shown as deposits, so auditor doesn't check in detail. Okay, have you shown them as deposits? Next, personal expenses are charged to revenue. Whether book entry transactions are compromising to the interest of company. Okay, fake book entry transactions are passed, fake sales, etc. 6 points. Duty of auditor to inquire on this matter. You have to compulsory report on this matter. Okay, only report if answer is negative. If things are good, not to report. Number one, only one point you have to remember first. Whether shares have been allotted for cash. Adequate cash is received. If not received, position is shown in books of accounts. Now money is left, okay. Whether investment is done in share, debenture, other security. Are they sold below cost price except investment banking company? Loans and advances are prejudicial to interest of company. Loans and advances made. Loans and advances made, okay. Fourth point, are shown as deposits, okay. Personal expense are charged to revenue account, and book entry transactions are prejudicial to interest of company. You have duty to sign audit report, okay. Next duty, you have to comply with auditing standard. Duty to audit report, very important. As per section 143 subsection 3, you have to compulsory report on these matters. See, about duty to inquire was only right if there is something negative. Here compulsory you have to report. Positive, negative you have to write. Whether you have obtained all easy points, whether you have obtained all information and explanation necessary for the purpose of audit, whether proper books of accounts are maintained, and in respect of branches not visited, okay, we have received books of accounts from those branches also. Any qualification, reservation or adverse remark in maintenance of account. Whether branch audit report is not done by us, branch auditor has sent that report to the main auditor, and how we have dealt with the same. Company's balance sheet and P&L are in agreement with books of accounts. Whether financial statement comply with accounting standard. Observation or comment of auditor on adverse functioning of the company. Anything adverse is there in the company. Any director is disqualified from being appointed as director. Whether company has adequate internal financial control in place and effectiveness of the control. Very nice point. See, these days we are not responsible for financial statement. You also have to report on IFC. I already taught you in chapter 4. Okay, what was taught in chapter 4? Whether company has adequate internal financial control and effectiveness of the control. But this is not applicable for all. Internal financial control is only applicable for here. It is applicable for big companies only, not applicable to say 1% company, small company, company having turnover less than 50 crore, okay, or and aggregate borrowing from bank or financial institution less than 25 crore. Very simple. IFC is not applicable to following private company: small company, 1% company, turnover is less than 50 crore, or borrowings are less than 25 crore. Very simple. Internal financial control, you have to report on that also. Adequate internal financial controls are there, and effectiveness of this control. But these requirements already taught in chapter 4. These are not applicable to following private company: small company, 1% company, company having turnover less than 50 crore, and borrowings less than 25. If borrowings is 26 and turnover is 48, still applicable IFC, because your borrowings are more. Any one point also violated, IFC is applicable. Hope you are clear. 1% company, small company, turnover less than 50 crore, borrowing less than 25 crore. At any point of time, duty to report on fraud. You have to report on fraud done by the company on the company. Duty to report on matters specified by central government. Central government may tell to report on additional matters. Example: central government in consultation with National Financial Reporting Authority has told us to report on CARO, additional requirement for company. So that also applicable. Duty of auditor to report on branch audit. Duty to state reason for qualification or negative report. If you have qualified any point, you have to write the reason for that. Due to this reason, we have qualified the point. Are you clear? Simple. So a lot of duties are there, a lot of powers are there. Now, duty to report on matters, it is told by central government. Central government in consultation with National Financial Reporting Authority has said certain companies have to report on additional matters given under CARO, Company Auditor Report Order. Only that is pending, otherwise full revision is over. Next topic is CARO 2020. We learned the duties of auditor. Duty of the auditor to report on matters specified by central government. So central government in consultation with NAFRA. What do you mean by the word NAFRA? National Financial Reporting Authority. One more time. National Financial Reporting Authority has given certain additional requirement for certain class of companies. These companies have to follow this additional requirement and report on more matters as given by central government. One more time. Normal duty to audit report all have to do. all have to give the audit report, okay, and tell whatever is there. But central government for certain class of companies, together with NAFRA, National Financial Reporting Authority, has given additional requirements, additional reporting point for certain companies. Okay, that is what CARO is all about. In CARO, we have to report on 21 points. CARO 2020. In that, company's auditor report order applicable to certain set of companies, in which we have to report on 21 points because it is told by central government. I hope you are clear. CARO applies to all company, including a foreign company. It doesn't apply to these many companies. Okay, number one person company, because it is a small company. Second, small company, it doesn't apply. Section 8 company, NGO, etc., it doesn't apply to them. Insurance company, it doesn't apply. Private company, it doesn't apply. And banking company, it doesn't apply. So CARO doesn't apply to this many company. How do we learn this? Very, very simple. One person got his Samsung S8 insured from a private bank. One more time. One person got his Samsung S8 insured from a private bank. One person got his Samsung S8 insured from a private bank. We'll speak. One person company. Okay. Second is what? Samsung is a small company. What is S8? Section 8 company. What is insured? Insurance company. What is private? Private company. What is bank? Banking company. One person got his Samsung S8 insured from a private bank. Very easy to learn. What is one person company? What is Samsung? Small company. What is S8? Section 8 company. What is insurance? Insurance company. What is private? Private company. What is bank? Banking company. One person got his Samsung S8 insured from a private bank. One person company, small company, section 8 company, insurance company, private company, banking company. In that banking company, NBFC is there and foreign bank is there. Okay, it is not applicable to foreign bank also, but to NBFC it is applicable. Why NBFC? It is not a bank. See, CARO applies to all company including foreign company. So to bank also, okay, CARO is not applicable. To banking company not applicable, so foreign bank not applicable, but NBFC applicable. In insurance company it is not applicable to both general and life insurance, okay, not applicable. Now, CARO doesn't apply to which company, tell me? Private company, but it will apply if, or if your holding or subsidiary is public. Your holding is a public and you are a private company, CARO is applicable because your holding is public. Okay, you are private company but your subsidiary is public, still CARO is applicable. To private company not applicable, but applicable if your holding or subsidiary is public. If there is a public interest, you have to report on more matters. I hope you understood. Okay, one more time. Other conditions: if in your above or below holding or subsidiary there is no public, we have to check additional condition. If paid up share capital and reserve is more than 1 crore, still applicable. Total borrowing are more than 1 crore from bank or financial institution at any point of time, applicable. Total revenue as disclosed in schedule 3 is more than 10 year during financial year as per the financial statements, then also applicable. This CARO doesn't apply to consolidated financial statement. To private company not applicable, but above or below, okay, holding is public or subsidiary is public, applicable. If it is not public, then we'll check 3 more conditions. Paid up share capital is more than 1 crore, applicable. Borrowings are more than 1 crore, applicable. Okay, last, if your total revenue as per schedule 3 is more than 10 crore, applicable. If all three are below, then not applicable. All three are below, then not applicable. If your holding or subsidiary is not public, if your paid up share capital is less than 1 crore, if your borrowings are less than 1 crore, if your turnover is less than 10 crore, then not applicable. I hope you are clear. Paid up share capital and reserve should not be more than 1 crore. In paid up share capital, what is considered? Equity share capital, preference share capital, right shares, bonus share. Calls in advance are not taken. Paid up capital. Calls in arrears you have to deduct because it is not paid. Okay. Reserves, paid up share capital, capital reserve, revaluation reserve, capital redemption, etc. But see, charge against profit is not included. So you cannot include accumulated depreciation reserve because that is charge against profit. It is not appropriation of profit. Okay. Reserve for bad debts, all this is not included. I hope you are clear. One last time, let's specify what is CARO first of all. CARO is additional requirement for certain class of companies central government in consultation with NAFRA has decided this reporting. Are you clear? It is applicable to whom? It is applicable to everyone, sir. Everyone. Okay. Unless your holding or subsidiary is public, then not applicable. If in your holding or if in your subsidiary there is public, then it is not applicable. Okay. Now, if public is not there in holding subsidiary, other conditions are there. Paid up share capital less than 1 crore, not applicable. Okay, borrowings are less than 1 crore, not applicable. Then last, total revenue is less than 10 crore as per latest financial statement, then also not applicable. But if anything is more than that, then it is applicable. So to Caro is applicable to all, including foreign company, except one person got his Samsung S8 insured from a private bank. One person company, Section 8 company, okay, one person got his Samsung insurance company, private company, banking company, okay, to them Caro is not applicable. Private company, certain conditions are there. Paid up share capital 1 crore, borrowing less than 1 crore, and turnover is 10 crore. Okay, if it is more than that, then Caro is applicable because you are a bigger company. We have to report on more matters. Okay, come here now. Come here now. Come here now. Okay, sir. Okay. Now, matters to be included in Caro. On these things you have to report. There are 21 points. Stage 1 is only understanding. You have to learn them also. I'll make you learn, be rest assured. We'll go little fast. Fixed asset. Okay. You have to see whether company is maintaining proper record of fixed asset, including quantitative details. Okay. Second, are these fixed assets verified at regular interval by the company and action is taken regarding differences? If any material discrepancy is noticed, okay, then they have been properly dealt with in books of accounts if they are less or more. And immovable property should be in the name of company, not in the name of director or director's wife. Are you clear? So in fixed asset, 3 points we'll check. Number 1, proper records are maintained. Number 2, they are physically verified by management at regular interval. Material discrepancies properly dealt with. Whether title of immovable property is in the name of company. Okay, sir. Second is inventory. Whether physical verification of inventory is done at regular interval. Any material discrepancy has been properly dealt with in the books of accounts. Physical verification of inventory is done by management. Okay. Inventory should match with records. Okay. If it is not matching, all the effect is properly disclosed or discrepancy has been dealt with in books of accounts. Loan. Whether loan is made to related party. Okay. Loans should not be made which are prejudicial to interest of company. At less rate of interest you have given the loan. Okay, repayment conditions are not proper. You have given unsecured loan to related party. No interest is received for them. Whether loans and advances are made to related party. Okay, that is covered in third. Fourth, what is the point? Loans and advance are made to directors of the company, then they should also not be prejudicial. All the sections of company law 185 186 should be complied with. Loans to directors. Okay, so in that also it should not be at lower rate of interest. Okay, loan should not be prejudicial to interest of company. It should not be unsecured loans, or repayment schedule should be proper. I hope you understood. So till now 4 points are done. I'll make you learn also. Okay, here 1, 2, 3, start. Tell me which is the biggest point. Okay, biggest thing in any balance sheet is fixed asset. After fixed asset, what will come? Inventory will come. Okay, now loan to related party, loan to director, loan to related party, loan to director. Moving on. Public deposits. If you are taking deposit from someone, remember you have to follow a lot of clauses of Companies Act. Are you following on that or not? That company auditor will check. Are you clear? And write in Caro whether all directives are followed or not. In case company has accepted deposit, section 73 to 76 or any other provisions and rules made thereunder are complied with. If there is any contravention, order is passed by Company Law Board, National Company Law Tribunal, or RBI. The same is dealt with in books of accounts and you have followed that order. Whenever you accept deposit, there is a high chance of fraud. So all sections of 73 to 76 are complied with, which you have already studied in Companies Act. Cost records. Section 148 we saw whether adequate cost records as told by central government under section 148 are maintained. Who will maintain? Class of company. If they are making anything in regulated, non-regulated and total turnover is 35 crore or more, cost record is applicable. 35 crore or more, cost record is applicable. Understood sir? Fully understood. Now continue. Statutory dues. Okay, whether company is regular in depositing undisputed statutory dues. What is undisputed? Where there is no court case. Okay, the matter is not pending in any court. If you are not depositing undisputed statutory dues and they are outstanding for more than 6 months within the on balance sheet date, then you have to write. Okay, if first divide statutory dues in two parts: disputed, undisputed. In disputed you have to write where the matter is pending and what is the issue, amount involved and forum where the matter is pending. It is pending in high court, supreme court. Mere representation, see, you have just a query and you wrote to department, that is not matter pending. If court matter is pending, you have to write where it is pending. Disputed statutory due. Undisputed statutory due you divide into two parts: on balance sheet date outstanding for less than 6 months, don't do anything. On balance sheet date outstanding for more than 6 months, this only you have to write. See here: extent of arrears of outstanding dues as at the last date for a period of more than 6 months from the date they are payable. So on balance sheet date, if they are pending for more than 6 months, only then we will write. Less than 6 months, nothing to do. Okay. Where income tax statutory dues or any dispute. Okay, that's what I told. Unrecorded income, whether any transaction was unrecorded and now you are showing it as recorded, you have to write in Karo. Okay, whether any transaction not recorded have been surrendered or disclosed as income. Many times it comes, no, you can show your income voluntary. Okay, pay this much tax and get free. So previously unrecorded income will now is properly recorded and proper tax has been paid. Repayment of dues, if you have taken loan from someone, okay, whether you are regular in paying the dues, whether short term loan is not used for long term, whether the loan is used for the purpose for which it was taken, okay, whether you are declared, if you are not paying, whether you are a willful defaulter as per the Companies Act, whether company has taken the loans, okay, whether company has taken the loan by pledging the security of, the company has taken any loan from entity or person to meet the obligation of associate, joint venture, subsidiary, then you have to write. Why you have to write? Because if these people will not repay, you are gone. Understand? See what is written in E point. First 4 points are very simple: whether loan is pending, whether you are regular in depositing the money, if not you have to write. Second, whether loans are applied for the purpose for which it was used. Third, short-term funds are used for long-term purpose. Whether you are a willful defaulter declared by bank or financial institution. Whether company has taken funds to meet obligation of subsidiary, associate, joint venture. You have to write the details, okay, for how much obligation you have taken the loan. And last, whether company has raised the loan by pledging the security of subsidiary, associate, joint venture. You have to write, okay, this, and also report if the company has defaulted in such loans. Very simple. Loan is there. Okay, application of money, whether you have invited money by IPO, okay, private placement. For FPO you have taken IPO, FPO, private placement of share, whether money is used for the same purpose for which it was ordered. Are you clear? That we have to check in point number 10. Your usage of IPO, FPO, private placement. What is private placement? Where, see, for unlisted company it is private placement. Okay, for unlisted company it is what? Private placement. Listed company it is IPO, FPO. Fraud. What do you mean by fraud? Whether any fraud done by the company or on the company has been noticed during the year. Of course, we have to report also under chapter 5 section 143.12, 143 subsection 12. If any fraud is done by officer or employee individually, amount of 1 crore or more. Okay, I hope you remember during performance of stat audit. But here any fraud done by the company or on the company has to be reported. Has to be reported. I hope you are clear. Nidhi company. Nidhi company, what is a Nidhi company? First of all, if you don't know, Nidhi company only has, it is for the member, by the member, of the member. In this, members come together, deposit the money so they can borrow at a later date. It is unofficial bank kind thing. Okay, bank type of thing. We are not concerned whether Nidhi company has maintained net own fund to deposit ratio of 1:20. Okay, Nidhi company will take deposits, but your own fund should be 1. Only then you can take deposit of 20. Okay, if you are taking deposit of more than 20, 1 is to 20, more than, then your own fund should increase. 2 is to 40 it can become. 1 is to 30 it cannot become. Whether Nidhi company, if it happens, you have to write in Karo, whether Nidhi company is maintaining, okay, net own fund to deposit ratio of 1 is to 20, and you have to maintain 10% of term deposits. 10% you have to keep aside to meet out liability. Whatever deposits are collected, all you cannot invest. 10% of that you have to keep, okay, as a Nidhi company to meet out emergency liability. Whether any default is done in payment of interest or deposit, that also we have to write. Related party transactions are in proper compliance with section 177, 188. Internal audit system, whether company has adequate internal audit system as per the size and nature of business. Reliance is so big, their internal audit should also be big. Whether reports of internal auditor are considered by statutory auditor or not, that also we have to check. Next, non-cash transaction, whether company has entered any non-cash barter system transaction with director or person connected to him, section 143, 192 provisions are complied with. In case you have entered in non-cash transaction with directors, okay, many times barter system, what will director do? Intentionally purchase few assets of company at cheaper cost and put in another company. That is why these sections are put. Okay, so whether company has entered into non-cash transaction with director, if so, provisions are complied with. Right now, lot of companies are forming NBFC, NBFC, NBFC. If you are NBFC, whether a company is registered to be required under section 140, 45 IA of RBI, that is NBFC, registration is done. Okay, whether you have conducted any non-banking financial or housing finance activity without valid certificate. If you are core investment company, you fulfill the criteria of core investment company. Okay, and how many core investment company means only one purpose is that invest, invest, invest. For example, Tata Group has lot of companies, but one company will be investment company. So in that, minimum investments you have to do, minimum activities you have to do, that you have to check. See, 99% all these things are not there, but if it is there, you have to check whether it is fulfilling the criteria of investment company. In these two things are there. If registration is required as per NBFC, you have taken the registration. Second, whether you have carried out any activity without registration, or if your core investment company requirements are fulfilled. Cash losses. See, company is in loss, agreed, but cash loss is a big fraud. Big bad thing, not fraud actually. Big bad thing. So if cash losses are there, you have to write. How do I get cash losses? Net profit plus non-cash expense. I will add depreciation and other non-cash expense. Still also loss is coming. Means huge problem is there. Company has incurred cash losses in the financial year and immediately preceding financial year. How much cash loss is there? You have to write. Consideration of issues raised by outgoing auditor. See, auditor will never leave the assignment. If he has left the assignment and certain issues are there, see whether they are solved or not, because these are the areas of potential fraud. This is the reason why auditor left. Okay, sir. If there are any resignation of statutory auditor, okay, any issues raised by him, how they are taken into consideration by current auditor. Is there any material uncertainty regarding going concern? SF 570 already discussed. Is there material uncertainty regarding going concern? Any doubt, you have to see. And last two, transfer of unspent CSR amount. See, every company these days has to do corporate social responsibility, CSR. In CSR, there are two things: ongoing project, other than ongoing project. If you have given funds allocated for ongoing project, like hospital you are constructing in company, school you are constructing, okay, medical lab, hospital, school, etc. Okay, anything, temple. So corporate social responsibility. Now, if a ongoing project is going on, okay, within 3 years funds should be used in the project, or as it will be transferred to another fund. Understood? Now, if there is no project going, immediately you need to transfer the funds, okay, as per the requirements of section 135. See whether those requirements are complied with or not. We are not concerned with those requirements, we just need to check one last time, okay, whether, if the funds are set, if the project is given to particular fund, see the funds are used for that purpose only. Okay, if the funds are not used for that particular project, then you have to of course transfer to another fund as per the requirements of section 135. Okay, if it is an ongoing project, If it is not an ongoing project, immediately you need to transfer to the said funds. Last, qualification or adverse remark in Caro report of group company. What do you mean by group company? Those of you who don't know. If there is any adverse remark in group companies, there are a lot of companies. Reliance has 106 companies. In any of the companies, there is adverse remark in any of the point, you have to write. As in holding company, you have to write that in our subsidiary company. Though Caro doesn't apply to consolidated financial statement, you still have to write in our subsidiary company, 8th point is problematic. Are you clear? If yes, indicate the details of company and paragraph number of Caro containing qualification or adverse remark. I hope you are clear. So Caro 2020, we have to report on 21 points. I'll make you learn this, be rest assured. Which is the biggest component? Fixed asset. Which is the second biggest component? Okay, inventory. Biggest component, balance sheet, fixed asset. Inventory. Loan to related party, loan to director. Loan to related party, loan to director. Loan to related party, loan to director. Public deposits. Public deposit. How many points are done? Lot of points. Fixed asset inventory, fixed asset inventory, fixed asset inventory. Now, loan to related party, loan to director. Still money is left. Okay. Invite public deposits. Invite public deposits. Okay. Till now, how many points are done? 5. Number 1, which is the biggest component? Fixed asset. Second biggest component is which one? Inventory. Fixed asset. Second biggest is inventory. Loan to related party, loan to director. Loan to related party, loan to director. Okay. Now to give loan, I need money, public deposit, public deposit, public deposit. I hope you are clear till here. 5 points are over. Small break, 5 seconds. Fixed asset, inventory. Loan to related party, loan to director. Loan to related party, loan. How I get money? Public deposit. Break. 5 seconds. Now, CSURU. Memory technique is CSURU. Cost record, statutory due. Cost record, statutory due. Cost record, statutory due. Unrecorded income. Repayment of loan. Usage of IPO, FPO. One more time. Cost record, statutory due. Cost record, statutory due. Usage of IPO, FPO. IPO, FPO. Repayment of loan. Unrecorded income. I hope you are clear. One more time. Cost record, statutory due. Cost record, statutory due. Unrecorded income. Repayment of loan. Usage of IPO, FPO. Small break, 5 seconds again. Done. One last time. Cost record, statutory due. Cost record, statutory due. URU. CSURU. Unrecorded income. Repayment of loan. Usage of IPO, FPO. Clear? Clear? Yes, sir. Now, very simple. 10 points are over. Okay. Fraud. With whom you will do fraud? Okay. Nidhi company related party. These are two biggest areas of fraud. Fraud. Who does fraud? Nidhi company related party. Nidhi company related party. Fraud. Nidhi company related party. To protect from fraud, what you will do? Internal audit. Internal audit. Non-cash transaction of director. Till here over. Next 5 points are also over. One last time. Fraud. Who does fraud usually? Nidhi company related party. Nidhi company related. To protect from fraud, internal audit. Non-cash transaction by director. Non-cash transaction by director. Again, break of 5 seconds. Done? Chalo, fraud. Who will do fraud? 1, 2, 3, start. Fraud is usually done by Nidhi company related party. Nidhi company related party. Nidhi company related party. Internal audit. Non-cash transaction by director. NCC, MCC. Okay. NCMC. NCMC. Last. Non-banking financial company. Cash losses. Non-banking financial company. Cash losses. Consideration of issues raised by outgoing auditor. NCC, MCC. Non-banking financial company. Cash losses. Consideration of issues raised by outgoing auditor. M. Material uncertainty. Material uncertainty. Transfer of unspent CSR amount. And Caro report of group company. Caro report of group company. Last one is little tough. Very easy. It is not tough. NCC, MCC. NCC, MCC. What is NCC? Non-banking financial company. cash losses, consideration of issues raised by outgoing auditor, material uncertainty, transfer of unspent CSR amount. Last C, Caro report of group companies. Two times I will speak. It is actually easy. Tell me which is the biggest component? Fixed asset. Small biggest, next biggest inventory is there. Loan to related party, loan to director. Loan to related party, loan to director. How you are getting so much money for loan? Can you tell me how you are getting so much money? Public deposit. CS URU, CS URU, CS URU. Cost record statutory due. Cost record statutory due. Unrecorded income, repayment of loan, usage of IPO, FPO, CSURU, cost record statutory due, unrecorded income, repayment of loan, usage of IPO, FPO. Break 10 seconds. Done. Yup. Now, fraud. With whom you will do? Nidhi company related party. Nidhi company related party. Nidhi company related party to protect from fraud. Internal audit. One more time. Internal audit. One more time. Internal audit. Non-cash transactions by director. Non-cash transactions by director. Non-cash transaction. NCC, MCC, MCC, NBFC. Cash losses, consideration of issues by outgoing auditor. Okay, whatever issue outgoing auditor is raised. NBFC, cash losses, consideration of issues by outgoing auditor. Material uncertainty. Okay, transfer of unspent CSR amount. Caro report of group companies. MCC, material uncertainty. Okay, transfer of unspent CSR amount. Caro report of group companies. Very nicely read. Your time starts now. Break 10 seconds again. Done. Yup, sir. No, sir. Done. Okay. Tell me fraud. Niji company related party. Niji company related to protect from fraud. Internal audit. Non-cash transaction by director. NCC, MCC, NCC. What is N? Non-banking financial company. Cash losses. Consideration of issues by outgoing auditor. Material uncertainty. Double C. Transfer of unspent CSR amount. One more C is there. Caro report of group company. Clear? One last time we will speak slowly. Fixed asset, inventory, loan to related party, loan to director. How you are getting money for loan? Public deposit, CSURU, cost record, statutory due, unrecorded income, repayment of loan, usage of IPO, FPO, fraud. With two people you do fraud. Nidhi company related party to protect from fraud. Internal audit. Okay, non-cash transactions of director. Non-cash transaction of director. NCC, MCC, NBFC. Cash losses, consideration of issues raised by outgoing auditor. Material uncertainty. Double C. Okay, transfer of unspent CSR amount. Caro report of group companies. Hope you are clear. Okay, thank you so much for this chapter. If you like, please press the like button. Okay, and also do consider subscribing India's most positive channel so we get unlimited motivation and bring more of such content. Do share with your friends too this rich content. I hope you enjoyed this chapter as much as I did putting it up forward for you. Thank you so much. Take care of yourselves. Bye bye. Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, continuing with Mega Marathon Revision series on CA Inter Auditing in only English. Today, we are starting with chapter number 12, Bank Audit. Bank audit is a very easy chapter, very practical chapter, considered to be bread and butter for all the chartered accountants. They say if you get one bank audit initially during the year, okay, during the month of April or May, whole year expenses are covered with the help of revenue of that bank audit only. So it's a very nice assignment. Okay, you'll become CA in CA final. Also, this chapter is there, and after that, do bank audit. Very practical chapter, very easy chapter. Can we start? Yes, sir. Let's sit back, relax. We are going to make this chapter super easy for you. But at the same time, these lectures are in no way substitute to the regular or fast track lectures. Of course, you need to do them. And after that, this will give you super booster confidence. Are you clear? Yes, sir. Let's start right away. Bank audit. Okay. Now, what do you mean by bank audit? See, bank basically does two work: acceptance of deposit, granting of advance. Jute do paise lo. It will take lot of money, give lot of loan. It will take money at what interest rate? Sir, 3 to 4% is the rate on deposit. And it will give loan at what rate? Sir, loan interest rate in India, if you don't know, it is 8 to 12%. So 12% it will charge from us, and it will give us 4% on our deposit. Okay, so whatever is the balance, 6 to 8%, that is profit for bank, that is markup for bank. For any bank, most important thing is loan book, checking advances. Are you clear? Once you understand that part, 50% chapter is over, and balance 50% is something else. Able to understand? Yes, sir. Come here now. In carrying out audit of advances, auditor is concerned about obtaining evidence about following things. Okay, whenever you are auditing the advances, you have to obtain evidence about following points. Auditor should obtain evidence about following primarily. Whenever I check advances, whenever I check loans, I have to obtain evidence regarding following points. Number one, amount included in the balance sheet, whatever loan book is there. Example, bank's loan book is 38,000 crore. It should be outstanding on balance sheet date. Okay, if out of which some portion is paid, I cannot include that. I will only include that amount that is outstanding on balance sheet date. Second, it should represent amount due to the bank. Listen, many times what will happen? If a person is not going to pay loan, example, Vijay Malia is not going to pay loan, but I must have taken securities from Vijay Malia. Yes, bank doesn't give loan like that. 1,000 crore loan is there, it will ask for 1,200 crore of securities. Now, if Vijay Malia is not going to pay, bank's work is not to sell off the securities. I cannot go and sell immovable property. Okay, any security given, I cannot sell immovable property. Who will manage bank? Understand? My work is to do banking business or sell immovable property. Sir, do banking business. Yes. So many times what do I do? If a person is not going to pay, I will sell the securities to asset reconstruction company. One more time, whom? Asset reconstruction company. Then they will not pay me full. 1,000 crore I have to receive from Vijay Malia. They will pay me 800 crore. Okay. But sir, 200 crore loss is there for bank law. Okay. My main work is not this. As soon as I will get 800 crore, I will give to some another lender. My work is to give loan and take money. Now, whatever they do, now, of course, they will sell the security. They might get 700 crore, they might get 900 crore. That is not our cup of tea. We are not concerned. So, it should represent amount due to bank and not asset reconstruction company. If you have sold certain loans, are you clear? Okay, and securities, that will not be included in balance sheet. So, 2 points. Amount should be outstanding on balance sheet date. Second, it should be amount due to bank. Now, if that Vijay Malia pays also, he will pay to asset reconstruction company and not me. Are you clear? It should represent amount due to the bank. There are no unrecorded advances. 99% time this problem will never come. Hey, why? Bank will always show more advance. If more advance they will show, their loan book will be more. If loan book is more, their interest will be more. Interest is more, their income is more. Their income is more, their profit is more. Bank manager will do dance. Are you clear? So this problem usually doesn't come. There are no unrecorded advances. Okay. All the amount are supported by loan document and other document. All the loans, there is loan document and other document. Basis of valuation of advance is appropriate and recoverability of advance is taken into consideration. Valuation means if I am not going to receive the money, I should do proper provision. So that is taken into consideration, about which we will study. Advances are properly classified, described, disclosed as per regulatory requirement. RBI has given requirement how to show advances, okay, for all banks, how to present financial, banking company financial statements, banking company chapter you have studied. Advances are properly classified, described, disclosed. Appropriate provisioning is made towards advances as per RBI norms, about which we will study. Okay. How many points are there? 6. In obtaining advances, auditor is concerned with how many points? 3, 4, 5, 6, 7. Let's learn 3. Amount should be outstanding on balance sheet date. It should represent amount due to the bank. There are no unrecorded advances. Able to learn? Yes or no? Yes, sir. Learn this much. Done. Okay. Amount should be outstanding on balance sheet date. It should be amount outstanding to the bank. There are no unrecorded advances. All advances are supported by sufficient and appropriate document. Then valuation disclosure, provisioning, valuation disclosure, provisioning. Basis of valuation of advances proper and recoverability is taken into consideration. Advances are properly classified, described, disclosed as per legal and regulatory requirements. Appropriate provisioning is made towards advances as per the RBI norms. Are you able to understand? See, this point, third last and the last one, you will not understand, you will understand after 5 minutes. Understood? Okay, sir. Now read this 3 also. Valuation disclosure, provisioning, valuation disclosure, provisioning, valuation disclosure, provisioning. 5-second break. Seems good? Confirm? Okay. Chalo, we'll speak. While auditing advances, auditor has to obtain evidence about the following points. Number 1, it should be amount outstanding on the balance sheet date. Second, it should be the amount outstanding to the bank. Third, there are no unrecorded advances. All advances are supported by sufficient and appropriate document. Valuation, provisioning, disclosure. Valuation, disclosure, provisioning. Basis of valuation of advances is proper and recoverability is taken into consideration, about which we will study. Second, advances are properly classified, described, disclosed as per legal and regulatory requirement and policies. Okay. And last, appropriate provisioning is made towards advances as per RBI norms. What are this provisioning? We are yet to study. Come here now. In bank, remember, provisioning of advance is the most important thing today for any bank. The biggest thing is NPA. Who is NPA? It is non-performing asset. Tell me when it will become. What is non-performing? When you are not receiving the money of the loan or you are not receiving interest from the loan, it is a non-performing loan. When is the loan non-performing? That we are yet to study. If it is a NPA, you have to do provisioning. You cannot recognize the income of interest. Why? Because you are not receiving it. But when it will become NPA, for that we are yet to study. Can we start? Yes, sir. See, what is NPA? NPA is non-performing asset. An asset becomes NPA when it ceases to generate income for a bank. When you are not getting the income from that asset, it will become non-performing asset. Tell me when you will not receive income? When the loan is dead. He is not repaying the amount. He is not repaying, even forget principal, not interest also is repaying. Then it is a NPA. Non-performing asset is an asset when it ceases to generate income for the bank. Okay, so in case of loans, bills receivable, when does it become NPA? In case of loans, bills receivable, okay, loans, bill receivable, if interest or installment or both, either interest or EMI amount or both, principal amount or interest or both, remains overdue for more than 90 days in respect of term loan. Okay, you have taken a loan for 90 days. Let's take example Ramesh Kumar. Ramesh Kumar has taken certain loan of 1 crore. For 90 days, if he doesn't pay either interest or installment or both, it becomes NPA. Why? It is very bad. Ramesh Kumar is a NPA. You have to get angry. Hey, third class Ramesh Kumar, you are non-performing asset. For you, we gave you loan on trust. Now the hell you became non-performing asset. We don't trust you, Ramesh Kumar. You are third class person. You are cheap person. Are you clear? You have to get angry because he became non-performing asset. Now we have to do provisioning. How much? Stay tuned. Are you clear? Interest on installment remains overdue for more than 90 days. Okay, in respect of term loan. Let's take example. 1st January, you had to pay interest or EMI. Tell me, you have to pay on which January? 1st January you have to pay interest or principal. If you did not pay, no problem, it is not NPA. See, 90 days we will wait. Now we will not calculate exact 90 days, but let's assume 31st March. Okay, on 31st March 90 days are over. 1st January to 31st March, it will become NPA on 31st March. Understood? Yes. Bills, in case of bills sold, you have to receive the amount from opposite person. If it doesn't pay, bills remain overdue for more than 90 days. In case of bills purchased and discounted for more than 90 days, if you're not receiving interest or EMI, it is a NPA. What is NPA? Non-performing asset. You have to do provision. How much? Stay tuned. Come here. No, please come here. Please come here. Please come here. Substandard asset would be the one which has remained NPA for a period of more than or equal to 12 months, less than or equal to 12 months. Listen nicely. What do you mean? In NPA also there are category. Okay, cheap, very cheap, third class, disaster, third class. Are you clear? Third class, 2 times you spoke. Ignore. Listen nicely. Substandard asset. What is substandard? Which is not standard. joke you are doing. Are substandard means the one which is not standard. Standard means you are receiving the money. Okay, no problem. Excellent, good asset. But for 90 days, if you don't receive interest or principal or both, okay, then it will become NPA. On 1st April, example, EMI was due on 1st January 2023. On 31st March or 1st April, let's calculate 90 days. 1st April 2023, it will become NPA. It will become NPA. Now, from 1st April 2023 to 1st April 2024, it is substandard asset. You have to do provision only 15%. Why? Because see, would be the one which has remained NPA for a period less than or equal to 12 months. So, if NPA is less than or equal to 12 months, first birthday of NPA is known as substandard. You have to do provision 15%. If we have given 1000 crore loan to Ramesh Kumar, provision will be 150 crore. Understood? Yes, sir. What is doubtful? Is the one which remains substandard for more than 12 months. After substandard, we have to increase the level of insult. Okay, 1st April 2023 to 1st April 2024, it is substandard. From 1st April 2024, it will become doubtful. D1, doubtful. Doubtful up to 1 year is known as D1. 1st April 2024 to 1st April 2025. On secured portion, provision is 25%, unsecured 100%. Secured 25, unsecured 100. Not able to understand. 1000 crore is there. Let's assume 50-50. So on 500 crore, you have to do provision 25%, another 500 unsecured 100%. So total 500. 25 into 5 is how much? 500 into 25, probably 125. Are you clear? So on secured you have to do 125, plus on unsecured you have to do how much? Full 500. Total 625. Above you have already done some, minus that I hope you know all these sums you have done. Okay, so doubtful 25%. Now 1st April 2023 to 24, it was what? It was substandard. First birthday of doubtful is known as D1. 1st April 2024 to 2025 is D1. Then what is D2? If it is doubtful for 1 to 3 years, okay, 1 to 3 years, after that it will become 40 and 100. More than 3 years, 100%. More than 3 years, 100. Out of that, while doing this process, if auditor tell you, if RBI tell you, if you identify it is a loss asset, anyways we are not going to receive money. Mr. Z is harami number 1. Mr. Z is not going to pay, he is third class person. If RBI tell you, external auditor tell you, full 100% has to be written off. Understood? Don't play at that time substandard, doubtful. Arey, third class. Understood? Okay. One last time. Tell me, when does it become NPA? If principal or interest or both is overdue for more than 90 days, it will become NPA. Okay. As soon as it becomes NPA, first birthday of NPA is known as what? Substandard. How much provision? 15. Secured, unsecured, both. Okay. Now, second birthday, still he doesn't pay. Doubtful for 1 year. Then it is 2500. 20 secured 25, unsecured 100. Doubtful 1 to 3 years. Okay. 1 to 3 years, 40, 100, 40, 100, 40, 100. More than 3 years, 100, 100, 100, 100. Are you clear? Okay. Loss asset is the one which is identified by bank or external auditor or RBI. Are you clear? Then 100 you have to write off. I hope you are clear. 15, 15, 25, 40, 100, 15, 25, 40, 100, 15, 25, 40, 100, 15, 25, 40, 100, 15, 25, 40, 100, and unsecured is unclear. Okay. Now, come here. Come here. Come here. Only two things I have told you still. Okay. In case of term loan, in case of bills discounting, if the interest or principal or both remain overdue for more than 90 days, it will become NPA. First birthday of NPA is substandard provision is 15%. After that, it will become doubtful. If it is doubtful for 1 year, on secured 25, 25, unsecured 100. Doubtful for 1 to 3 years, 40, 100. More than 3 years, 100. He is not going to pay. He is third class person. Now, little difficult. Are you ready for difficult? Fully ready, super ready. Don't worry, sir. In case of CC or OD, cash credit or overdraft, it is not. See, criteria is different. CCOD, you don't have to pay. What are you saying? Then I will take CCOD right now. No need to pay. See, it is not EMI type thing. CCOD is what? It is for working capital. It is given to you. See, when your money is stuck in working capital, they will give you CCOD. Till the time you use CCOD, they will charge interest to you. They will not ask for money because anyways they are getting interest. They know you are a businessman. You will not run away. CCOD is only given to current account holder, only to businessmen. Are you clear? So whenever in this you don't have to pay, they will keep on charging interest till the time you use CCOD because they know you are a businessman and this capital is given to you, this facility is given to you as current account holder as your money is stuck in stock, your money is stuck in working capital. Understood? Fully understood. Okay. In case of CCOD, when it is out of order for more than 90 days. What is this new thing out of order? Listen nicely. When it will become out of order? When it will become out of order? When it will become out of order? When it will become? When the amount withdrawn is more than sanction limit or drawing power. But first of all, you have to understand sanction limit and drawing power. What do you mean by sanction limit? See, you have to submit the financials to the bank. Your account is in HDFC Bank. HDFC Bank knows you since 5 to 10 years, only then they will give CCOD. So based on your financial position, based on your account, based on your balance sheet, based on your PNL, they will calculate one sanction limit of 1 crore or 2 crore or 5 crore. Okay, sanction limit, let's assume is 5 crore. What is drawing power now? Sanction limit is calculated by bank based on financial statement, based on your past record, based on relationship with the bank, based on amount of balance you keep in the account. What is drawing power? See, every month you have to submit a stock statement. Why stock statement? Because you are saying this is for working capital, no, this loan. So your capital should be stuck in stock. Only then they will give you. So if you submit a stock statement, 70 or 80% of that is drawing power. Example, 6 crore is your stock. Okay, monthly stock is 6 crore. You submitted a statement. 80% of that, why full they will not give? I understand it's a bank. Don't be crazy, baby. Okay, 6 into 8, 4.8 crore is your drawing power. Let's assume they are taking 80%. So how much you can withdraw? Sanction limit or drawing power, whichever is less. Though your sanction limit is 5 crore, but drawing power is 4.8 crore. They will do all that calculation. We are not concerned, but I am still explaining you. Okay. So if the amount withdrawn is more than sanction limit or drawing power, it is out of order. Okay. When it is out of order for more than 90 days, it will become NPA. Or though you have not withdrawn above the sanction limit or drawing power, but there are no credits only. Or credits are not enough to cover interest also. There are no credit. You took CCOD, but you are not depositing money only for 90 days. Or you are depositing money, but it is not enough to cover interest portion also. Means you are harami. Means you are cheap person. Definitely, you are NPA Ramesh Kumar. Are you clear? Okay. Ramesh Kumar is your friend? No. Just like that. Okay. So in case of CCOD, when it is out of order for more than 90 days, when it is out of order, three situations. Amount withdrawn is more than drawing power or sanction limit. When there are no credit or credit is not enough to cover interest also. So easy. One last time. When it is out of order, amount withdrawn is more than drawing power or sanction limit. When there are no credits, okay, array you have taken loan but you are not crediting only, or you are crediting but so little, it is not covering interest also. You are trying to fool us, Ramesh. Okay. How is drawing power calculated? Not concerned. Account which exceeds the drawing power should be brought to notice of management. Drawing power is based on stock statement. I already told you. Large corporate borrowers may not send stock statement monthly, but every 3 months you have to send. Otherwise, account will become irregular. Okay, clear, understood, sir. So tell me here. When asset will become NPA, when it ceases to generate income. In case of term loan, when principal or interest is overdue for more than 90 days. In case of bills discounting or bills collected, if it is overdue for more than 90 days. In case of CCOD, cash credit or overdraft, when account is out of order for more than 90 days. When is it out of order? Amount withdrawn is more than drawing power. There are no credits. Credits are not enough to cover interest also. Okay. Now, come to second, agricultural advances. Remember, in agricultural advances, what is the criteria for NPA is different for other. If you understand loan part, no, 50% or more than 60% chapter is over. See, what is agricultural advance? First, you have to understand crop season. Crop season is the season from sowing to harvesting. Sowing to harvesting. From the time of sowing to time of getting fruit, that is known as crop season. Certain crop season is less than 1 year, it is known as short duration crop. If the crop season is more than 1 year, it is a long duration crop. Why are you explaining all this? Are you farmer? I am not farmer, but for booking NPA rules are different. Oh, so for those fruits or vegetable which are grown within 1 year only, okay, which are there? Rice, maize, are you clear? Short duration. Which is long duration? Maybe tobacco, teak. These are long duration crop, but forget that. Okay, they will give all this. Crop season is less than 1 year. It is a season from sowing to harvesting. Okay, if it is less than 1 year, when it will become NPA? If principal or interest is overdue for more than two crop season. Two crop season. Let's take example. Crop season is 4 months. Okay, 4 months or 3 months we can take. 1st April 2023 you had to pay. You do not have money. Of course you don't have money. So we will wait till one crop season. One crop season will be over when? April, May, June. On 1st full April, full May, full June. On 1st July 2023, okay, what will happen? Will it become NPA? No, 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 no. More than two crop season. We'll still wait for one more crop season of 3 months, okay? July, August, September. On 1st October, it will become NPA. Are you clear? So if crop season is less than 1 year, in this case, 3 months we took. On 1st April you have to pay. We will wait for two crop season, that is 6 months. Are you clear? After that it will become NPA, and whenever it becomes NPA, then first we have to do substandard, then doubtful. Understood, sir? Long duration, those crops which take more than 1 year, tobacco, teak, in that we will not wait for one more. Now if the crop season is 1.5 years, then we will wait for 3 years. In 3 years farmer will run away. Government very smart, bank double smart, very chalak bro. Bank is chalak bro. Okay, so it is NPA if interest or principal is overdue for more than one crop season. So in this we'll wait only one crop season. Example, 1st January 2023, okay, EMI is due. And if crop season is 1.5 years, we'll wait for 1.5 years. Okay, 1st January 2024, we will wait till 1st August. Are you clear? Not 1st August, 6. Okay, so we'll wait till 1/7, 1st July. 1st July, 1 January is there, so 1st January is there, we will wait for 1.5 years till 1st July. Okay, till 1st July 2024 also, if we don't receive the money, baby, it will become NPA. Cut short. Short duration crop, long duration crop. Short duration crop, when it will become NPA? If principal or interest or both remains overdue for more than two crop season. Long duration crop, we cannot wait because these crops take more than 1 year. So interest or principal remains overdue for more than one crop season. Erosion in the value of security. Erosion in the value of security. Are you clear? See, you have given some securities against the loan. Okay, bank, you took loan from bank, you have given certain securities. Okay, if the value, for example, you gave your house, now your house became haunted house. Okay, because redevelopment work going on, some whatever issue, forget. If the erosion in the value of security is, value of security falls more than 50%, okay, if the value of security falls less than 50%, then directly doubtful, you don't need to do substandard, directly doubtful. Are you clear? It will be doubtful. asset directly. If value of security falls even less than 10%, are you clear? More than 90% fall is there. Now securities are not worth 10% also because it was illegal land. Directly loss asset. Directly loss asset. Remember one last time. If there is erosion in the value of security, if value of security falls below 50%, what will you do? Directly classify it as what? Doubtful asset. It will not become substandard. Now come here. Value of security is less than 10%, baby. Too less. Nothing. Don't cry. It is loss asset for a bank. Now bank will not receive money and you are not going to pay because your securities are also gone. Oh, account regularized near balance sheet date. Many times these people are very smart. Bank manager will call Ramesh Kumar. Please say what happened. Will you deposit certain credits? Are you clear? So your account doesn't become NPA. We will give you one loan. Okay, take new loan. But don't use that new loan for business. Use that new loan so your principal or interest doesn't remain overdue for more than 90 days. Right now it is overdue for 70 days. No, okay, 10 more days you can wait. Then we will only give you loan. And in that, as soon as you receive the money, no, you deposit in old loan. So your principal or interest is not overdue for more than 90 days. We will not book NPA. Are you becoming too smart? If we realize that there are few credits recorded around balance sheet only and the sole purpose of this credit is just that account should not become NPA, it will be deemed NPA. It will be deemed NPA. We are auditors. We are taught everything by Mrugesh Madlani. Okay. Who is Mrugesh? Okay. Central government advances. Are you clear? So if accounts are regularized near balance sheet date, near balance sheet, if you receive the advances, it will be deemed NPA, baby. Central government advances. See, central government advances are there. In that, if we are not receiving principal or interest for more than 90 days, will it become NPA? No, because the guarantee is recognized by central government. It will not become NPA, it will be standard asset. But income will be recognized on cash basis only. Income will be recognized on cash basis only. Remember, this exemption is only for asset classification, not income classification. One more thing. As soon as account becomes NPNO, now I will not recognize accrual basis. See, till it is NPNO, I will recognize interest on accrual basis. As soon as it becomes NPA, I will recognize on cash basis. Understood? Okay. But in central government advances, okay, if guarantee is given by central government and if still they are not paying, okay, no problem, it is still a standard asset because guarantee given by Narendra Modi, okay, but his guarantee is only for asset classification, but EMI, okay, if you are not receiving, you will recognize, it will not become NPA, but still income will be recognized on cash basis only. I hope you are clear. Advances against deposit, NSC, KVP, IVP. Advance against deposit, National Savings Certificate. What is KVP? Kisan Vikas Patra. What is IVP? Indira Vikas Patra. All these are very good. Are you clear? Certain times you take loan against Kisan Vikas, government schemes, Kisan Vikas Patra, Indira Vikas Patra, okay, National Savings Certificate. These are not NPA till the time adequate margin is available. Till the time surrender value margin is available, it will not become NPA. After that, it will become NPA. Example. For example, 1 crore you will receive in National Savings Certificate. Till now you have deposited 10 lakh. Till now you have deposited 10 lakh. You will receive 1 crore rupees. Okay. Now, today if you stop paying, they will say that we will pay you 8 lakh. You paid 10 lakh rupees. Okay. More you have to pay. After certain years, you will receive 1 crore. These schemes are like that only. Kisan Vikas Patra, Indira Vikas Patra. In that, you pay EMIs. And after that, you receive a big amount in the end. Understood? Now you have paid total 10 lakh. Okay. Still some portion to be paid. You will be receiving 1 crore. But today, if you don't pay the money, surrender value is 8 lakh. Surrender value is 8 lakh. They'll give you 8 lakh and over. Now, till the time, and every month we have to pay 1 lakh. Now, till the time 8 lakh is there, if you are not paying for 8 months, okay, because surrender value is available. Till the time our EMI reaches surrender value, it will not become NPA. After that, only NPA. Okay, so 1 lakh we have to pay. We will not pay for 8 months. No problem. Surrender value is there. After that, it will become NPA. Understood? Advance, now the all very easy. Advance against consortium. Consortium means what? Reliance has taken loan of 10,000 crore from SBI. 10,000 crore SBI. Now SBI alone cannot give the loan. 2000 is given by HDFC Bank, 2000 by ICICI Bank, 2000 by Kotak Bank. So 2 to 6 and 4000 by SBI. Understood? One last time. Reliance to SBI 10,000 crore. But SBI has sub outsourced 2000 crore to HDFC, 2000 to ICICI, 2000 to Kotak. Now, Reliance is regularly paying EMI to SBI, but SBI has taken 6,000 crore from these banks, but it is not paying to this bank. HDFC has to pay certain EMI to this bank also. Why? Because they have taken two from them. Are you clear? Now, will it become NPA? In this bank book, HDFC, ICICI, Kotak, will it become NPA? Because Reliance is regularly paying to SBI. SBI is not paying. Yes, it will become, because we have to see our books and not SBI books. SBI should pay. If interest or principal remains overdue for more than 90 days, it will become NPA, because these banks cannot recover from Reliance. They have to recover from SBI. Okay, second, bank staff. See, in bank staff, 90 days criteria is not there. Why? Whenever bank staff will take the loan, their EMI is deducted from salary only. Listen nicely. Bank staff will take home loan of what? 2 crore. Every month 50,000, 50,000, 50,000 they have to pay. If they are receiving salary of 75, they will receive 25 only. 50,000 will be deducted. Now, if they give a mail that don't deduct my salary, okay, then it will become NPA from day one. Why? Because 90 days facility is not available. Anyways, money is deducted from their salary only. Understood? Fully understood. Classification of NPA is based on record of recovery. See, now Mukesh Ambani has 10,000 crore of wealth and he forgot to pay EMI of 1 crore for 90 days. 1 crore EMI forgot to pay, but his wealth is huge. Will Mukesh Ambani be treated NPA? Yes. We will not see net worth. Are you clear? If you are Mukesh Ambani, show something like Mukesh Ambani. Baby, pay. Are you clear? Availability or security or net worth is not a valid criteria for NPA. Asset classification should be borrower wise and not facility wise. Listen nicely. You have taken car loan, home loan, gold loan, okay? Car loan, home loan, gold loan, education loan. All EMIs you have paid. All EMIs from Kotak Bank you took car loan, home loan, gold loan, education loan. Car loan, home loan, gold pay. Education you have not paid the money. Education loan you forgot to pay interest or principal. Will you be NPA? Will you be NPA? Yeah. Why? Because you will be considered NPA in all the loans and not one. Why? Because it is the right. If you are not paying, all NPA for that bank. Of course, you have taken loan from Kotak Bank. There you will be standard asset. But in ICICI Bank, all the loans will be treated NPA. If you don't pay for one, it is borrower wise and not loan wise. Okay, for one bank. In another bank, you will still be treated standard asset. Okay. With this, I hope a lot of things are covered. Yeah. So basic part, I'm very happy we are done with that. Can we move ahead? Why not? Why not? Why not? Why not? Why not? Okay, sir. Bank audit basics. See, for any bank, they have to follow this many laws. Or so many laws are there. Yeah. What to do? For any bank, they have to follow these many laws. Can we start? Yes, sir. Please start. Number one, they have to follow Banking Regulation Act 1949. What shall I explain in this? They have to follow RBI Act 1934. RBI Bahubali. Every bank is a company. So they have to follow Companies Act 2013. These three I'm not making you learn. You anyways know. Banking Regulation Act 1949, RBI Act 1934, Companies Act 2013. Now, SBI Act 1955, SBI Subsidiaries Act 1959. Remember these two also. What shall I explain? Why are they telling me they have to follow these laws? You should have knowledge of these laws. You are auditor. Oh yeah, I forgot. Okay. Done. Banking Company Acquisition and Transfer of Undertaking Act 1970. Whenever banking company will acquire certain company, certain rules are given in this act, which we don't have to study, but we should know. Regional Rural Bank, Grameen banks are there, 1976. Okay, till you're clear. This four you have to learn. SBI 1955, SBI Subsidiaries Act 1959, Banking Company Acquisition and Transfer of Undertaking Act 1970, Regional Rural Bank 1976. Break of 4 seconds. Done. Okay. Now all new act are there which you know. IT Act 2000, Pamla Act, Prevention of Money Laundering Act 2002. सरफरोशी की तमन्ना अब हमारे दिल में है, जोड़ना है जोड़ कितना बाजुए कातिल में है. सर, what is this rubbish? अरे सरफासी एक्ट, सरफरोश मूवी इज देयर, हिंदी हिट मूवी, आमिर खान. ओके, सरफासी एक्ट, सिक्योरिटाइजेशन. सी, this is how you securitization and reconstruction of financial asset and enforcement of securities interest act. What is this? What is this act? Array, I told you no many times. Okay, we will sell our loan to asset reconstruction company. We are not going to receive the money, so asset reconstruction company will sell the securities, okay, and pay us. Okay, they will not pay us full, but certain less they will pay, but no problem. So how those rules are there, who can become asset reconstruction company, all that is there. So many times we sell, if we are not going to receive the money, we sell our securities to asset reconstruction company. Now they are responsible for selling the security and recovering the loan. For that, Sarfasi Act is there. Securitization and reconstruction of financial asset. Securitization and reconstruction of financial asset and enforcement of securities interest act. Learn nicely. Securitization and reconstruction of financial asset. Securitization, A for and, reconstruction of financial asset and enforcement of securities interest act. Understood? Then Credit Information Companies Regulation Act. Lot of credit rating agencies are there, ICRA, Credit Suisse. Okay, how they will give rating, who can become credit rating agency, all that is there. Credit Information Companies Regulation Act. Payment and Settlement Act, new act. Many payment bank are there. Paytm Payment Bank, Airtel Payment Bank. How can you become payment bank? What are settlement norms is given here. So new act are very easy actually. IT Act, Pamla Act, Prevention of Money Laundering Act, Sarfasi 2002. Okay, Securitization and Reconstruction of Financial Asset and Enforcement of Securities Interest Act. Last two act you know, Credit Information Companies Regulation Act, Payment and Settlement Act 2007. I hope you are clear. Yes sir, super clear, duper clear, clear. Okay, we will try to learn 5 till year. Okay, start. First three to everyone knows. Regulatory framework in bank. Okay, Banking Regulation Act 1949, RBI Act 1934, Companies Act 2013, SBI Act 1955, SBI Subsidiaries Act 1959, Banking Company Acquisition and Transfer of Undertaking Act 1970, Regional Rural Bank 1976. Learn till year. Fully done, sir. Are supremely done, excellently done, amazingly done. Okay. Now come here. These are the favorite. IT Act 2000. Okay. Then after IT Act with Pamla, Prevention of Money Laundering Act 2002. Are Sarfarosi ki tamanna, Securitization and Reconstruction of Financial Asset and Enforcement of Securities Interest Act. His spelling I don't know. Learn at home. 2002. Okay. Then Credit Information Companies Regulation Act 2005, Payment and Settlement Act 2007. Learn this. Fully done. Are not fully, even greater fully done. Wow. Too good. Banking Regulation Act 1949, RBI Act 1934, Companies Act 2013. Okay, then SBI Act 1955, SBI Subsidiaries Act 1950. SBI Act 1955, SBI Subsidiaries Act 1959, Banking Company Acquisition and Transfer of Undertaking Act 1970. Okay, after that, Banking Companies Transfer and Undertaking Act, Regional Rural Bank Act 1976, New Act, IT Act 2000, Pamla Act 2002, Sarfarosi ki tamanna, Securitization and Reconstruction of Financial Asset, Enforcement of Securities Act 2002 again. Okay, Credit Information Companies Regulation Act, Credit Information Companies Regulation 2005, Payment and Settlement Act 2007. Simple. What are peculiarities involved in bank audit? Tell me, in bank audit, what is there? Widespread area of network is there in bank. Okay, so many branches are there. variety of product and service are there, large volume of transaction is there, and there is strict vigilance by banking regulator. Simple 2 mark question. If they ask, it is too easy. What are peculiarities in bank audit? Without seeing you can tell. Widespread network is there, 10,000 branches are there. Second, huge volume and complexity of transaction, crores of transaction take place. Large range of product and service, home loan, car loan, deposit loan, FD loan. Okay, extensive use of technology, strict vigilance by banking regulator. Is it easy? No, because it is too easy. What are peculiarities involved in bank audit? Widespread geographical area of network, large volume of transaction and complexity of transaction, variety of product and service are there, extensive use of technology, strict vigilance by banking regulator. Arey sir, RBI is very strict. RBI is Bahubali. Are you clear? RBI is like Raja Mouli. Okay. Learn this exactly. Break 10 seconds. Done. What are peculiarity in bank audit? Can you tell me? Yes, I can tell you because it is very easy. Widespread geographical area of network is there. Okay, large volume of transaction is there and complexity of transaction is there. Large variety of product and service is there. Extensive use of technology. Strict vigilance by banking regulator. Type of audit report to be issued. Very simple. Every company has to issue statutory audit report as per 700, 701, 705, 706, 700, forming an opinion and reporting on financial statement. 701, chapter 11 we have learned. Came show, majama key audit matter. 705, modification in independent auditors report. How many report are there? 4. Qualified, unqualified, disclaimer, adverse. 706, EOM and OM in independent auditors report. So first, statutory audit report. Second, every bank has to issue tax audit report as per Income Tax Act 1961. Third is famous for bank, only applicable to bank. So only third you need to remember. Which one? LFAR, long form audit report. Long form audit report as per requirements of RBI. Simple, very easy. Okay. What are reports to be issued by bank? Tell me. Types of audit report to be issued. Number 1, stat audit report. Second, tax audit report. Every bank has to do. Third, long form audit report before 30th June as per instructions of RBI. Are you clear? So first two, to anyways you know. LFAR is the only new thing. Long form audit report. Long form audit report as per requirements of RBI. Next question is bank audit approach. Whenever we are checking controls in the bank, following things should be kept in mind. Understood? See, listen one more time. Bank audit approach while performing control activity. Whenever we are checking controls in bank, following things should be kept in mind. But why am I checking controls? So based on RAP, see, checking control is RAP, risk assessment procedure. I can design my FAP. What is FAP? Further audit procedure. If controls are strong, further procedure would be less. If controls are weak, further procedure would be more. I hope you are able to understand. So here I will basically, what is the bank audit approach while performing control activity? Whenever I check control, what is the bank audit approach? Why I need to know? So based on control only I will decide my further procedure. If controls are strong, my further procedure would be less. If controls are weak, my further procedure would be more. So based on nature and thrust of operation, nature of adverse feature, level of compliance, audit risk, audit plan should be kept in mind. Okay. Following questions need to be kept in mind while performing control activity. Whenever you are performing control, following things should be kept in mind. Who, which, what, when, where, why, how. How many questions are there? Who, what, when, where, why, how. 6 questions need to be kept in mind. Whenever we are performing control activity, 6 questions. Who, what, when, where, why, how. Who, what, when, where, why, how. Example, who performs the control? Second, does he have requisite authority to perform the control? Let's take an example. All loans are authorized by whom? Okay, assistant manager. Number 1, who performs control? Assistant manager. Does he have requisite authority to perform the control? Yes, he's manager in a bank. He knows all the credit rules. Of course, he can approve. So in who 2 question, who performs the control? Does he have requisite authority to perform the control? What is the evidence that the control is performed? How can you say assistant manager has approved the loan? Okay, is there any signature of assistant manager in all the loan approved? Okay, does he make a sign, or in system does he write enter, or in system sometimes sign are done in system also, left click if you do, your initials are done. So what is the evidence that the control is performed? When and with what frequency is the control performed? Is the frequency enough to prevent or detect and correct material misstatement? Okay, with what frequency? Now the work of assistant manager is reviewed by who? Senior manager or main manager. Okay, now with what frequency is the work reviewed? Okay, is the frequency enough? Does he check every loan to prevent or detect and correct material misstatement? Otherwise assistant manager will do the fraud and we will not understand. So does he check every loan? When and with what frequency is the control performed? Is the frequency enough to prevent or detect and correct material misstatement? Are you clear till now? Three questions are who, what, when, who, what, when, who, what, when. Where is the evidence of control? How long it is retained? Is it available for audit or not? Okay, where is the evidence of control? Where is the evidence that the loan was approved? For how long it is retained? Is it available for auditor? So in case any fraud is there, auditor can know that this manager had approved. Okay, where is the evidence of control performed? For how long it is retained? Is it available for audit or not? Are you able to understand? Yes, sir. Next, why is the control performed? What type of errors are prevented or detected and corrected? Why is the control performed? See, many times loan are approved unauthorized, so that is why this control is there. Okay, will after assistant manager checking or manager checking, all errors are prevented or detected and corrected. First I will try to prevent. If I cannot, detect and correct. Okay, why is the control performed? Okay, what type of errors are prevented or detected and corrected? How is the control performed? What are the control activities? Can this control be bypassed? Can the bypass be detected? Okay, so how is the control performed? What are activities while approving the loan? What all steps you keep in mind while approving a loan? That amount should not exceed as per the bank limit. Okay, can these activities be bypassed? Can the manager be bypassed? Okay, sometimes can wrong person also approve? If it happens, can the bypass be detected? Is there a senior manager who will always catch the fraud? How are deviations handled? If any deviation is there, deviation means exception. How is it handled? And what is the time frame for resolving the deviation? I hope you are able to understand little. If not, we'll again do it. Who, what, when, where, why, how. Who, what, when, where, why, how. Who, what, when, where, why, how. Okay. Number one, who. Who performs the control? Does he have requisite authority to perform the control? What? What is the evidence that the control is performed? Who, what, when. When is the control performed? Okay. Is the frequency enough to prevent or detect and correct material misstatement? Who, what, when, where. Where is the evidence of control? Okay. For how long it is retained? Is it available for auditor at the time of audit? Who, what, when, where. Why is the control performed? Okay, will it prevent or detect? What type of error it will prevent or detect and correct? Okay, what type of error? How is the control performed? What are the control activity? Can the control be bypassed? Can the bypass be detected? Okay, how are exceptions identified? What is the time frame for solving exceptions? I hope you understood little. Okay, very easy it is. So bank audit approach while checking control activity. Whenever you want to check control, you have to ask 6 questions, and based on that we will decide. If answer of these 6 questions is strong, controls are too strong, my trust on bank audit will increase. My trust on that bank will increase and substantive would be less. Who, what, when, where, why, how. One last time. Who, what, when, where, why, how. One last time. Who, what, when, where, why, how. I hope you are able to understand. Who performs the control? Does he have requisite authority to perform the control? What is the evidence that the control is performed? Who, what, when? Where is the control performed? Okay. Is the frequency enough to prevent or detect and correct material misstatement? Who, what, when, where? Where is the evidence of control performed? For how long it is retained? Is it available for audit? Why is the control performed? Can the control prevent or detect and correct material misstatement? What type of errors it will prevent or detect and correct? How is the control performed? What are the control activities? Can the control be bypassed? Can the bypass be detected? Okay. How are exceptions identified? What is the time frame for solving exceptions? Are you clear? Who, what, when, where, why, how. So bank audit approach in checking control. Easy? No, too easy. Who, what, when, where, why, how. One last time. Who, what, when, where, why, how. Okay, sir. Now come here, even more easy. Appointment of auditor. Whenever you want to appoint the auditor, in case of banking company, same like normal company. Tell me, normal company auditor who will appoint? Sir, members in the AGM will appoint for 5 years. If he is appointed in first, he will remain auditor till sixth. Here also same, appointed by members in the meeting, appointed by members, appointed in the AGM by shareholder. But prior approval of Bahubali is needed. Who is Bahubali? RBI. Are you clear? Prior approval of RBI is needed for any banking company, HDFC Bank, Kotak Bank, okay, ICICI Bank, okay. A shareholder, auditor is appointed by shareholders in the AGM, but prior approval of RBI is needed. Nationalized bank, tell me, it is banked by me or government? It is a government bank, so appointed by board of directors of the bank. Board of director will appoint, but remember, prior approval of Bahubali is needed. Nationalized bank is what? Punjab National Bank, okay, Bank of Baroda, these are nationalized bank, okay. So banking company or nationalized bank. SBI is government's bank, it is banked by government, so will appointed by CNAG. For our government company, who appoints auditor? CNAG. What is CNAG? Comptroller and Auditor General of India, in consultation with central government. So both will come together and appoint. In consult, see, approval means what? I will just ask, okay. Consultation means we both will come together and appoint, okay. So appointed by CNAG in consultation with central government. Subsidiary of SBI, who will appoint, sir? SBI only will appoint. Oh, so easy. Subsidiary of SBI is my favorite. SBI only appoint. Yes. RRB, appointed by bank with prior approval of RBI. Okay, sorry, central government. Prior approval of central government. So this RRB is little weird. Okay, appointed by bank itself, but prior approval of central government. One last thing. Tell me, who will appoint auditor? Number one, banking company. It is appointed by shareholders in AGM, but prior approval of RBI is needed. Okay, all nationalized bank appointed by board of directors of bank, prior approval of RBI is needed. SBI appointed by Comptroller and Auditor General of India, CNAG, in consultation with central government. Subsidiary of SBI, your favorite, who will appoint? SBI. And last, regional rural bank appointed by bank, okay, but prior approval of central government. Read nicely. Break. 10 seconds. Done. Okay, shall we speak once? Yes, sir. Banking company appointed at AGM by shareholders, but prior approval of RBI is needed. Okay, nationalized bank appointed by board of directors of the bank, but prior approval of RBI is needed. SBI appointed by CNAG in consultation with central government. Subsidiary of SBI, of course, SBI. RRB appointed by bank, but with prior approval of central government. Remuneration, same like that. Are same to same. Control C, Control V, in accordance with provisions of section 142. Three things were there: fees payable, expenses if any incurred in connection with audit, and any other facility given to him, same like that. Nationalized bank and SBI, who will fix? RBI in consultation with central government. For all nationalized bank and SBI, who will fix remuneration? RBI together with central government. LFAR. See, remember, okay, we have to submit statutory audit report along with stat audit report for certain class of companies. Central government in consultation with NAFRA, National Financial Reporting Authority, has also given CARO, Company Auditor Report Order. Oh yeah, I remember company auditor report. But for bank, there is no CARO. CARO doesn't apply to banking company. For bank, there is special requirement given by the Bahubali, Raja Mauli. Okay, long form audit report, LFAR. Every bank has to submit long form audit report as per the requirements of RBI. Is it applicable to foreign bank also? Yes, every bank before 30th June. Before 30th June. Terms of appointment of public sector bank, private sector bank, foreign bank require auditor to furnish LFAR, long form audit report. Okay, matters to be included in LFAR. Who will give? The Bahubali himself, RBI. LFAR has to be submitted when? Before 30th June every year. Before 30th June you have to submit. Understood? Yes, sir. Now, mode of creation of security. Bank will directly give you the loan. No, 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 no. We have to give some security. Usually, bank gives only 80% of security as loan. One more time. Bank will directly never give loan. We have to give some security. Okay, directly no bank will give loan. We have to give some amount as security. Okay, understood, sir. Fully understood. There are several ways of creating security. Mortgage. Mortgage is usually immovable property. Against whom, if you take a loan, in English we call it mortgage. There are two. Whenever immovable property is kept as a security, it is known as mortgage. There are two types of mortgage: registered and equitable. Registered, in this a deed is signed. Okay, in registered we will sign a deed that we are giving documents to the bank. Okay, because against that we are taking a loan. So a deed is signed, that documents are given to the bank against which we are obtaining loan against this house. Are you clear? Yes. So you cannot sell the property because you have registered the mortgage in the name of bank. Okay, you have signed a deed in the name of bank. What is equitable mortgage? No deed is signed. Okay, there is no deed prepared. Okay, only documents of your home are with the bank, so you cannot sell. You will only give documents to the bank. There is no deed signed, no registration is done. Okay, so stamp duty charges and all will not be there. Only you are giving your home ownership document to the bank, so you cannot sell your home. Okay, understand, sir? Then to which is better, registered or equitable for getting loan? That bank will tell you. Okay, of course registered is little expensive because you have to pay stamp duty, etc. In equitable we are only giving document. Every bank has different policy. Some will tell you that we need registered mortgage, some will tell you we need equitable mortgage. Just give documents. So whenever you take loan against immovable property, two parts: registered, equitable. Registered, in this ownership documents are, you have to sign a deed and give the documents to the bank. Okay, deed is signed in the name of bank. In equitable, only documents are given. Pledge and hypothecation, remember very nicely, both are for movable property. Immovable property is known as what? Mortgage. Movable property, pledge, hypothecation. Whenever you give goods to the bank against which you take a loan, gold, against gold we take a loan, against stock we take a loan. But if the ownership was not ownership, if you keep the documents with bank, it is known as pledge. Okay, in this, delivery of goods is done by borrower to the bank. Okay, in hypothecation you only keep the goods. Movable property is is with you only. You are acting as a trustee of the bank. Okay, you are acting on behalf of the bank. You are acting as a trustee of the bank, and okay, documents or goods are with you only. Example: Ola car, Uber car. Okay, in this what will happen? Many times it is written hypothecated. In truck it is written hypothecated to Canara Bank. Means this truck belongs to Canara Bank till I repay all EMI. Okay, right now Canara Bank has given me this truck to use, so I can pay their EMI. In this, okay, movable property is with the borrower only. It doesn't give to bank. Okay, borrower holds possession as trustee. Okay, borrower is nothing but creator of trust. So I hope you understood. Pledge and hypothecation is for movable goods. If ownership of the goods, sorry, not ownership, if the documents are with the bank, then it is pledge. If the documents are with you only and you are acting as a trustee, it is hypothecation. Assignment: transfer existing or future debt to another person. Transfer existing or future debt to another person. Many times we want the loan, okay, because our money is stuck in debtors. Our debtors are not paying, so we will transfer our debtors book to the bank. So we are telling the bank, okay, you have the right to recover the money from debtor. Now I will not recover, but you give me loan urgently right now. You recover the money from the debtor. So whenever we transfer our existing or future debt, it is known as assignment. Set off. Set off is a statutory right of the bank to set off two accounts provided they are in the same bank. Example: I have a loan of 80 crore and FD is there of 100 crore. I am not paying my loan only. Can bank set off the loan against FD? Yes, provided both are of same bank. ICICI Bank Mumbai branch, ICICI Bank Ahmedabad branch, you can set off. ICICI Bank Mumbai branch, Kotak Bank Ahmedabad branch, you cannot set off. Set off is a right given where we can set off the two accounts of the customer of different branches also, provided they are of the same bank. Lien. Lien gives a right to the borrower that he can sell the property. Okay, if you don't pay, bank has the right to sell the property. They can exercise lien and sell the property because you are not paying. Very fast. Immovable property, mortgage. Movable property, if you keep with what? Bank, pledge. If you keep with yourself, hypothecation. Whenever you transfer your debtor book assignment, set off, you can set off 2 accounts and lien also, Then almost we are on the verge of ending the chapter. Now, audit approach for income account, audit approach for expense account. Very simple. Tell me, for bank, what is income? Bank the income is too much. There are 4 things in income and expense account. Total 16 schedules are there in bank. First 12 are of balance sheet, last 4 are of P&L. For bank, biggest income is interest. They will receive interest on what? Maybe if they have done some investments in debentures, okay, they have done some investments in any other thing, okay, they will receive lot of interest. Second, they will receive interest basically from loan people. Whoever you have given the loan, you will receive a lot of interest. The main income of bank, schedule 13 interest earned. Other income also, these days bank has lot of other income. I will not speak much, but I will tell 10 other income. Okay, fast. Number 1, bills discounting is a income for bank. Locker charges, debit card charges, credit card charges, okay, checkbook charges, bank charges, passbook printing charges. Are you clear? AMC, annual maintenance charges there in bank. These so many expenses bank, okay, broking charges are there, okay, bank acts as a broker also these days, share broker, broking charges are there, okay, then internet banking facility charges there. That is other income for bank. Schedule 13 interest income, schedule 14 other income, schedule 15 interest expense. When expense will be there for bank of interest? Deposit. Whoever has deposited money, we need to pay them interest. Schedule number 15 is there for interest. Many times we take loan from other bank, okay, other branch also. Every branch is a profit center for the bank. Remember, every branch is treated as separate profit center. So if you take loan from some branch, you have to pay money, interest expense. If you take loan from other bank, you have to pay money. If you take loan from RBI, you need to pay. So interest expense. And 16 is other expense, printing, stationery, rent, okay, internet charges, okay, locker, etc. Understood? So income and expense, very simple. 13 interest income, 14 other income, 15 interest expense, 16 other expense. One last time. Array 13, 14, 15, 16, 13, 13, 13, 13, tell no 13. 13 is interest expense, 14 other income, 15, okay, sorry, interest, 13 is interest income, 14 other income, 15 interest expense, 16 other expense. Break. 3 seconds. Simple. Tell me, interest income 13, other income 14, interest expense 15, other expense or operating expense 16. Now, what is audit approach and procedure for income account? Number 1, we should have reasonable assurance that all the income accounts are recorded with correct amount, correct account, correct period. 3 words are important. Whenever you book any income of the bank, it is recorded with proper amount, recorded in proper period and proper account. 3 things: correct amount, correct account, correct period, correct account, correct amount and correct period. Are you clear? This is the basic thing. Accrual. Every time RBI has told bank, you should have to recognize income on accrual basis only if it exceeds 1% of total income, if income is taken on gross basis. Let's take example, debit card charges. Are you clear? So debit card charges, okay, or passbook charges are to be taken, okay, if it is more than 1% of total income of the bank, it has to be taken on accrual only. Total income of the bank is, let's assume what, 1000 crore, okay, so 1% of 1000 crore is how much? 1% of 1000 crore is 10 crore. Any income 10 crore or above compulsory has to be taken on accrual basis if you are taking matching income with income. Let's take example. Passbook charges are how much? Okay, passbook charges are 11 crore. Of course, it has to be taken on accrual basis. Why? Because it is more than 1% income of the bank. Total income is 1000 crore. 1% of 1000 is 10 crore. Passbook is 11 crore. It has to be taken on accrual basis. What if it is below 1%? It can be taken on accrual or cash. Accrual is best if you cannot take on cash. But remember, 1% of net profit is income is taken net of cost. Now, if you are taking passbook charges minus deducting the paper cost, See, to print passbook also cost is required. Okay, so minus that, you are taking net income of passbook. Then you have to compare not with total income, you have to compare with net profit. Are you clear? If it is more than 1%, if you are taking net income, okay, then compare with net profit. If you are taking gross income, compare with gross profit. Fully understood, sir. Now, I told bank income is 1000 crore, but net profit is 100 crore. How much crore? 100. So 1 crore, if you are taking income net of cost, any income above 1 crore, okay, will be taken on accrual basis as per AS9. One last time. All income are to be taken on what basis? Sir, accrual basis, provided it is 1%, more than 1% of total income of bank if taken on gross basis, more than 1% of net income if taken on net basis. Any other income can be recognized on cash basis. Very, very important. NPA. NPA should not be recognized unless it is received. Remember, NPA should not be recognized unless it is received. Did you understand? In 1 minute over. See, whenever it becomes NPA, from now you have to recognize on cash basis only because the asset is non-performing. Okay, now no accrual basis. Okay. Reversal of income. When a credit facility becomes NPA for the first time, all interest credited for previous period should be reversed. Okay. See, whenever you become NPA for the first time, whatever interest is there, okay, which was not received, reverse it and charge it to PNL because that is not your actual income. Whenever any credit facility becomes NPA for the first time, the day it becomes NPA, all previous should be reversed and charged to PNL. This is done. Bills purchased, outstanding at the close of year, discount received should be apportioned between year. Remember, 10,000 bills is there. Okay, you paid 8,000, you will recover 10,000. 2,000 is profit for bank. Okay, but that bills will be received after 6 months. So on 31st December, you discounted the bills. You will receive the money on maybe 1st July. So now whatever 2000 is left, 31st March to 1st July should be apportioned in 6 months. 3 months in current year, 3 months in next year. So the 2000, 8,000 you receive, 2000 is profit. That 2000 apportion in 6 months because bills are of 6 months. Okay, that is what is written. Bills for commission. See, many times you tell bank, please collect these bills on my behalf. Okay, bank is only acting as a commission agent. Okay, so bank will collect the money on your behalf and pay you. Of course, earn some commission. That commission should be recognized when money is paid to you. Are you clear? Only commission should be booked after money is paid to customer because that is when the work of bank is over. Renegotiation. Many times you are unable to pay the money. You are saying I cannot pay the loan. Bank will try its best, okay, to enter into some renegotiation arrangement. Okay, of course they will charge few fees for renegotiation. That should be spread across the period. The negotiation fees should be spread across the period. For 1 year, if you are not going to pay, it should be spread over 1 year. Test check, also test check the interest for various types of loan, whether interest is properly credited or not. Otherwise, it will become loss to the bank. Partial recovery in NPA. Tell me, whenever we are receiving the NPA, we will recognize as per AS9 for past period amount not recognized. However, we need to ensure the credit is not okay. Whenever partial recovery are there, we will recognize as per AS9 for the past period. Okay, don't recognize current year for the past period. Okay. Tell me, when it becomes NPA, will we stop calculating the amount only because we don't have to book as income? If the account becomes NPA, will we not calculate only the interest? No. Memorandum means for rough working, you need to calculate. What if he gets a lottery of 20 crore? I am here to pay the money. Oh, sorry, sir, we have not calculated your interest. So please go back. Don't pay because we thought you are NPA. Not like that. You still have to maintain the accounts. Memorandum, rough working should be there. Okay. So if he comes tomorrow, we can tell, sir, your 19 crore is pending. Audit approach for expense account, which is the biggest expense for bank. Okay, schedule 13, 14, 15, interest expense. In carrying out audit of interest, auditor should see overall reasonableness of interest by analyzing ratio of interest paid on various types of deposits and borrowing to average quantum of liability during the year. See, simple, you have to see various types of deposits are there, against them interest is there. You have to check average ratio. Okay, on one deposit it is coming 3.5, another 4, another 4.5, another kind of deposit 8, maybe fixed deposit. On one it is coming 11%. Be very shocked, what the hell is going on? Analytical procedure you have to do. Interest on deposit, interest deposit, interest. If approximately rate are matching, don't check them. Okay. But if not matching, we have to check. Analyze various types of deposit and then find out weighted average actual interest rate. Okay, various types of deposit you have to see and various types of interest you have to see. Calculate weighted average rate and then compare with actual rate. Compare with actual rate. So for various types of deposit rate as that, find out one weighted average rate and compare it with actual rate. Okay, and see what is the difference. Auditor can also compare the interest with previous years, okay, and see deposits have increased by this much, approximately interest has increased by this much, then okay. Month wise also you can do interest. Oh, February month too much interest is coming. Oh, deposits have increased a lot. Understood, understood. Auditor can test check the interest. Okay, I hope you understood. Very simple. So first you have to see all deposits average interest rate is proper or not, then calculate weighted average rate, compare with actual rate, also compare with previous years to see. Month wise analysis also can be done. Auditor should test check. He will test check what interest is provided on all deposits or not. Interest rate are as per the regulations of RBI or not. In case of FD, interest rate is matching with FD certificate. Interest on saving account may be checked. Inter branch balances, okay. If you have taken loan from branch, okay, or if they have taken the loan, interest is properly there. Interest on overdue or mature deposits is properly paid. So few things you have to check. Interest rate is as per RBI regulation. For saving account you need to check. Okay, inter branch balances, interest is properly paid or not if you have taken loan from these branches. Okay, overdue or matured deposit interest is paid. Okay, interest is as per the certificate of FD. Okay, very simple. We will check interest is provided on all deposits. Interest is as per the rate of RBI. Interest is as per the FD certificate. Interest on inter-branch balances is properly paid off. Okay, very simple. Interest on overdue or mature deposit is also paid. Operating expense, nothing to see. You can do month-wise analysis. You can compare with previous year. You can calculate several ratios to see if any adverse ratio is there. Auditor should see the internal control system to check nature, timing, and extent of further audit procedure. Auditor should see major trends in expenditure. Why this expenditure is so long? Okay, in March, huge expense is coming. What is the reason? Ask them. Expenses can be analyzed on month wise or year wise. Okay, with last year you can compare. Also compare in case of major expenses, you can check voucher also and reasonableness of expense by comparing with previous year. Already told you. First, see internal control over expense. If that is strong, my further procedure will be very less. Month-wise expense I can see. I can compare with previous year. Major expense. See major trends of expense. For big expenses, I can also verify vouchers. In format of P&L of bank, there is no prior period item. Okay. But if needed, we can show it separately. In format of P&L, it doesn't provide for prior period item in current year P&L. Such disclosure should be done if needed. In bank, there is no format of prior period item. But if there is any prior period item, we have to show it separately. Too easy. Almost chapter is over. We are just finding out if any question is pending. This is pending. See, in carrying out audit of advances, auditor should obtain evidence about following. This is a nice question. This can also come. Auditor should examine efficiency of internal control over advances to determine. See, whenever they ask you internal control over advances, why I need to know internal control over advance? To determine nature, timing, and extent of further audit procedure. If internal controls are strong, my checking would be less. Internal control are weak, checking would be more. Okay. What points in internal control? Advance is given after checking credit worthiness of borrower and sanction of appropriate authority. See, if we check credit worthiness and sanction is there, I will know that nothing wrong will happen. All the necessary documents are checked. Compliance with terms of sanction and use of funds. Sufficient margin is available by bank. Okay. They are not giving unlimited loan. Against margin only, they are giving the loan. Securities like share debentures, if they have given, they are in the name of the bank. All securities requiring registered are registered in the name of bank. In case, okay, in case of pledge, if the goods are with the bank, we have to check the goods at regular interval, their condition is proper. If their value deteriorated and he is also not paying, you are gone. Drawing power should be updated based on value of securities hypothecated. So based on value of securities, DP will be updated based on stock statement, which I told you. Accounts should be within the drawing power and sanction limit. Understood? Simple. We will check internal control over advance to determine nature, timing, and extent of further audit procedure. What do you check in internal control? Advance is given after credit worthiness of the borrower and appropriate authority. All necessary documents are there. Compliance are there with end use of the funds. Okay. Securities, if given to the bank, they are in the name of the bank. Okay. Or in case goods are in the possession of the bank, regular interval we need to check the goods. Drawing power is updated based on, okay, value of securities hypothecated. Account should be within drawing power and sanction limit. Over. Now this is there. Bank audit stages. Very simple. One time I will read, because this is nothing but repetition of all the chapters. It is just a repetition. Okay. Initial consideration. Whenever you do bank audit, these things you need to keep in mind. Okay. Initial consideration by statutory auditor. He has to declare his indebtedness, that is not indebted to the bank. Because if you are indebted, if you have to pay money to the bank or receive money from the bank, what will happen? You will become little biased. Okay. So you cannot do audit of those where you have purchased securities of the bank. Internal assignment by bank by statutory. You have not taken any internal audit. If you are internal auditor of that bank, you cannot take stat audit. Okay. Communicate with previous auditor that I am taking this assignment. You should have no objection. He is our fellow brother only. So initial consideration. Identifying and assessing risk of material misstatement, already studied. ROMM. Okay. IR into CR in chapter number 4 also studied, 3 also studied. Understand the bank and its environment, because based on environment only we will decide further audit procedure. All this is already learned. Understand the accounting process, understand the risk management process. Okay, how risks are identified by TCWG, how they monitor the risk, control activity, monitoring, etc. Discuss with engagement team how they are going to do. Then overall audit strategy, chapter 2. Overall audit plan is there. Materiality is calculated. Of course, all this is learned. We have to check going concern. Okay, see the fraud of money laundering is there. Specific risk, etc. I hope you are clear. Okay, stress testing we need to do in a bank. When there is too much load, we have to check how they will handle, whether systems can handle. Basel 3 framework and reliance. So this is nothing, you have to just read once. It is very easy. Entire process is there. Read once, it will be very easy. Initial consideration, ROMM you have to find, bank's accounting process, risk management, overall strategy, plan, chapter 2, strategy, plan, program. Okay, so materiality, then assess the risk, then respond to the risk. Very simple. I hope this chapter is super clear. We have tried our best to make you learn this chapter in the nicest possible way. At the same time, give you full clarity. If you like this video, do give a thumbs up. It will motivate us to make even better video. Put in a nice comment, okay? If you can, it will motivate other students also. If you are new to this channel, do consider subscribing India's most positive YouTube channel, where we focus on only positive content. Good night. Bye-bye. Take care. Thank you so much. Very good morning, guys. Warm welcome to the best lectures of EISSM and Audit nationwide. Yes, guys, continuing with Mega Marathon Revision Series on CA Inter Auditing in only English. We are doing today chapter number 13, I think the last chapter that is left in the revision series. What is chapter number 13? Audit of different type of entity. Okay, very nice chapter, very interesting chapter. In this we are going to study audit about hospital, hotels, okay, NGO, charitable trust, okay, leasing company, hire purchase. Then we are going to study audit of government. Okay, we are also going to study audit of cooperative society, multi-state cooperative society. Okay, club we are going to study, charitable organization. Lots of things lined up for this chapter. It's a very lengthy chapter. Let me tell you one thing about the chapter. You cannot learn the entire chapter. You need to understand the flow in this chapter. If you are expecting 5 out of 5 in this chapter, or if 3 questions are asked 15 on 15, Not possible. For every question you may get out of 5, 4 or 3 marks. Okay, so 3 or 4. So more focus on understanding, focus on the flow of chapter, because there is so much content. Okay, so we have to do it in such a way we are able to remember and recall on the last day as well. Are you clear? Without wasting any time, let's start. It's a very lengthy chapter, but be rest assured we will try to focus the max on concepts, so we know how we can do maximum amount of things, okay, in least amount of time, because on last day also you have to read all this. I hope you are clear. Yes sir, fully clear, supremely clear. Let's start. Audit of different types of entity. Let's start. Okay, before we start this, I would like to tell you where are you doing this revision from. Boys and girls, we are doing this from our magic book. Okay, those who don't know, magic book covers the entire syllabus in 86 to 90 odd pages. Clear? Yes sir, fully super duper amazingly clear, absolutely clear. Okay, audit of different type of entity. Let us start. Okay, general things to be checked for all entity. Okay, be it any entity. Remember, see, first few, okay, few or types of, for example, we are talking of educational institute, we are talking of hotel, we are talking of hospital, we are talking of clubs, we are talking of charitable organization, we are talking of NGO. In that entire discussion we have to check 4 5 parts. Are you clear? We have to check 5 things. If you check 5 things, anything can be solved. So first 20 minutes of the chapter is important. No, it is very important. That will lay down the base of the chapter. Once that is clear, no, chapter will become very easy ball game for you. You will understand entire chapter. Then we just need to understand the flow. Okay, so be it any entity, we have to check 5 things. Certain things in general, then we have to check receipt, then we have to check payment, then asset, then liability. So 5 things. Number 1, general, receipt, payment, asset, liability. How many things? 5 things. One last time. Number 1, general, receipt, payment, asset, liability. 5 things we have to check in everything. Okay, be it any organization, we have to check 5 things. If you understand this model, no, things will be very easy for you. How you know that we need to check 5? ICI module has given this. Basic structure is given by ICI module. Be it any entity, check 5 things. General, asset, liability, income, expense. General, asset, liability, receipt and expenditure. Understood? Yes sir. In general, remember 5 points are there in general. For any entity we have to check this 5 point. Number 1, obtain an understanding of legal status of the entity. Review the legal status of entity, whether entity is sole proprietor, whether it is partnership, whether it is HUF, whether it is a company, whether it is a trust. Review the legal status of entity. Obtain and study their fundamental legal document. What is the fundamental legal document? For example, for proprietor it can be shop act license, for partnership it can be partnership deed, for trust it can be trust deed, for HUF it can be HUF deed, for cooperative society different document, for company AOA MOA. Understood? Number 1, review fundamental legal status of entity. Obtain and study their fundamental legal document. Obtain understanding of internal control of entity. This is the most important thing. Why sir? If internal controls are strong, okay, my reliance would be much higher. Okay, I will do less substantive. This is repeated from first chapter. But if internal controls are weak, I have to check in detail. Yes or no? Yes or no? Yes sir. So third point is what? Obtain understanding of internal control system of the entity. Fourth, examine the powers of members of managing committee and other officer. Examine the powers of managing committee, members of managing committee and other officers, so we know what are their power. If the power is exceeded, we will report to the committee or to the board. Okay, we will know any decision taken by these members, is it authorized or not. So examine the powers of members of managing committee and board. Are you clear? Next, study the minutes of board meeting, managing committee or trustee meeting. Minutes of board meeting, governing body or managing committee. Why to study their minutes? To see all the major decisions taken. Okay. Second, who will operate the bank account. Third, how will the company function? What all big expenditure are sanctioned this year? Okay, so this all is necessary. This 5 points, if you understand, general is over. Remember, for every entity we need to check 5 things. Number one, general. In general, 5 points are there. If you understand this 5, general is sorted. See, this is a long chapter. We need to understand the trend in the chapter. We need to understand the format of chapter. Fully understood, sir. Number one, obtain understanding of legal status of the entity. Okay, obtain and study their fundamental legal document. Okay, third, examine the internal control system of the entity. Third, fourth, okay, examine the powers of members of managing committee or board. Okay, fourth, examine the minutes of board meeting or management committee meeting. Okay, examine the minutes of board meeting or governing body or managing committee meeting. And last, examine accounting policies followed and accounting records maintained. Examine accounting policies followed and accounting records maintained. If you understand this 5 point, half things are sorted. Then what is written? Check receipts. Receipt, I will tell you what to check. Then check what expenditure like staff, payment, capital expenditure, asset liability. Very simple. Okay. Check receipt, check payment, asset liability. Receipt, payment, asset liability. I hope you are able to understand. You have to remember only 5 points. Don't focus too much, otherwise you will be fully confused. Okay. 5. Try. Number one, obtain understanding of legal status of entity. Obtain and study their fundamental legal documents. So these 2 points are over, fully over, sir. Understood? Now come here. Next 4. Review internal control system of the entity. Are you clear? What is the internal control system? This is also over. Examine the powers of members of managing committee or board. Examine the powers of management committee or board. Examine the board minutes of the board meeting or management committee meeting. Board meeting or management committee or governing. Examine the accounting policy followed and accounting records maintained. Very simple. I hope you are able to understand. Okay. So 5 points, if everyone has understood, then we can go ahead 5-6 points, because these are the basic points. Once this is clear, chapter will become super simple. Can we again start? Yes, sir. Why not? Number one, obtain understanding of legal status of the entity. Obtain and study their fundamental legal document. Okay, third, examine the internal control system of the entity. Examine the powers of members of managing committee or board. Examine the minutes of board meeting or management committee meeting or governing body meeting. And last, examine the accounting policies followed and accounting records maintained. Accounting policies followed and accounting records maintained. Then receipt, expenditure, asset liability. I hope general is clear. One last small break, 10 seconds. First 2 points you know. So read these 4 points. Clear? Chalo, start. 1, 2, 3, start. What is the first point? Okay. Obtain understanding of legal status of entity. Obtain and study their fundamental legal document. Examine the internal control system of the entity. Okay. Fourth point is what? Obtain understanding of fundamental legal. Okay. No. Internal control. Examine the powers of management committee or examine the powers of board members or management committee member, etc. Examine the minutes of board meeting, management committee meeting or governing body. Examine the accounting policies followed and accounting records maintained. Then check receipt, check expenditure, verification of asset and liability. Understood? Okay. So in every entity we have to check 5 things: general, income, expenditure, asset, liability. General, receipt, payment, asset, liability. General, receipt, payment, asset, liability. In some even less can be given, but maximum 5 things are there. So if you understand the format, they will ask anything, you can easily write. Let's start now. First, educational institution. What shall I explain? Any education institution. In that, what is there in general? Now we have to see, they have given only 2 points. We know 5 points. Good. If you don't remember anything, you can write our 5 points. If you remember, try to write this. Examine the trust deed or regulation in case of school and all provision affecting accounts. Examine the trust deed and see everything which affects the account. Why do we need to see trust deed? To see who will operate the bank account, what major expenditure are sanctioned, okay, what is the power of each member of managing committee. Okay, next, read the minutes of meeting of managing committee or governing body regarding operation of bank account, sanction of the major expenditure. Okay, who will sanction major expenditure, who will sign on the check, everything will be written in minutes of the meeting. Are you clear? So see, trust deed and minutes of meeting, this you already know. Receipt, remember which is the biggest receipt for them? School fees. Are you clear? Education institute, school fees, fees from student. Okay, check in the fee register and compare the same with attendance register. Check the fee register, compare with attendance register. In attendance some students are coming but their name is not in fee register. We have to ask them, sir, what is this, why the name is not in fee register? Then they will say these are concession students. See, if concession students are there, scholarship students are there, they are approved under proper authority only. Okay, next, okay, compare, check the fee in the cash book with counterfoils of receipt issued. Check the entry in cash book with counterfoil of receipt. Let me explain this point also. Whenever you make entry in cash book or whenever someone will deposit cash, you give one part of receipt to him and another xerox you keep. If you don't understand, I will tell you. As soon as you pay the fee, what will happen? They'll give you one part and one part they will keep. So that is counterfoil. Counterfoil means xerox of the receipt. So compare entries in cash book with xerox of the receipt kept. Okay, that is counterfoil. Again and again it will come. Fees paid in advance are correctly adjusted. Okay, if fees are pending, appropriate steps are taken for recovery of the fees. Okay, arrears that are irrecoverable are sanctioned, are written off with the sanction of appropriate authority. Admission fees are there. Many times in school, what fees are there? Admission fees are there. If you don't understand, let me explain. As soon as you deposit school fees, certain portion of that is what? It is not school fees, but these are liability. They are kept as deposit by the school. Okay, whenever you take admission, you know this. Are you clear? That is main school fee and advance fees. So those admission fees are credited to capital fund. Why the hell capital fund, sir? I am not able to understand. Reason is very simple. These are not school fees. Understand? These are not school fees. These are another fees. Okay. These are used for future purpose or not for future purpose, but this will be refunded later. So it is a capital fund. Admission fees are credited to capital fund. In all school it happens. Free student scholarship is done by fines or late payments are received. Hostel dues are cleared before they leave. Remember, hostel dues should be clear. Old heavy arrears are reported to management committee. Now, this is clear, very simple. Tell me in student fees, 5-6 points, you can easily write yes or no. Number one, see whether fees are charged from all the student. Confirm with the fee register with what? Attendance register to see that name of all student are included. In case any name are not included, they are scholarship student or discount student. The same is sanctioned or approved by appropriate authority. Okay, confirm that arrears of fees are written off by appropriate authority or approved by appropriate authority. Whenever student leaves, confirm his hostel dues are clear. Okay, next, admission fees are not taken to revenue. Admission fees had to be refunded, so they are to be taken to capital fund. Fees paid in advance are appropriately carried forward. Fines or late payments are properly received and entry is shown. Heavy arrears you have to report to managing committee. Clear? 100% clear? 100% yes, sir. Now, see, exact you cannot learn this chapter, but briefly if you have understood, our purpose is served. Okay, sir. Next, grade. Next is grade. GRID. Remember now, for everyone, one main thing should be there in receipt. If after that general points are there, same for all. So one main thing after that, if you don't remember, general points are same for all. We have made memory technique for their grade. What is G? Okay, government grant. What is R? Rent. What is I? Interest. What is D? Dividend, dividend and donation. Dividend and donation. Very simple. I will again tell you. What is G? Grant. What is R? Rent. What is I? Interest. What is D? Donation and dividend. Donation and dividend. Very simple. One last time. Grid full form you have to remember. What is G? Grant. What is R? Rent. What is I? Interest. What is the dividend and donation? Dividend and donation. Now let me speak. Grant. If grant are received, see whether it is used for the same purpose for which it is received. If government grants are there, see provision of AS12 is fulfilled. Understood? Very simple. If grant are for general purpose, see whether they are used for general purpose. If they are specific purpose grant, see they are used for specific purpose. If grant was given for school ground, see it is used for school ground only. Rent. See whether adequate rent has been received. Trace it with rent agreement. Okay. See, compare the rent agreement with what? passbook, okay, and see rent is properly received. What shall I explain in this? Okay, I, tell me I is for what? Interest. See, interest is properly received on the fixed deposit. See, interest is received on all the investments which are done. Compare with the investment register and see interest is received appropriately on all the investment made. So simple. What is the dividend? See, the dividend is appropriately credited, okay, and all the income of dividend has been correctly booked, okay. Then one more is that donation. If donations are given, if they are for specific purpose, see, the donation is used for same purpose. Grade, general points. What is the government grant? What is our rent? What is our interest? What is the dividend and donation? Let us read. Verify rental income with rent agreement. What shall I explain? Verify interest and dividend income from investment. Also inspect securities of investment held. So whatever investment are there, all the investment, either interest is received, dividend is received. Interest. So if it is fixed deposit, interest. If it is what? Shares, dividend. Verify any government or local authority grant, and if any expense is disallowed under the grant, they are told don't use for this purpose, whether you have used for same purpose. Whether donations are received, if any donation are for specific purpose, they are used for that purpose only. Grade, don't forget formula. See, one main thing, educational institution, remember one main thing, fees, okay, write 5 points, then grade will come. What is G? G is for government grant. R, rent. I, interest. D, donation, dividend. Donation, dividend. Now you can write on your own. You are that much intelligent at least. Okay. Liability, very simple. Caution money and deposit money is shown as liability in the balance sheet. I hope you are clear. Caution money and deposit money is shown as liability in the balance sheet. Clear? Yes, sir. So deposit money is shown as liability and not taken to revenue. Very simple. Payment. In payment, remember, see, 2-3 things I will tell you. All the payment are done, okay, with proper authority. In case increments are done, they are authorized by managing committee. Okay. Third, any capital expenditure is incurred, it is sanctioned by appropriate authority. Okay. All the establishment expenses like staff salary, okay, telephone expense, printing expense are properly authorized. Okay. Any heavy expenditure is there, it is sanctioned. Simple points. Let's read. Verify all the PF money has been invested in appropriate security. PF is deducted, it is invested. All the capital expenditure are sanctioned with appropriate committee. Establishment expense like telephone, printing, stationery. Inquire into what expenditure? Heavy expenditure. If the expenditure is more than budgeted, see, it is sanctioned by managing committee. Expenditure is more than budgeted, it is sanctioned by managing committee. Increase in the salary of staff has been sanctioned and minuted by the committee. Increase in the salary of staff has been sanctioned. Very simple. Expenditure is as per the sanction. All money deposited. Capital expenditure is proper, etc. Assets. Ascertain. System ordering, provision, food stuff, clothing is proper. Whenever you order any food stuff, if you are giving lunch or dinner in the school, okay, food stuff, uniform clothing is there, okay, provisions are there, okay, you many times you order racket, bat, etc. There is a proper system regarding this. Work of one is reviewed by another. Proper inventory, verify the inventory. Lot of inventory is there in school. Clothing, books, provision, equipment. Verify, do physical verification and compare with the actual records. Okay, compare, do physical verification and compare with the books to see proper is there, or if any adjustment is required, it is appropriately adjusted. Simple. Over. Educational institute is over. First one took time. Now it will be done in rapid fire way. I hope you are understood briefly. Okay, so in every we have to check how many things. 5. General, receipt, payment, asset, liability. Now let's come to second. Very simple is next one. Hotel. Before I start, you have to take 10 seconds. What is there in a hotel? Just visualize. Done. Okay. So hotels, you have just visualized hotel. Now it will be very simple. Nothing great will be there. Number 1, internal control. In this general, only 1 point is given. There are total 5 points. They have given only 1. Internal control. Pilferage is the biggest problem in a hotel. So there should be strong control. See, hotel business, there is a lot of food stuff. So many maids at the time of going will do what? Little pilferage they will do. So you have to take care. In hotel, pilferage is the biggest thing. Pilferage means small theft they will do. Okay, take sometime curd, take bread sometimes, take wine sometimes. So proper control should be there. Now receipt. Tell me, for hotel, which is the biggest receipt? Very simple it is. Remember room sales. Are you clear? Hotel booking and restaurant is the two big thing. So if you understand room sale and restaurant booking and commission of travel agent, hotel is sorted. You don't have to take load. Let me tell you, room sales. See that entry for room sale. See the rate of room sale is correctly put by receptionist. But in case of big hotel, there is no receptionist. There is night auditor. In case of Taj Hotel, Oberoi Hotel, okay, 5-star hotel, there is no receptionist. Rates are put by night auditor. Auditor means a person who will put the rate in the bill. So there is no fraud. So number one. See, the rates in the invoice are put by proper authority, are matching with the rates in the system. Second, if the rates are put by night auditor in case of big hotel, it is appropriately put. See, the number of guests are correctly charged with entry register. In entry register, it is written 4 people are there, but in invoice only 3 are written. Why? You told them I will prepare invoice for 3, but one extra person you pay me, okay, extra person charge 1200, you pay me 600, 600 keep in pocket, too much fun. Are you clear? So 600 only they are paying and you are keeping that in your pocket. Okay, see, in the invoice number of guests are matching with entry register. Any difference between actual rate and standard rate should be properly authorized. We are charging less rate from someone. Ask the reason. In many hotel, housekeeper prepares daily occupancy report. Okay, now see how if that, see with the entry for few days you have to see in the entry it is given 8 rooms were occupied. So in daily occupancy report 8 is written or less is written. Okay, why? Based on daily occupancy report multiply by average room rent, also you can calculate total sale. If you don't know, occupancy rate multiplied by average room rate, you can predict the sales. Okay, to see that average occupancy report is proper, daily occupancy report is proper records are maintained for booking of hall and other premises. Okay, and their money is recovered properly. Very simple. Room sales is very simple. See, the rate of room sales is properly put by authorized person or night auditor in case of big hotel. Okay, compare the number of guests in the bill with the entry register. Third, any difference between actual and standard rate should be investigated. In many hotel, housekeeper picks daily occupancy report. Compare with the register and see daily occupancy report is correct or not. Proper records are maintained for booking of hall and other premise and for special parties, and money is recovered as per the tariff. Restaurant bill. Compare restaurant bill with kitchen order ticket. These days in big restaurant, what is there? There is no waiter who comes for order. Okay, you have to place the order in tablet. So in tablet, as soon as you place the order, or even if waiter comes, there is a kitchen order ticket generated. In kitchen order ticket, it is written that customer needs 8 items: one paneer masala, one roti, one papad. Understood? Okay, kitchen order ticket. Compare restaurant bill with kitchen order ticket to see all the items are properly charged or no fraud is done. Are you clear? Taxes received are paid to government authority. Travel agent. These days, lot of booking takes place from Make My Trip. Go IBO. Now, what happens? You are paying to Make My Trip 100 rupees. Make My Trip will not pay full portion to the hotel. 30% is deducted. So, you are paying 100, 30% minus. Hotel will receive how much? 70 rupees. So, see the agreement with all the travel agent. Check their commission and see money is appropriately received from travel agents. Payment. So very clear, 3 things are there: room sales, okay, restaurant bill, room sales, restaurant bill, and travel agent. Payment. Cost of minor repair and redecoration is a revenue expenditure. Okay, minor repairs is revenue. Cost of any major expenditure done in hotel should be capitalized. Okay. Casual labor. Hotel depends a lot on casual labor. If there is a wedding, we will not keep 100 people in the hotel. Remember, it is wrong. What do we do at the time of wedding, sir? At the time of wedding, we take lot of casual labor. Mr. X come, Mr. Y come, Mr. P come, Mr. Q come. Are you clear? Lot of casual labor you hire. See, there is a proper system for casual labor. Entry is properly made. Otherwise, what will happen? We will tell that we hired 100 people. Actually, we hired 80 only, and 20 manager put in the pocket. Commission should be. See, commission should be paid to travel agent. You were saying the travel agent will pay us. Many times it is paid hotel also. Okay, pay at hotel. So he will come to your hotel and pay you 100 rupees. Now out of that 100 you have to give 20 to the agent. Okay, so this is also commission paid to travel agent is proper. Okay, so now whenever payment has to be made, assets are there. So nothing great is there here. Casual labor, minor repair, etc. Asset. See, inventories like silver, cutlery are. See, many hotel they give you in what proper silver plate. You have to have the food. So now that plate is usually inventory or shall it be capitalized? If the plate is very expensive and life of the plate is more, it can even be capitalized. Otherwise, we charge to inventory only. So that depends on accounting treatment by the hotel, whether silver, cutlery, plate are capitalized or charged to P&L, and nature of the treatment followed by client. Are you clear? Yes, sir. Nothing great. Over. Got over also. Array, hotel over. In general, nothing is there. Receipt to you understood. Payment asset. No liability is there. They have not given liability in hotel. Wow. So easy. Yeah. Come to hospital now. Okay. In hospital, what is there? Main thing is only one thing. Patient bill. Okay. See the patient bill and compare with what? Patient bill you have to compare with register. Patient bill compare with the register and see that patient are correctly charged. Also, bill is issued to all the patient from whom amount is recoverable. Check the cash collection in cash book and compare it with counterfoils of receipt issued. Understood? Yes. Now same grid is there. GRID. See, first patient you understood. About register of patient with the bill issued to them. In register of patient, 12 patient are there, but bill is given to 8. Why you have not given to 4? Okay. Second, see that see that all the amount is recoverable from the patient is properly recovered before he discharged. Check the entries in cash book with counterfoil of receipt. This to you understood. Now same grid is there. Tell me full form of grid. What is G? Says G is what? Grant. R is what? Rent. I is what? Interest. D, dividend donation. See investment register to see all interest income from interest, income, dividend, rent is collected. Trash all the subscription and donations from cash book. Reconcile the subscription due. Donation received for specific purpose are used for that purpose. Grant received from government are duly accounted for as per AS12. Same thing. So easy it became. Grid payment. Vouch all the purchase and expense. Verify capital expenditure is there. You have purchased the ICU, okay? You have purchased the COVID machine. You have purchased some heartbeat ECG machine. Verify all the capital expenditure is sanctioned by the trustee or managing committee. Increment to staff is duly authorized. Check the amount of expenditure and compare with budgeted expenditure. If there is significant variance, you have to report to managing committee. Asset is very simple. See, depreciation is charged on all the asset. Inspect bond, shares, crates, and compare it with investment register. Check all the shares, crate, bond, debenture, and compare it with investment register and see any investments are not left out. Obtain inventory, especially stores and stock in case of hospital, and do physical verification of the inventory and compare with the respective ledger balance whether physical verification is matching with balance. If not, appropriate adjustment. In hotel, in hospital, lot of inventory will come, lot of utensils will come, lot of clothing will come, lot of chappals may come, lot of other things may come, syringes may come. Okay, examine internal check means work of one is reviewed by another. Regarding receipt and issue of stores, linen means bed sheet, apparatus means those utensils etc for urine etc, clothing, instrument, they are properly recorded in inventory register. All the utensils, the linen, clothing, okay, apparatus are properly recorded in the inventory register. Nothing great. Here what was given? Receipt, payment, asset. Receipt, payment, asset. I hope you are getting it. It is too easy. If you don't understand general, you have to understand one thing and then entire flow. Okay, sir. But if you don't read, it is going to be havoc for you this chapter. If you read, it will become very easy. Tell me, are you little more confident now? Yes, sir, much more confident. Okay, but remember, these lectures are in no way substitute to the regular or fast track. They are needed. Till now, we have done education institution, hotel, hospital. Moving on. Moving on. Hey, moving on. Hey, moving on. We are going to club now. Yeah, club. I will do party in club. Okay, do. Okay. Club. Club means what? In Ahmedabad, we have Rajpath Club. Okay, we have what? Rajpath. We have another club also. YMCA Club. Rajpath Club is there. YMCA Club is there. Karnavati Club is there. Club is not the place. Dancing Club is not there. Oh, Bhargal will come. No, 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 no. Not that. Clubs are there where you go for recreational activity, you go for gym, you go for swimming, you go for wine. Okay. You go out with friends, hang out. That club we are talking about. Okay. So in club, mainly what is there? Subscription fees are there. Okay. Entry fees are there in club. For member, less fee. For guest, more fee will be there. Okay. If you use any utensil, okay, if you use any facility, account of the member is appropriately debited. All such things you understand, right? But in club, main thing, wine is there. Okay, people will order wine. See, appropriate money is charged. Proper gross profit is earned. Are you clear? Basic things I told you. Let's see in detail. General, only one point. See, financial powers of secretary, and if they are exceeded, report to managing committee. Secretary misusing his power, bringing his friends, okay, sanctioning unauthorized expenditure, report to committee. Receipt. Entrance fee. Vouch entrance fee with members register and counterfoil issued to them. Whatever entrance fee are there, same is debited to members register or counterfoil of receipt issued to them. Subscription. Very simple. Vouch proper subscription has been received. Verify total subscription with subscription received, subscription due. So subscription is 100, okay, due is 40, then received should be 60. Are you clear? See, if last year arrears are there, they are correctly brought forward to current year and recovered. See, if subscription is received in advance, it is properly adjusted. Okay. See, if subscription is not received, appropriate steps are taken for recovery of subscription. If any subscription is written off, it is written off under sanction of appropriate authority. Simple points. I have not read. I am just telling you like that. Trace receipt with register of member. Reconcile total subscription with subscription due and outstanding. Arrears are correctly brought forward. Arrears are adjusted of current year. Amount considered irrecoverable is written off. Are you clear? What shall I explain? Simple it is. Food item and amenities. Verify proper internal check is there. When a food item comes, there is a proper entry. Whenever it is taken out, there is a proper entry. In English, we call it internal check. Whenever wine bottle comes, there is an entry. Whenever wine bottle is served, there is an entry. Only then check will happen. Otherwise, someone will take wine bottles free of cost. Then club will be in huge loss. Okay? Yes. Verify internal check. Members are charged for food item, drinks provided, billiard service, tennis service. See debits in the members register. See, every member account is separate, club account is separate. See debit in the members account. Okay. Payment for sports item is properly done. Any capital expenditure is done. It is done with proper authority. Verify the purchase is done of what? Food items, okay? Wine, cigar. Are you clear? And see, appropriate gross margin is earned on them. So you have to maintain for food items separate account. Appropriate margin is earned. Otherwise, what will happen? Okay, some wines will be issued free of cost. Some food items free of cost. Club will be in huge loss. Unsold goods are in inventory. For assets, nothing is there. Physical verification of inventory. Compare with the register of the inventory to see if they are matching. If not matching, do adjustment. Very simple. So in club, entrance fee, subscription. Entrance fee, subscription. Then food item. Entrance fee, subscription, food item. Payment, asset, liability. I hope you are clear. Fully clear. Fully super duper clear. Don't worry at all, sir. Okay. Now, charitable organization. Remember, charitable organization and NGO are exactly same. After that, we will shift to something else you will enjoy. Are you clear? Let's finish two. Charitable and NGO is over. Okay, all the basic are over. Are you clear? Then something new is there. You will surely enjoy. Can we start? If you are ready only, then we will start. Don't get bored. Okay, till the time we have to live, there is a struggle in life. So enjoy charitable trust. Remember, charitable trust only has one thing. Okay, it is set for education, religious, or any other purpose. If you are sleeping, get up. Get up. Okay. Charitable trust. Education, religious. Bal Mission Trust. Remember, Bal Mission is what? It is Bal means child. It is for child welfare. So it should be used, the funds of the trust should be used for same purpose and not other purpose. Are you clear? Trust. Study the constitution under which it is set up. Examine the trust deed as laid down. Verify whether the trust is functioning as per the system given. Examine the system of internal check. Verify in detail income and amount is deposited to bank regularly. Are you clear? General points are simple. Subscription and donation. Ascertain changes in annual life membership fee. Whether official receipts are issued. In trust, this is the big problem. Okay. Charitable trust. What is the biggest problem? Charitable institute. Okay. Remember, whenever we give donation to them, it is exempt from income tax. So many trusts do what? Okay, you are giving 100 rupees to them, they will pay you 95. Okay, why the hell are you giving them 100? Why they are paying you 95? Remember, it is basically a fraud. You are not giving money for welfare of trust, you are giving for deduction in income tax. And they will show what? Entry in the trust, but that money doesn't go anywhere, it goes to founder of trust and they are doing fraud. So you will pay them 100 rupees, they will pay you in cash 95 rupees. Simple. 5 rupees went to their pocket, they will show the entry in trust, but they will do no child welfare. Nothing will happen and you will get benefit in income tax. Too much fun, 50% benefit, 100% sometimes. Enjoy. This is how life works. Confirm control over unused receipts. Unused receipts are properly kept. See interest, receipts are issued, funds are used for same purpose. Okay, unused receipts are kept under proper authority. Otherwise, someone will issue the receipt and do the fraud. Okay, see the counterfoil of receipt issued with cash book. See entries made in cash book. See where the funds are used from cash book. Verify total subscription and donation. Examine system of internal check regarding flag days are there, box collection day is there. Grant. Then to very simple. GRID. Tell me grade full form. Grant, rent, interest, dividend, deposit. Grant, rent, interest, dividend, deposit. This is so too simple. Verify the amount received with minutes book. Obtain certificate from the official showing amount of grant. Interest income. Check calculation of interest. Calculation of interest, see whether it is ex dividend cum dividend. What is ex dividend? Okay, excluding dividend. What is cum dividend? Including dividend. So if you purchase after record date, okay, after record date means, see, whoever is member on record date will receive dividend. So if you purchase after record date, it is ex dividend. Ex dividend means you will not receive dividend, excluding dividend. Okay, if you purchase before record date, okay, price will be little more because you are going to receive dividend, cum dividend. So see, investments are ex dividend or cum dividend. Schedule of investment. Rent with counterfoil of received rent agreement. Special function like drama, concert is there, etc. Vouch refund of income tax. If for TDS is deducted for trust, they are exempt from tax. So refund is appropriately obtained. If they purchase anything and TDS is deducted, okay, then they have received the refund of the same. Payment of grant and trust is made under trust. Verify cash and bank payment. Assets. Verify schedule of movable and immovable properties and do physical verification of fixed asset as well as inventory and compare with the records to see it is proper. If not proper, appropriate adjustment is made. Nothing great. Exactly same. Exactly. Control C, Control V is NGO. Shall we read once? Yes, sir. After NGO, we will try to shift the chapter in another direction and you will love it. Okay. NGO. What is NGO? Non-governmental organization. NPO, you have non-profit also. Non-profit organization. Being human is there. CRY is there. CRY is child relief and you. Vidya is there for education. So NGO and charitable trust is used for what? Okay. In this, lot of money is received and they use for particular purpose. NGO is also for particular purpose, but both are different. Non-governmental organization, non-profit organization. Few examples I took. Being human, child relief and you cry is there. Vidya is for education. In general, NGO. If you don't remember anything, tell me 5 points. You remember 5 or forgot? Obtain understanding of fundamental legal status of the entity. Obtain and study their fundamental legal document. What is the third point? Examine the internal control system of the NGO. Okay, what is the 4 point? Examine the powers of board member or managing committee member. Examine the minutes of board meeting or managing committee meeting to see all the appropriate decisions or major decisions taken. Same, study the accounting system and accounting records maintained. See, same. Knowledge of NGO mission, all statute, legal form, NGO chart, okay, examination of minutes of board or managing committee, study the accounting system and accounting control. This is new. Setting materiality level. For NGO also materiality is must. Above that we will audit, below that we will not audit. Nature and timing of report, involvement of expert, review of previous year's report. Receipt, very simple. Same thing is there, then I will not teach. Grant for project. Okay, if money is given for specific project, you have to use it for that project. Okay, if it is given for only children's education, you have to use it for that. agreement with the donor, and grant letters are there to ensure funds are used for that purpose and properly accounted. Fundraising program. Many times, being human will do what? Fashion show. Okay, Jacqueline will come. Okay, Salman friend Shahrukh will come. All other friends, Arbaz will come. Malaika will come. Okay, all these people will come. Fundraising program. So see that receipts of fundraising program are properly accounted and they are used for NGO and not personal purpose. Are you clear? Internal controls are there for collection of funds and collection is appropriately shown in the bank also. Fees received from membership register. Ensure proper classification is made between entrance fee, life membership fee, and annual fee. See, entrance fee is going into the NGO. Okay, annual fees are there, life membership fees are there. All three are different. Why? Annual fees is revenue, but life membership fees is capital, credited to capital account. Reconcile fees received with fees due and how much, total fees with fees due and how much received. Subscription is proper, interest and dividend. Understood? Okay. Program and project expense. Verify agreement with donor, okay, who has given the fund for particular project. It is used for same project. In case project involve contract, okay, ensure income taxes did. See, many times you are making the payment, okay, income tax they will deduct. Okay, now you have to apply for refund because for NGO taxes refund. Establishment expense like PF, ESIC are properly deposited. Postage stationery. Check requirement for earmarked funds. If your earmarked funds are there, they are used for same purpose. Fixed asset. Vouch all the acquisition or disposition of fixed asset. Check donors agreement for immovable property. Check investment register whether the investments are in the name of NGO, whether appropriate dividend is received or interest is received on the investment. Verify the cash in hand at the close and whether it tallies with books of accounts. Verify the bank balance. Okay, verify inventory in hand and do physical verification and see physical verification and actual inventory are matching. Liability, very important. Corpus funds. Many times two funds are there for specific purpose and corpus. Corpus is what? Total funds of the NGO. It can be used for future project. So if nothing is given, these funds will go to corpus fund. Contribution or grant in the nature of corpus fund should be vouched with letter from donor. From donor, letter will be there. Should be used for specific purpose or transferred to corpus fund. If they have told transferred to corpus fund, then vouch the agreement from the donor. Then the donor is returned, send it to corpus fund. Vouch transfers from project program with donor letter and board resolution of the NGO. Simple. Vouch transfers from program with donor letter and board resolution of NGO. So if donor letter is there, then it should be transferred to reserves, then they are appropriately transferred. Very, very simple. I hope you understood. Nothing great is there. Very, very easy. NGO is also over. With this, how many are over roughly? Okay. Number one, educational institute, hotel, hospital, club, charitable organization, similar nature was NGO. Okay, now we are moving a little, okay, discussing something good, something different. Okay, in that these five parts are not there, it is little different. So three organizations now we will take which are little different, important also. So stay very attentive. Are you ready? Yes sir. Cooperative society. Remember, I will talk about cooperative society 1 minute only, then start this. Cooperative society is two part: single state cooperative society, multi-state cooperative society. Whose objectives or business is limited to one state is known as single state. Whose objectives are not confined to one state but they operate in multiple states are known as multi-state cooperative society. This much understood? 125% understood. If their objectives are confined to one state, single state. If their objectives are confined to multiple state, they are multi-state. Understood? 129% understood. 129, yes. Second, let me tell you, see, cooperative society, there is one important thing: for the member, by the member, of the member. Their main aim is not to earn profit but welfare of the member. See, if alone I will go and sell my milk, see, cooperative societies are usually formed for milk, housing, farming. Three things are there: milk, housing, farming, or any other such purpose. Best example of cooperative society is Amul Doodh Peeta Hai India. Amul is multi-state, it operates in multiple states. But there is Sumul, it operates in Rajasthan only. Saras Cooperative Society in Rajasthan only. So remember, single state is what? One state. Okay. Sumul, I think, is not in Rajasthan. Saras is in Rajasthan. Saras Cooperative Society operates only in Rajasthan. Are you clear? Any other cooperative society you know? Write in comment. No, please write. Okay. So cooperative one. Their main aim is not earn profit but increase the bargaining power. If I alone will go to sell the milk, what will another person, corporate entity tell? Oh, we will pay very less for the milk. But now, if I give them tremendous power, we all farmer go together. Our bargaining power will increase or decrease? Increase a lot. If I want to purchase also something, I need some raw material. If I go alone, no discount will be there. But if we go together, our buying power is more. Discount will be available. So I hope you understood. Cooperative society has basically 4 to 5 objectives. Number one, their main objective is for the member, by the member, of the member, and not personal profiting of members. Okay, their another aim is, okay, middlemen should be removed. Directly we want to connect to consumer, so we can give them goods at nominal prices, at the same time earn little profit also. See, I'll tell you first principles of cooperative society here. Check whether objectives of cooperative society are achieved. Objectives are what? Not earn profit but welfare of member. Expenses should be incurred economically. There is no wastage of fund. Middlemen or commission are removed so we can directly sell to consumer. Are you clear? Check whether objectives of cooperative society are achieved not in terms of profit but in terms of welfare of member. Okay, there should be no middlemen. Expenses are incurred economically and we are able to give the goods to customer at lowest price. There is no wastage also. Understood? Now, if you have understood this much, things will be very, very easy. So cooperative society is for the member, by the member, of the member. Okay, if the objectives are limited to one state, single state. If cooperative society works in multiple states, it is known as multi-state cooperative society. In any cooperative society, as we discussed, main aim is not earn profit but for the member, by the member, of the member. Remember, now, there is one person who manages cooperative society. He is known as registrar. Tell me, what is his name? Registrar. Sir, one more time tell. No, registrar. Registrar for Gujarat is Mr. Shah. Are you clear? So we will take again and again example of Mr. Shah. So for Rajasthan, it can be different registrar. For Kolkata, different registrar. For Tamil Nadu, different registrar. For Chhattisgarh, different registrar. Every state has different registrar. Okay, registrar is who, sir? Registrar is a person. He is a friend, philosopher, guide of cooperative society. In case cooperative society has any problem, any member is doing anything wrong, we will go to Mr. Shah. Are you clear? Mr. Shah is the registrar. Now, first we are discussing single state cooperative society, then we'll go to multi. In multi-state, so they have to coordinate with all registrar. No, 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 no. There is central registrar. In case of multi-state cooperative society, there is central registrar. Oh, understood. Very good, very good. Yes, sir. Start. Now it will be very simple. If you understood this 5 minutes, no, gone. Easy. Number one, as per section 17, for single state cooperative society, registrar shall audit or he shall appoint any person authorized to act on behalf of registrar. Who will audit cooperative society? Either registrar will audit or he will appoint any person authorized to act on behalf of registrar. Who can do audit of single state cooperative society? CA. Person holding diploma in cooperative department of government, in cooperative accounts. Person holding diploma in cooperative accounts or auditor in cooperative department of government. Learn nicely. Who can do audit of single state cooperative society? CA, you and me. Okay. Person holding diploma in cooperative accounts or person working in cooperative department of government. Are you clear? Auditor in cooperative department of government. One last time, who can do audit? Please tell me, no, who can do audit? CA can do. Yes, sir. If CA is not there, who can do? Okay. Second person who is responsible for doing the audit is, okay, person holding diploma in cooperative accounts, diploma, or auditor working in cooperative department of government. Very simple. Break of 3 seconds. Over. Who will do audit? CA. Person working in cooperative department of government. Last point. Okay. Person holding diploma in cooperative accounts. Last point, auditor in cooperative department of government. Auditor concerns. We have to check these things. Restrictions on shareholding. No member can hold more than 20% of the total shares. Why? Why you cannot? Maximum 20% or 1,000, whichever is higher. Are you clear? Whichever is lower, sorry. Maximum 20% share or max value 1,000, whichever is lower. So why you cannot hold more than 20%? See, then bargaining power will not be there. You alone will dominate. Cooperative society is for the member, by the member, of the member, or 1000 maximum, or max value 1000. 1000 is to 2 less. Cooperative society shares are of 1 rupee, 10 rupee. Are you clear? So this 1000 is too much actually. So number one, how much shares I can hold? Maximum 20% or 10,000, whichever is lower. Loan. I can't give loan to any member. I can only give loan to cooperative society. Are you members? Okay. I can't give loan to anyone. I can only give to members. Okay. I can give to any other cooperative society if registrar permits. Can cooperative society give loan to all? No. They can give loan only to member or to any other cooperative society. But that is required with the permission of registrar, Mr. Shah. Okay. State government may put further restriction. Can I borrow money from anyone? No. I can borrow money only from members subject to restrictions and bylaws of society. May accept loan and deposit from member subject to restrictions and bylaws of society. If bylaws means rules of society allow, only then. Very important. Appropriation of profit. Okay. Now remember, when whatever profit I earn, 25% of that should be transferred to reserve fund. For single state cooperative society, whatever profit it earns, 25% of profit should be transferred to reserve fund before payment of dividend or bonus to the member. So before paying dividend or bonus, 25% has to be transferred to reserve fund. We can reduce the percentage but not below 10%. If we want to reduce also, we need to take permission of Mr. Shah. Are you clear? One more time. Whatever profit I earn, 25% transfer to reserve fund. I can reduce but not less than 10%. But when I reduce also, I need permission of registrar. Okay. This transfer should be before distribution of dividend or bonus to the member. Okay. Now, whatever fund is left, 100 was there, I transferred 25, 75 is left. Again 10% has to be transferred for charitable purpose. 10% has to be transferred for charitable purpose. We can transfer amount not exceeding 10% for charitable purpose. After that, whatever is left will be given as dividend or interest to dividend or bonus to member. Contribution to education fund is there, but education fund is not appropriation of profit. It is charge against profit. Let me explain. So, education fund is not transfer from profit. Before calculating profit only, it has to be deducted. Contribution to education fund is charge on profit and not appropriation. Appropriation means out of profit you are distributing. But this is before calculating profit only we need to do it. I hope you are clear. According to certain act, transfer to dividend equalization reserve and share capital reserve fund is also charge against profit. So many states say dividend equalization reserve or share capital redemption fund is also charge against profit, and many say it is appropriation of profit. So depends. Dividend equalization reserve, share capital redemption fund. Clear? Simplify. Forget that last point. Simplify here. Whatever profit I earn, 25% has to be transferred to reserve fund. I can reduce percentage, not below 10. After that, whatever is left, up to 10% can be transferred to charitable purpose. Up to 10% has to be transferred to charitable purpose. After that, whatever is left, okay, I can do other things, dividend or bonus to the member. Remember, contribution to education fund is charge against profit and not appropriation of profit. Simple. Now, reserve fund may be used for what purpose? 25% you transfer to reserve fund, agreed. It shall be used for what purpose? Number one, in business or society as working capital. May invest as per provisions of act. May be used for some purpose likely to promote objectives of the society. I hope you are clear. Reserve fund can be used for three purposes. May be used as working capital. May be invested as per provisions of the act, or may be used for some purpose likely to promote objectives of society. 25% was transferred to reserve fund. Yes sir, yes sir, yes sir. For what purpose it can be used? It can be used by society as working capital. Second, may invest as per provisions of the act, or may be used for the purpose which is likely to promote objectives of society, like farmer, like agriculture. It can be used for that purpose. One last time, 25% transferred to reserve fund, understood? Yes. Can be used for three purposes. Society may use as working capital, may invest as per provisions of the act, or third and last is what? May be used for objectives that will promote the objectives of society. Now, investment of funds. Second point was there, where all society can invest the fund. Reserve fund may be used for investment. Okay. For what all purpose? Where you can invest the fund. A single state cooperative society may invest in 5 places. Number one, in central or state cooperative bank. in any other cooperative society, sorry, in any other cooperative bank as approved by register. Where can single state cooperative society invest the fund? In, remember, cooperative society, there is only one benefit: member and cooperative society. They take care only of other cooperative society and its member, no one else. Their main objective is not profit but only cooperative society. Where they can invest the fund? In central or state cooperative bank. In any other cooperative bank other than central or state as approved by register, in share, security, bond, debenture of any other society with limited liability. 3 points are over. Number one, in central or state cooperative bank. In any other cooperative bank, okay, other than central and state as approved by register. Number one, you can invest in central or state cooperative bank. You can invest in any other cooperative bank as approved by register. In share, security, bond, debenture of any other cooperative society with limited liability. Are you clear? In respect of securities specified by Indian Trust Act and any other money permitted by central or state government. Very simple. For five purpose, reserve fund may be invested for five purpose. Number one, in central or state cooperative bank. Second, any other cooperative bank other than central or state as approved by register. Third, in any other cooperative society with limited liability. 3 points are clear. May invest as per provisions of Indian Trust Act. May invest in securities specified by Indian Trust Act. Okay, in any other money permitted by central or state government. You have to learn nicely, very nicely you have to learn. Where can I invest the fund? See, very simple. In central or state cooperative bank. Any other cooperative bank other than central or state as approved by register. In any other cooperative society with limited liability. Clear. In any of the securities as specified under Indian Trust Act. In any other money permitted by central or state government. Break 10 seconds. Done? Okay. Tell me, I can invest the fund in one of the more central or state cooperative bank. Any other cooperative bank other than central or state as permitted by register. Okay. Third, in any other cooperative society with limited liability. Fourth, okay, as per the securities of, in any of the securities as specified by Indian Trust Act. And last, any other money as permitted by central or state government. Special features of cooperative audit. 6 months to 5 years. See, I have to show bad debts. Okay, whenever I show bad debt, overdue debt, not bad debt, overdue debt. If I have not received the money, I have to divide into two parts. 6 months to 5 years, more than 5 years, have to be reported to auditor. Overdue interest. If we are not receiving interest, it has to be reported. Bad debts. See, when they are bad debts can be written off only it will become bad debts when it is certified by the auditor, or if auditor does not certify, managing committee should authorize write off. We will do bad debt only when certified by auditor. If auditor doesn't certify, when management committee tells. Valuation of asset as per AS2. Cooperative principle already studied. Verification of members register. If we have given loan to member, it should show in members register also, and we have to take confirmation from the member. Examine entry in members register regarding loan given and repayment of loan, and also confirm balances. Very important. Special reporting to register. In these cases, auditor will do special reporting to register. Who auditor? Whoever was appointed here. In these cases, we will do special reporting. Nice question. FMDP. See, normal report every time we will send to register because he appointed us. But in this case, special reporting will be done by register. Auditor will do special reporting to register in 5 situations. Number 1, FMDP, financial management and Deepika Padukone. What a combination. Okay, what a combination. Detection of fraud relating to expenses, purchases, store. If there is any fraud relating to expenses, doing purchases or stores, are you clear? Mismanagement, decisions is against cooperative principle. Cooperative principle was not to earn profit, not to benefit member. It is for the member, by the member, of the member. If you are taking any decision which is against cooperative principle, okay, then I will do special reporting. Disproportionate advance given to vested interest group. You are giving the funds to what? Members of managing committee only. To relatives, you are always giving loan and they are not repaying. Relatives of the managing committee. It is wrong. Are you clear? Disproportionate advance to vested interest group. Or if advances are given without proper security or without judging the credit worthiness of the party. Personal profiting is done by members of managing committee. Whenever you want to order raw material, okay, you are ordering from your son only or from your relatives only and then taking commission from them because you are giving them raw material order from cooperative society. Personal profiting is done by members of managing committee. So in these cases, remember 5 cases special report has to be sent to register. Tell me in how many cases special report has to be sent? 5. FMDP, fraud relating to expense purchase fraud, expense purchase store. Okay, mismanagement, decision against cooperative principle. D, disproportionate advances given to vested interest group. Okay, advances are given without proper credit worthiness and without checking documents. Okay, personal profiting by members of managing committee. Simple. Fraud relating to purchase expense store. Mismanagement, decision against cooperative principle. D, disproportionate advance to vested interest group. Advances are given without the credit worthiness of the borrower, okay, or without checking document. P, personal profiting by members of the managing committee. Simple, very simple. F is fraud, okay. M is mismanagement. D, disproportionate advances. P, personal profiting by members of managing committee. Simple. Break 10 seconds. Done. Speak. Detection of fraud relating to expense purchase of store. Okay. Mismanagement, decision against cooperative principle. Disproportionate advance to vested interest group. Advance are given without proper security and without judging the credit worthiness of the borrower. Personal profiting by members of the managing committee. After this, after entire audit is done of single state cooperative society, auditor will give class to the society. Class A, class B, class C. After judgment of overall performance, auditor will give class to the society as specified by register. If the members of the if the management is not satisfied with the class awarded to auditor, they can appeal to register. Okay, if you are not satisfied, you felt that class is too low. Why this class is important? Based on this class only members will join the cooperative society. If class is not good, then cooperative society is not trustworthy, you don't join. So if management is not satisfied with the class awarded to that cooperative society, they can appeal to register. Register, if they feel that members are genuine, can tell auditor again, please review the class to this cooperative society. I think there is some problem here. Very simple. Okay, discussion of draft audit report. See, cooperative society is for the member, by the member, of the member. Directly you cannot issue report. You have to discuss with managing committee before giving the report, because many issues they will solve or they will tell don't print this. Members will feel bad. Okay, it is against the principles, etc. We will try to solve this point. So on conclusion of audit, auditor will ask secretary to convene the meeting with the members of managing committee and discuss draft audit report. Are you clear? So before giving draft audit report, you have to compulsory discuss with the members of managing committee. Simple. Single state cooperative society is fully done. Once if you read, it will become super smooth. Now it's the time for multi-state cooperative society. Next, multi-state cooperative society is those society whose objectives are not confined to one state. They operate in multiple states. Remember, for them multiple registers are not there. Why? If Chhattisgarh register will call, Rajasthan will call, Tamil Nadu will call, Amul will close down. Because for them central register is there. Who is register? Same friend, philosopher, guide. Understood, sir. Applies to cooperative society where objectives are not confined to one state but operate in multiple states. Their funds cannot be used for political purpose. Why? Because central government deals with them. So usually these cooperative societies are formed. Why? Okay, to collect the funds and then they give funds to central government. So many times many people want to give funds to central government, they give funds to multi-state cooperative society. Via them it will go to government, but not allowed. Qualification: who can become auditor? This is a serious matter. This is a big cooperative society. Any local people, person holding diploma in cooperative account? No, 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 no. Only CA. Only CA. Who is disqualified? Same disqualifications is applicable to company audit, body corporate, officer or employee of multi-state cooperative society. Same point. Body corporate, officer or employee. person who is a member or who is an employee of officer or employee of multi-state cooperative society. Same points. Any member of multi-state cooperative society not allowed. Employee, okay, any employees there of officer or employees there of employee who are working in multi-state cooperative society not allowed. Person who is indebted to multi-state cooperative society, or if we have given guarantee in connection with third person more than 1,000, then also we are disqualified. If you are indebted to cooperative society, you cannot do audit, or if you have given guarantee in connection with third person of amount more than 1,000, then also disqualified. Very very simple. These points are already discussed before. Okay, number one, body corporate, officer or member of multi-state cooperative society, person who is a member or officer or employee of multi-state cooperative society, person who is a member or employee of officer or employee of multi-state cooperative society, person who is indebted to multi-state cooperative society, or if you are not indebted but you have given guarantee in connection with third person of more than 1,000 rupees, then also you are disqualified. Power, right to access books of accounts and voucher kept at head office or anywhere, shall be entitled to officer or shall be entitled to explanation as he think necessary. Very simple. He can access books of accounts at all time. He can ask for information and explanation from any member of multi-state cooperative society. Power of special government, central government to direct special audit. Very, very important. When can central government give instruction for special audit? Remember, there it was what? Special reporting to registrar. Here special audit is there. Special reporting comes in single state. In multi-state cooperative society, special audit. When can central government give instruction for special audit? Under section 77, central government can give instruction for 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 special audit. Remember, in three situations, SSS, but you can give instruction only when more than 51% of the stake is held by central government or state government, or both coming together hold more than 51% stake. If you are not holding the stake, then you cannot give instructions for special audit. Okay, so if you hold more than 51% of say shares, only then you can give instruction for special audit. In three situations, important. Special audit, power of central government to direct special audit. Affairs of multi-state cooperative society are not managed as per sound business principles. Okay. Second, affairs of multi-state cooperative society are managed in such a way it is likely to cause serious damage or harm to the industry, trade or profession in which it operates. Okay. And last, endanger its solvency, harm its solvency. In three situations, power of central government to direct special audit. In three situations, affairs of multi-state cooperative society are not managed as per sound business principle. Their main aim is welfare, but it is not managed in that way. Second, affairs of multi-state cooperative society are managed in such a way it is likely to cause serious injury or damage to the business, profession or occupation in which it pertains. It is likely to cause serious damage or injury to the interest of business, trade, occupation or profession in which it pertains. And last, it may become insolvent. Then members will suffer huge loss and endanger its solvency. Then it can take three situations. Number one, it's not managed as per sound business principle. Serious damage or injury to the business, trade, occupation, profession, and last, endanger its solvency. It will cause harm to solvency. Central government will direct special audit. Central government shall order for special audit only if the government or state government, either by itself or together, hold more than 51% of the paid up share capital in such multi-state cooperative society. Very, very simple. No, sir, extremely simple. Central government for order for special audit only if the central government or state government, either by itself or together, hold more than 51% or more of paid up share capital in multi-state cooperative society. Simple, yes, sir. Special audit. Okay, special audit report will be sent to central government because they are only told. On receipt of the order, central government may take action within 4 months. If they don't take action in 4 months, report will be sent to multi-state cooperative society, and this report will also be sent to all members or read out before members in the meeting. Are you clear? We central government within 4 months, if they don't take any action, shall send the report to multi-state cooperative society, full report or extract of the report, and circulate it to member or read before the member in the meeting. expenses will be determined by central government and paid by multi-state cooperative society. Okay, if they don't pay, it is recoverable as an area of land revenue. Simple. Now, this was special audit in three situations: sound business principle, serious damage to the industry, trade, occupation, endanger its solvency. Inquiry or inspection by registrar. See, registrar may do inquiry or inspection in following situation, in four situation. Inquiry or inspection if it receives a request from federal cooperative to which multi-state cooperative society is associated. See, there is a milk society in which except Amul lot of people are members. Now another member like Mother Dairy will complain, sir, Amul is not working nicely or Amul has this problem. Are you clear? Then again problem will happen. So it may, when inquiry or inspection will take place, number one, federal cooperative to which multi-state cooperative society is associated. Creditor, one third of members of both, one fifth of total members of multi-state cooperative society. Understood? One last time. It may on request of federal cooperative. Number one, inquiry or inspection will take place in four situations. Federal cooperative in which multi-state cooperative society is associated. What is federal cooperative? Another fellow member is complaining that something is not going nice. Are you clear? Then central registrar may do inquiry or inspection. Second, creditor may request. More than one third of members of board will request. More than one fifth of total members of multi-state cooperative society can request. If any one of them requests, federal cooperative to which multi-state cooperative society is associated, creditor, more than one third of members of board, more than one fifth of members of the multi-state cooperative society, we may hold an inquiry or inspection, okay, into working and financial condition. However, before holding inquiry or inspection by central registrar, 15 days notice should be given to multi-state cooperative society so they are prepared. Okay. What is the power of the person holding inquiry? Either central registrar will do himself or appoint any person. He can access books of account security. He may tell officers of society to hold. He may tell officers to hold general meeting. Okay. But at least 7 days notice should be given before holding general meeting. He can tell members. He can tell the officer, please hold general meeting, I want to talk with all the members. Okay, so but 7 days notice should be given. He can summon any person who has knowledge of affairs of multi-state cooperative society and they have to come at such time and such place as specified. Central register shall within a period of 3 months from the date of receipt of report communicate the report to multi-state cooperative society. As soon as report is received of inquiry or inspection, within 3 months central register will send the report to multi-state cooperative society, who will of course improve. So 2-3 question good here. Special audit can come. Second, inquiry or inspection can come. Special audit report within how much time central government will take action? 4 months. Here what is given? Registrar shall send the report, okay, within 3 months from the receipt of report to multi-state cooperative society. There's central government. Sir, why central government here and why register? Here central government has instruction for special audit. They have given instruction. So they will receive report. Your inquiry or inspection, whom you told? Central registrar. So we'll give report to them and within 3 months, they will give the report to you. Okay. This is over, this is over. Very, very simple. Very, very simple. I hope you are clear. Till now, single state cooperative society, multi-state. This you might find right now difficult. If you read once, I assure you, it will be super simple. Next, audit of government. Government audit. Very, very simple. Government audit means we are not talking of government company like BAIL, SAIL, Steel Authority of India, Bharat Heavy Electrical Limited, ONGC. No, 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 no. We are talking of central government, Narendra Modi. We are talking of Tamil Nadu government. We are talking of Gujarat government. We are talking of Rajasthan government. We are talking of Meghalaya government. I hope you are clear. So we are not talking of government companies. We are talking of central government, state government, union territory. One more time, central government, state government, union territory. Tell me, who will do audit? In India, government audit. Government audit means central government, state government, union territory is done by CNAG. Right now, CNAG, what is the full form? Comptroller and Auditor General of India. Very easy, please concentrate. Comptroller and Auditor General of India. If you don't know, who is the CNAG right now? It is Girish Chandra Murmuru. GC Murmuru. Girish Chandra Murmuru will do the audit. In India, government audit is done by CNAG of Indian Audit and Accounts Department. Who shall appoint CNAG? He shall be appointed by President of India. Who is the President of India? Most useless person. Remember, in central government, who is no good for no use, he becomes the president. Usually, Pratibha Patil is there. Then another one was there. Abdul Kalam was, of course, there. After that, so all are just mimicry figures. Okay, those who don't do anything, they are appointed as, who appoints president? Central government. So central government president is appointed by central government. Then president will only appoint CNAG. Will he catch central government fraud? Of course not. Very simple. See, central government appoints president. Majority members are central government only. Then president appoints CNAG. Means inside directly or indirectly CNAG is appointed by central government only. How the hell he will catch fraud? It happens only in India. Tell me, can he be removed? Yes, on ground of proven misbehavior or incapacity. On ground of proven misbehavior or incapacity. He can be removed only when both houses of parliament vote for more than two-thirds of majority. Two-thirds of majority in Lok Sabha and Rajya Sabha should be there, only then he can be removed on ground of proven misbehavior, or proven misbehavior can be proven only when both houses of parliament, okay, vote with more than two-thirds of majority present and voting. What is incapacity? Okay, maximum 65 years. If you become 65, gone. So 6 years, his tenure will be 6 years or 65 years maximum. 6 years maximum, or if 65 is reached, gone. Example, if he is currently 52, he can continue till 58. If he is currently 62, he cannot continue for 6 years, max 65. Salary equal to judge of Supreme Court. So he doesn't get biased and he audits in a proper way. Very simple. In India, government audit is done by CNAG from Indian Audit and Accounts Department. Appointed. He shall be appointed by President of India. Can he be removed? Yes, on grounds of proven misbehavior or incapacity. What is incapacity? 6 years or 65 years. His tenure is. So if he becomes 65, it is incapacity. Or 6 years are over, incapacity. Otherwise, what is proven misbehavior? Proven misbehavior means both houses of parliament present and voting. More than two-thirds of majority should be there, only then he can be removed. Otherwise, what will happen? He will catch the fraud. We will remove him. Oh, Murmuru, we told you not to catch fraud. You caught. Get out. Get out, Murmuru. He shall be paid judge equal to salary of Supreme Court. Duties of CNAG. Compile the account and subsidiary account. See, they will not make the accounts. Accounts are already made of government. They will mix, compile all account and subsidiary account and report to. Report to whom? Okay. If it is central government, their accounts are known as Consolidated Fund of India. Okay. Central government accounts are known as consolidated. Remember, this much is over. In government, basically there are three audits. Okay. Audit of receipt, audit of expenditure, audit of stores and stock. In government, basically three audits are there. Audit of receipt, audit of expenditure, audit of stores and stock. Remember one last time. In government, only three audits are there. Audit of receipt, audit of expenditure, audit of stores and stock. Now continue. What are duties of CNAG? Compile the accounts and subsidiary account and report to. Central government accounts are known as Consolidated Fund of India. We report that to President. State government accounts are known as CFS. CF, Consolidated Fund of the State. It is reported to governor. For every state, there is a governor. Union territory accounts are known as CFUT, Consolidated Fund of Union Territory, which is reported to administrator. You have to remember this. Central government is known as CFI, report to president. State government CFS, report to governor. Union territory CFUT, Consolidated Fund of Union Territory. It is reported to administrator. Now, next is audit of receipts of union or state or central government. Audit of receipts. Next will be what? Audit of expenditure. Audit of expenditure. Very simple. Audit of stores and stock. Now, okay. Very simple. Three things: audit of receipt, audit of expenditure, audit of receipt, audit of expenditure, audit of stores and stock. I already told you three things are there in government audit: audit of receipt, audit of expenditure, audit of stores and stock. Audit of receipts and expenditure again. See, first is audit of receipt. Second, audit of expenditure, audit of stores and stock. Audit of receipt and expenditure of any authority which is substantially financed from CFI, CFS, CFUT. CFI, CFS, CFUT. Okay, what is CFI? Consolidated Fund of India. CFS, Consolidated Fund of State. Consolidated Fund of Union Territory. any authority which is substantially financed from CFI, CFS, CFUT, okay, their accounts are also, their receipt and expenditure is also audited by CNAG. What are duties of CNAG? Receipt and expenditure of any authority which is substantially financed by CFI, CFS, CFUT. Sir, what do you mean by substantially financed? If the grant is more than 25 lakh, oh, okay, grant is more than 25 lakh, and if the grant is more than 25 lakh and more than 75% of the expenditure of that authority comes from either CFI, CFS, CFUT, then it is substantially financed. In two situations, it is substantially financed. Number one situation, remember, if more than 25 lakh contribution comes from CFI, CFS, CFUT, and more than 75% of the expenditure of that authority is met from CFI, CFS, CFUT, then we can say it is substantially financed. Audit of grant and loan and audit of government company. Audit of grant or loan, or see, any grant or loan is received, it should be used for same purpose. That is the audit of government company. Government company audit CNAG will not do. They will appoint auditor of government company, already learned in company accounts. Very simple. What are duties of CNAG? It is very simple. Compile the accounts and subsidiary account and report. Compile the account and subsidiary account. Audit of receipt, audit of expenditure, audit of store and stock. Compile the account and report. Compile the account and subsidiary account and report. Audit of receipt, audit of expenditure, audit of stores and stock, audit of receipt and expenditure of any authority that is substantially financed from CFI, CFS, CFUT, audit of grant and loan, audit of government company. Very simple for me, I don't know for you. Read all these points. See, first point you understood. Compile the accounts and subsidiary account and report. Understood? Whom you will report? Consolidated Fund of India, President. Consolidated Fund of State, Governor. Consolidated Fund of Union Territory, to Administrator. Now very simple. Audit of receipt, audit of expenditure, audit of stores and stock. Okay. Next, audit of receipt, expenditure, stores and stock. Audit of receipt and expenditure of any authority that is substantially financed from CFI, CFS, CFUT. Audit of grant or loan. Audit of government company and corporation. Read nicely. Done. Tell me, what are duties of CNAG? CNAG, please tell your duty now. Please, please, please. CNAG, we love you. Okay. Okay. Compile the account and report the accounts. Compile the accounts and subsidiary account and report. Audit of receipt, audit of expenditure, audit of stores and stock. Audit of receipt and expenditure of any authority which is substantially financed from CFI, CFS, CFUT. Audit of grant and loan and audit of government companies. Powers of CNAG, very simple. Inspect any office of accounts under the control of union or state government. As soon as you go to office, you will ask for books and records. Put question to such person who is in charge of the office. In carrying out, he can check any account or class of transaction in detail if they want. Number one, inspect any office which is under the control of state or union government. Ask for books of accounts or document. Ask any information and explanation. And last, carry out detailed checking into any account or transaction as he may think necessary. Now, basically, there are three things, okay? In government accounts or government audit, there are three things: audit of receipt, audit of expenditure, audit of stores and stock. One last time: audit of receipt, audit of expenditure, stores and stock. Expenditure is big, receipt and stores and stock is time pass, very easy. Okay, so I will explain receipt first. All the receipts are properly accounted. If the receipts are received, they are used for the same purpose. If any loans are received, they are used for the same purpose. Any special purpose grant is received, it is used for same purpose. Are you clear? Very simple. Expenditure is important. 5 points are there. Audit against rules and order. Audit against sanction. Audit against provision of fund. Performance propriety audit. One last time. Audit against rules and order, audit against sanction, audit against provision of fund. Okay, performance audit, and last is what? Performance audit, and last is what? Performance audit, propriety audit, performance propriety. One last time: audit against rules and order, audit against sanction of fund. Okay, audit against sanction, audit against provision of fund, propriety, performance. Very simple. Rules and order. Remember, any expenditure incurred should be as per the laws. Are you clear? It should not exceed the higher power. Rules. Here we'll see laws, rules, regulation issued by authority, and expenditure is as per the laws, rules, and regulation. I hope you understood audit against rules and order. Now, there are certain rules and orders laid down. Okay, expenditure should be as per them only. They are as per the provision of constitution, any laws made thereunder. They are not in conflict with rules or regulation made by higher authority. They are as per the requirement of audit and accounts of CNAG. In case they are not approved by authority, issuing authority possesses necessary rule making power. Very, very simple. Can we start one more time? Yes, sir. See, audit against rules and order. In that 4 points are there. Expenditure is as per the constitution of laws, rules, regulation. Second, they are not in conflict with rules made by higher authority. Remember, in government there are certain rules, this much expenditure only allowed. Then highway department will make its own rule. Infra will make its own rule. Okay. Airline ministry will make its own rule. Telecom ministry will make its own rule. Number one, they are as per the provision of laws, rules, regulation. Second, they are not in conflict with rules made by higher authority. Okay. They are as per the requirements of audit and accounts as laid down by CNAG. CNAG will also maintain certain rule. In case they are not approved by any authority, necessary authority has necessary rule making power. Are you clear? Very simple. See, there are certain rules. All expenditure should be as per the rule only. That as auditor we have to check. That rules are made by what? Laws, rules, regulation. Second, they are made by authority. Third, they are made by CNAG. Okay. As auditors, we have to check that all the expenditure are as per the rules and orders of government. We are not spending any money beyond the rules and order. Okay. Second, sanction. Remember, there is a sanction obtained. Okay, sanction. Number one, expenditure is covered by the sanction. And second, authority sanctioning it is competent for the purpose. For example, for highway, 2000 crores are there. It is sanctioned, but highway central government is sanctioning it. Not any other. State government cannot sanction 2000 crore for highway. In audit of sanction, only two things are there. Number one, funds are out of expenditure is covered by a sanction, and sanction is given by appropriate authority. Very simple. In audit of sanction, 2 points are there. Number one, expenditure is covered by sanction. Sanction is given by appropriate authority. Third, audit against provision of funds. Audit against provision of funds. Okay. In that 2 points are there. Number one, expenditure is incurred for the same purpose for which provision is made, and expenditure should not exceed the provision made. Example, we have made provision for construction of riverfront. So expenditure is incurred for the same purpose of riverfront and not for COVID. Or if funds are received for COVID, expenditure is incurred for the same purpose for which provision of made. And expenditure doesn't exceed the amount for which provision was made. Simple. 3 are over. Rules and order, sanction, provision of fund, propriety audit. What do you mean by propriety audit? Sometimes expenditure is as per the rule and order. It is sanctioned also. Provision is also made, but it is a wasteful expenditure. Okay, school. You are constructing a big school, but it is not used only since 5 years. Sardar Patel statue, they made huge statue. Are you clear? Huge statue they made. But what was the need? What is the expenditure? So much expenditure was incurred. It is any use Sardar Patel statue. God knows why they made such a big statue. Propriety audit. Many times, though expenditure is sanctioned, it is as per rules and order. Provision is also made, but it may be a wasteful expenditure, in infruitful expenditure. Okay, such expenditure which is not needed. So here we'll find out those cases which are wasteful expenditure. Auditor will see wisdom, faithfulness, and economy of transaction. General principles are laid down in this. See, to check propriety audit, general principles are there. Expenditure should not be more than what the occasion demands. Okay, so where thing can be done in 2000, you cannot spend 3000. It should not be more than what the occasion demands. Even public officers should exercise same vigilance as member of ordinary prudence would exercise. No authority sanctioning the expenditure shall pass expenditure to its own advantage. It shall not be utilized for benefit of particular person or particular community. Amount of the allowance should be regulated. It should not be source of profit to the recipient. 4. In propriety audit, there are general principles. Expenditure should not be more than what the occasion demands. Okay, it should be just as much a man of ordinary prudence would exercise. Second, any expenditure sanction should not be for the benefit of that particular person. Okay, no authority sanctioning the expenditure shall sanction for its own advantage. No expenditure shall be sanctioned for benefit of particular person like Adani. All contracts are given to Adani. Is it no expenditure shall be sanctioned for particular person or particular community? Third, amount of allowance should be regulated. It should not be source of profit to the recipient. Sir, this I did not understand. See, whenever there is a case that 5,000 flight ticket is there, okay, and 2,000 train ticket is there, train might take 2 3 more hours. You can go by train. Why the hell are you going by flight? Are you clear? Many times what will happen, you will go by train but submit the invoice of flight, prepare a dummy invoice. It should not be source of profit. Expenditure, with the help of expenditure, it is for your facility. You should not earn profit out of the expenditure. Understood, sir? So four things we have to keep in mind. Expenditure should not be more than what the occasion demands. Okay, a man of ordinary prudence should exercise same expenditure. No authority sanctioning the expenditure shall sanction for its own benefit. Expenditure should not be sanctioned for particular person or particular community. An amount of expenditure should be so regulated, it should not be source of profit to recipient. Last is performance audit. In these three things we'll see: efficiency, economy, effectiveness. Efficiency, economy, effectiveness. What is efficiency? Whether schemes are done economically. Okay. Efficiency, whether goods, with the relationship between goods and service produced and cost used to produce them. Benefit should always exceed the cost. Economy, whether we have acquired physical, human and financial resources economically. Whatever you have acquired, more money should not be spent. Whether spending authority have exercised economy. Simple. Government has acquired physical, human and financial resource economically. Whether spending authorities have exercised economically. Effectiveness, okay, what benefit you have got. Appraisal of performance of various programs, schemes, okay, with targeted objectives. Are objectives achieved? Effective. Appraisal of various programs, scheme with targeted objective. Economy, whether we have exercised economy in acquiring physical, human, financial resources. Second, whether spending authority have exercised economy. Efficiency, schemes and projects are done efficiently. Okay, the cost required to do the schemes and benefits received, we will compare two things, whether they are giving desired result. And third, relationship between goods and service produced and resources used to produce them. Very simple. One last time, five types of audit of expenditure. Five things: audit against rules and order, second, audit against provision of fund, audit against sanction, performance audit, propriety audit. Performance audit, propriety audit. I hope you are clear. One last time. Okay. Tell me, audit against expenditure. In expenditure, 5 points are there. 1, 2, 3, 4, 5. Audit against rules and order, audit against sanction, audit against provision of fund, propriety, performance. Propriety, perform. In performance 3, effectiveness, efficiency, economy. Effectiveness, efficiency, economy. Clear? Yes, sir. Fully clear. Okay. With these three nice things are done. Cooperative, a single state cooperative society, multi-state cooperative society, government audit. Clear? Yes, sir. Next in the list is leasing company. If those of you who don't know leasing company, okay, there are two types of lease: operating lease and financial lease. Where risk and rewards are transferred to the lessee, it is known as financial lease. Where risk and reward remain with the lessor only, okay, only asset is given for use, is known as operating lease. Let me explain you again. See, first of all, there are two people. Whoever gives the asset is known as lessor. Whoever takes the asset is known as lessee. So if I am giving the asset, I am a lessor. Okay, we have to think from lessor point of view. Leasing company means whoever will lease the asset. Lessor will lease. Who will take the lease? Okay, lessee. So remember, there are two people. Who gives the equipment on lease is known as lessor, and whoever takes the equipment is known as lessee. Two lease are there: financial, operating. In operating, what will happen? Owner is what? Lessor only we are giving on the asset on lease to the lessee. But in financial lease, what is there? Risk and rewards are transferred to the lessee. It is just like financing arrangement, but that we are not concerned that much. AS 19 you must have studied in detail. Number one, in leasing company, you have to check what? Object clause, whether they are allowed to give the asset on lease. See, object clause of leasing company to determine capital goods, consumable goods. Can they give them on lease? Further, see whether company can undertake the financing activity. Leasing is nothing, purchasing the asset, then giving on lease. They will pay rental. So it is like financing only. So see whether they can take such financial activities. Okay, financing activity, whether there exists a procedure to do credit analysis of lessee. Is there a procedure that you will do credit analysis of lessee, whether he is able to pay the lease or not, credit worthiness of the lessee, capital strength, his past record, collateral security. Are you clear? Very simple. See the object clause of the company to see whether they can give the assets on lease. Second, what you have to see, okay, whether company can undertake financing activity. Third, there exists a procedure. What procedure? To do credit analysis of lessee, like seeing few things about lessee. Number one, his capital record, past commitment, can he pay? Now in lease agreement is there. In lease agreement, we will see following points: description of lessor, lessee, location where equipment is kept, amount of the lease, date of payment, late charges, any advance to be paid, whether equipment shall be returned to the lessor, okay, on termination of agreement, and who will pay the cost of shifting, lessor or lessee. Whether agreement prohibits lessee from subletting the equipment. Can you sublet? Can you do subleasing? Examine lease proposal form is sent by lessee to lessor that I want this kind of asset. Okay. Third, examine acceptance letter is received from lessee indicating that he has received the equipment and the equipment is acceptable to him. See board resolution authorizing particular director to enter into lease agreement. Enter, ensure invoice is proper. See copies of insurance have been properly obtained. I hope you are roughly clear with this, yes or no? Yes, sir, roughly to clear. Not very nicely, but roughly clear. Yes, see, this is very easy also. Number one, see the object in leasing company. See the object clause allows you to enter into leasing or not. Okay, see whether company allows you to undertake or enter into such financing arrangement, whether there exists a procedure to do credit analysis of lessee, like seeing his past record, capital commitment, security offered, capacity to pay. Lease agreement will be there. In that we will see what? Lessor, description of lessor, lessee, equipment where it is kept. Okay. Third, what is the lease rental, date of lease payment, late payment if any. Third, whether agreement allows you to do subleasing of the asset or not. Okay, whether agreement, whether there is lease acceptance form is submitted. Sorry, whether lease request form is sent by lessee to the lessor. Lease request form is there. Yes. Okay, whether that is sent or not. Whether lease proposal form is submitted by lessee to the lessor. Whether acceptance form is given by lessee that the equipment is acceptable to him. See whether there is a board resolution authorizing a particular director can only enter into lease agreement. Invoice is properly written. Copies of insurance are properly taken by lessee. Simple. LLP, very simple, limited liability partnership. In this only few things are there, they are very easy. Every LLP has to file form number 8, statement of account and solvency within 30 days of the completion of financial year. So every company has to file what? Form 8. So statement of account and solvency, every LLP has to file statement of account and it is solvent within 30 days from the close of the financial year. Within 60 days, okay, after expiry of 60 days, they have to file annual return. Okay, so you have to remember this can come as good MCQ questions are there. So every LLP has to file statement of account and solvency within 30 days from the close of financial year. Every LLP has to file statement of annual returns within in form 11. See statement of account and solvency form 8, annual return form 11 within 60 days from close of financial year. Account shall be audited as per rule 24. You are allowed exemption is there if turnover is less than 40 lakh or contribution is less than 25 lakh. Any one is more, audit compulsory. Turnover is less than 40 lakh or okay, contribution doesn't exceed 25 lakh. The exemption is available if turnover doesn't exceed 40 lakh or turnover is less than 40 lakh or contribution is less than 25 lakh. Very simple. Tell me when is exemption available? Turnover doesn't exceed 40 lakh, contribution doesn't exceed 25 lakh. Any one exceeds, audit compulsory. However, partners of LLP can decide to get the accounts audited from LLP. Okay. See, partners of LLP are responsible for ensuring accounts are audited. Registrar has the register. See, for LLP also, like company, who is responsible? Registrar. Registrar can ask any information from designated partner. Designated partners are those partners which we designate. Designated partner, partner or employee. He can summon any partner, partner or employee. In case information is not furnished, okay, or submitted, he can ask information from designated partner, partner or any employee. Auditor. When will auditor be appointed? First auditor can be appointed anytime before the end of financial year. Anytime you can appoint first auditor. LLP can appoint, designated partners can appoint. See who will appoint the auditor? Designated partner. If they fail, partner. If they fail, partner. Designated partner can appoint the auditor of LLP anytime before the close of financial year. First auditor. Subsequent auditor, before 30 days of close of financial year you have to appoint. Okay, at least 30 days prior to end of financial year. Casual vacancies shall be filled by designated partner. Who will fill casual vacancy? Designated partner. If designated partner will fail, then partner will appoint. Then who will appoint? Partner will appoint. Understood? Yes, sir. Very simple. Let us close this. First auditor will be appointed by LLP before the close of financial year. Subsequent auditor, okay, will be appointed before 30 days of closure of financial year. So before 1st March you have to appoint ideally. Casual vacancy will be filled by designated partner. Normal vacancy also by designated partner. If they fail, auditor. Advantage of audit of LLP are what? Helps in detecting fraud or error, helps in settling the dispute at the time of admission, death or retirement of partner. Okay, bank and financial institution will lend money only basis of audited statement. Periodically visits and suggestion by auditor help you in improving the management of LLP. I hope you are clear. Yes, sir. What are advantage of LLP? Helps in detecting error and fraud. Helps in settling the dispute at the time of, helps in settling dispute between partner with the help of auditor. Settling accounts at the time of admission, death or retirement helps. Banks and financial institution will lend money only on the basis of audited statement. Periodically visits by auditor help in improving efficiency of LLP. Very simple. What are benefits of getting the accounts audited for LLP? Number one, helps in detecting error and fraud. Helps in settling the dispute at the time of admission, death or retirement. Then helps in settling dispute between the partners if audited accounts are there. Okay, bank will give loan on the basis of audited financial statement. Periodically visit by auditor helps in improving efficiency of LLP. Simple points are there. Auditor's duty is what in case of LLP? Number one, auditor should get definite instructions as to what work to do. Auditor should mention whether records of the firm are correct, whether he has obtained all information and explanation, whether any restriction was imposed by him. If partner maintain minute book, he shall see the minutes book to see all important decision. Auditor should read LLP agreement which will say what all is there: amount contributed, profit sharing ratio, borrowing power, rights and duties of partner, loans and advances to partner, profit sharing ratio, etc. Simple. Nothing great. Few things are there here and there which can come for MCQ. Audit, tell me compulsory, not compulsory if turnover is less than 40 lakh or contribution is less than 25 lakh. Okay, every LLP has to file form number 8, statement of account and solvency within 30 days of close of financial year. Every LLP has to file annual return form number 11 within 60 days from the close of financial year. Who will appoint auditor? Okay, designated partner. If they fail, normal partner. First auditor shall be appointed anytime before the close of financial year. Subsequent auditor shall be appointed before 30 days of the closure of financial year. Too good, sir. Yes, sir. Yes, sir. Very good. Very good. Last, oh my God, let's read hire purchase first. What do you mean by hire purchase? In hire purchase, when do you become the owner? On payment of last installment. So hire purchase is an agreement. Washing machine you can take on hire purchase. You become owner on payment of last installment. Hire purchase is agreement signed by all parties. Hire purchase agreement should clearly state higher price of the good. Higher purchase price of the good will be of course more because interest will be added. Cash price of the goods, had the goods been taken for cash, date on which agreement is there, number of installment you have to pay, date of payment and amount of each installment, goods to which the agreement relates, and you have to check all installment are regularly reviewed. Very simple. In hire purchase, when do you become the owner? On payment of last installment. Hire purchase agreement should write 4 or 5 things. Number one, hire purchase price of goods, cash price of goods, date on which agreement is processed. Okay, number of installment, date of payment, amount of each installment, and goods to which the agreement relates. Very simple. Last. Finally, Bahubali chapter getting over. Oh, bhai, local body is the last one. Yeah, yeah. What do you mean by local body? Same like government. Okay. See, government means central and state government. But many local bodies are there. What are local bodies? State, city-wise government is there. No, Delhi Municipal Corporation. Ahmedabad Municipal Corporation, Chennai Municipal Corporation, okay, Pune Municipal Corporation. These are local bodies, okay. So their audit is also necessary. Who does the audit? State wing, okay, state wing. So state wing does the audit of this usually. But let's understand what is the income for them. Property tax, are you clear? House, in if you buy a house, you have to pay property tax. That usually goes to local body, that is Ahmedabad tax of my house goes to Ahmedabad Municipal Corporation. Octroi, they collect octroi. Parking auction they do. Advertisements are there, okay, whichever a banner are there. So if you want to do advertisement, money will go to that local government, okay, local body, okay. Profession tax, etc. Property tax is the revenue for them. Other municipal tax, tax on advertisement, toll, parking auction. 3 grant they receive. General purpose, special purpose, compensatory. One more time. General purpose, special purpose, compensatory. What is general purpose? It is there to bridge the difference between needs of the local body and resources available to them. So if the local body expense are 1000 crore, okay, and they have only 800 crore, state government will give. For example, Gujarat government will give grant to Ahmedabad Municipal Corporation. General purpose. Specific purpose for construction of COVID hospital, okay, for maybe construction of riverfront, okay, for construction of statue, for provision of certain specific purpose. Compensatory grant means, see, earlier octroi was collected by Ahmedabad Municipal Corporation. Now it is collected by Gujarat government. Earlier, okay, tax on alcohol was collected by local city. Now collected by state and central government. So state and central government should pay compensation to local body. Yes. Loss of any revenue on account of tax taken over by local government. Okay. So 3 types of grant: general purpose, special purpose, compensatory. Expenses, they are basically concerned with regulatory expense, maintenance and development expense, and expenditure under following health. What do they do? Public health, public safety, education, public work. Public health, safety, education, public work. Very simple. Of course, city does what? Public health, public education, safety, and public work. They don't do this, but they should do ideally. Auditor should understand financial administration of local body. In financial administration, there are 3 points. We have to understand the financial administration, budgetary procedure. Who will make the budget in the local authority? This is done to see financial accountability and control of expenditure. Main objective is to ensure funds are spent as per the rule. So who will make budgets in local authority? Does local authority themselves only make the budget? Then to, of course, they will make such a high budget and certain money put in pocket. So what is the budgetary procedure? Expenditure control. Your audit is done by state government. So it is the only way they can control the expenditure of municipal corporation. So expenditure control. Third, accounting system. Usually their accounting system is criticized a lot. Either they do very less accounting or they do very detailed accounting, not what is required. So we have to understand their budgetary procedure, expenditure control, and accounting system. Municipal accounting and budgeting format have been criticized as either they are too simple or too detailed, sometimes providing too much information, sometimes not providing only. Both this is bad. Both this is bad. So 3 things are there. Okay, very simple. In local body, budgetary procedure, expenditure control, accounting system. Budgetary procedure, expenditure system, accounting system. Very simple. 3 types of things are taken by local body. Tell me, we need to understand 3 things in administration of local body. Auditor should understand financial administration, 3 things: budgetary procedure, expenditure control, accounting system. Budgetary procedure, expenditure control, accounting system. Now audit starts here. Till now all time pass was given introduction. Now audit is starting. Local wing of the state government is responsible for municipal account. See, local wing of state government, local audit wing of state government, okay, for Gujarat state. Local audit wing of Gujarat state is responsible for auditing municipal accounts of Ahmedabad. Local audit wing of Tamil Nadu government is responsible for auditing accounts of Chennai government. Okay, for Delhi Municipal Corporation, Mumbai Municipal Corporation, they will appoint their own auditor. See, for small municipal corporation, small local body, local audit wing of state government. But bigger municipal corporation like Delhi, Mumbai, they have the power to appoint their own auditor. That is why their fraud never comes out, because they only appoint their auditor. Too much fun. Local audit wing of state government is responsible for auditing local body. But bigger municipal corporation like Delhi, Mumbai have their own auditor. They can appoint their own. So that is why their fraud never comes out. Auditor has to report on truthness and fairness of financial statement. Everything is proper. Now, last points are same of expenditure. Do you remember in government audit of expenditure was there? What was there? Audit against rules and order, audit against sanction, audit against provision of fund, proprietary, performance audit, propriety, performance, same point. Audit is as per laws, rules and regulation. Audit is as per provision of fund. Audit of fund expenditures are sanctioned by general or special authority. Different scheme program where large expenditure is incurred is giving desired result. Same 5 points they have repeated. Number one, audit against rules and order, audit against sanction, audit against provision of fund, propriety, performance audit. With this entire chapter is over. I hope you enjoyed as much as I did putting it up forward for you. We have worked very, 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 very hard for this entire marathon. I hope you could see our hard work. I hope you could see our dedication. I hope you could see the endless efforts put by us. Okay, we want nothing. We just want one thing for you. If you like our lectures, okay, please share it with maximum friends. Okay, it will motivate us to work even harder, even better, and give you world class quality content free of cost. If you genuinely like our lectures, this is just the trailer. Regular lectures are love. You will love them, I assure you. Okay, so please share with your friends. Okay, tell at least 2 friends. Okay, if you like our lectures, that there is one man who works very, very, very hard, who will make your life easy. He will not make you understand. He of course make you understand in detail, but he will make you learn also. Okay, so if you really want combo of real life audit, you want to understand, you want to learn also, of course we can't do that in marathon. Regular course is 100 hours. Then tell them, go for this. He will make your life super easy, super fun for you. Thank you so much. I hope you enjoyed this journey as much as I did. Okay, and we both have worked very, very, very hard. I sincerely hope, I sincerely pray that you clear audit with the nicest possible marks. Okay, nothing else I want to say. Thank you so much. Okay, for all the love, for watching all the lectures, for every single thing. Please share this masterpiece of audit with every single student who is facing difficulty. More than me, he will thank you. Thank you so much. Bye bye. Good night. Take care.